It's a bit of a mathematical thing that they're cutting a part of the business out, and so that's something to watch for. That stock, Continental, could be weaker as a result, or just drop mechanically as a result. And we have a new Gucci CEO, Bellatini. RBC saying he has a good record, but we'll watch Kering as a result, Guy.
Absolutely. We'll keep an eye on all of those single stocks. Does a Fed rate cut help European equities? We're about to find out. Part of the narrative certainly will be coming from the other side of the Atlantic today. Let's take a look at the numbers. There's a few single stocks that we are going to focus on. FTSE 100, absolutely flat as a pancake as we get going here in Europe. You've got the IBEX, though, up by 0.7%. Very strong performance coming through from Spain this morning. We'll get to the bottom of that in just a moment. Stock 600 up by 0.2%. We'll wait for the CAC to arrive, see what it delivers in just a moment. The DAX, obviously the auto sector with Conti is going to be in focus as well this morning. The FTSE 100 is dealing with Next this morning, which is expected to be soft. We'll see whether it actually is in a moment. But there you go. CAC Quarante up by around 0.5%. We'll watch Kering in that market too. So a positive start for European equities. Basically, it means we're kind of flat on the week thus far. Val, what does the sector story look like?
Sector picture is looking fairly positive. At the top of the basket, we have banks and technology. Technology up 0.6%. It seems like ASML doing it pretty well so far in this morning's trade. But out of the sectors, we have 15 in the green, only 5 in the red. The one deeply in the red, or the most in the red, shall I say, it's only down 0.2%, is real estate.
I was just looking at, the source of that Spanish optimism, Guy. There does seem to be, well, Spanish and Italian, actually, both of those up by 0.7%. The banking sector is overall, as Val, you're pointing out, one of the stronger points. And within that, some of the Spanish banks and the Italian banks doing well. I was wondering if it was, Banco Santander, for example, has US operations. And I was wondering if it's a rate cut sort of story. But then the Italian banks, which have little less exposure to the US, also up strongly. So it seems to be just a risk-on move in the banking sector, pushing up those sort of maybe more volatile markets at the periphery. That seems to be one of the reasons there. Technology also doing pretty well. Most sectors in the green.
Yeah, so technology is doing well. Infineon in the German markets tracking up by around nearly 2% this morning. You've seen a very strong performance out of Chinese tech overnight once again. We'll talk to Richard Windsor in just a moment about that story. But as you say, banks on the front foot. Does seem as if you are continuing to see some weakness in some of the consumer-facing stock stories, though. Zalando is weak this morning. I wonder whether that's a read across out of the next story this morning that we are seeing. But on the upside, in terms of the points that you're getting out of the market this morning, SML, Schneider, Siemens are the top 3 gainers. The AI trade seems to be well represented in the European story this morning.
So a fairly positive open. Let's see if our guest around the table thinks that can continue into the rest of the year. Joining us now is Marina Zavalok, the Chief European Equity Strategist at Morgan Stanley. How are you feeling about European equities heading into year end?
Our view has been that European equities would trade in the summer choppy sideways. Our view into year end is that we continue choppy sideways, maybe a little bit skewed choppy sideways up, led by especially the banks.
And you mentioned you just came back from a trip from Berlin. European equity picture has a lot to do with the defense trade, the industrial spending, the infrastructure investment that's coming out of Germany. Are you more or less positive on that after your trip?
More positive on the defense side. So I think now you're going to see a lot of earnings upgrades in the defense sector. We're getting much needed detail around that defense spending, where exactly it's going to go, and therefore analysts can start upgrading numbers, because consensus defense estimates are still based on 2% of GDP, if you can believe it, even though we've been hearing about 3.5 for a while. On the infrastructure fund side and just general domestics in Germany, mid-caps, I think it will take some time to see the positives come through. I think execution will take time.
So you come back from Germany, where you've just been more convinced about the defence spending maybe than the infrastructure side. Is that fair reading?
Yeah. We are recommending defence over the infrastructure plays right now.
Okay, and looking at, just as you were speaking there, we got some commentary, Deutsche Bank's CFO talking about German spending boosting growth from 2026. Does that fit with your thinking then in terms of how long this fiscal push takes to come through?
Yeah, we see a moderate impact to 2026. I think our economists, for example, they see kind of a 50 basis point increase in GDP on the back of the fiscal stimulus. My view from an earnings perspective is more that the benefits come through 2027 and especially 2028, so it's going to take time. But once project awards ramp up, companies should start to reflect that optimism a bit more. I think those project awards momentum will be a lot stronger in defense than it is. Infra will be more of 2026 project momentum.
Okay. And you talk about, in your notes, you talk about one of your top overweights being banks, along with defence and software and some other things. On the bank side, are you at all concerned about an urge to tax the banking sector that we might see spreading across Europe? It's popping up in all kinds of places. The UK gets some coverage on this. Italy, we've had coverage on this recently.
Yeah, it's a very good question. It's one of the biggest pushbacks right now to our bank's overweight. We have this sector model, and we have it's a complex sector model with a lot of inputs, but we have incorporated the tax increases, even though not all of them are confirmed, but we've incorporated them anyway, just to be conservative. And still, the banks are coming in as the second to the highest sector in Europe, and of the major sectors, the highest sector in Europe. So I think compared to the benefits of the steepness of the curve, the high long end rates picture, the taxes aren't diminishing the positive earnings trajectory enough.
Do I buy or sell European equities if the euro dollar's at 120?
I think you should be selective.
Right.
In European equities. I don't think that will mean that European equities sell off, but we probably just keep going choppy and sideways in local currency terms.
And just in terms of the overall global performance, is there a reason not to buy US equities? How do I think about it? If I'm a euro-based investor, or I'm a US-based investor, and the currency moves, I guess quite a big headwind. I keep pointing out to Val that if I'm a euro investor, I'm still down on the S&P for the year.
Yes, yeah.
So how does it change?
It's a good point. I think basically if the euro is strengthening consistently and investors believe that is structural, which right now that's very heavily debated among the buy-side investors, then theoretically you should be buying Europe over the US if you're not hedging your currency. If you're not hedging your currency, and especially anything with domestic exposure, because then you hold on to those euro gains. The problem is, like, if you look at Europe's performance versus the US, in dollar terms, it is higher this year. But people view that as backward looking. So you really need the euro to just keep consistently strengthening and not going sideways like it did over the summer.
What's the beta? What is the effect of a Fed rate cut on European equities? Is there kind of, how do I think about the spillover?
Yeah, I think there isn't a really significant spillover. I think the Fed rate cut drives animal spirits and certain rotations more so in the U.S. equities market, so it can trigger more U.S. equities outperformance versus Europe, especially if you get, Fed cut after Fed cut after Fed cut above market expectations. But in Europe, the kinds of rotations we've seen in the U.S., like into rate sensitive, property, home builders, we're not seeing that in Europe. In Europe, the focus is on fiscal constraints. And also a lot of investors tell me, well, we saw rate cuts by the ECB, and at the end of the day, that only spurred a tactical rally, and the market cares more about the long end from a fundamental perspective.
When it comes to things you're hearing from your investors, maybe one key reason not to invest in Europe is because everyone wants to get over their skis on the AI trade, and Europe is lacking, a tech-driven sector. How do you argue for European tech in that way?
Yeah, I mean, we like software. Business services also quite software heavy. This sector has seen a really big pullback. I mean, 20% in recent months. What we've been seeing over the summer is these kind of, I call them rolling momentum unwinds. The things that worked on the top, they started to see a bit of a pullback. Things including defense, including banks, things that were underperforming on the bottom. They've been seeing tactical rallies. We think those rolling momentum unwinds are showing signs of fading, and software is kind of the last place where, as we get into earnings season, software companies in Europe report, the earnings will be fine. Some of the big, large caps are AI exposed, do benefit. We think you'll see a bit of a relief rally.
And it's interesting, on business services, they might be AI exposed in a negative sense. We had lots of reports about job losses because of AI earlier on in the year.
Yeah,
this is something that worries you.
This is the big debate, is whether or not Europe's software, business services software exposure is disrupted. Pockets of business services like staffing, for example, we do think is disrupted by AI, but the larger cap, kind of more software proxy names, we think they're much less disrupted than the market is pricing.
Can I ask you about the UK as well? We've got Next out this morning with some numbers, and the stock's down 5%, and some commentary from the CEO there talking about weaknesses in the UK economy, and that's sort of weighing in there. At the same time as we've got, Trump's here, and there's plenty of money being thrown at the UK economy by lots of big tech names. What's your, when you put the UK up against other investable opportunities, what does allocation look like, or what does the strategy look like?
Yeah, I mean, if you look at the UK, like the FTSE performance versus these just constant negative headlines that we're getting on the UK economy, they don't seem to match up, and that's because the UK is vast majority is global exposure, or the banks. So the banks actually benefit from some of these fiscal constraints, like I was saying, with the long end of the curve being higher and the steepness. So in our model, the UK overall is above average compared to Europe, and that's driven, number one, by UK banks, which are all over the top of our model, and number two, by just select ideo-type stories that are more global in nature. So there's select pharma, there's select business services, there's tobacco in the UK that's doing really well. So we overall like the UK, but UK domestics ex-banks, they're towards the bottom of our model.
What's the overall message to take away? Is it that equities in Europe continue to grind higher? Is it that that equities in Europe are going to continue to grind higher, but I want to take on more defensive exposure? What's the kind of, if you're looking at a portfolio, what's the overall message that you think we should be communicating at the moment?
So we published a note on this just today.
Yes.
The overall message in Europe, it's not. I think in the US you have this kind of grind higher narrative that's very clear. You do not have that in Europe. Our view is that in Europe, it's a stock picker's market. You have to be very selective what you choose. We have this framework called top picks, our analysts' highest conviction ideas. Historically, consistently, European top picks have outperformed. They all have their own idiosyncratic drivers. And we would look at a portfolio like that, being very selective at the stock level, and then you can consistently outperform the index and have great returns, but you have to avoid some of the kind of pockets of tariff exposure, cyclical exposure, some of the China competition exposure that Europe has a lot of as well.
Great to see you. Interesting note. Thank you very much indeed for bringing this to us this morning. Marina Zavalock, the Chief European Equity Strategist. That rolled off the tongue a little too easily. At Morgan Stanley. Let's talk about the core six this morning. What are we seeing? This is the picture. As you can see, generally reasonably well bid. Tech on the front foot. Actually, pharmaceutical stocks are coming back. There's more positive news emerging for Novo. It is tracking higher. Nestle continues to have a tough time. Chloe Mele, what do you got?
Good morning, Guy. Let's start with Next today. Next shares are taking a little bit of a beating this morning after it reported earnings. So the earnings were actually quite good, the profit beat estimates. But what the market is really focusing on is that Next said that the sales growth in the second half of the year would be lower than the first half of the year. And the CEO noted in particular that there was a lot of weakness in the UK, and that is because the business tax rises that we saw this year have really impacted consumer spending. And as a result of that, Next is down. This is also a bellwether for the UK retail sector, so whatever happens for Next is usually very important for the rest of that sector. So let's definitely keep an eye on that going forward. Moving on to Puma. Puma is also down. So yesterday the stock rallied quite a bit because of reports that Authentic Brands and CVC were considering a stake in that company. There was also some press speculation earlier this week about Adidas potentially considering a bid, and that really drove the shares in the last couple of days. But then today's a sort of reversal, as maybe the market is reappraising the likelihood of those deals actually happening. Moving on to Connor. So Connor is up this morning in Finland on the back of reports that it is considering a bid for TK Elevator, one of its rivals. This is a deal that could potentially reshape the elevator market, according to some analysts. There are some execution risks, analysts have also said, but it seems that the market is very enthusiastic about this potential deal for Connor, and we are up 3.7%. And finally, let's add on Continental. It's Continental's first day of trading today after the spin-off of the parts supplier Aumovio, and it was expected that that would lead to a massive drop in the shares, and we can see that happening this morning. We're down almost 22% for Conti.
Thanks very much. Thanks, Chloe. Chloe Melly with a look at some of those big movers, including Continental, for the reasons she described. Coming up then, we'll focus in on another of the stories that Chloe just mentioned. Fashion retailer Next warning of slowing sales growth in the UK. More on the company's latest earnings results. We'll talk retail. This is Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Good morning. Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Welcome back to the opening trade. We're 17 minutes into the cash equity session here in Europe today, and it is looking even more positive than before. The DAX up over 1%, up nearly 1.2. We are seeing some outperformance when it does come to the banking sector, maybe that helping things out in Germany. But the whole, as a whole, European stocks in the Euro stocks 600 is up 0.5%.
Yeah, I get the doom story because I get the sector at the bottom of the stock 600 this morning, retail. So Next has warned that sales will slow in the second half as forecast, the retailer forecast, that the UK economy will be set for weak growth in the coming years. It's going to be hit, according to the next CEO, by increased regulation, higher taxes, government spending, and declining job opportunities. Let's bring in Jennifer Creary, our global business reporter. So, Jennifer, this stock often watched really closely. So, what's the explanation? Is this he's anticipating some real weakness in the UK economy, even though the economy has actually done better than had been anticipated, at least in the first half?
Yeah, so I think he means in the future. So I just got off the phone with CEO Simon Wolfson. He was saying that this weakness in the UK economy, anemic was the word that he used, that's set to play out over the long term. So it's going to be gradual rather than, quote, what he said is a cliff edge. That weakness in the second half is more to do with the comparison with the first half. There are two reasons why the first half outperformed analyst expectations. Number one, it was due to favourable weather. And number two, it was due to weakness at a major competitor, i.e. M&S, because of that disruptive cyber attack. So Next was really able to benefit from that, which means that there's this big discrepancy between the first half and the second half. So there's about a 5 percentage point difference in terms of full price sales for Next in the second half. But in the future, yes, certainly his comments about the UK economy, not as optimistic as hoped.
Is that sentiment echoed by any other big retailers? Is this in some way going to become a flashing red signal to the government that some of their policies aren't working as they intended?
Yeah, I think that's why the market has reacted so negatively, because Next is seen as, bellwether for UK retailers more broadly, and certainly some of the concerns that Next is raising, including higher taxation, regulation, weakening consumer sentiment, weakening employment, is something that we've seen other retailers echo across the board. So certainly they'll be looking at the upcoming budget for signs that that's going to play out. And
does this fit with what we heard from Primark?
Sorry?
Does this fit with what we heard from Primark a few days back?
Well, exactly. Listen, all retailers are concerned about this. It just goes to show that even discount retailers are really set to benefit from people kind of trading down. Even they're concerned about the broader UK economy.
We'll leave it there. Jennifer Creary, thank you very much indeed. Bloomberg's global business reporter. Quick look at Continental out of Germany this morning. So the spin-off has happened. The stock is reacting. In some ways, it's a mechanical process. It looks very kind of grim on the screen in front of you. But investors obviously are taking their share of the new business, Aumovio, that is being spun out. And this is just a kind of mechanical process as we split these two businesses off, the SpinCo going off its own separate way. But Conti is down by 21%. I actually saw more negative calls on this, so maybe it's actually possible that once you add it all back up again, that the stock is not doing quite as badly as it looks and could actually be higher. Let's stay within the auto space and figure out what is happening with Tesla having to redesign its door handles. Following a Bloomberg investigation that uncovered incidents of people getting trapped in their cars. The car had lost power and they couldn't get out. Tesla's design chief telling us they've now combined the electronic and the manual door release mechanism. You have to pull a bit harder, basically. They were currently located in separate locations, and now they're going to be basically moved back together. US regulators are looking at potential defects in Tesla doors following this Bloomberg investigation.
We actually have a mechanical release that's, basically right at the electronic one too, and we're combining the two. So, in the moment that you're in a panic situation, the muscle memory to go to, what is right there. So you just pull a little bit further on the lever and you have the mechanical release. So that's something that we're working on, yeah. And it's in the cars now.
I still struggle with pressing a button to start the car. Keys always seem to work really well. Bloomberg Asia transport reporter Danny Lee joining us now. So, Danny, what is Tesla saying about the doors? The regulators are now paying attention. We're getting queries from customers as well. What's been the feedback?
Well, you heard it from Tesla's longtime design chief, Franz von Wolfhausen. I think the idea is that they're trying to get ahead of some of the regulatory scrutiny that has emerged, but also particularly the fact that this Bloomberg investigation highlighted how there were some genuine questions around how you exit or escape from a Tesla EV in an emergency situation. And so this revelation from this interview with Matt Miller and about just how they may address some of the changes is an interesting development. But this change is not something that has kind of swayed the stock. This is a stock as well that has gone up in 7 straight sessions. So there's not a lot there to concern investors, but maybe something that Tesla is just trying to look at in the large and just trying to get ahead of what could be something that could be causing them more questions down the road.
Danny, so as cars are more electrical and slightly less mechanical, do we expect regulators to weigh in on what kind of backup systems need to be in place?
It is a really big question and a really good question as well. Right now, the US regulator governing roads and driving and road safety, they are asking questions of Tesla because there was cases where you are on the outside and you're trying to open the door, but you can't, and then children are trapped inside. There's concerns also around the how the power is fed into the doors as well. So these are things that Tesla is trying to think about. And I think a big question is, do they do an upgrade of the software or an over-the-air update, or is it something that has to be done by recording cars physically? So these could have bigger implications if this is something that they have to record and get these cars back into the shop. And I'm sure a lot of regulators, not from just the US, but also from China and elsewhere, will be watching very closely.
Danny, I'm sure I'm not testing your knowledge here. Do any of these cars have backup batteries? Just small batteries that allow the basic electronics to continue to function if there is a problem and the main battery is no longer available? How much redundancy exists within an EV in terms of the power supply?
Well, for Tesla, there is 2 sets of power supply. The door is powered by something, by a smaller set of power, but that is why there is this emergency mechanism that you can pull in manually to ensure that you can get out of the car. But clearly, the challenge has always been where it is located in these Tesla EVs, which is causing all of these questions, and for Tesla to look again at redesigning things to make it a bit more intuitive, particularly as Tesla's design chief said, in emergency situations when you can be panicked.
Yeah, you go for the door handle. Asia transport reporter, Danny Lee, thank you very much indeed. European equity markets up this morning. DAX is looking reasonably solid. Like it's not overwhelming. Mm-hmm. Is it a response to the Fed? I don't know. I question that. There seems to be some single stock stories that are helping us out this morning. Actually, if you were to look at anything this morning, you'd say banks and the AI trade appear to be the 2 kind of key drivers.
Yeah, maybe that's what's boosting the DAX. You have Infineon up over 3%. And then when it comes to the bank trade, we heard from the Deutsche Bank CFO speaking at a conference, seems fairly positive about their performance in the later half of 2025. And that stock is outperforming as well, up over 2%.
One stock that is not outperforming today is Pets at Home. A slightly smaller end of the scale here in the UK. But of course, this was a real boom stock around the pandemic because so many people got dogs in particular, but also other pets, and spent a lot of money on them. It seems tragically that that's not happening anymore, and they've had to lower their profit guidance. The CEO also leaving the business. So Pets at Home, that stock down. Well, it was suspended for a while, down 9% as it stands.
Dogs are expensive. It's been quite
there's a lot of money in pets.
There's definitely a lot of money. Yeah, I can.
Especially the trend now of feeding them real food.
That is expensive.
No canned food or dry food kibble anymore.
No, I can't go too far down that road. Anyway, if my dog's watching, we're not going down that road. Huawei has unveiled new chip technology with greater computing power in a bid to challenge NVIDIA. Chinese tech stocks have been rallying hard over the last couple of days. We'll have more on the global race for chip dominance. Richard Windsor is going to be joining us shortly. This is Bloomberg.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Welcome back to the opening trade. We're 30 minutes into today's cash equity session here in Europe, and it is looking fairly positive. We got the large European benchmark, the Eurostoxx 600, up 0.5%. Some outperformance when it comes to Germany, with the DAX up nearly 1.2%. There is some strength in the banking sector today, also some strength in some of those tech names leading to gains in Germany. We do have the laggard being the FTSE 100, just up less than 0.2% this morning. We did have some disappointing results out from Next. The CEO actually calling the growth prospects in the UK anemic. So that is the main reason for the FTSE 100 underperforming in this session. Guy?
Yeah, interesting. Just on the eve of the Bank of England's decision, that's the language that is being used. 330 up, 243 down. The market's on the front foot a little bit this morning. Volume isn't. We're a little bit light in terms of the internals, down by around 11%. So a little softness in terms of the volume on a 20-day basis. 52-week highs. You've got Babcock looking pretty strong this morning. HSBC, the banks, as we've been talking about, on the front foot, and we've been talking about Cone this morning. We've got takeover stories within the elevator space going. There's too many jokes. 3.72% to the upside on that stock. There are some 52-week downs, though, that you need to be watching out for this morning. There's a few kind of familiar names beginning to crop up in this space. So let's take a look at what we're watching there. You have, I'm hoping it's going to appear. It might not. So I'm going to try and now remember which ones we were talking about. Obviously, we've been watching Conti this morning. That's a slightly different story. Anyway, what else do you need to know this morning? I'm assuming they're not going to appear. Anna, over to you.
Yeah, let's dive into some of the other stories then that we need to cover, shall we? In the absence of those, Guy, let's get to the Fed conversation. Fed Chair Jerome Powell rallied a deeply divided committee of policymakers behind an interest rate cut. The quarter-point reduction, the first of the year, came after a significant slowdown in jobs growth and an unprecedented push by the White House for much lower rates. French unions are leading widespread anti-austerity protests today. The demonstrations raising the pressure on newly appointed Prime Minister Sébastien Lecornu as he struggles to find allies to piece together a budget. And Huawei has unveiled new AI chip technology with greater computing power in a bid to challenge NVIDIA's dominance. The company's new approach using cluster-based computing helps pack more performance into its semiconductors, which are used to train and operate AI services by domestic firms cut off from NVIDIA's highest-end products. Guy?
Okay, let's talk about what we are talking about from a Chinese perspective in a little bit more detail. Despite the sharp drop today, Chinese tech stocks definitely up on the week. It comes as AI-fueled buying and regulatory ban on NVIDIA's latest chip, boosting prospects for domestic rivals. We're joined now by Richard Winder, founder and owner of Radio Free Mobile. Richard, people are talking about a Sputnik moment for Chinese tech, that we are about to see catch up with US technology. Do you agree with that kind of sentiment?
The honest answer is I don't know. Why do I not know? Because I called the Sputnik moment turnaround for the Chinese technology sector in the beginning of 2004, the middle of 2004, and the beginning of 2005. What I would say this time is, if you look at the charts, if you look at the sentiment, it does look a lot better, and you have got some proper breakouts with good volume, which means I think that finally foreign buying is coming into the Chinese technology sector, which still remains, in my opinion, a contrarian trade and substantially cheaper than all of the Western rivals.
If you were to think about, though, the possibility of China catching up with NVIDIA, US technology, etc., is that something that's possible at the moment?
The answer is yes and no. So, is it possible for Chinese companies to develop cutting-edge artificial intelligence algorithms based on Chinese technology that compete with anything developed on NVIDIA technology? Absolutely yes. However, they cannot do it economically. Now, what that means is that any Chinese AI that competes with an American AI will be more expensive to develop and more expensive to operate. And that is where we see the significant difference. And the reason for that is because China is stuck at the 7-nanometer manufacturing process for semiconductor chips, and it can't go any further.
Richard, can you clarify that a bit? Because I thought the whole DeepSeek moment at the beginning of this year was on the back of DeepSeek producing this AI bot that was cheaper than the ones out of the U.S. Is this just in the next step of China's AI dominance, that's going to be more expensive for them to reach that?
Yeah, good question, Valerie. What really happened was, so DeepSeek used a whole load of brand new innovations that no one had bothered to use before. Were they particularly unique or proprietary to DeepSeek? No. So what's happened is everyone else has now adopted them, and that whole competitive gap between DeepSeek and everyone else has closed. So what it comes down to now is that Chinese technology will be trained and operated on chips made at 7 nanometers, and everyone else overseas will be trained on chips at 3 nanometers, 2 nanometers, 1.8 nanometers, and below. What that means is they will be much, much cheaper and more economic to train and operate. And that is where the difference, I think, is going to be made.
Richard, there was some news overnight that Huawei has unveiled a new AI chip with what you just mentioned, with greater computing power to try to rival NVIDIA. I was wondering what your thoughts were on the story.
Yes, obviously what Huawei has released will be better performance than its previous generation. It'll probably have a much larger die. And so consequently, when it comes to raw performance in terms of TOPS, which is the way that you measure AI compute performance, you could easily make it equivalent to Blackwell. The question is, can you do it reliably? Can you do it cost effectively? And do you have really, really good software for the AI engineers to use? And on all of those fronts, I would argue that even with this latest chip, Huawei has still a long way to go. And when it comes to the economics, they're not going to close the gap unless they can get access to cutting-edge semiconductor manufacturing.
And so, Richard, from what you said there, that sounds like there is still a lot of opportunity for NVIDIA in China, or there would be, but for the politics, but for the geopolitics. So is it right that NVIDIA assumes very little in terms of China sales, and what does that future look like?
I think it's absolutely right. I have long been of the opinion that NVIDIA will lose all of its Chinese business, AMD will lose all of its Chinese business, because the history shows the minute China has something with which it thinks it can compete, it removes all the foreigners and it moves preference towards the domestic technology. Now, does that mean that China will not be able to produce cutting-edge AI? No, it does not. But what it really means in the long term, they're going to struggle to compete overseas. And this is where I think NVIDIA, AMD, and everyone else who loses the China market will make it up overseas, because you're going to see non-Chinese technologies gain a lot of market share outside of China, because they're just much more competitive on a cost basis.
Richard, what is the more medium-term picture for the AI trade and the demand we're going to see for NVIDIA chips? I read your note, obviously, on a daily basis, trying to get your take on what is happening here. You do see some sort of a moment happening where not everybody survives, and there is a clearing out of the space. We were speaking to Jack Selby. He runs, obviously, a big VC fund. He's part of the PayPal mafia. He's a well-known name in this space. We talked to him earlier this week. This is a quote from the interview. There is going to be tens, if not hundreds of billions of invested dollars that will literally be incinerated as we see the winnowing of the startup process in the large language model space. Do you see something similar as well, and when does it come?
Broadly agree. The other answer is no one knows. You know, if I knew the answer to that question, I would now be disclosing all of my short positions to you. I don't have any, because I don't know. I don't know when it's going to happen. I'm pretty sure it's going to happen. But the thing to bear in mind is a lot of comparisons are being made between the AI bubble and the internet bubble of 2000. Now, my opinion will be is there will be a correction, but it won't be nearly as bad as it was back then, because are we overbuilding data centers? Absolutely, yes. However, there is still massive demand for data center compute. Go back to the internet bubble. The bubble was building tons and tons of dark fiber in the hope that the internet traffic would materialize when they put the fiber in the ground. It didn't, and it took another 5 to 6 years before it materialized, and that's the difference. So, is there a correction? Yes, but it's not going to be as bad as the internet bubble. Sadly, I have no idea when it is, maybe 2026, but don't hold me to it.
So, Richard, clearly AI and the spending, the huge amounts of capex on AI, a real focus for tech investors right now. I wonder where that leaves the sort of hardware and wearable side. We were drawn to a story this morning from Meta. Meta's launched a $799 pair of glasses with a screen on the inside, and there's that word again, AI integration. Where's the future in wearables and this side of the tech conversation right now?
Well, this actual form factor is very interesting, simply because what you've seen is Meta has already had some good success with its Ray-Ban smart glasses. And the reason for that is what the artificial intelligence that is powered by the latest generation of models allows you to do for the first time ever is to use voice as a high-quality user experience. So you can actually ask it things in natural language and get the answer that you're looking for in a way also that's easy to understand. And what that's done is it just makes using that kind of technology much, much easier. Now, we cover the metaverse. You know, our view is mass market takeover of the metaverse 2029, 2030 at the earliest, simply because the technology is still not really there. However, what this does do is if this continues to prove popular, it's starting to get people used to the idea of maybe wearing that kind of technology and then perhaps using it more and more and more. And then perhaps over, you know, a 5-10 year period, they replace their smartphone.
A 5 to 10 year period. So are we witnessing the start of the death of the smartphone as the primary device which we all interact with? Is that the process that is beginning to unfold here?
Potentially, yes. The reason why I say potentially is because there's still an awful lot of other hurdles that need to be jumped over in terms of battery life, quality of display, software compatibility between the different players and all that sort of thing. But it could be the beginning. So that's why I say potentially rather than an emphatic yes.
Richard, great to catch up. Looking forward to that moment. Feels like we basically walk around with our phones like this. Everybody seems to, and then you bump into things.
So is this the disintermediation of the iPhone, of the phone? Instead, we'll be talking to our glasses. But I mean, at least you can see where you're going when you're doing that. So there's the upside.
OpenAI has also floated a hardware device.
Well, maybe
they want to remake the computer. It's some I don't know what it's going to be.
They've got to carry it around.
The large language model might be in my glasses, I suppose.
Yeah, but Richard's talking about kind of but think about the effects of the end of the smartphone. Like that's a huge moment.
I got to think about that for a while.
But I see it everywhere around here. People just walk around like this. Yeah. My kids do it. Like occasionally they bump into things. you wouldn't have to do that. That's fantastic. Always great to get Richard's take. Richard Windsor, the founder and owner of Radio Free Mobile, joining us there. Coming up, pressure mounting on France's new Prime Minister after unions mobilised nationwide to protest against spending cuts. That's what's happening in France right now. We'll bring you the latest. This is Bloomberg.
Our focus is really to understand what are the technologies that are part of our portfolio for the future and scaling those technologies so that we can meet our demand with clean energy.
Resiliency is just not an operational response to what is happening out there. Resiliency could and will be a strategic advantage that companies will start to look at.
There is still hope to actually get back down to something of a livable world if we get our act together.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome back to the opening trade. We're 46 minutes in today's cash equity session here in Europe. We are near session highs when it comes to European equities. Euro stocks 600 up nearly 0.6%. And over on Wall Street, S&P futures up 0.6% as well. Session highs for equities. We're also looking at a Treasury rally continuing as well. 10-year yields are down 4 basis points. All of that being buoyant, but the dollar has seemed to have reversed just slightly in the last hour of trade, now trading back to flat on the day.
Something else that is continuing is President Trump's visit to the United Kingdom. Last night, King Charles emphasised the long-standing bonds between the two countries, capping a day of pageantry designed to strengthen a UK and US alliance, which endures economic and security headwinds.
Our countries have the closest defence, security and intelligence relationship ever known. In 2 world wars, we fought together to defeat the forces of tyranny. Today, as tyranny once again threatens Europe, we and our allies stand together in support of Ukraine to deter aggression and secure peace.
President Trump nods along to those words from the King. Bloomberg's Lizzie Burden is in Windsor for us. Lizzie, talk us through some of the highlights then from the state banquet, the King's speech that we heard there. We also heard from President Trump, of course.
All the lavish details, I have to say, were the highlights out of the tiaras, the white tie. You had the menu of chicken and specially made cocktails, the transatlantic whiskey sour, and the guest list, of course, not just the royal family and the president and first lady, but the biggest names of Wall Street and Silicon Valley as well, the likes of Apple's Tim Cook back around the table, notably, Jensen Huang of NVIDIA, Jane Fraser of Citigroup, all there today put that investment into the UK. Now, you heard there the speech from the King. We also heard from the President himself. Let's take a listen to that.
His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship. But seen from American eyes, the word special does not begin to do it justice.
So the weight of history clearly on the president there. That is the message that the King was trying to send. They hope that the soft power translates into hard leverage today. And it was interesting as well that the King didn't hold back in his message, not just in saying to the president, we are kin, but also calling on the president to defend Ukraine and to defend the environment. So not quite the usual restraint that we get traditionally from the monarch.
Well, let's say we get down to business today with the business leaders meeting in Chequers. What's on the agenda?
Well, we already know, Val, that we're going to get tens of billions of dollars worth of economic deals here. We already know about the defense technology cooperation, the nuclear partnership. But as I mentioned, some of those names around the table, we're looking at investments from the likes of Microsoft and from Google as well. And it goes the other direction too. So UK names investing in the US, the likes of GSK and Sage and BP putting money on the table, which is what Donald Trump can take back to Washington as well. But for Keir Starmer, it's not just about business, it's also about geopolitics, and we're expecting him to follow up on what the King was pushing Donald Trump to do, defend Ukraine. But what we're not expecting is for him to raise the issue of the Middle East, Palestine. And the Times reporting last night that over the weekend, Keir Starmer is going to formally recognise Palestine as a state if Israel doesn't agree to a ceasefire. That would be incredibly contentious with the president, who of course has said that it marks a reward for Hamas, but clearly they're trying to put it after Trump has left to avoid any sort of diplomatic incident while the state visit is ongoing.
Lizzie, thank you very much indeed. Bloomberg's UK correspondent Lizzie Burden joining us from Windsor. Let's turn our attention to what is happening on the other side of the Channel. France is bracing for a fresh wave of mass protests today. Major labour organisations have called on members to join marches as a sure force against spending cuts, which they say amount to, quote, unprecedented brutality. We're joined now by our Paris Bureau Chief, Alan Katz. Alan, how will these protests that we're going to see today and what they represent shape the new Prime Minister, Lecornu's prospects of getting a deal done and getting a budget delivered?
So, as you say, it really is about it being a show of force. And the question is going to be, can the unions get a lot of people to turn out? And the numbers, if they're very big, say, you know, around 1 million, that would, people on the street, I mean, or people on the street plus strikers, that would probably be a pretty good result for unions and show that they really can weigh on the political decision-making, on the budget decision-making, and would really reinforce sort of the parties that some of these unions are aligned with. There's the biggest union, the CFDT, is sort of a center-left union that's pretty closely aligned with the Socialist Party. So it's sort of, if they have a big show of force, it helps sort of the left to say, like, you need to give us a lot if you want our support in a budget. If, on the other hand, not that many people strike, not that many people show up for these marches, that weakens their position, their bargaining power, and maybe strengthens sort of the right in their effort to say, like, oh no, actually you should really be you know, focusing on us in terms of trying to get any sort of budget through. So that's really sort of the way it's going to work out. There's nothing specific that they're really trying to get out of today's marches. It's a protest against a budget that no longer exists because it was presented by the prior government. So so it really is, it's more sort of like, can we mobilize our people and show you that we can mobilize them?
Alan, so is it really less about the numbers that show up today and more about perhaps those striking and those opposed to this fiscal consolidation having a straight message?
I mean, yes, they have a message, which is that we want less of what François Bayrou, the prior prime minister, proposed, which was big budget cuts and some tax increases to try to really reduce the deficit pretty sharply between 2025 and 2026. And but there's no budget proposal on the table at the moment other than this prior one, which again, as I said, was the previous government's. And so there's not. Unlike some protests in France, which are against specific measures, you might recall, when there was a push to when France raised the retirement age from 62 to 64, that created months of protests in the streets, and those were specifically against that specific plan. This one is a little bit more diffuse because it's against sort of budget austerity, but since there's no budget austerity specifically, being discussed at the moment, it doesn't. They have fewer sort of specific aims that they're going for.
Alan, taking a step away from the detail here of France, we've got an interesting story on the terminal by colleagues this morning asking whether Europe is becoming ungovernable, and they're looking at various geographies where fiscal pressures exist and politics is increasingly fragmented, and asking whether Europe has what it takes to kind of move things forward and make decisions and progress. What's your take on this kind of reporting?
I mean, it's the fundamental existential question of Europe, really, at the moment, and actually large parts of the world. You have seen in France, as in many other countries in Europe, you see a sharp rise in the populist right. You see a lot of people who have really, I'd say, lost faith, or certainly lost some faith in democratic institutions. And the question becomes, okay, well, how do you respond to that? And people like to point out, this is we're on our fifth prime minister in 2 years, in France. But France is not the only place that's having either serious trouble getting through budgets or trying to sort of figure out how they're going to govern. You have issues in Spain, you have issues in the UK with the rise of Nigel Farage's party. You have issues in Poland, which seem to have pulled back from a populist towards a more centrist government, but then elected a populist president, even if he has less power than the prime minister does there. So it really is this. It's a very difficult road that that Europe has to go down to try to create a sense of belief in institutions that it had 10, 20, or 30 years ago that really seems to have fallen away. And that's what the story describes and discusses. And it is a real fundamental issue for Europe that's not going to be solvable very easily or in the very near term.
Alan, always great to catch up. Thank you very much indeed. Bloomberg's Paris Bureau Chief, Alan Katz. Right, we're nearly done. What's next?
Let's look ahead to the risk events on the horizon, because in 5 minutes' time, we have the Norges Bank rate decision. Now, it is looking like it could be a split decision. Economists do think they will reduce rates, but there seems to be some speculation they could be hawkish. We've seen Euro NOK hit a one-week high ahead of this decision in 5 minutes' time. At noon, we have the Bank of England rate decision, QT, on our mind. Later in the day, 1:30 p.m. is the weekly initial jobless claims figure, and at 2:20 p.m., Trump and Starmer hold a press conference.
Yeah, I think that's going to be worth watching, given how interesting these things can get sometimes. In terms of the data picture, though, Val, I mean, clearly the Fed is extremely focused on the labour market, and we get another weekly snapshot of the labour market today. Although the limitations of this data set are quite kind of incredible, given last week's were sent higher, moved markets, and it was all to do with some fraud in one particular state in Texas.
Yeah, I think it just adds to the narrative of whether we can trust this data, not just the data from the BLS, but the weekly jobless claims figures. There has always been some fraud in these numbers, but last week, big market reaction on the back of it.
Do you think that's why Powell's being so cautious at the moment, in some ways? We know that there's weakness in the labour. Maybe just we don't know what's going on here, because the data aren't giving us a clear enough picture as to what the real underlying picture looks like in America. You've got immigration, you've got what's happening with the fraud picture. There's so much going on.
And maybe he needs that kind of clarity before sounding a bit more urgent on the rate-cutting cycle.
Right. That is it for this programme. That is it for the opening trade. The Pulse is up next, of course. 8:56 here in London. European equity markets certainly on the front foot. US futures also pointing higher a day after the Fed. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa.
New episodes every month, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Stocks rise after the Fed cuts rates, even as questions linger over the pace of future easing. Now, the Bank of England is next. It's expected to hold rates steady, but rein in QT amid concerns that gilt sales are worsening volatility. Plus, from pomp to politics, President Trump's UK state visit turns to tougher diplomatic talks on trade and foreign policy with the Prime Minister, Keir Starmer, today. Now, look at the markets. And again, I have to say the markets yesterday, on the back of what we heard from Jay Powell, a little bit unsettled, certainly in the immediate aftermath of the Fed's decision. Again, traders weighing policymakers penciling in 2 more rate cuts for 2025 against the chair, warning that there are no risk-free paths, as again, the Fed looks clearly to support jobs and contain inflation. The U.S. 10-year yield at 4.0431. And then, of course, we look at the Bank of England, 13632 is sterling. The other thing we're looking at for is European markets in general on the back of the Fed decision, but also there's just a little bit out there when it comes to tariffs and trade. Maybe some of the negotiations here in the UK could be a boost for some of the exporters. For the moment, the FTSE is gaining some 0.2%. And then Norges Bank just coming out with its interest rate decision. Norges Bank cutting its benchmark interest rate to 4% as expected. And then they also say the rate will be cut further in course of the coming year. You can see Euro NOK 11.6288. So for the conversations that matter and all of the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse with Francine Lacqua.
Well, good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London. Now, the Fed Chair, Jay Powell, cites weakness in the labor market for the change of course on interest rates. Now, the board voted 11-1 for a quarter-point cut. The only dissenter was the new Fed Governor, Stephen Barron, who wanted a bigger cut. Now, Powell said there was no widespread support for such a move.
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year.
Well, to discuss this further, I'm joined by Ozan Tarmen, of course, Global Macro Vice Chair at Deutsche Bank. Ozan, as always, thank you so much for joining us, especially on the day after the Fed. It was a big Fed meeting because, of course, they can't, but also he did seem to intimate, Jay Powell, that economic risks are growing, full stop.
Always wonderful to be with you. Also, Champions League Day, after Fed, like you said, Bank of England Day, state visit. Well, you're right. I mean, it was a big day. We moved a lot right afterwards. First, we got a bit excited because they kept their 2 dots. They increased the 2 dots, 2 cuts like markets hoped. Yeah. Some were fearing that they would stay at 1 cut. But then after the presser, a little bit more gloomy. Market didn't like the fact that he really pushed away from the 50. Also, no 50 support from Waller and Bowman like most expected. And he talked down the dots. But overall, like some of the messages we exchanged last night, I think this market reaction, this very morning, is the right one. I think we're on the right path. Rates are falling. Dollar continues to soften. And equities rip.
But, Ozan, I mean, markets didn't like the fact that Jay Powell basically said that there will be difficult face-offs, right, or trade-offs in the coming months as they consider whether to keep cutting rates. Why was the market surprised by this?
I think they want a little bit more clarity. I think in a way, he almost didn't commit to October, whereas from the dot plots to market's own thinking, market at least wants 25, 25, 25. In my mind, even a 50 wouldn't really shock this time around. There were no weekend news beforehand, but if they saw the numbers in June, after the revisions, if they saw the numbers in July, nobody would push them away from cutting rates by 50. So market wants to see a little bit clarity, a little bit less uncertainty. But despite that, they like the path we're going.
So what you're telling me is that they're overlooking inflation. I mean, this is a thing that Jay Powell, and the fact that there was a consensus, right, seems to have been a victory for the chair. But is the market overlooking the fact that the path for inflation could be quite uncertain?
Overlooking and getting used to the fact that we simply do not touch 2%. I mean, if we have to discuss whether 2% or 3% should be the magic number, you should give me a whole hour show. But at the moment, we're a bit used to sticking right around 3%, 2.9 for CPI, 2.6 for core. If anything, PCE core will come out at 20 basis points this month. If you analyze it, we're quite near the path. What most of the market is getting surprised at is the calmness on the long ends. In summer, like even when I came here in July, what did we expect? A big fall sell-off on the long ends. Trust moments in all 4 big countries at the same time. Led by US, we're getting just the opposite. Long end US rallied 40 basis points.
Yeah, Ozan, when you look at, for example, the jobs report revealed that, the job market had dramatically slowed. Again, how does the market interpret that? Euro, I mean, dollar has been quite weak. Does it continue on that path?
On the dollar, yes is the answer, quick answer, but a big debate is going on. Since mostly May, June, we've been a bit stuck at 1.17. Yeah. Every now and then, my fast money hedge fund friends want to see if there can be a bit of a squeeze on the dollar. But then 2 NFPs, like you discussed, on top Dovish, Jackson Hole, all help the soft dollar trade. Now, my partner in success, George Serados, wrote an important research piece this very week, because what everybody in the world is buying, Nvidia, Microsoft, Meta, what they do with their dollars is key. If they start buying those NVIDIAs hedged, then the equation changed. And in our research piece looking at the flows, he claims almost 80% is now getting hedged. That paves the way a bit for 120. And France and trade is now, compared to when I met you in July, much emptier. Long euro trade is much emptier. The crowded one was the steepener. Everybody and their brother had the steepener on. Long and US rally didn't help. People relied on euro steepener more. That also started shaking a little bit last week.
Ozan, thank you so much, as always, for joining us. Ozan Tarman, their Global Macro Vice Chair at Deutsche Bank. Now, Donald Trump's UK state visit will move from royal spectacle to politics today, with Keir Starmer set to host the president at Chequers, the Prime Minister's country estate. US and UK officials have said they expect to roll out economic deals worth billions of dollars to coincide with the visit. Now, Trump spoke about the bond between the 2 countries during his speech at a state banquet hosted by King Charles last night.
Today, I believe we're the hottest country anywhere in the world In fact, nobody's even questioning it, but we owe so much of that to you and the footing that you gave us when we started.
In 2 world wars, we fought together to defeat the forces of tyranny. Today, as tyranny once again threatens Europe, we and our allies stand together in support of Ukraine to deter aggression and secure peace.
Let's bring in our Lizzie Burden, our UK correspondent, who is at Windsor Castle. So, Lizzie, what were the highlights from last night's state banquet and the King's speech?
Well, you heard there from the President and from the King, but also in attendance around that table, you had some of the biggest names of Wall Street and Silicon Valley, the likes of Citigroup's Jane Fraser, Apple's Tim Cook, Nvidia's Jensen Huang, Rupert Murdoch as well. They dined on organic Norfolk chicken, a new specially made cocktail that had been designed especially for the occasion, this transatlantic whiskey sour. And Fran, I knew that you'd be interested in the fashion, so I had a look at what the Princess of Wales was wearing, and it was a couture gown by the British designer Philippa Leslie. So all the lavish details on display. You heard there some of the speeches. The King very keen to emphasise the need for both the US and the UK to defend both Ukraine and the environment. So really hitting on some of the fault lines between the two countries at the moment. It's notable because, of course, this dinner was designed to curry favour with the President, but the King not afraid to speak his mind and pushing on that. So quite different from the historical tradition of restraint from the monarch.
Yeah, they were surrounded by many chief executives. Are we going to have deals today?
That's the hope that the soft power translates into them spending money here in Britain. And the expectation set by Starmer's government is that it'll be a record amount of investment, £150 billion of investment during the visit. The lion's share actually from Blackstone, and Steve Schwarzman was round the table as well last night. The expectation is that that'll translate into 7,600 jobs. And really, it's a crucial moment for Britain to get that growth. The top priority, of course, of Keir Starmer's government. Now, it's not all a one-way street. You've also got UK investment going into the US. The likes of GSK pledging £22 billion into US pharma R&D and manufacturing. Also commitments from the likes of BP and Sage. So that's the business. And then we come to the geopolitics. So Starmer himself will be really pressing the President today, taking up the mantle when it comes to Ukraine, also trying to improve the trade deal between the US and the UK. Of course, we were front of the queue, and Donald Trump, before he got on Air Force One, saying that there's room to negotiate. So let's see where that wiggle room is. But what I don't expect to come up, at least from themselves in the press conference, would be the Middle East. Starmer, the Times of London reporting, is going to recognise formally Palestine as a state at the weekend. And that is, of course, after Trump has left, but before the UN General Assembly in New York next week. The idea being that it would try to avoid a diplomatic incident. But nonetheless, it may hang over the press conference, as may questions about Jeffrey Epstein, because, of course, the UK lost its ambassador to Washington, Peter Mandelson, over the late financier, sex offender, and he really hangs over all of this as the elephant in the room.
Lizzie, thank you so much. Lizzie Burden there at Windsor. Now, Disney's ABC network has taken Jimmy Kimmel's late night show off air indefinitely after backlash over his comments about the killing of Republican activist Charlie Kirk. In his monologue on Monday night, or Monday's show, Kimmel accused, quote, the MAGA gang of using Kirk's death to criticize their opponents. A major owner of ABC TV affiliates, Nexstar Media, had called Kimmel's remarks offensive and insensitive. For more, we're joined by our Roz Matheson. Roz, is his removal politically motivated?
Well, as you were saying, these comments that he made in his monologue on Monday about Charlie Kirk drew a backlash from conservative commentators and from there the administration itself. So you had the Communications Commissioner, Brendan Carr, saying, you know, that he felt that there was a case to be made not just against Kimmel but also against Disney and ABC. And of course the FCC has the levers of licensing for TV stations, including the ABC in the US. And from there we had Nexstar, which is the largest owner of local TV stations in the US, saying it was going to take the show off air. And subsequently Disney then put out a statement saying that they were going to take Kimmel off air entirely, at least for now. And so you can draw a line between the criticism that came from the conservative quarters, the administration, and this result, which is that Jimmy Kimmel's show is currently going to be off air. In fact, one other station owner is going to replace it later this week with a special around Charlie Kirk. And so certainly you can see the rapid backlash that came from those comments that he made just a few nights ago.
Roz, is the Trump administration going after media, entertainment, or news for those who go against him?
Well, certainly there's a pattern here. And I mean, Donald Trump announced this week he was going to sue the New York Times for $15 billion. He accuses the New York Times of being a mouthpiece of the Democrats, and the New York Times is going to fight that lawsuit. The Wall Street Journal is also being sued by Donald Trump at the moment because of reporting over his ties to the disgraced deceased sex offender Jeffrey Epstein. He settled other cases last year. These are defamation lawsuits primarily, and it's very unusual to have a sitting US president bring defamation cases against the media, and certainly there's a sense that he's using this as a lever for those who write things or report things that he disagrees with. But more broadly also, he's gone for universities in the US saying that they've not done enough to stamp out anti-Semitic commentary. He tied some of their funding to them changing their behavior, and also he's publicly criticized, famous singers, famous actors who also say things that he disagrees with. And so there's a pattern there. The question is fundamentally, does it do anything to that really key pillar of US society and US politics, which is, that pillar of the freedom of speech?
Roz, we also have a story about Scott Bessent's mortgages. What's that about?
Well, our reporting shows that Scott Bessent, in fact, also took out mortgages on 2 properties at the same time that were named as a primary residence. Of course, that's the contradiction that the US administration is using to go after the Federal Reserve Governor, Lisa Cook, and try and get her fired. I mean, there are some differences also in this. These documents were dating back to 2007. They were both with the same financial institution. They were signed by his lawyer instead, who had power of attorney. And so there's no sense the institution believed he was going to be using both these residences as his primary place at the same time. However, it just shows the complexity of mortgage documents in the US, because these are lengthy documents. They often have very standard paragraphs in them, and you have to amend those documents on your circumstances. And it's quite easy, therefore, potentially to make a slip. And that's the argument that Lisa Cook is making, is that if this did happen, it was inadvertent and it was a clerical error. And so that's at least the case she's making. But we can see from our own reporting that, in fact, it may have been something similar that Scott Bessent did, albeit some decades ago.
Roz, thanks so much for all of that, Roz Matheson there. Now, coming up, the Bank of England is expected to hold interest rates later today on hold. We speak to Santander's Victoria Clark about how the market will price it in. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
From our studios in New York and San Francisco, our expert hosts have the data and analysis from the companies you know and the startups to watch, plus the interviews you don't want to miss. Watch Caroline Hyde and Ed Ludlow on Bloomberg Technology, the only daily business show dedicated to tech, right in the middle of the trading action. Live every weekday, only on Bloomberg Television. Context changes everything. Tune in to Bloomberg Business Week Daily.
We got to talk crypto.
From the magazine that helps global leaders stay ahead.
What's the conversation around your company?
Bringing you insight on the people, companies, and trends shaping today's complex economy.
Planning very big things.
A new level of premium.
Plus global business, finance, and tech news as it happens.
The floodgates of innovation are going to open up.
You can't fake passion. You either are or you aren't.
Bloomberg Business Week Daily, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome back, everyone. Now, Tesla redesigning its door handles following a Bloomberg investigation that uncovered incidents of people getting trapped in cars that had lost power. Well, Tesla's design chief told us they're combining the electronic and manual door release mechanisms, which are currently located separately. U.S. regulators have also opened an investigation into this. Now, Meta has launched the first version of its smart glasses with a built-in screen as it seeks to turn the product into a consumer hit. The $799 Ray-Ban display features a screen and the right lens that can show text messages, video calls, direction and maps, and visual results from web searches. The chief executive, Mark Zuckerberg, says the glasses will be a vehicle for what he calls AI superintelligence. And Luca De Meo has shuffled the senior ranks at Gucci as the new chief executive seeks to revive the fortunes of the struggling fashion group. While Francesca Bellettini will become the chief executive of Gucci, Kering's biggest brand. Meanwhile, Jean-Marc Duplaix will keep the role of group chief operating officer. While sales at Gucci have fallen 25% in the first half of the year, with a key measure of profit plunging by more than 50%. And the Bank of England will make a decision on interest rates later today, although the MPC is widely expected to keep the benchmark rate at 4%. Instead, the focus turns to its quantitative tightening program amid concerns that its gilt sales are worsening volatility in the bond market. Well, for more, we're joined by Victoria Clark, UK Chief Economist at Santander CIB. Victoria, thanks so much for joining us. So what exactly are you expecting for the Bank of England today, but also in the foreseeable future?
Yeah, I mean, certainly for today, no real expectation at all that there's going to be any action on the bank rate front. So that stays at 4%. The focus is obviously on this quantitative tightening announcement. What will be the total number? We expect, as I think most people do, that the bank's going to rein in the total announcement there. We're looking for £75 billion, which I think is within the sort of ranges that many economists are talking about. But alongside that, big question there is, will the Bank of England feel some of the pressure that's been there in the markets and discussed quite widely to do something to rein in the amount of long sales that they do? And on our front, actually, our sense is that the bank will be quite principled and not lean in too much to that.
Victoria, how do you see inflation developing?
So inflation is the big thing for me at the moment. I mean, if there's one thing that I'm losing sleep over, it's the stickiness of the inflation numbers. So we got 3.8% yesterday. I think we'll push CPI to above 4 next month, as the Bank of England also thinks. And I see it really pretty sticky, actually, right through to year end. I mean, it's going to be fairly close to 4% as we close the year off. This is not a good picture. And I fully recognise that there's some administered prices that are driving this. But beyond that, beneath the surface, it's not a good picture. And on our forecast, actually, CPI is only back at 3 next summer. That is not a picture where the Bank of England can afford not to focus on CPI. And so for today's Bank of England decision, I'm actually looking to see whether they start to shift their focus to putting a bit more weight on inflation over the labour market picture.
Victoria, why do you think inflation is actually so sticky? And we've tried to, last time we caught up with Governor Bailey, it was try to understand how much of this is external factors, so it's trade and tariffs, but how much of it is actually some of the announcements from the Labour government?
Yeah, so the UK inflation picture is, I mean, it's a complicated one, as these things always are. There's definitely an administered price element to it. Announcements that came earlier in the year on all sorts of things, student fees, you've got, council tax went up a lot, water bills. There was the sort of labour cost change that came from the living wage. I think none of that helps the picture. And then, there is also something about UK inflation, which is, pretty awkward in the sense that we have indexation there. So, people ask me, why have you pushed up your forecasts for next April? And I say, well, because I pushed up my forecast for Q3. And, we're hearing, already talk of the pension uplifts being, nearly 5% for next spring. So we cook in a lot of our inflation. It makes it quite difficult when you're away from 2% to get inflation back to it.
I mean, is there anything that could be announced in the budget that could help?
So one of the things that's being talked about at the moment is taking away the VAT, so taking VAT on energy bills down to zero. I think that would help. That would knock about 15 basis points off headline CPI.
It's not huge. So, I mean, it's a little bit, but we're
right. It's better, but also the Bank of England might say, well, look, there's also perhaps a demand response from that as well. So the impact, I don't think for the policy deliberation from that is huge. More fundamentally, I think, the budget should really be looking at what more can be done to boost the supply side of the economy and make sure that we're getting, people into work and that the incentives to increase output on the, production side of the economy are better. And I actually think for UK inflation, that would be the much more constructive thing to do than tinkering around with little changes.
Victoria, I mean, all of this, I think, means that you've basically changed your interest rate call for the Bank of England, which is keeping it steady.
Absolutely, yes. So steady today, but steady for the foreseeable future, because I just think with inflation where it is at the moment, and actually some hints of stabilisation in the labour market, inflation's the place to focus. I mean, I would still say I think that the path for rates probably is down, but it's well into the distant future now, so certainly nothing that I can kind of see there on the 6 to 9 month horizon. So I think for now the bank is done. Looking at the back end of next year when we get past that 3% CPI, the economy will have had restrictive rates for a little bit longer, but in my view not that restrictive actually. And then I think possibly in the back end of next year there's a debate to be had about whether they can get cutting again, but my view for the moment is essentially that they are done.
Is there anything, so because we have the president in town and we're expecting some deals, I mean, a lot of these deals usually have big numbers, they're way in the future, so it's very difficult to have a thing tangible and things can always change. But does it change the prospects for the UK economy at all? Does it make it more attractive for an investment destination?
I mean, I think this is all important, right? The UK-US relationship is important. Actually, to me, the kind of least problematic bit of the UK economy story at the moment is the growth story, which has just been kind of bumping along. It's not too hot, it's not too cold. And I think, these sorts of announcements are important. But what's been quite important for the UK is we're a very services sector heavy economy, 80% of the economy with that. We've been hit less with tariffs because of that US relationship having gone well so far. So I think that that's left the UK, as an international investment destination in a relative sweet spot. And actually, that is probably helping. I mean, the one bit of the economy that's doing relatively well, and I say relatively, is the services sector. So it's important not to underplay it, but also, like you say, this is not going to change the narrative overnight. These are things that build up over time.
I mean, given what we heard from Jay Powell yesterday, does that I know that the Bank of England will push back against this, but US policy has to kind of have an implication on the UK. So how do you see that read across?
Yeah, I think that's absolutely right. So for me, if the Fed's going to be doing more to support its own economy, the bank will look at it through that lens. And so, if the US economy, and you saw the US growth forecasts were upgraded by the Fed last night, I mean, all of these things actually probably reduce the need for the BOE to come in and ease rates. It's just, shoring up a very significant kind of UK export partner. So that is important. There's a discussion to be had about which way, the pound's going to move if the Fed moves more aggressive. I think that's important too. But fundamentally, the Bank of England, again, will be quite principled. I think if there's any sort of sense that the Fed's moving not for pure economic reasons, the bank will say, look, we hold our ground as tough as we can and show that we respond to the data.
Victoria, thank you so much, as always, for joining us. Victoria Clark there, UK Chief Economist at Santander CIB. Coming up, as US tech giants invest big in the UK, we'll discuss the AI and technology landscape with George Lee from Goldman Sachs. That's next, and this is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with more episodes of our show, The Deal.
The theme of this season, On the Road. We're bringing you more behind-the-scenes conversations with the biggest names in sports, business, and culture, like Melody Hobson.
I started to study women's sports like an 11-year-old studies baseball statistics, and I got dangerous in seeing up arrows.
Susie Wolf.
When you're competing, you're not thinking about any fear or any worries of what could happen.
Josh Harris.
You can't do a good deal with a bad person.
Jay Batt.
At the end of the day, there's never been a better time to be a student athlete.
And more. Stay tuned.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Bringing you up-to-the-minute economic news whenever and wherever it happens. I'm Francine Lacqua in Sintra, Portugal, and this is Bloomberg. Good morning, everyone, and welcome to The Pulse. I'm Francine Lacqua here in London, and these are your top stories. Stocks rise after the Fed cuts rates, even as questions do linger over the pace of future easing. The Bank of England is next. It's expected to hold rates steady, but rein in QT amid concern that yield sales are worsening volatility. Plus, from pomp to politics, President Trump's UK state visit turns to tougher diplomatic talks on trade and foreign policy with the Prime Minister Keir Starmer today. So Microsoft, OpenAI, and other American companies have announced plans to spend tens of billions of dollars on technology infrastructure in the UK. It's part of a series of business deals that really coincide with President Trump's state visit. It comes as Washington aims to speed up the development of AI in the US, while the UK aims to position itself as a leading tech investment destination. We'll ask to discuss with George Lee. He's co-head of the Goldman Sachs Global Institute. George, thank you so much for coming on. Look, there's a lot of talk about AI, how fast businesses will adopt it, how maybe we're overestimating the pace of adoption. Like, how are you seeing it? What are the AI implications on businesses, short, medium, and longer term?
Well, thank you for having me. It's great to be here. I mean, I think we have to recall this technology is relatively new. The intellectual roots of it trace only back to 2017. The launch of ChatGPT is less than 3 years ago. And it's a novel technology. It's still developing. It has enormous potential in the enterprise. But as you and I were discussing before we came on here, our consumer habits change very quickly in terms of how we adopt new technology. The enterprise is just always slower, more deliberate. There's infrastructure we have to build. There's security concerns we have to address. There are suitability concerns we have to address, especially as a regulated financial institution. I'm incredibly optimistic about the transformational potential in businesses. It's just, you know, my history with technology, it's going to take a little bit longer than we'd hoped. I feel like we are inflecting upward a bit, but I just think we have to be patient.
George, what are your clients saying? What are they worried about, and what are they optimistic about?
I think they are anxious to harvest the benefits of the technology. Again, they see how it influences their personal lives, and they're inventing use cases for the technology. I mean, one of the things we also have to remember, this is a general purpose technology, almost in a way like electricity or a phone or PCs. And so the bounds of its value in the enterprise, it's really constrained by human imagination, by habit change. And so I think people are very excited. Intuitively, it feels like this should be transformational, but it's going to take time to invent, bake in, and harvest the value of new applications.
But does it mean the workforce changes completely? So even how we recruit and the skills we need will change?
Yeah, I think there's fascinating and untold stories about how that will all play out. I'm personally a believer this technology is principally a tool to elevate the creativity and impact of humans. And so I think that's going to have a profound effect. I think it's going to cause us all to need to experiment with, build skills and facility with using the technology. And I'm also fond of saying that I think this technology wave represents a little bit of a revenge of the liberal arts. So all of the skills you gain in classical liberal arts and science education, critical thinking, influence, persuasion, all of that I think is going to be really key, critical thinking, really key to leveraging this technology. And so folks who have that background, I'm a huge advocate for STEM education, don't get me wrong, but I think those skills are going to be critical with this new tool.
George, are there people, I mean, I have quite a lot of chief executives that, off the record will say, I understand it, I want to understand it as much as I can, but I don't really, know what it will do to my institution. Is this going to be a watershed moment where, you could have Kodak companies that were great and suddenly just are not keeping up with the new technology?
I think that is a source of anxiety for CEOs, which is, the use case and the value of the technology in the enterprise is inflecting upward. It's not manifest except in certain limited cases, maybe in coding, engineering, and customer support. And yet people, just the very questions you're asking, what does it mean for the shape of my workforce? What does it mean for my financial profile? When, how, and where shall I invest the money to harvest this value? I think these are big questions. I think the keenest CEOs are viewing it as a journey. They're trying to build lots of adaptivity and agility into their enterprises. And by the way, they're experimenting with the technology a lot themselves. There's no substitute to weighing in, rolling up your sleeves, and playing with this stuff to develop that intuition about where it's going to be useful.
What role will Europe play in the AI race?
Well, as you were saying in the preamble, enormous amount of activity here in the UK with inbound investment from big United States-based companies. I think that's a ratification and expression of the centrality of the UK, its position as a landing spot to deliver services across Europe, but also just the importance of this market, the potential, the scale of economic activity, the prominence of companies here. And so I think it's critical that these investments need to be made so that companies around the world can have a real presence here in the UK.
But is there a danger that actually Europe over-regulates before understanding the full benefit of the innovation that AI could bring?
Yeah, well, I think policymakers and politicians are wary about a powerful new technology emerging. There's a sense that previous technology waves we sought to regulate after the horse was already out of the barn. And so there's a desire to get ahead of that. And I admire it. I think these are very good faith efforts. I think these inbound investments suggest that notwithstanding a steeper regulatory climb in the UK and in Europe, it's still really important these investments will get made.
I mean, when you look at the infrastructure implications, but also the energy use, this is a big concern in Europe because of their push also towards renewable energy. How do you solve that equation?
Yeah, it's an unanswered question here, but also in the U.S., which is one truism of this technology. It's extremely dense and power consumptive, and the scale of some of these data centers we're talking about are really unprecedented. They require continuous, dispatchable, clean power to be delivered to drive these. And in the United States, we're going to struggle to meet that moment of marshaling enough generation, transmission, and deployment of novel technologies. I think the situation's the same here. And I think it's an unanswered question. It's going to require a lot of capital. It's going to require a lot of policy cooperation and a lot of innovation. And in some ways, that's a real positive because I think the companies that are going to drive the need for this energy are innovative. They have clean energy commitments they've made. Yeah. And so it may drive more innovation in a space that's been relatively flat. Dormant is exactly the right word. Thank you.
George, thank you so much for joining us. George Lee with a very nuanced and comprehensive, of course, analysis of what AI could do in enterprise, co-head of Goldman Sachs Global Institute. Now, over the last few years, Poland has become an economic powerhouse in the European Union. Despite its proximity to the war in Ukraine, Poland has the fastest growing economy and the strongest emerging market currency in the bloc. Now, for more, we're joined by Matt Winkler, our editor-in-chief emeritus of Bloomberg News. Matt, so good to speak to you. It was a great column trying to understand how Poland's economy is really defying some of the threats coming from Vladimir Putin. So what do you put Poland's economic renaissance down to?
that Poland is one of the oldest countries, and you could also say that it's one of the youngest countries because its rebirth, if you will, begins after the Cold War and more recently in 2004 as a member of the EU. It has been the best performing economy since 1990, when the Cold War ended in Europe, and more recently since that dreaded event called Brexit in 2016, at least that's when the referendum was. Poland has done something that actually it has never done before. It has grown consistently. If economists' estimates are to be believed accurate through 27, it will grow 11 consecutive years. It's never done that before. And its GDP is, without a doubt, the juggernaut of Europe. But it's not just GDP we're talking about. It's the debt you referenced. Poland's debt is outperforming debt in every other country in the EU or the emerging market. And the currency, as of yesterday, is having its best performance this year since 2018. And the stock market in Poland is right now number 6 among 46 major equity markets in the world. And that's saying a lot, actually, when you think about it, because there's not much tech here. What there is a robust financial sector, and it is proving to be quite formidable. And so all those things together make Poland a bulwark. And of course, it's right on the border of Ukraine. It's the biggest defender of Ukraine at this point. And of course, it is the bulwark against Russia.
So, Matt, what else are markets actually showing us about Poland?
Well, this week, and this is something that wasn't in the column that we published earlier, if you look at what has happened with the exchange-traded fund, the biggest one, the MSCI exchange-traded fund that invests in Poland, the largest investor in the world, starting from zero in the second quarter, purchased more than 900,000 shares in Poland. And that tells you a lot. And they, by the way, had a lot of company this week. We see Jane Street, we see Toronto Dominion Bank and Oppenheimer all joining BlackRock in that enthusiasm for Poland as reflected in the ETF. There's something else also that's going on. People were somewhat concerned about a credit watch just a couple of weeks ago about Poland, given that its fiscal situation is becoming more stressed. Having said all that, if you look at credit default swaps on the Bloomberg, they'll show you that actually there is zero anxiety where you would expect there to be. So if the people with the most at stake matter at all, and those are the investors around the world, they're showing nothing but confidence in Poland.
And Matt, you also argue that basically Poland's economy is defying all of these threats from Vladimir Putin.
Well, what's interesting is that Poland really is the avatar of what the common market was meant to be. It's all about the free movement of goods and services, where trade is something that all of the member states believe in with each other, and they benefit from each other. And unlike the UK, which has left the EU, Poland actually has benefited from what you would call a reverse brain drain. Much of the new century, we heard and read media reports about the so-called Polish plumber, who was somehow a threat to the European economy. Well, in fact, that was never true. And in fact, those people who left Poland a decade ago or more have come back, and they've reinvigorated the GDP of the country.
Matt, thank you so much, of course, for this story and for coming on TV. Matt Winkler, Editor-in-Chief Emeritus of Bloomberg News. Now, the European Union has agreed to start negotiations with Canada and the UK to give them access to the bloc's €150 billion defence fund. Now, this will allow British and Canadian companies to participate in common procurements financed by the Security Action for Europe program. The SAFE program is part of the EU's efforts to boost its defence readiness following Russia's full-scale invasion of Ukraine in 2022. Now, Israeli troops have been pushing deeper into Gaza City as more people flee the devastated area. Palestinians say the strikes have cut off phone and internet services, making it harder for people to call ambulances during the new Israeli offensive. While local health officials say the Palestinian death toll has now surpassed 65,000 people. Israel says it's launched what it calls an intensive military operation towards the heart of Gaza City to confront Hamas. Several nations, including governments in Europe and the Arab world, are calling on Israel to halt its plans, saying the offensive will lead to more suffering for Palestinian civilians. Meanwhile, France says it will use the annual United Nations General Assembly in New York on Monday as a platform to become the first member of an advanced economy to recognize an independent Palestine alongside Israel. Now, several Asian countries, as well as the UK and Canada, may also do the same. But the reality on the ground in Palestinian territories is different. And for many, the flurry of diplomacy probably comes too late. Joining us now is Bloomberg's Fadwa Hodali from Bethlehem. Fadwa, you have an important story that everyone should read on the Bloomberg terminal, also on social media, that we're putting out. What does a Palestinian state look like right now?
Well, thanks for having me. A Palestinian state looks now fragmented and swallowed by Israeli settlements, actually. And if you tour the West Bank from the north to the south, to the east to the west, you would see the fast expansion of settlement. Our reporting showed that since the Israel-Hamas war started, development in Area C has grown 5 times faster than in the last 20 years. So this tells you any potential Palestinian state where this would fall. So it's very fragmented. Also, if we want to talk about movement, restrictions, moving from one city to the other, this is very difficult. And not to forget the destructions of the northern West Bank and the refugee camps. We have 40,000 Palestinians been displaced for the last year because of the destructions of the camps, and they had to find shelter in different places. So the situation is very, very complex. So talking about a state, it's very difficult. And the hope is fading away, actually.
So, Fadwa, the Israeli government has categorically rejected two-state solution. So how realistic is it, especially a couple of days before European nations could be recognizing a Palestinian state? Does that influence the political landscape?
Well, realistically, it's very difficult. Like I said, the hope is fading away. You know, the UN and the international countries and the EU, they're all trying to push a last push for the recognition of the state of Palestine, but actually without stopping the facts on the ground, and without the political will, it will be very, very difficult to achieve the state. Talking to citizens, Palestinian citizens, talking to PA officials, this is actually a last hope. If the international community fails to recognize the state and put the state of Palestine and put the pressure on the Israeli government and put the pressure on the allies of the state of Israel to stop what's happening in the West Bank, then the hope is there will be no Palestinian state in the near future.
Fadwa, thank you so much for, of course, your excellent reporting along with the team. It's our big take today. The recognition, the title of our article, Recognition of a Palestinian State Rings Hollow in the West Bank. I urge everyone to go and have a read. Now, unions are also leading widespread protests across France over budget cuts, raising further pressure on the Prime Minister, Sébastien Lecornu. Now, the fiscal plans were proposed by previous Prime Minister François Bayrou, who was forced to resign after losing a confidence vote. The government is under pressure to reduce France's deficit and tackle growing debt. Coming up, the future of paper and stationery in a digital world. We speak to Moleskind's chief executive next, and this is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade. Watch Bloomberg Tech. This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
This is Bloomberg Television.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Back, everyone. Now, in this digital age, does the power of the pen still hold? Well, despite the continued success of Moleskino's traditional notebooks, the luxury stationery manufacturer is embracing the digital era with a range of products, including a digital notepad. Well, the chief executive, Christophe Archambault, joins us now. Thank you for joining us. I mean, a lot of people, including myself, are huge stationery fans. So there's not a world in which we think that it ever dies down. But what's your business plan for developing in terms of new products in an increasingly more digital age?
Well, thank you for meeting today. We see a future, and we keep developing product. We keep developing product, being true to our mission. So, like we launched Peanuts, for instance. We launched a new collection with Musée d'Orsay, celebrating the fact that impressionists have been changing the way people were painting, and that's what Moleskine is celebrating. What we want and where we see ourselves, that's why we see a future, is this is the place where by writing down, you will become creative, okay? So we develop new product. We have what we call Moleskine Smart, which is a connection between your notebook and your digital tablet. And we keep inventing product that's going to allow the young generation, the loyal Moleskine users, to express themselves.
Christophe, when you look at, again, the changing world, how do you see the interaction of digital and writing? Is it for note-taking? Is it for, the agenda? Like, are you seeing how our tastes are changing? Because you must also be impacted by tariffs. So some of your prices are going up.
Yeah, we are. Actually, talking about tariffs, we didn't wait for the tariffs to relook at the way we source. And I think we've been relooking at the supply chain a while ago to make sure that we serve our clients in a better way, and we reduce our carbon footprint. Now, of course, there is an impact, and we're working to minimize it for our clients and for ourselves. Back to what you were saying, do we see a change? In a way, yes, we see a change, because we're living in a world where digital is everywhere. And we see that digital is putting a lot of stress on our brains. And writing with a good old pen on paper is a way to detox, is a way to reconnect with yourselves. So we see a lot of the writing, particularly for the young generation, is all about journaling. It's about putting down on paper your thoughts, your feelings, your emotions. So we see a change in the way or what people write, but we don't see the change in the fact that people need to write, okay, more and more.
So how do you make the brand appealing to young people?
We make it appealing to young people, I would say, two different ways. But one of the ways we look into is that usually people oppose analog and digital. We don't oppose analog and digital. We believe that they are both sides of one experience. So the product that we're launching, which is this notebook, you call Smart Notebook, where when you write on your notebook, what you write goes on your phone. Because if you walk in the field and you put a dead leaves on your notebook, you will have the smell, you will have the touch, you will have the color. But then you can add in your digital version of your Moleskine notebook the sound, the picture, and those two will be one experience. So what we try to do is to offer to young generation something that is showing them that there is a world next to the digital world that will bring you benefit, because we know that the more you write, the better you read, the better you read, the better you learn. Okay? So that's the way we look at it.
Can you give me a sense of where this works better than other places? So the writing on notepad or on pub or paper, is it more popular in Europe than in Asia than in the US? Or is it actually across the board a similar kind of adoption?
We see similar patterns. Of course, I mean, the Japan and China are probably even more digital than Europe. There is still an habit in Europe of writing. But what we see, particularly among the young generation, is similar. The need of reconnecting, and how a notebook and a pen is a way for you to detach yourself from the digital environment and reconnect for yourself. And that we see that, I would say, everywhere.
What's your biggest challenge in the next 12 months? Have you had to look at different supply chains?
So the supply chain, yes, we're looking into that. Would I say is our biggest challenge? I think our challenge is the point that you were saying, which is how do you make writing relevant to a Gen Z today? And so, of course, supply is part of the work we're doing, but really we want to be true to our mission, and what we want is to make the people that I was born with a notebook and a pen, the young generation is born with a phone. How do we explain that it's beautiful, it's good for you, and it's fun? So that's really the challenge we see for the next 12 months and probably beyond.
Are you expecting to open any physical stores? Does that make a difference to attracting or converting?
Tremendously. And actually we're opening in London as we speak. We had the London Design Festival. We're opening a new concept stores in London in a month from now. Physical store for us is important. We have a network of around 65, 80 stores in the world. And that's really the place where you can fully experience what it is to write. So yes, we have a strategy of opening for the next opening stores every year for the next 5 years.
I mean, do you sell more on physical stores or Amazon? Because it's difficult just to position, I guess.
Amazon is still important for us. Yes.
Is there anything, Christophe, that actually gives you, if not hope, gives you, saying, look, this is a business model that will work, because stationery and writing will never leave, even if AI will become bigger and bigger in our lives?
We see it, and actually what is very interesting, now that we are really vocal about our mission and really what we want to see, what is very reassuring for us is the reaction from the consumers. I mean, we are growing across all channels, so there is a traction, there is a demand for Moleskine product, and we just did an event in Japan explaining and showing the beauty of creativity on Moleskine notebook, and it was impressive to see the people coming and really being interested. So what is source of hope for us is really the reaction we see from the people when you say, try, and you will see that it's great. Okay, the response is very positive, and that for us is a source of encouragement. Yes.
Christophe, thank you so much for joining us. That was the Moleskine Chief Executive, Christophe Archambault. Now, up next, we'll have plenty more, of course, throughout the day, not only on markets, but of what's happening in Windsor. Now, the pageantry and the pomp is moving from Windsor to Chequers, where we could have some deals. Then a little bit later on, look, it's up to the Bank of England. It's very clear that, we understand the BOE is set to rein in its quantitative tightening program amid concerns that the gilt sales are worsening volatility in the bond market. Up next, a Bloomberg Brief, and this is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onen, only on Bloomberg.
A cidade estava sitiada.
Nisso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Nisho talya ki kon akhna ta suara pang akhna le pa manchang le ay kun mamanya. Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
All right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
It's 5 a.m. in New York City. Good morning, I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A risk management cut. Stock futures and the dollar gaining today following a Fed cut, with Chair Powell staying cautious on the rate path. Down to business. President Trump set for tough talks on trade and politics with UK Prime Minister Keir Starmer. And China reportedly dropping its antitrust probe into Google's Android during trade talks with the United States. But as I said, it's all about the Fed today. We got that first cut of what could be 3 cuts this year, according to the dot plot. The cutting cycle has started, and it looks like futures are powering ahead. After treading water for the most part for equity indices yesterday, we actually ended fractionally lower for the S&P and the Nasdaq 100. But again, a front-loading of cuts has the dollar stronger. And let's look at yields, because of course there were several cuts priced into the bond market. It looks like we're just down a couple of basis points pretty much across the curve. Down a little more at the longer end, the 10-year at 405.46, the 30-year yield sticking to that 465.34 mark. And Bitcoin, along with other risk assets, powering higher above 117,000 as well today. Also noteworthy, gold off, but just by a little bit. So before we get into more of all of that, let's get to some individual stocks to watch. Over to London now, and Valerie Teitel. Valerie.
Good morning, Bonnie. Let's start with any Google reaction to China dropping that antitrust probe. We are seeing a positive reaction when it comes to their share price. Alphabet up 1.5%. This is on the back of that FT report that you mentioned, that China is dropping a antitrust lawsuit that it brought back in February, having mostly to do with the dominance of Google's Android operating system. Now, one could argue perhaps they're changing their attention from Google on to the chip giant NVIDIA, who's been a recent proponent of many attacks by the Chinese regulators. Moving on to more of a Google story, shall I say, having to do with PayPal. They've announced a multi-year partnership, and PayPal is up another 2.5% nearly. It rose yesterday in late session trade as well. Now, this is a part of Google integrating PayPal into more of its new tools, one of those being agentic shopping, which, Vonnie, is when a chatbot does your shopping for you. I'm very interested to see when that launches. Lastly, let's move on to Cracker Barrel. This is an earnings story. They gave weak guidance and showing that sales, at least for the next few quarters, could be stagnating. Now, this is on the back of quite a large online backlash to its logo rebranding. It tried to streamline its logo, and that even attracted the attention of the U.S. president. They have since then reverted the logo back to its original state and ended the rebranding and remodeling of its stores, but it seems to be weighing on earnings, with Cracker Barrel down nearly 10% in pre-market trade. Bonnie?
Branding a real challenge for so many companies these days. Valerie, thank you so much. That's Valerie Teitel. And a great lineup for you this morning. Peter Oppenheimer of Goldman Sachs joins on this stock market rally. Plus, we'll discuss what to expect from President Trump's UK visit with Marjorie Chorlins of the U.S. Chamber of Commerce. Back to the Fed, though, the first rate cut of the year.
I think you could think of this in a way as a risk management cut, because if you look at the SEP, actually, the projections for growth this year and next actually ticked up just a little bit. and inflation and unemployment didn't really move much. So what's different now? What's different now is that you see a very different picture of the risks to the labor market.
For more, I'm joined now by Bloomberg cross-asset strategist Ben Ram. So Ben, Powell calling it there a risk management cut, yet he was very definite that, you know, it was time to cut and there was only one dissent on the committee. What does he mean by a risk management cut?
Well, it's a bit of a conundrum what they mean by that, Bonnie, because if you, as he mentioned in the speech that you just played, I mean, if you look at the dot plot, they're thinking that the unemployment rate is going to tick down over the next couple of years. They're thinking that inflation is going to accelerate, and they also think that the GDP growth is going to accelerate. So for them to be cutting rates against that scenario only means that, you know, they want to ensure a soft landing of the economy, and that is what is spurring them to cut rates. And they have penciled in, even so, what is important to note here is that they made the markets only halfway. The markets are thinking 6 rate cuts, including yesterday's, between yesterday and the end of next year. But the Fed is saying 3 rate cuts. So I think that the markets have been set up for some hawkish disappointment, and that is what you're seeing through in the markets, reverberating through into the 2-year yield, as well as the dollar coming back.
Yeah, and while there was only one dissent, there is a lot of dispersion with the dots. So 7 dots signaling no further cuts this year, 9 signaling 2 or maybe fewer, and 1 sees an actual hike. Will we get more clarity on what the committee thinks as a whole, you know, maybe from the minutes or from Fed speak next week?
Well, I think that the next real clarity will come in March, Bonnie, because we'll get another set of dot plot in December, but then we've got to keep in mind that in February, there's going to be a rotation of governors, and that's when, so the March will be the earliest when we get the next set of dot plot, which includes all the new members and the new governors, and I think that that's when we will get actual clarity on where the terminal rate may be.
All right, Ben, thank you so much. It's a long time to wait. Ben Ram there joining us. Across the Atlantic, President Trump's state visit to the UK shifts from pageantry to politics today. Despite some rain and protests, yesterday's meeting with Britain's royal family appeared to go well for both sides.
Our countries have the closest defence, security and intelligence relationship ever known.
His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship.
Tyranny once again threatens Europe. We and our allies stand together in support of Ukraine.
Bloomberg's chief UK correspondent Lizzie Burden joins us now from Windsor. Lizzie, first, give us the highlights from last night's state banquet and, of course, the King's speech.
I'm not sure I've ever seen Donald Trump so delighted, Bonnie, but look, around that table, it wasn't just the President and the First Lady, the King and Queen as well. It was also some of the biggest names of Silicon Valley and Wall Street, the likes of Jane Fraser of Citigroup, Nvidia's Jensen Huang, Blackstone's Steve Schwarzman as well. And they were dining on this Norfolk organic chicken, a transatlantic whiskey sour to wash it down, a specially made cocktail. But of course, the hope is that having been wined and dined, that will translate into investment from these names. Now, notably absent from the state banquet, of course, was a UK ambassador to Washington, Peter Mandelson, of course, having been fired over Jeffrey Epstein and his links to the late financier, the sex offender. That will linger over the press conference later on today, perhaps. And certain names have been floated for who could replace him, the likes of Karen Pierce, reportedly someone that Donald Trump would be open to, but British officials nervous that bringing her back into the fold could underscore the mistake of hiring Mandelson for the role. But look, the King, you heard there, emphasising the importance of defending both Ukraine and the environment. And it was interesting to see him hitting on these fault lines between the UK and the US when this dinner was meant to curry favour with the President. But as I say, the President nodding along, clearly enjoying himself, the President being told we are kin by the King, and the King, perhaps you could say, stepping out of the tradition of the monarch and speaking his mind somewhat in that speech.
So that was the diplomacy effort, Lizzie. It's on to politics today. And what are the priorities on both sides?
yeah, from pageantry to business and politics. When it comes to business, we're of course expecting these tens of billions of pounds worth of economic deals. £105 billion is the figure being circulated from Keir Starmer's team when it comes to the overall investment in the UK, a record, they say, and that will create 7,600 jobs here, the lion's share of that coming from Blackstone. And really it's a crucial time for the UK, given the need for growth, given that that is Starmer's priority. What I don't expect to hear much about is the Middle East, because Starmer, reportedly from the Times of London, expected this weekend to recognise Palestine as a state before the UN General Assembly in New York next week, but saving that so as not to create a diplomatic disaster at the presser today.
All right, Lizzie, thank you so much. That is Lizzie Burden in Windsor. Back in Washington, congressional Democrats are demanding Republicans agree to health care policy changes in a standoff that threatens the funding for government. For more, Bloomberg's Suzanne Lynch joins. So, Suzanne, what exactly are the Democrats hoping to achieve? Do they have much power here?
Yes, this is an interesting move by the Democrats. They are seizing on the healthcare provisions that were or were not part of that big, beautiful bill. And they see, I think, a political opportunity here to connect with voters ahead of the midterms next year. They are asking that some of the Obamacare tax credits that are due to expire should be extended in some way. Now, that is going to cost, tens of billions of dollars here. So big questions about the cost on that. Republicans have said, the Republican leadership has said that is not an option at this moment, but Chuck Schumer and a lot of senior Democrats are pushing for this, and they are hoping that they will be included in some kind of stopgap bill that is being put forward to avoid a government shutdown.
All right, Suzanne, thank you so much for that. That's Suzanne Lynch. Now, to other top stories trending on the terminal this morning. Disney's ABC network has decided to take Jimmy Kimmel's late-night show off air indefinitely. This comes after a backlash over his recent comments regarding the killing of Republican activist Charlie Kirk. In his monologue on Monday's show, Kimmel accused the, quote, MAGA gang of using Kirk's death to criticize their opponents. Huawei unveiled new AI chip technology. The new technology has greater computing power to challenge NVIDIA's dominance. This marks the latest development by Chinese firms trying to develop their own homegrown alternatives and lessen the impact of US sanctions. D.E. Shaw is raising money for a new hedge fund where, for the first time, the firm will ditch the algorithms and let human traders call the shots. A representative for D.E. Shaw declined to comment. Coming up, the spread between stock winners and losers widening across the board. That's according to Goldman's Peter Oppenheimer. He joins next. This is Bloomberg.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
Morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Goldman Sachs says the equity market has entered a postmodern cycle, writing the following: valuations and margins are already elevated and interest rates have little room to fall. So absolute returns are likely to be lower, yet this environment is fertile ground for alpha generation as the spread between winners and losers widens across and within sectors and factors. Goldman's Peter Oppenheimer joins us now. He's Chief Global Equity Strategist. Peter, thank you so much for joining. First of all, I have to ask you this 25 basis point cut and the manner in which it was delivered. So, you know, guidance for 2 more cuts this year from the dots, but also plenty of differing opinions in the dots. Does it change your base case at all?
Thanks, Bonnie, for having me. No, it doesn't. I mean, it's consistent with what we're in. I think the market was expecting. We're looking at another 2 rate cuts this year. And another 2 next year, getting down to around 3 to 3.25%. The direction, I think, is clear. And it reflects, of course, a moderating economic growth environment, but one that's still positive. And we should say, actually, that that combination of falling US interest rates with positive growth does tend to be pretty supportive for risk assets. And that's the sort of broad setup that we expect to continue to really define the next quarter or so.
And we're certainly seeing that in the market this morning. If margins have been squeezed by higher inflation, and we saw that in the last earnings cycle, does this 25 basis point cut help at all, and when might it help?
Well, certainly lower interest rates are going to help, and I think are an important part of the policy adjustment in a period of lower growth. We should say, of course, that longer-term interest rates are not coming down as much. Of course, that's true globally. So the cost of capital is not falling as much as we might have seen in other periods where policy rates are being cut. And you're right to identify, I think, margins as being a crucial focus, really, for investors, given that they are record highs. And there is some risk, of course, that they don't continue to rise at the same rate or even come down a bit. And that's why I think stock selection, alpha selection, really looking at idiosyncratic risk is becoming more important when you think that those high margins are also combined with record or close to record high valuations for the index, at least as a whole.
And then just one more on the Fed mandate, Peter. The labour market. Obviously, we've been seeing companies maybe reluctant to fire, but certainly not running out there and hiring. Do you anticipate that companies will be able to keep everyone they have on their payrolls, or will we see, you know, an increase in the pace of laying offs? What about wages?
Well, the labour market has been a very important driver of economic growth, not just in the US, but actually across many countries over recent years, even in the period where interest rates were rising after the pandemic. So any weakness in the labour market from a low level should be something to be watching very closely. And I think that plays in a little bit to the Fed's decisions. We know that rising unemployment from a trough has in the past been an important barometer of weaker growth or even recessionary risk. So I think it's a really important thing to watch for. But, you know, there's of course likely to be some effect from AI, for example, on the labour market and on hiring decisions, but of course a lot of growth opportunities as well. And so while we do expect unemployment to be rising moderately, we don't see this to be a significant trend or something that's likely to destabilize the economic cycle more broadly.
And indeed, the Fed did say that AI might be having an impact on demand, as well as, of course, of immigration on supply. You say AI trade's potential is now dependent on upgrading infrastructure, creating opportunities in digital as well as physical assets. So if we take that as a given, where do we look for the winners and avoid the losers?
Well, I think on the AI story, the really interesting thing is twofold. First of all, we are seeing the dominant tech companies, which have reached sort of record high share of at least the S&P for good reason, because of staggering profit growth. You know, they are transitioning to being really quite capital heavy, and they've ramped up their capex spending plans even again for next year to around $460 billion or so, a huge amount of money. The question will be, what kind of return will they get on that incremental capex? But also, I think, interestingly, we're now seeing a bit of a symbiotic relationship between the aspirations of these leading tech companies and indeed other parts of the economy, because the tech giants are increasingly dependent on a revamping, an upscaling of physical infrastructure, particularly in things like electricity generation and distribution. And that's one of the ways in which I think you could get a parallel opportunity, not only for technology innovation and its effect on technology in other companies, but also in some of the more mature, developed industries which have been long neglected, underinvested, where we're going to see quite a big impact of this rise in capex over time. And that creates a more even distribution of opportunities, I think, for investors in an environment where diversification is becoming more important.
On that, on diversification, you also say geographic diversification is important. Obviously, we've seen a huge move up for China and some other countries. Is that move done now? Is China less investable than it was a few weeks ago? Is it still uninvestable, maybe?
No, I think this diversification trend is going to continue across geographies, even across factors and sectors. But, you know, let's think about it. We had nearly 15 years of staggering outperformance of the US market relative to all other markets for very good reason. It was generating much stronger profit growth, largely driven, not exclusively, but largely driven by its tech sector. But actually, if you think about it year to date, in local currency terms, all major regions have generated pretty similar returns. S&P up roughly 12%, similar to Europe, similar to Japan, China, and so on. That's been a long time since we've seen such even distribution geographically. And of course, because the dollar has been weakening, you've seen better returns outside of the US for a dollar investor. You know, Europe up around 25%, parts of EM more than that. Germany up 35%. Countries like Italy up 50% in dollar terms, driven largely by banks. So we're starting to get the benefits of geographical diversification coming through. Similarly, across factors, yes, technology is doing well and we like it, but we're also seeing some very good improvements in value plays in markets as well.
Peter, we have to leave it there already. Thank you so much for joining us this morning. Peter Oppenheimer of Goldman Sachs. Coming up, China drops a major probe into Google, and a look at what else is making headlines in your front page news next. This is Bloomberg.
When we look at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is. We really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question.
Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
This is Bloomberg Brief. I'm Bonnie Quinn in New York. Time now for your front page news. First up, the Financial Times reports that China is dropping an antitrust probe into Google. The move comes as Beijing and Washington step up trade negotiations. The investigation focuses on the dominance of its Android operating system and its impact on Chinese phone makers. Next up, the Wall Street Journal reporting several executives at XAI left after clashing with two of Elon Musk's closest advisors. According to sources, the executives left over concern about the startup's management and financial health. The executive conflicts inside XAI showcase how Musk's unorthodox approach to running companies is complicating his ambitions to build the world's dominant AI company. And on the New York Times, the chair of the Senate Health Committee, Senator Bill Cassidy, raising questions on the trustworthiness of a federal advisory panel on vaccines. Major insurers said they would continue to cover on routine shots, even if the panel tried to limit their use. The panel is set to meet today and Friday to review recommendations for 3 childhood vaccines. Coming up, a Trump-Starmer bilateral meeting on deck in the next hour. We'll catch up with Marjorie Chorlins of the U.S. Chamber of Commerce next. This is Bloomberg.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I'm never doing that again.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
It's 5:30 a.m. in New York City. Good morning. I'm Bonnie Quinn with your Bloomberg Brief. Here's what you need to know. A risk management cut. Stock futures and the dollar gain following a Fed cut, with Chair Powell staying cautious on the rate path. Down to business. President Trump is set for tough talks on trade and politics with UK Prime Minister Keir Starmer. And China reportedly dropping its antitrust probe into Google's Android during trade talks with the US. So let's take a look at how markets are faring now, just a few hours after that first cut this cutting cycle. As we said, the Fed chair did call it a risk management cut, but also signaling more easing coming. 2 more cuts indicated in the dot plot this year. That has futures higher than we've seen them in several days. Also bonds higher as well. The dollar index stronger today once again. We have the yen also below 147. Take a look at yields, because we're down 3 on the 2-year yield, 352.17, down 4 on the 10-year yield, and the same for the 30-year yield. Below 465 now. Those cuts were pretty much baked in, but just a little extra shaving of a move, if you like, there. The dot plot, of course, remaining a little bit divided about what to do next. 7 dots signaling no further cuts this year, but 9 expect 2 or fewer, and 1 even sees a hike. So lots to dissect. Let's get to some individual stocks to watch now with Valerie Teitel in London. Valerie.
Good morning, Bonnie. Let's start with IonQ, because they've signed an agreement with the Department of Defense to use quantum computing when it's relation to space technology. We're seeing shares of IonQ up nearly 6%. Now, this quantum computing technology will be used firstly to have quantum safe satellite communications, but the Department of Defense is hoping to team up with IonQ in order to push quantum technology into more space things, kind of like defense mapping and sensors and navigation, things like that. So we're looking pretty positive when it comes to IonQ stock, up nearly 6%. Now, staying in the defense space, this one is a bit of a long story. Let me explain it. Red Cat, they're a drone stock. They're offering more shares in a public offering. Now, the details are scant when it comes to the size and the timing, but Red Cat is hoping to use this extra cash in order for CapEx spending when it comes to unmanned surface vessels, which essentially is a fancy word for a drone warship. So keep an eye on Red Cat. The stock is down 9%. Lastly, let's end on earnings. Cracker Barrel gave a disappointing guidance and disappointing earnings for the previous quarter. That stock is down nearly 10%. They are dealing with the fallout from a rampant online backlash to streamlining their logo that even attracted the attention of the U.S. president. Now, Vonnie, they have since revamped their logo back to the original state and have stopped the revamp of its stores as well, but they are still suffering from sales declines off the back of that.
Well, we'll see if those lost sales return, I guess, next quarter. Valerie, thank you so much. Valerie Teitel there. After pomp, ceremony and protests, President Trump's state visit to the UK will shift to politics today. Trump and King Charles both spoke at last night's banquet in Windsor Castle.
Our countries have the closest defence, security and intelligence relationship ever known.
His Majesty spoke eloquently about the bond which inspired Sir Winston Churchill, and the bust is in the Oval Office right now, the beautiful bust of Winston Churchill, to coin the phrase special relationship.
Tyranny once again threatens Europe. We and our allies stand together in support of Ukraine.
For more, Bloomberg's chief UK correspondent Lizzie Burden is back with us now from Windsor. Lizzie, how's it gone so far? What are you watching for today?
Well, it's fair to say, Vonnie, this has been a success so far. The president saying it's one of the highest honours of his life to be invited for a second state visit. You could see how much he was enjoying himself last night. But as you say, today it turns from pageantry and pomp to business and politics, and the journey from Windsor Castle after last night's sleepover to Chequers, the Prime Minister's country estate, beginning shortly. The expectation is that you'll have the biggest names of Wall Street and Silicon Valley having been wined and dined last night, announcing more of these deals. So $205 billion is the expected total of investment to be announced in the UK. It would be a record, creating 7,600 jobs at a time when UK growth really, really needs it. And we had as well the King last night urging Trump to defend both Ukraine and the environment, so hitting on the fault lines between the two countries at the moment. Starmer expected to pick up the mantle on that. But what we're not expecting is a push when it comes to the Middle East. Starmer, the Times of London, reporting that we'll save it till the weekend to recognise Palestine as a state, but that issue could still dominate the press conference later, as well as questions about Jeffrey Epstein.
All right, Lizzie, thank you so much. That is Lizzie Burden in Windsor. President Trump wrapping up his state visit to the UK then today. And while the US and the UK signed an economic prosperity deal back in May, the US Chamber of Commerce says that it, quote, remains fundamentally incomplete and unbalanced in terms of key pro-growth priorities. Joining us now is Marjorie Chorlins, Senior Vice President for Europe at the US Chamber of Commerce. Marjorie, we heard Lizzie there name some of the things that the UK is going to get in this particular visit, the promises the UK is going to get, including the creation of upwards of 7,600 jobs. What does the US get in return?
Thanks very much, Bonnie, for the opportunity. It's an important opportunity for the U.S. and the U.K. to grow and deepen our commercial relationship. You mentioned some of the things that the U.K. may get out of the deal. From the U.S. perspective, American businesses are always interested in deepening and broadening our relationship with the U.K. Obviously, one of our most significant trading partners. The U.S. is the U.K.'s largest investor, a $2 trillion relationship, indeed dominated by investment. So I think there are ample opportunities to build on the framework that is the U.S.-UK economic prosperity deal.
What do you imagine will happen with tariffs? So, for example, it seemed like Britain was willing to eliminate the digital services tariff or digital services tax. But has the U.S. asked for that, or what will happen with that?
The American business community is very interested in seeing the elimination of the digital services tax, not only in the UK, but in other countries that have already adopted the tax or are considering adopting the tax. It is this kind of measure that unfortunately throws into question where companies would like to invest their money. And so we are in favor of eliminating the digital services tax, as well as other tariff and non-tariff trade barriers on both sides of the Atlantic that inhibit that growth in the relationship.
Well, speaking of tariffs, the baseline tariff on UK goods is still in effect. Is there, any impact on US businesses from that tariff being in effect?
The Chamber's position on tariffs is, of course, we would prefer to see low or no tariffs on trade with our largest trading partners, frankly. And so the fact that we still have a 10% tariff as a baseline tariff with the UK is, yes, it's better than it had been initially, but it is nonetheless higher than it would have been in the absence of these new tariffs. So from the business community's perspective, again, as with taxes, tariffs are indeed taxes, and this is the kind of thing that inhibits the free flow of commerce and investment between countries. And so we would like to see the reduction or elimination of tariffs on both sides.
Well, and of course, Marjorie, we saw in those pictures at that state banquet last night, Jensen Huang, Sam Altman, Steve Schwarzman, plenty of, leaders and moguls representing mega businesses. You didn't see anybody representing small businesses. What are you hearing from the thousands and thousands of small businesses that, want to import from the UK or export to the UK?
What we're hearing from small businesses is that the tariffs are impacting them to varying degrees, but impacting them nonetheless. They're also impacting large companies. It's not just small and medium-sized companies, but that is indeed with the SMEs where you see really significant hits. Some companies have been forced to close, others have been forced to shift their business model to accommodate the higher tariffs, and so it does have an impact, especially with companies who are engaged in perhaps complex supply chains where they need to import certain things in order to be able to provide their own inputs into other manufacturing.
Still in question are the steel and aluminum tariffs and also these Section 232 investigations. What's the Chamber's position on those when it comes to the United Kingdom in particular?
Well, indeed, as I indicated, from our perspective, tariffs are generally a tax that don't effectively support the free flow of commerce. So in terms of the tariffs on the anticipated tariffs on pharmaceuticals and the continuing tariffs on steel and aluminum, again, these are tariffs that we would like to see come down because the adverse impacts in particular of the steel and aluminum tariffs when it comes to manufacturing is very significant.
Marjorie, beyond the United Kingdom, what countries are most, have the most to lose, let's say, when it comes to US businesses in this round of negotiations? Because, of course, these tariffs, we still don't know where they'll end up, and there's so many negotiations ongoing.
There are negotiations ongoing, and honestly, my patch is Europe, so I can speak to Europe specifically rather than the other countries that you might be interested in. In the case of Europe, again, we have the framework of a possible agreement. Obviously, ample negotiations still have to continue in order to flesh out the deal, and frankly, it's something we hope will happen sooner rather than later. I mentioned not just tariffs, but also non-tariff trade barriers, and frankly, that is a significant concern when it comes to Europe in terms of the regulatory overreach that we see across many sectors.
Marjorie, thank you so much for joining us this morning. That is Marjorie Chorlins of the U.S. Chamber of Commerce. Coming up, the U.S. government faces its latest shutdown risk. More next. This is Bloomberg.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
Right, okay.
Okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talk with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
Bloomberg Brief. I'm Bonnie Quinn in New York. We are looking at potentially an everything rally today. Even gold has started to rally, just putting on at about $10. But this, of course, after the rate cutting cycle started. We now have a 25 basis point rate cut in the books, with the dot signaling 2 more this year. A wide dispersion, of course, on the FOMC committee about what should happen, but that at least is the median projection and the forward guidance. S&P futures, as you can see, among indices that are pointed higher in the early market. The Nasdaq as well, also seeing gains to the tune of 1%. We have the dollar just turning a little bit lower now, but it was higher, and definitely you have the dollar stronger against the yen, the euro, and sterling today. And the 10-year yield also rallying, with the yield down 4 basis points. So the 10-year Treasury rallying across the board there for fixed income. In Washington, Democrats in Congress demanding Republicans to agree to changes to healthcare policy, an impasse in the standoff that threatens funding for government, ratcheting up the risk of an October 1st shutdown. For more, Bloomberg's Suzanne Lynch joins us now. So, Suzanne, what exactly are Democrats hoping to achieve? Do they have much power in this over and back?
Yeah, there are a couple of elements to this. Democrats want to reverse some of the Medicaid cuts that were enacted back in July as part of this big, beautiful bill, and also extend Obamacare tax credits that are due to expire. So very much focusing on healthcare. They want these provisions in a stopgap funding bill. The government shutdown could be as close as October 1st. Now, Republican leadership has said, to quote the House Speaker, there is zero chance of this, but we do see some Republicans making noises that they could be open to some discussions on this. Healthcare is obviously a big political issue. It's a big issue for voters in some of those swing districts for Republican lawmakers ahead of the midterms. So it is facing and setting up to be quite a confrontation over this over the next few days.
Suzanne, thank you. We will be keeping our eyes peeled. That's much appreciated. That's Suzanne Lynch there. Turning to tech, the Financial Times has reported that China has ended an antitrust investigation into Google's Android, just as Beijing and Washington are engaged in trade talks. Let's bring in Tom McKenzie now for more. So, Tom, Huawei is unveiling a new AI chip technology to challenge NVIDIA as well. We want to get to that story. But first, give us the details about this China relationship and what exactly is on the table.
Well, politics is clearly never far away when we're thinking about some of these decisions, because the decision to launch the antitrust probe versus Google and its Android product in the Chinese market was initiated shortly after tariffs were put in place on China. Now it's been removed just before this conversation that we're expecting between the two presidents of Trump, of course, and Xi Jinping tomorrow, and as those trade negotiations continue. So there is that political overlay to all of this. Look, Google, the search engine, is essentially blocked in China. It has a minimal advertising business for Chinese companies that want to advertise beyond China's shores, and so that is something that will be factored in amongst executives at Alphabet and Google. But really, this is not very much for China to lose, but to give a sweetener to the US. It also, as those conversations and those negotiations continue on trade, but it also allows China really to focus the regulatory spotlight on NVIDIA. And you've seen that. They have made a call. They've told companies like Alibaba to stop buying some of NVIDIA's chips that are being and can be repurposed for AI uses. That call came through from Chinese regulators. They've also, of course, launched an antitrust probe into NVIDIA itself over a deal that it made a number of years ago to buy a networking business. And separate to that, the Chinese authorities are also launching a probe into an anti-dumping probe into companies like Texas Instruments, or at least chips made by companies like Texas Instruments. So really, the lens is on chips, and they're able to end this antitrust probe into Google and give a sweetener to the US as they continue those talks, but they're not letting up in terms of the investigation and the focus on chip technology.
And this Huawei chip that I mentioned, Tom, can it compete with NVIDIA?
not yet, but they're catching up. And Huawei really is the big bet for China when it comes to closing the gap on chip technology. And there's pretty significant announcements coming through today. This is really the first time that Huawei has lifted the lid on its current but also longer-term plans. They came through with updates to some of their AI accelerators and mapped out a plan for new AI accelerators to build on that, new versions of them, all the way through to 2028. The AI accelerator made by Huawei is called Ascend, but they also came up with high bandwidth memory that will accompany those AI accelerators, and also networking systems, allowing them to network more than 15,000 of these chips in a single cluster so they can be operated as one. So some significant updates from Huawei, which is closing the gap on US technology. Not there yet, but this is a reminder that China, in terms of its internal processes and focusing on that resilience domestically on the chip space, they have made some progress.
Only a matter of time, I guess. Tom, thank you so much. That is Bloomberg Tech Europe host Tom McKenzie. In a Bloomberg scoop, Tesla redesigning its door handles after scrutiny over safety incidents that trapped passengers inside their vehicles. Tesla chief designer Franz von Holzhausen spoke exclusively to Bloomberg's Matt Miller and Hannah Elliott.
We actually have a mechanical release that's, basically right at the electronic one too, and we're combining the two. So, in the moment that you're in a panic situation, the muscle memory to go to, what is right there. So you just pull a little bit further on the lever and you have the mechanical release. So that's something that we're working on, yeah. And it's in the cars now.
All right, so if there is then a China ban, you're ready to roll that out so that
we're working on
actually the ban I guess the Chinese issue is the flat outer door handle. So would you do something? Would you make a change like Ferraris have that little crease you can reach into? Is there some idea about that on the outside?
Yeah, we're working on it right now and just looking at the the details of the regulation if and when that happens, and we'll have a really good solution for that. I'm not worried about that.
It makes sense. I know it's one thing for us adults to know that, but for kids, it's a little bit different to expect a kid to know how to go for a manual release.
Yeah, so the idea of combining the electronic one and the manual one together into one button, I think, makes a lot of sense. It really helps to, the muscle memory of reaching for something every day is there, and so you intuitively just grab the same thing and you're free.
That was Tesla's chief designer, Franz von Holzhausen. Joining us now for more on the story is Bloomberg's Katrina Nichols. Katrina, so what is the latest on this particular redesign?
Yeah, well, as we heard, Tesla's chief designer there, and he's been with the company for about 17 years, saying that Tesla is going to combine the electronic and the manual door release, which currently are located in different parts of the car, into the one button. So, if you were in a situation where you needed to unlock that door quickly from within, you would press and then keep pressing, and it would actually trigger the manual release. And this sort of admission from Tesla comes after the company is being investigated by US safety authorities over there. Some 174,000 Tesla Model Ys from 2021 are potentially being looked at because of this issue with the door not being able to easily open. This is particularly problematic if the car loses battery power, and so then you actually can't manually release that door. But then also, if that were to happen and the electronic door release rather isn't working, to find that manual release in Tesla cars can often be quite difficult. That button is in some models not marked very clearly. It can also be in different locations in the car. It can be sort of in the armrest, particularly in the back seat of the Tesla. It can be even under the floor mat or sort of down beside a door. So if you're not familiar with this car, and particularly if you're a child riding in the back seat, it would be very difficult to open these doors from within. So that's something that Tesla is being investigated about, and it's something that the company, as we heard just then, themselves are trying to address.
Katrina, thank you so much. That is Bloomberg's Katrina Nicholas. And tune in to the newest Hot Pursuits episode with Ford CEO Jim Farley. That's tomorrow, anywhere you get your podcasts. Coming up here on Bloomberg Brief, more rate decisions and more data on deck in your day ahead. Next, this is Bloomberg.
It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more. We're risk on. I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersetchi in Vienna, and this is Bloomberg. Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Bringing you up-to-the-minute news whenever and wherever it happens. I'm Matt Miller, the Circuit de la Sarthe in Le Mans, and this is Bloomberg.
Now look at what's ahead today, and in particular this moment we have the President Donald Trump, arriving at Chequers, of course the country house of the UK Prime Minister, so there will be lots of political discussion over the next few hours in a press conference due a little later on today, this of course having left Windsor Castle. Once again you're looking at live pictures of President Trump arriving at Chequers, the country house of the UK Prime Minister, in this case Keir Starmer. We will be awaiting any details that come out of those discussions. Do stay tuned to Bloomberg TV, which will be following all of the minute details. Well, that's it for Bloomberg Brief. Surveillance is ahead. This is Bloomberg.
So today, has value investing been a profitable thing to do over the last 10 years or so, or has it been hard to do?
The market structure has changed, and there has been what I consider it to be a broken market, or the value investing industry, I think, is defeated, so to speak. It used to be that most money was invested by these long-only investors, these big mutual funds and stuff like that. And they had money coming in every day, and they were getting nice fees on all of that money, and they had large research teams. And they would sit around following all of the companies with teams of analysts, and they would say, this company we think is undervalued by 30%. And it might be a growth stock or a value stock, a Magnificent Seven or otherwise, but they would say, I think this is undervalued by 30%, and if I buy it and I hold it, I'll make the S&P plus 30. Now, as we've moved to passive, they've lost their customers, and the remaining customers are paying them lower fees, and they have reduced their research staffs, and they don't have new money coming in to make new investments in any case. And so most of the investing these days is no longer done by people who are buying something because they think it's worth more. They have opinions about price. Like, what is the price going to be tomorrow? And so the result is most trading that is going on right now has nothing to do with value. So it leaves us sort of as a dinosaur.
What is going to be the consequence for U.S. markets? We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
This is an insurance rate cut. It doesn't really foreshadow what's going to happen going forward.
This is all about risk management.
This is a Fed that locked arms. One dissent was surprising.
It's really clear that Powell corralled the cats.
We're all kind of hot and bothered by this move, but the truth of the matter is we're not in neutral territory yet.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, Bloomberg Surveillance starts right now. Coming into Thursday with low conviction.
A challenging situation, two-sided risk. There's no risk-free path. It's not incredibly obvious what to do. The risk management cut, a meeting-by-meeting situation.
Fed Chair Jay Powell attempted to unite a divided Federal Reserve as rate cut projections fall well short of very high expectations. Newly minted Governor Stephen Myron might be offering a preview of things to come.
All right, let's just go over what he did. Yesterday, he did dissent, saying that he opted for a 50 basis point rate cut rather than a 25 basis point rate cut. He indicated with his dot, and yes, we all know that it's his dot, that he sees going forward a 125 basis point reduction in Fed funds rates this year.
Might be Chair Powell's dot.
Right, exactly. Absolutely no, that could not. What was interesting to me was actually not what Stephen Myron did. It was what Mickey Bowman and Chris Waller did not do. They didn't join that dissent, and that, I think, was more telling to markets after a moment of digestion than anything else.
Look, the dot plot was a contradictory mess. I think the forecasts were a contradictory mess, and that compromises the chairman's ability to articulate a clear message. But that just speaks to how divided this committee is, which speaks to the overall theme anyway coming into this. Would we get risk management rate cuts, or would it be the beginning of a big easing cycle? When you have a committee as divided as this one, it's got to be the former and not the latter.
Yeah, and what does the market do with a complete lack of forward guidance and a complete lack of understanding of what the reaction function is going to be because of this divide on the FOMC? And the answer is buy stocks. I mean, that's sort of what people do, and buy stocks that are rate sensitive, because there is this bet that ultimately this is clearly a committee that is prioritizing growth over inflation. It has been that case for a number of years now. It seems like there is absolutely no reason why it should change.
You know, I joke about it being the Fed chair's dot. It might be the Fed chair's dot in 12 months' time.
Oh, well, that's true. Okay, very good point.
Something you have to think about.
You know what was interesting? If you look at some of the betting markets, the chance of Stephen Myron being the next Fed chair went from 11% to 20% after this meeting. So clearly there are some people who see that probably the president over in the UK liked what he saw.
We'll spend some time talking about this, no doubt, through the next 3 hours. Equity futures, Bramo talked about it, Buy stocks, buying stocks, up by 0.8% on the S&P 500. Coming up this hour, Julian Emanuel of Evercore, with stocks rising after the Fed's first cut of the year. We'll catch up with Everett Eisenstadt, the former NEC Deputy Director, as President Donald Trump prepares for a meeting with Keir Starmer, and Francis Donald of RBC, with Powell pushing back against an aggressive cutting cycle. We begin this hour with stocks rising after the Fed cut rates for the first time this year. Julian Emanuel of Evercore ISI writing, the Fed's projections support the president that stocks move higher on a 12-month forward basis when the Fed begins the cutting cycle. We reiterate our year-end 2026 S&P target of 7750. Julian joins us now for more. Julian, good morning.
Good morning.
You've been writing about it. Is the Fed cutting because they can or because they have to? Why is that an important distinction?
Because if they're cutting because they have to, i.e. fighting off the potential of a recession, the forward returns look markedly different, much weaker on average, because there is an adverse economic set of circumstances that you're having to guard against. But look, when you think about not necessarily the knee-jerk yesterday afternoon, but certainly what we're seeing this morning, there's two messages, is that the market does believe, as the Fed talked about yesterday, that we are approaching the trough of economic growth and are going to reaccelerate, however gently, in 2026, and the peak of inflation. So if you think about the last couple of years, it hasn't been the absolute level of either growth or inflation. It's been the direction of travel, and that's where, the virtuous cycle lies.
From the conversations you've been having with clients at the moment, do you sense that something has flipped? Are they more concerned about upside risk than they are downside risk?
This week, the dynamic changed. Look, we were managing money back in the late 1990s. And frankly, as the technology revolution, the internet revolution was evolving, active managers couldn't keep up with the indexes because they couldn't own enough technology. The conversation now is, what do I own? What do I buy? How do I stay invested if we are, in fact, beginning a runaway phase? Our answer is you need to stay with the AI theme. It is the theme that has brought us to this point over the last couple of years. History tells you that what has been working, what had been the market leaders, despite the fact that there's a lot of catch-up being played, tends to work in the later stages as well. But frankly, if you've got that kind of outperformance, you might want to buy a little bit of protection because the parabolic advance does have pullbacks. We also think that low valuation stocks, lower multiple stocks with high earnings revisions also tend to work.
Well, this is the reason why I think a lot of people are going into the Russell 2000. People looking at small caps that are seeing earnings growth and seeing that they'll benefit more disproportionately, potentially, from the rate cuts. And it's the reason why yesterday, and I understand it was one day, you did see that rotation out of the big tech, the high flyers, into some of the more rate-sensitive stocks. Do you think that that's a persistent theme, or do you think that ultimately it really is going to be a tech-driven cycle, period, the end?
Well, if you think about the late 1990s, and we've said this a number of times, and frankly, where we started really coalescing around the parallels between the late 1990s and today was not in the relentless advance, but that bear market interruption we had from February to April, very much like 1998. The point there is at the later stages, all the boats rose, okay, but technology continued to lead. And what I would say here is if you look at it, what's different now versus then is, in fact, the advanced decline line continues to rise as the index rises, whereas in the late 1990s, it was only those later stages where everything else began to participate. So there is a health here. Ultimately, we think, particularly with regard to small caps, that the best thing that happened yesterday is that the 10-year yield remains anchored near 4%.
That's where I wanted to go. I feel like Nervous Nelly. I feel like I'm always kind of repeating myself. What about inflation? And what about the worry about bond vigilantes coming back? And everyone kind of shuts me down and says, haha, that's cute. It's not actually going to happen. It hasn't happened. And frankly, we've seen the peak in inflation. Isn't that a little bit of a creeping concern at some point? If you're running the economy hot, we're talking about a reacceleration. Can we be sure that inflation truly has peaked?
It's definitely a concern. And if you look at the last number of months, again, there's been this angst around the fact that inflation has looked like it was getting sticky. But, the fact is he didn't use the word transitory. but he did use the word one-time price adjustment yesterday. And the presumption is that tariffs are a one-time price adjustment, and you're going to have inflation start to move lower again.
You're not impressed, Bramo? The 2-year view of inflation getting back to target, the rolling 2-year view of the Federal Reserve.
Okay, first of all, he said a million things. Half of it was word salad. He was asked questions that were tangible questions about the 2 years, and he was like, well, targets, inflation, next, you know, I mean, it was not necessarily this clear concept of exactly where they were heading, first of all.
Sure.
Second of all, it's not just tariffs. It's also this idea that there are production lines that are being moved back to the U.S. What about all those stories? There are all of these inflationary stories that people just forget at times when it's convenient, bring back when it's time to go with the trend, and I'm a little bit frustrated by that.
Their inability to get back to 2 predates April 2nd.
Exactly.
It's an important point to make, and I agree with you.
Well, and especially if you have a changing demographic, if you have an aging population and they've got more disposable income because they're the boomers that have houses that they got with cheap mortgages, and they have the assets from the S&P 500.
You haven't slept, have you? Keep this up. I'm loving it.
Are you speaking from personal
Go after
experience?
those boomers this morning. Why are the houses so expensive?
No, I'm just saying, like, they could invest in services and it'll bid prices up. Okay, carry on.
I'm right there with you. Can we go back to the 90s? Let's go back to the 90s. Houses were cheaper then. In the late 90s, I want to reflect on your experience of that. Was career risk greater if you missed the upside or missed the downside?
Not even close. The penalty for missing runaway bull markets is almost invariably more severe than being overinvested in the downside.
How conditioned is a generation of investors by that very fact, that experience?
Well, what the interesting thing is, you go back to earlier this year, it's not the generation of professional investors that are conditioned. The public is actually learning from all of this, okay? Remember, March and April, when professionals were de-risking, it was the public that was buying the dip. And frankly, that's part of the narrative, along with the 4% 10-year yield, that supports multiples at these levels.
This is a controversial question, but has the Fed become less relevant, and not necessarily a political instrument, but a market-related instrument? And the market has confidence that when push comes to shove, this is a central bank that will always underwrite risk over the fear of inflation running a little bit too hot.
Well, again, and forgive me for doting on the 90s again, but the difference being, once again, is that if you look at the late 1990s, in 1999, the Fed raised 175 basis points in the second half of 1999 to try and pop what was an inflating bubble. There is no set of circumstances in our mind that is going to cause the Fed to raise rates at any time in 2026, certainly not before the midterm elections. And in that respect, there is further support for equity markets.
There's a degree of comfort, I think, for a lot of people, Lisa, that now inflation is closer to 3. I know it's nowhere near 2, but closer to 3. This Fed appears to be more comfortable supporting the labour market. And if we are to get further weakness, this Fed will keep cutting interest rates. That's the way Chairman Powell has ultimately set things up. If there is consensus around anything on the committee right now, it's essentially that.
Yeah, it's to prioritize the labor market over the idea of getting inflation at 2% anytime soon. When Michael McKee asked Chair Powell about the 2-year kind of rolling goal of getting down to 2%, Chair Powell said, well, that's our models. We do a 2-year looking out and we try to understand, and that's where we think we're going to get there again. And then he moved on.
He said the quiet bit out loud, didn't he?
He did, which is essentially that's what we expect. And when it doesn't happen, we keep expecting it.
The magic forecast.
Exactly. And at a certain point, people say, all right, well, this is the reality.
We've got some time to think this through this morning.
I'm sure everyone's pleased about that.
But when I woke up, I was thinking, you know what? Everyone's throwing mud at Governor Myron's dot. And we pointed out yesterday, for an important reason, you've got to remember that that could be the view of things at the very top of the Federal Reserve a year round. That could be a taste of things to come, point one. But there's a second point. What if Governor Myron's right? What if that is where rates end the year? And I was thinking about it. This Federal Reserve is hopeless at turning points. Go back to the SCP and look at the median dot of late 21. And they were forecasting interest rates 12 months later at 0.9%. They were several hundred basis points off where they ended the year. In fact, if you want a more recent experience, go to the SCP and the dot plot of June last year. Just June last year, they weren't forecasting the 100 basis points of cuts they ultimately delivered into year end. So I think you sort of have to respect like the people who are willing to think outside the box. And don't just sit here and say this is politics and condition yourself to ignore it just because of that. Clearly, there's some politics here. But acknowledge that this Fed is absolutely hopeless at turning points and think about a wider range of outcomes over the next 12 months.
So I'm looking at the dots, and the dots talk to that wider range of outcomes with the high dot around 4% and the low dot around 250 over the longer period of time. The turning point, I think, is a key one. Are we turning into an era that is deflationary or reinflationary? And that, I think, is indeterminate, and I think that that's what the Fed is struggling with.
We can spend some time on this, Julian. You're going to stick with us, I'm happy to say. Julian Emanuel of Evercore. Equities up by 0.9% on the S&P. With an update on news worldwide with your Bloomberg brief is Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. China's Huawei unveiled a plan to challenge NVIDIA's dominance in the AI chip market. The company unveiled its new SuperPod cluster designs that can link more than 15,000 of its Ascend AI chips together to boost computing power. Huawei plans to roll out the new models in 2027 and 2028. Shares of Alphabet rising in the pre-market. The Financial Times reported China is dropping its antitrust investigation into the dominance of Google's Android. The announcement comes ahead of Friday's scheduled call between President Donald Trump and China's Xi Jinping. Walt Disney's ABC network is taking Jimmy Kimmel Live off the air indefinitely. The announcement comes amid a backlash over the late-night host's comments about the killing of Republican activist Charlie Kirk. On Monday, Kimmel suggested in his monologue that the MAGA movement was looking to score political points off the death of Kirk. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate the update. More from Vonnie in about 30 minutes' time. Up next on the program, from pomp to politics.
The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable.
Up next on the program, we'll get to the business end of the state visit. We'll catch up with Anne-Marie on the ground in the UK. From New York City this morning, good morning.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television. We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Chairman Powell, it's challenging to know what to do. There are no risk-free paths from here. So what do you do the day after a very challenging meeting? You buy stocks, up by 0.9% on the S&P, on the Nasdaq up by 1 full percentage point, on the Russell up by 1.5. In the bond market, yields lower across the board, unwinding yesterday's move. Twos, Bramo, back down to 352.
This is clearly a Federal Reserve that's going to cut rates, maybe not as much as previously expected. And actually, you did see Fed funds futures increase the potential rate at the end of 2026. That said, the idea that this Fed is going to cut despite the elevated inflation rate, has been locked into the market psyche, and this is a Fed that is clearly underwriting risk assets.
Should we lighten the mood and move away from the Federal Reserve for a moment?
Was that dark?
Just for a beat.
Okay, sure.
Something more exciting, some theatre. Under surveillance this morning, from pomp to politics.
We're joined by history and fate, and by love and language. We're like two notes in one chord, each beautiful on its own, but really meant to be played together. The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable.
Is there anything more British than that scene right there?
I mean, that's what I said to you. I was looking at this and I was thinking to myself, you could have taken this out of a Hollywood movie and known exactly where it was, the exact mood, the mood music, and then you pointed out for 0.0001% of the British population, but that is sort of how we think about the UK.
You know, I've said this a few times, whatever your politics, I can't think of a single person that enjoys being the president much more than the president of the United States, Donald Trump. Is there anyone that enjoys this more than him?
This is a second visit at a time when this is, already a fraught visit when it comes to some of the tariff rates and the politics around it, and yet this, I think, is what he aspires for the new ballroom to look like in the White House.
I don't think you're far wrong. Let's put it that way. If you're just joining us, welcome to the program. Here's the latest this morning. President Donald Trump praising the long-standing relationship with the United Kingdom. The president joined by a long list of guests, also expected to attend a business reception later on this morning on the ground. Following things is Bloomberg's Anne-Marie. AMH, talk us through what happened in the last 24 hours, and let's get to the business end too, what we can expect throughout this morning.
Well, the president himself has called Windsor Castle the ultimate setting, and you can see the pictures yesterday. Absolutely picturesque. Hollywood, to Lisa's point, maybe meets Hogwarts in terms of what we actually saw take place at this state banquet. The president was leaning into this special relationship, talking about how it's two notes of one chord, beautiful separately, but they should be played together. And we should note the royal family really went above and beyond to make this incredibly personal for the president. Even they included a 1912 cognac to represent the birth year of his Scottish-born mother. But that special relationship is going to get a little bit more tense today. Keir Starmer, the prime minister, will be hosting President Trump at Chequers. They are there right now together. They're going to have this business reception, which is going to be welcomed by both of these men, especially given the fact that a lot of those faces we saw last night, like Mark Benioff, Sam Altman, Tim Cook, are going to be at that reception. Jensen Huang, who this week said he declared the UK will be an AI superpower, that's going to be the easy part. Then when it comes to the press conference, this is where the special relationship can get tense. There could be questions on trade, which those discussions we have assumed and we are told really are being shelved right now. The UK wanted to push for lower tariff barriers on steel. We know that geopolitics is going to be front and center because the Times is reporting that once President Trump leaves this weekend, Keir Starmer will formally recognize Palestine as a state. And then an awkward moment potentially about Jeffrey Epstein. Headlines that dominate with the president back home in Washington are also a problem right now for the prime minister, given the fact that he just ousted his British ambassador to the U.S. because of close ties to that man. So it's going to be during the press conference where all the happiness and the close bond, the kinship of last night could be evaporated.
Anne-Marie, appreciate the update. We'll touch base with you in the next 60 minutes or so. Still with us around the table, the chief equity strategist at Evercore. We've got Julian Emmanuel with us. Julian, I want to talk about the trade story that Anne-Marie alluded to. This market has moved on. It feels like years ago, even though it was only 5-6 months ago that April 2nd happened. This Federal Reserve is prepared to look through the consequences of the trade war too. Are you prepared just to move on, to forget about it?
But factually, what we're seeing is what we've seen over the course of the last decade plus, is that both corporate America and consumers are adaptable. We're really, we're managing through the tariffs. There's, been some pass-through. Again, that's the whole idea of the one-time adjustment higher. But there's also been, the flow-through in terms of margins which remain elevated. And then, of course, suppliers bearing a part of the cost. We do think it's part of the message of inflation and growth being where they are right now. But when you look a year from now, that effect is likely dissipating.
how much are we overlooking the retail sales? And clearly that weighed on the Fed's decision, and the reason perhaps that Mickey Bowman and Chris Waller didn't dissent with 50 basis points. I keep thinking about what Mohamed El-Arian said about how after the pandemic, a lot of retailers removed those stickers that said $1.99 suggested retail price. Those no longer exist on any of the packages because they see prices as more fungible and consumers as more adaptable to higher prices. How much does that change the way that tariffs will be passed through in the economy versus, say, 2018, when they weren't as widespread and when people were more conditioned to almost zero inflation?
Well, it all comes back to what it always comes back to, given the structure of the U.S. economy, the importance and the health of the consumer, right? And that's why, again, when you think about the message yesterday, there is some uncertainty around what the labor market dynamics actually are. What is the correct number for monthly job ads now, given the change in immigration policy? It might have been 120,000. Last year, it may only be 60,000 now. But the point being, again, is that, and it's been said a million times, don't underestimate the consumer's propensity to spend in this country, and that's what we're seeing.
You seem pretty comfortable. On a scale from, say, hiding in a bunker to raging bull, where do you stand?
Look, we're telling people that you should actually think about hedging here against a core structural long AI portfolio, because frankly, the sort of 10 to 15% pullbacks that were part of the late 1990s, you're going to get one in here at some point, and there is a huge amount of good news that's been priced in, and you are really approaching all-time high multiples. Multiples alone don't kill the market. It's really more recession and rates that do. But bigger picture, we do expect a period of what I would term FOMO, accompanied by a much more robust capital market cycle that, if you think about it, there's been pent-up demand for transactions for over a year now.
How bullish is Julian? This was the title of the note that I got overnight from Julian Emanuel. Nowhere to go but up. That was the subject title of the research piece released overnight. Nowhere to go but up.
Yeah, this sounds like raging bull, but Julian, being a disciplined analyst, is saying you've got to hedge. And I guess I'm thinking to myself, hedge but don't sell. And that, I think, is the key. Hedge and find ways to maybe offset any type of downside, but don't get rid of those stocks because they're going to keep on going up. And this seems to be what everyone thinks, when there's confusion, just buy stocks.
He also knows how to get us to open an email too, doesn't he? That works. It's effective.
Fair.
Julian, it's good to see you.
Great to be here.
Thanks for spending some time with us. We appreciate it. Julian Emanuel there of Evercore. Equities at the moment higher by 0.8% on the S&P 500, bouncing back big time so far this morning. Rally in the bond market as well, so big rally in stocks and bonds to start Thursday morning. Coming up next on the program, we'll catch up with the former NEC Deputy Director, Everett Eisenstadt, on continued trade talks happening between the UK and the United States across the pond, between the President of the United States, Donald Trump, and the Prime Minister, Keir Starmer. Plus, we'll get you some morning movers. We'll touch base with Yahira. Google, jumping on news coming out of China. The latest on that in just a moment. That stock is higher by 1.4%.
have said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive, getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
A very mild two-day losing streak on the S&P 500. We're taking that back and some so far this morning. Higher by 0.8% on the S&P, on the Nasdaq up 1%, on the Russell up by 1.5%, and that has been the story. Outperformance of small caps ever since early August, when we first got that very weak July payrolls report, and we started to bake in some serious Fed rate cuts, even with the Federal Reserve failing to meet very lofty market expectations. This rally resumes in the bond market, 2-year. Big range yesterday at the front end of the curve, 9 basis point trading range. The 2-year down again this morning by 3 basis points. Again, taking back the move of yesterday, 352.37. This is where we're anchored at the moment, Bramo, at the front end of the curve. It's really settled around this kind of number. 350.
Yeah, people seem to be coalescing around the idea of 5 to 6 rate cuts by the end of next year, maybe taking off one of those after not seeing a dissent from other members other than Stephen Myron. That said, I think there's a real question of how long this can really help the Russell 2000, how long this can keep propping up stocks until we get an answer to some of the very big economic questions the Fed certainly cannot resolve.
Which makes it really difficult to internalize the message, if there was a message coming from the Federal Reserve yesterday. Key takeaway is front-end yields are 40 basis points lower than they were at the end of July, and small caps are a whole lot higher. 3 hours away from the opening bell, let's get you some morning movers. Here's Yohara with more. Hey, Yohara.
Hi, John. We start with Alphabet. Shares are popping 1.3% on an FT report that Beijing is scrapping its antitrust probe into Android. And the timing does not feel like an accident, with President Trump and President Xi Jinping set to speak tomorrow on the phone. So this is being viewed as Beijing extending an olive branch, yet Beijing's recent crackdown on Nvidia, which have ramped up in recent days, is calling into question how meaningful that olive branch really is. Meanwhile, we have some deal news in the pharma space, and it has to do with the red-hot obesity market. 89bio is soaring 83% after Roche agreed to buy the U.S. biotech in a deal worth as much as $3.5 billion as Roche seeks to catch up in this booming space. And this company, 89bio, has a treatment tied to that. So Roche is paying up and paying up big with an 80% premium to yesterday's closing price, which is right in line with where we're trading at today, John. Meanwhile, we are learning more about the fallout from the Cracker Barrel controversy, where it unveiled a logo change and quickly had to reverse after some backlash. Shares are falling nearly 10% here after the restaurant chain posted a disappointing sales outlook. It said that since the uproar back in August, foot traffic has dropped about 8%, and it will continue to be down for the rest of the year, just showing you how swift and aggressive the backlash can be when you hit one of these cultural and political nerves. John?
Yohara, appreciate it. Thank you. More from Yohara in the next 60 minutes or so. On a radar this morning, President Donald Trump and King Charles dining at Windsor Castle with some of the biggest names in tech. Apple's Tim Cook, Nvidia's Jensen Huang, and OpenAI's Sam Altman among those at a state dinner last night. Elsewhere, Alphabet rising in the pre-market. The Financial Times reporting China is dropping its antitrust investigation into Google's Android. The decision coming ahead of Friday's call between President Trump and China's Xi Jinping. And finally, China's Huawei is turning up the competition on Nvidia, the company unveiling its new SuperPod AI chip, expected to link thousands of other chips together to boost computing power.
Yeah, this actually makes me think a lot of what we discussed with Vivek Arya of Bank of America yesterday, where he was saying that certainly China wants to compete, and certainly they are very good when it comes to a lot of the hardware. The issue for them is the software. And can they understand the development? Can they expedite that and the ecosystem around some of this hardware to really match the United States? It goes to this question of how easy is it for China to truly surpass the United States in AI capabilities without the use of the likes of NVIDIA and other U.S. champions?
Respective governments are trying to choose winners and pick national champions. And it's very clear that NVIDIA in China is going to be in a more difficult spot in years to come, based on the very fact that the Chinese Communist Party wants Huawei to succeed more than it does NVIDIA. And you can see that based on the communication we've had, the reports we've seen from the team over in Asia, repeatedly, that the Chinese government is pushing these companies to pursue Huawei's technology and not NVIDIA's.
I just wonder long term, when we look back, and I apologize for being philosophical, maybe I didn't get that much sleep last night, will this be viewed as a good thing? The idea of trying to pick state champions to be the leaders in the tech universe, does that lead to good business decisions and good technological decisions? Or is it short-sighted, the idea that Huawei could make these super chips, the idea of bundling together for superpower, without the development of software that can really adapt it in some sort of concrete way and disseminate it? If that's the case, can they really catch up, or are they throwing good money after bad? And equally in the United States, if you end up saying to the likes of some of the big tech companies, you have to make this, that, and the other investment, is that going to be positive for them down the road? That, I think, is what a lot of investors have to get their heads around.
We're both capitalists. We don't like central planning. Then we should say that up front.
I think everyone could tell.
But this is the reality of national security issues. The president talks about his relationship with Xi Jinping, and it's obviously for diplomatic purposes. These two countries are not friends. And they both face the same risk. China is aware that at any given time, the president can turn off the supply of American technology to China. And I think also the American government is well aware that the same thing can happen to them, particularly if Taiwan is compromised, and that we need to build out domestic foundry capacity in America. That's the direction of travel. The question I have at the moment is whether, if you're a multinational company, say NVIDIA, can you take advantage of both markets? At the moment, maybe, but for how much longer? They're the questions I'm thinking about for the future.
I think it's a question a lot of people are thinking about, and I think that Jensen Huang is trying to play the ultimate diplomat, but at a certain point, like so many others, he may be forced to choose.
Got to pick a side, maybe, potentially. The stock is up this morning by 2.4%. Let's turn to trade. President Donald Trump meeting with UK Prime Minister Keir Starmer before concluding his second state visit today. Everett Eisenstadt, the partner at Squire Patton Boggs, writing, the UK government rolled out the red carpet for President Trump. The atmosphere certainly points to stronger bilateral trade relations, including in trade and investment. The former Deputy Director of the NEC joins us now for more. Everett, welcome to the programme, sir. Always good to hear from you. They've rolled out the red carpet. What's it achieved?
Well, so far it's given everything. I mean, the setup for this negotiation today is really well done. The president's in a very good place. He's excited about the visit. He's enjoyed his time there. They're on with some of the greatest innovators from the United States are sharing the stage. It's a good environment, and I think that can bode well for the discussion. Now, it doesn't mean that everything's going to land in place, but it certainly sets a warm environment that I think makes the type of negotiations, the type of issues they're going to discuss, easier to manage and easier to resolve.
Everett, do you get a sense that the United Kingdom, given this special relationship, will actually achieve some sort of carve-out for steel, carve-out from other tariffs that are creating a lot of difficulty right now politically for that nation?
I don't think any particular country is going to get a full carve-out. However, I do think that the United Kingdom's probably going to get one of the best deals out of any country thus far. They've already set the stage for a good framework. They've got better terms of trade than a number of other countries. I think the first mover advantage they had back in May made a difference. They're building on that. And one of the interesting dynamics here is that this second discussion on trade is really part of an ongoing dialogue that's been transpiring ever since that framework agreement was reached. And that's an important point because these dialogues are going to continue to evolve. They provide a lot of opportunity for expanding issues, including things that will be discussed, such as digital services tax and other irritants that we still have. So they're great framework agreements, and they put a good framework for continued discussion.
There's also this question of who is with the president right now, a whole lot of tech leaders from the United States. And I'm sure you were just listening to John and I rant about the potential for capitalism to become something of state planning, but really the very legitimate, as John was pointing out, national security concerns. What do you think, from an economic and political standpoint, which you've held both hats, of this idea of the tech leaders being the commensurate diplomats, and for this to be a tool of both international outreach and national security?
It is absolutely fascinating. I did listen to your conversation. I agreed with most of what you said. The fusion of national security and technology, and it's here to stay, as is the relationship of business to government. Now, it's going to be different in different economies, but we're seeing more and more of that power of the United States being projected by the leaders that we have in the tech world. And there's a lot at stake here. There's a lot of issues they want to get resolved in the international trading environment. The fact that when you go with the president on a state visit like this as a corporate executive or a CEO, it's a pretty magnificent opportunity to have your issues front and center. And it sends a really strong message that this matters, and this is something that we really need to work through.
Everett, how seriously should we take the kind of announcements we've heard from certain tech firms about investing in places like the UK? Is that theatre too, or is that actually the real deal?
Oh, I think it's the real deal. I mean, I think and in fact, it's almost like soft diplomacy from the private sector, because they're coming with gifts, right? They're saying, if you can help us create an environment that enables our industry to thrive, we will invest in your country. And that was one of the reasons that so many countries enter into trade agreements with the United States, because they're able to put their economy in a place that attracts investment. So they're sending a very strong message. There's some things they'd like to see changed in the way that the UK government approaches digital services, and they're willing to put their money down. I think it's very real, and it could be a long-term trend that we see perhaps with other economies as well.
Everett Eisenstadt with his view on what's developing in the UK. Everett, thank you, sir, the former NEC Deputy Director. If it's real, is it achievable? We've talked a lot about the energy requirements for some of the announcements we've heard over the last week.
I was actually just looking up UK energy prices, spot prices over time, and I'm trying to track it to really understand exactly what you're talking about. This is true around the world, but especially so in the United Kingdom. And you just wonder whether you can achieve some of these lofty goals, given the political backdrop, cost of living crisis, demands for people to bring down the cost of living, and the idea that energy prices in the UK have risen quite a bit over the past year.
If you want a real-time price check, just call my mum. I'll hand you the phone. I get an update often.
Yeah,
expensive.
I'm so sorry. Yeah, he can pay. That's right.
He is.
Yeah,
Don't worry about it. He is. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. It's Vonnie Quinn. Hey, Vonnie.
Hey, John. Thank you. Tesla says it's working on a redesign of its door handles. The announcement follows a Bloomberg investigation that uncovered incidents of people getting trapped in their vehicles. Earlier this week, the National Transportation Highway Safety Administration opened an investigation into whether some Tesla doors are defective. Meta has launched the first version of its smart glasses with a built-in screen. The $799 Ray-Ban display features a screen in the right lens that can show text messages, video calls, directions and maps, and visual results from web searches. Meta CEO Mark Zuckerberg says the product will be a vehicle for what he calls AI superintelligence. Starbucks employees in 3 states filed a class action lawsuit against the coffee giant. The filing claims the company violated the law when it changed its dress code but refused to reimburse employees who had to buy new clothes. Starbucks' new dress code of a solid black shirt under their green aprons went into effect May 12th. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. You're finding it difficult to censor yourself this morning, aren't you?
Well, for a lot of reasons, but I think that the idea that it is difficult and you're going to sue over buying a black T-shirt, I'm just struggling with that a little bit.
Why do you think ultimately they are? And should the response be that Starbucks isn't paying them enough to go out and buy their own uniforms?
That might be the reason, or it could be the idea of individuality and the idea of
expressing yourself.
Yeah, because
the
that
cliche.
was a big issue of the Starbucks and the individual expression and some of the other messaging in some of the stores. And this could be a signal that if you want us to be uniform, you have to compensate us appropriately for that aspect. I don't know, but I'm assuming that has more
I'm right there with you now.
than just simply, a black T-shirt.
I'm a little bit slow this morning.
Well, I'm a little bit, slappy, so there we go.
Meeting you in the middle. Up next on the program, risk mitigation.
With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. You could think of this in a way as a risk management cut.
Up next, Francis Donald of RBC. From New York City, you're watching Bloomberg TV.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week. Welcome to Balance of Power.
This is Bloomberg Television. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Equity futures on the S&P 500. There is a lift here this morning, up by 0.8%. A range of views following the Federal Reserve. This from Neil Dutta of Renmac. If today's move was primarily about risk management, I think there is a risk that the Fed can fall behind on their employment mandate later. So many different views. Some people think their pursuit of 2% is incredible on the inflation side. Other people think they're falling well behind on the employment side.
Yeah, and Neil put out a note yesterday saying, remember Occam's razor, the idea that if it looks like a duck and it quacks like a duck, it is a duck. And there is this idea that maybe if you see weakness in the overlying numbers for the payrolls report, there is true weakness. And that currently is a concern, but right now it's not felt in markets.
We've certainly seen some weakness, that's for sure. Under surveillance this morning, risk mitigation.
Risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation, with downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. You could think of this in a way as a risk management cut.
So here's the latest this morning. The Federal Reserve cutting rates for the first time this year, highlighting downside risk to the labour market. Frances Donald of RBC joins us now for more. Frances, good morning.
Good morning.
What's your assessment to what took place yesterday?
I know we've probably said it 100 times since then, but this line, there are no risk-free paths ahead, it kept me up all night because I kept thinking, this isn't just about the Fed, this is also about the path for the economy. And everything I heard yesterday felt very much like a symptom of what we're experiencing in the U.S. economy, as opposed to what we're usually looking at, which is the Fed leading what happens next. And when we look at U.S. growth right now, it is true, there are no clear win paths ahead for the U.S. Either we're going to see tariffs flow through to consumers and see that higher inflation path, or it's going to result in businesses needing to cut costs, and that's further job losses. Neither of those paths are great. Maybe there's a muddle through in the middle. So there's no clear path for the Federal Reserve, but there's also no clear path for the U.S. economy, some symmetry between what Chair Powell said and what's happening in reality.
Do you think Chairman Powell has revealed a preference, a risk he's willing to take?
Of course they've revealed a preference. I remember 6-9 months ago, we started talking about stagflation light. What will the Fed do with the dual mandate intention? They've now told us very explicitly, a little bit of a wobble in the labor market, they are showing up to the party with the punch bowl, no question. And I'm going to push back a little bit against Chair Powell, if I may, and say, listen, like, we haven't had great job creation, but that unemployment rate's still very, very low. None of us know the true break-even rate for jobs in the United States. So we're at the very beginning, in my opinion, of seeing some labor market weakness, but we're also in the very beginning of seeing inflation heat up into year end. This Federal Reserve is going to be cutting rates into inflation reaccelerating in the United States economy, and that reveals their preferences very clearly.
As an economist, how much signal did you get from Stephen Myron, given his role, given his position with the president, given the fact that the Fed chair's position will be open early next year? Did you give it more weight, or did it give you less weight, or did you give it less weight when you considered that Chris Waller and Mickey Bowman did not join him?
Well, look, the number one theme I talk to my clients about is the significant fragmentation that is happening into the United States economy, that there are haves and have-nots. There are regions that are doing really well, and there are regions that are suffering. People that are doing really well, people that are suffering at the same time. And so when I look at that dot plot and the divergence within it, it again mirrors what's happening in the real economy, which is a divergence of realities and a divergence of perceptions of where we need to go next. So this divergence theme, I think it's going to continue no matter who's in their positions, because these Fed members, they're looking at different segments of the economy. They have different responsibilities for different regions. We should see divergence in that dot plot if we have folks who are focused on different elements of the U.S. economy.
I don't ask this flippantly, but is monetary policy broken? And I say this when you look at forward guidance that kind of means nothing. You look at the potential rates that the Fed has control over, and they affect some parts of the economy, but clearly not others in any sort of meaningful way in terms of slowing the economy or heating it back up. It just raises the question, how much efficacy has Fed policy lost?
Well, my outside voice would probably say something like, oh, the transmission mechanism is weakening, but my inside voice tells me, hey, we've moved from monetary policy dominance to fiscal policy dominance, and I'm more concerned about what is the path for government going to look like, what's going to happen to that long end of the curve. And most importantly, when I look at this economy, we have 25 basis points in. 25 basis points is not going to solve what ails the American economy. 100 basis points is not going to solve what ails the American economy. It's like taking ibuprofen for a broken arm. It'll take the edge off, but the real problem facing America right now is a 1 in 100-year trade shock that is going to weigh on investment, it's going to weigh on job creation, and it's going to increase prices.
So then why are people buying stocks and convinced that inflation is going to come down?
Well, it depends where you're looking, because this, again, a fragmentation, that trade shock creating a lot of fragmentation between trade sectors and not. And let's not forget, we're at this strange nexus where we have these big structural themes that are overtaking the cyclical. We talk a lot about AI as one of those structural themes dominating over the cyclical, but we also have huge government that puts a floor under growth, really mechanically hard to get a recession when you have governments that are this big, huge retirees, demographic shifts, and 1 in 3 jobs in America is either government, healthcare, or social assistance. 20% of incomes in America are government transfers coming through. So we don't have that same sort of cyclicality that we had in the past. This is an economy that's less interest rate sensitive. It's less business cycle sensitive on a go forward. Does that mean it's broken? Well, maybe this is just a different type of economy and we need new tools to look at it. Hearing Chair Powell yesterday wrestle with how to communicate was really just another symptom to me that economists are having to grapple with a new economy, new tools, and new ways to forecast.
I'm picking up 2 things from you, and I think this is a fantastic experience for the both of us getting this original insight on how you view the labour market and inflation. That perhaps, one, the payrolls reports we've seen overstate some of the weakness elsewhere in the labour market, and 2, you keep returning to the fact that you expect inflation to pick up. Now, the chairman has essentially said it could be the kind of inflation the committee can look through. Would you push back against that too?
100%. Now, I accept goods inflation. Let's just take that. There's tariffs. They're one-offs, as they say. Although, just a little asterisk on that. That's a little more complicated because the tariffs moved up and down. They spread. It's not clear what products they're on, et cetera. But look under the hood at services inflation. Services inflation is still an issue. In our estimate, there's different estimates. We have OER remaining sticky, and we have wages remaining relatively sticky, a floor under that. So even if you take out goods, and even before tariffs are coming through, we were concerned that the Fed would not get back to 2% inflation in 2025 and into 2026. And just optically, getting above 3%, our forecast is 3.4% by the early 2026. Optically, it's real hard to do that. But they can, John. They can use any measure. Remember, Supercore, Fed can come up with all sorts of, we're going to take this, X this. If they want to ease, they can do it. They're going to have to be very convincing to markets, though.
Was it the Cleveland trimmed mean? Remember playing around with that too?
I've played around with so many things, and then finally I just go to gas prices, and that's essentially my metric.
People's real experience of what's happening.
I mean, that, or you can go to eggs, or you can go to chicken, or you can go to blackberries.
Francis, you alluded to this too. You expect to see it in early 26. That's soon. Is this going to become apparent to more and more people in the months to come?
Early 2026 to mid-2026, and we map out when we think tariffs are going to start to be impactful. I do not believe that if tariffs were going to show up in the price data that they would already be here. We need to see significant inventory drawdowns. They are different by sector, so you have to look at each individual sector to get a sense of that. And then companies have to make decisions, and those aren't happening in real time. So early 2026 to mid-2026, before I'll feel comfortable sitting with the two of you and saying this was the impact of tariffs on the economy.
Yeah, credit to you too. I think it's important for people who haven't been following your research and some of the commentary that you've had when you've come on this program. This isn't a mark-to-market call. You've been talking about this for a while. You're going to have to wait. This is the process we've been discussing. Not a one-off event. Wait. It's going to happen in the months to come.
What Francis just discussed to me was so refreshing. You are correct. The idea of a very different economy, that you have to use new tools to analyze, and how difficult it is to really look at past experience and pass it through to now, given all of the different cycles that seem to be superimposed on top of one another.
Chairman Powell's term ends as Fed chair in May, and there's all this speculation of him hanging around and keeping his seat as a governor on the board. Based on how difficult things are right now, I'd be looking forward to retirement, wouldn't you? Just May. I'm getting out there.
I ask you, would you enjoy getting up every month or every 8 times a year and doing that press conference?
If I had Chairman Powell's personal balance sheet and a kind of money that I could command for speeches on the circuit after all of this, I'd be long gone.
I imagine it's pretty stressful. Yeah, I imagine it's not an easy job.
I would be long gone. Francis, it's good to see you. Francis Donald of RBC. Up next on the programme, Gargi Chowdhury of BlackRock, John Lieber of Eurasia Group, Kit Jukes of SocGen, and the former Kansas City Fed President Esther George, the second hour of Bloomberg Surveillance. Up next.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
A cidade estava sitiada.
Isso eu começo, eu tremia, não sabia o que fazer.
Foi a mais terrível que eu passei na minha vida.
Eu temo, que o Brasil se torne
num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering, and someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency. Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
Astonishing day for U.S. technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity. Only on Bloomberg.
There's a lot of tension between the inflation outlook and the labor market outlook.
I'm not that concerned about inflation.
There's a risk to the dual mandate if you pursue the maximum employment and you put the inflation at risk.
They are cutting rates into that environment.
And at the end of the day, you cannot get full employment sustained unless you really derail inflation.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning, good morning. For our audience worldwide, the second hour of Bloomberg Surveillance starts right now, and it starts with some breaking news. We've got some things to get through. This headline just crossing the Bloomberg terminal, NVIDIA to buy $5 billion in an Intel stake as part of a new partnership.
This is a fascinating move given the fact that these are longtime arch rivals, and Intel has been really struggling. Ideas potentially of the U.S. getting involved. In this agreement, NVIDIA is going to own less than a 5% stake, buying common stock at about a 6.5% discount to Wednesday's closing price. And this really is a question of how much the U.S. is going to really underwrite Intel's effort to be a foundry and some sort of competitor to TSMC. To your point earlier, this idea of self-reliance in an uncertain international world.
Intel up 13% in the pre-market, NVIDIA up by 2.5. Let's head down to Washington, D.C. to get you an update and get your reaction from the UK as well, where Jensen Huang of NVIDIA is on the ground in the United Kingdom. Our team coverage starts right now with Anne-Marie and Tyler Kendall. Tyler, first to you. A big headline crossing the Bloomberg terminal.
A big headline, quite the headline, John, for two companies that the U.S. government has a vested interest in. In a statement, we heard from the NVIDIA CEO Jensen Huang, who called this a historic collaboration. As part of the deal, Intel is going to use NVIDIA graphic technology in upcoming PC chips, and NVIDIA will use some of Intel's processors in order to meet the demand from AI data centers. The idea here being that they're really going to work together when it comes to some of this chip development. And it follows, of course, a recent push from this administration
administration to bolster the domestic chip supply chain. Of course, last month, President Trump signing that deal that gave the U.S. government a 10% stake in Intel in a bid to sort of repurpose some of the existing CHIPS Act money. And I'll also point out that Japan's SoftBank made a surprise $2 billion investment in the company last month, too, amid this mounting pressure from the administration for this sort of money to be put up in order to clinch these trade deals. Now, I do want to point out one pretty important stat from this story that's now on the terminal. Analysts estimate that at some point next year, NVIDIA will pull in more revenue per quarter than Intel gets in a year. Of course, John, as you well know, this White House, this president has really shored up ties with NVIDIA as the company now finds itself really at the center of some of these sensitive trade negotiations.
Lisa, this is a really important development. You just listened to what Tyler was talking about there and the president's involvement in all of this. What's his objective? Build out domestic foundry capacity. One. What needs to happen after that? Someone needs to use it. And we've been talking about this over the last month. Who would be pushed to use it? This is not about a push anymore. NVIDIA essentially is telling you they're ready to use it, they're ready to partner with Intel to make this happen.
Yeah, and specifically on certain chips for PCs and other devices, the question is whether this is going to be a big effort or whether this is going to be more performative. And this is something that we've asked when it comes to China and the Huawei move earlier, this idea of, is the technology comparable? Or is it going to be tough to move away from, say, TSMC and Taiwan for the U.S. chip manufacturers?
Intel, higher again, up by 18% in the pre-market. Anne-Marie on the ground in the UK. Anne-Marie, I imagine this announcement is music to the ears of the president.
Absolutely. The president has almost become, what, a co-CEO of Intel, putting a lot of pressure, one can imagine, on a lot of these companies since, as Tyler mentioned, almost 1 month ago to the day, the U.S. government decided to take that 10% stake in Intel. And the question, Jonathan, you, me, and Lisa sat around the table and asked, who is going to be next to either buy these chips from Intel or invest in more money to make sure that Intel could once again become a national champion? So on one front, you once again have what many would maybe call unconventional, what the U.S. government did, but certainly this is going to mean that more support could be flowing into the company like Intel. And then to Lisa's point, what did we hear today out of Huawei, out of Beijing? This highlights a core issue for the United States. Huawei basically announced a multi-year plan to take on the dominance NVIDIA has in the marketplace. Howard Lutnick, the Commerce Secretary, has said time and time again, we have to make these chips in the United States. We have to make sure we are a dominant player in this. We cannot lose to China. Jensen Huang told me himself he doesn't feel like China's behind. They're right up against them in terms of where they are in the market and in AI technology. And the Commerce Secretary has said we have to make these chips in the U.S. We can't rely on Taiwan. So from a national security perspective, this really is in line in something we've seen from this White House. And once again, highlights, I would be absolutely shocked if the president and his team had no influence on this, highlights the heavy hand they are really taking in the semiconductor industry.
Anne-Marie, with the latest alongside Tyler, to the both of you, thank you. A big move for Intel in the pre-market, higher by 19%. NVIDIA up by 2.3%. The headline just crossing 5 minutes ago, NVIDIA taking a $5 billion stake in Intel as part of a new partnership. Some other news crossing as well from the Bank of England. I'm going to squeeze that in for you. So rates are unchanged on Threadneedle Street in the City of London. They've kept those interest rates at 4%, but as expected, they've slowed the pace of QT to £70 billion. The estimate, indeed, was £70 billion. The interesting adjustment as well that's taken place here, they'll sell fewer long-term gilts than other maturities. Long-dated bonds to account for about 20% of sales from here. So we've got a tech story, and we've got a bond market story too.
Yeah, and I wonder how much long-term this is going to be connected. But just sticking on the bond story, the idea of the adjusting of the balance sheet, the adjusting of just how their central bank is going to deal with the issuance and the lack of demand for long-term rates is something that's a story playing out across the world.
Let's park the bond market story. Let's just sit on NVIDIA. What a story this emerged with Intel. First the government partnership, and now NVIDIA, the champion of the whole sector, arguably of the whole equity market, giving them an endorsement and the support that they might need to succeed in the future.
As an investor, How do you invest around this? Is this more the idea of having faith that the U.S. government and potentially other tech companies will do whatever it takes to support Intel, even if they make missteps? I mean, this stock is up, before this move today, almost 24% so far this year. Although it's been struggling for a number of different years, but how much is this faith that there is so much interest in making this a national champion and a foundry that tech companies in the U.S. can use, that it's very difficult to bet against them? How much is that something, as an investor, you can move against?
Gagi Chaudhry of BlackRock joins us around the table. Gagi, good morning.
Good morning.
I know we won't address single names, but I do want to understand the concentration risk around some of these stories. How much of the fate of this market is in the hands of just one name, one CEO, one story?
Sure. Good morning. Good to be here. So this was exactly the theme that we write about in our fall investment directions that we wrote in early September, still very relevant now. And the theme that we highlight there is, we all grew up in the markets hearing the old fable of don't fight the Fed. Now it's don't fight the Fed and don't fight the AI trade, because that is what is going to drive sectors, and it's what's going to drive the overall performance of the index. Yes, due to some of the names very much being a part of the broader index, but those few names, the top 10 names, are also where the majority of the earnings growth is coming from. And while we read these headlines, I think we shouldn't lose sight of that fact, that if you look at year-to-date returns, 75% or so have come from, of the total returns, have come from earnings. And when we see these headlines and we recognize what the future of an Intel and NVIDIA is going to do, I think what it points to is further earnings growth just driving the S&P higher. So keep AI as a core theme in your equity portfolio. But I think more and more we're recognizing that you're going to have to do it in an active manner, because there's certainly going to be names that are going to be losers within this AI race and winners as well.
How are you active in management, given the potential for political overlays to the tech story, as we've seen from the U.S. and from China?
What I mean by how one can be active is obviously thinking about certain sectors or certain stocks themselves that can not be as much of a beneficiary. And we actually saw that around this earnings season, right? We saw some software names that are not able to use AI as much as one would have thought, as much as expectations were, and are absolutely losing. And then obviously you have more of the hyperscalers as well as the chip manufacturers that are very much able to participate. So that is the active management. Obviously, in our fall investment directions, we talk about doing that through an iShares active ticker BAI, but investors can also do it with, broad large cap ETFs. They can do it through broad large growth ETFs versus moving away from small caps, which has been our theme for the year.
Okay, that is exactly where I wanted to go. This idea of don't fight the Fed and don't fight the AI theme. Are they in conflict? And this is the way that they were yesterday. The idea that people saw this is an opportunity to go out of some of the high flyers and the expensive stocks and into small caps that were less highly valued. And you saw that rotation yesterday. You think that's a head fake based on what you just said? Why?
I think so. So I think that we obviously saw August as a great month for small caps. And then as September came around, we've seen that fading just a little bit. Historically, we've looked at periods where small caps have outperformed the large caps in more than 300 to 500 basis points. It hasn't really been able to be very sustainable. And partly it's the growth story in small caps. You just don't have that earnings growth. But broadly, we all know what's happening. I think Francis was talking about it earlier in terms of the economy is changing, and the rules that led to our investment thesis last decade will not work now. Many companies are staying private for so much longer that companies, when they finally go public, as we can see, the size of IPOs going from about 300 to 500 million to over $1 billion, they're now no longer small cap companies. So the market is shifting. You have also from a macro perspective, rates are still higher than the sort of zero regime that we were in for a very long time, and you don't have the earnings growth. So I think we can see certain short-term movements, and I think we've seen investors play that via options on things like IWM. Absolutely do that, but this is not a sustainable theme. Come back to large cap, come back to growth, come back to AI.
Come back home. There's a massive difference between what is driving the Fed and what is driving the equity market, public markets. What's driving the Fed is payrolls growth. And what's driving the equity market, the S&P 500, the capex intentions of a handful of companies. And that's been a long-term story now.
And the CapEx that is geared at creating technology to make humans more efficient, potentially to replace some of the functionality of humans, which is in direct conflict with the idea of job creation. A lot of people will push back and say, actually, it will just make our jobs better and enhance them and actually create other jobs. And like every tech revolution, which I'm open to, but this is sort of the conflict, the difficulty in understanding the Fed's reaction function to that sort of seismic structural change.
Intel, by the way, still climbing, higher by almost 30% in the pre-market. Unbelievable. Gagi, good to see you.
Good to be here.
Didn't expect that breaking news. Thanks for dropping by. Gagi Chowdhury there of BlackRock on the market. Let's give you an update on that story with NVIDIA and Intel and a whole lot more. With your Bloomberg brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, John. Yes, recapping that breaking news we got just a few minutes ago, NVIDIA investing $5 billion in Intel. The company said they will co-develop chips for PCs and data centers. NVIDIA will buy Intel common stock at $23.28 per share. That's a 6.5% discount to Wednesday's closing price. The Bank of England holding rates steady at 4% amid growing concerns about a resurgence in inflation. The bank kept its guidance and warned that future cuts will be, quote, gradual and careful and dependent on the extent to which underlying disinflationary pressures continue to ease. And shares of Cracker Barrel plunging in the pre-market after the company's sales guidance missed expectations. The weaker than expected outlook comes as the restaurant chain is dealing with the fallout from its controversial and short-lived logo change. And that is your Bloomberg brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next on the program, a priceless partnership.
The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable.
We'll talk about an old partnership, the UK and the US, and a new partnership, Intel and NVIDIA. Up next with John Lieber of Eurasia Group, live from New York City this morning. Good morning.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question.
Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. It's the world's second largest economy with a growing influence in global affairs. Bloomberg The China Show brings you the unmatched expertise you need to keep track of breaking news, in-depth market analysis, and the most influential newsmakers in and around China.
We need to do more to engage the market more.
We're risk on.
I think we caught a little sweet spot.
Massive savings right now.
It's already a different game.
Bloomberg The China Show. Weekdays around the world, right here on Bloomberg. Context changes everything. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Breaking news just moments ago, 16 minutes ago, and this is the outcome. Up 33% for Intel in the pre-market. NVIDIA agreeing to invest $5 billion in Intel and saying the two will co-develop chips for PCs and data centers.
And this comes after the U.S. already discussing taking a stake in Intel. Those shares already up more than 20% so far this year, largely on the heels of that government intervention. Is Jensen Huang now part of the government sort of intervention for Intel? Is that what partly is behind this?
Okay, so I think you're framing this in the right way, and you're going in the right direction. Is this a partnership between Jensen Huang and Intel, or Jensen Huang and the White House?
Exactly. This, to me, underscores whether this is actually a real partnership that will be a more widespread production hub of Intel for the likes of NVIDIA going forward, whether it can be a competitor to the likes of the Taiwan Semiconductor Company, or if this is performative to try to say, look, yes, Mr. President, I am supporting the domestic push for independence.
Under surveillance this morning, a priceless partnership.
We're joined by history and fate, and by love and language. We're like two notes in one chord, each beautiful on its own, but really meant to be played together. The bond of kinship and identity between America and the United Kingdom is priceless and eternal. It's irreplaceable and unbreakable.
The president reflecting on an old partnership between the United Kingdom and the United States. Later on today, at a reception with top tech executives, he can reflect on a new one, a new partnership between Intel and the NVIDIA CEO, Jensen Huang. Joining us now on the ground in the UK is Bloomberg's Anne-Marie. Anne-Marie, we've been talking about it. You helped break the news. Is this a relationship between Jensen Huang and Intel, or Jensen Huang and the president?
Well, John, it certainly seems like this is a relationship between Jensen Huang and President Donald Trump. Jensen Huang has been a consistent presence in this White House alongside the president throughout this entire second term. Remember, it was Jensen Huang that was in the Middle East with the president, and then he continuously called out. Jensen Huang was his friend, but his other friend, Tim Cook, decided not to come. Well, who was here on his UK state visit? Jensen Huang, of course, who this week in the United Kingdom said that he is going to be marking this week as the week the AI became, the UK became an AI powerhouse, and also Tim Cook. What CEOs are starting to realize is you need to have that access to power in this administration. And it does seem like we don't have full reporting yet. We have not heard a comment yet from the White House. But when the U.S. government a month ago to the day took a 10% stake in Intel, you pretty much saw that Donald Trump was going to be the Intel co-CEO, ultimate salesman, probably was going to go around, talk to other tech companies and say, what can we do to make sure we save this business and more companies are buying chips from Intel and we build up this national champions? And that seems to what is being done right now if you connect all of these dots. And it's not going to be lost on anyone. The president comes out in 30 minutes time at this business reception where Jensen Huang is likely going to be sitting. He's going to want to talk about this kind of collaboration in the semiconductor industry, which we've seen a massive heavy hand from the president himself get involved in.
Anne-Marie, thank you. That stock is flying. Intel higher by 29% so far this morning. To extend the conversation, John Lieber of Eurasia Group joins us now for more. John, I'm sure you've been tracking the breaking news of the last 20 minutes or so. How are you reflecting on this new era of statecraft led by the president, Donald Trump?
Yeah, I mean, the U.S. is in its state capitalism era right now. And I think that Donald Trump is doing these deals and he's pressuring companies because he wants to create national champions. There's a lot of concern about the competition between the United States and China in the AI space and semiconductors. And Trump hasn't been shy about cajoling and even bullying CEOs to get what he wants. And the CEOs see a tremendous opportunity to partner with the United States government and get access to capital and get these diplomatic visits that are going to result in tens of billions of dollars in new investments in the United Kingdom, which of course itself has a diplomatic overlay as well because of the U.S.'s growing hostility to the regulatory environment in the European Union. And so part of this trip is about bringing the UK a little bit closer and announcing that this partnership with U.S. businesses is much stronger in order to send the signal to the Europeans that the environment really matters if you want to attract U.S. investment and U.S. partnership.
What's the precedent for you, John, that really matters when it comes to looking at the U.S. trying to support national champions for national security reasons for an entire industry?
I'm not sure there is a precedent like this. I mean, you think about the aerospace industry, I guess, during the Cold War and the emergence of a number of the large prime contractors, defense contractors that the U.S. deals with. There's probably other examples as well that I'm not as familiar with. I think this era is truly unprecedented, though, given the speed of tech acceleration, the dominance of these companies in the marketplace, and of course the ongoing threat from China, which isn't stopping its own innovative path and is going to eventually have technology that competes with the U.S. toe-to-toe. And I think that's a major concern of policymakers, and they see it coming, and that's one of the reasons there's so much support going into this industry right now.
John, maybe I'm going too far down a rabbit hole, but one of the obstacles for the United States to really compete when it comes to a foundry, the actual manufacturing of a chip, has been training. There is an entire ecosystem in Taiwan around training workers to specifically be able to do pretty highly skilled jobs to make these really advanced chips. I'm just wondering, is there any appetite in Congress to come up with training programs or training incentives to try to create the workforce to really meet the moment in the United States?
Yeah, worker training is something that Congress has been trying to get right for decades, and I think they haven't quite got it right yet. There's a lot of support for community colleges or technical training programs or apprenticeship programs like they have in Germany, but the U.S. is such a big, messy place that it hasn't really gotten that together, and I think it's important that you mention these bottlenecks, which are, of course, a challenge for the administration across the board. You've got energy, you've got labor, you've got talent. And it's also notable that I think that it's hard to really see a coherent strategy here from the White House when one part of the administration doesn't know what the other part is doing. You look at the raid on Hyundai last week, and this was driven by DHS agents who were looking for a big bust, and that was directly antithetical to this idea that you'd want to attract foreign investment and build some of these high-tech manufacturing plants. This is going to be a problem in the semiconductor industry as well, because of exactly what you said. The U.S. lacks the talent and needs the migrants coming in to do so. So I think over time, we'll see the U.S. get that policy mix right. And I think that but because of the lack of training, you're going to see a continued reliance on foreign workers.
John, I'm pleased you said that. It's going to take time, and we have to give it time and space. But do you think there will be long-lasting consequences of that raid on Hyundai?
Yeah, I mean, this raid was a top story in Korea and South Korea, and you had workers who were deported from the United States for doing absolutely nothing wrong. And I think this was seen as a major breach of trust by the South Korean government. I thought it was notable that in the Truth Social post Trump put up, he basically apologized. He didn't say the words "I'm sorry," but he more or less apologized to the South Koreans for having deported hundreds of them. And I think that this is an issue of trust when looking at the United States. If I'm the Japanese, looking at the investment accelerator that was recently announced, if I'm the South Koreans, if I'm the Europeans, I think there's an issue of trust that you can't really rely on the U.S. to follow through on its promises. And that's going to be hard for and of course, the U.S. market is massive. There's billions of dollars at stake, and these countries and these companies want to be inside the U.S., but it's very difficult to trust the administration right now.
John Lieber of your Asia Group. John, thanks for jumping on and reacting to that breaking news. Intel in the pre-market higher by more than 28%. NVIDIA up 2%. NVIDIA higher by more than 3%. Wouldn't you love to be at that banquet today, just to hear that conversation between the president and the NVIDIA boss?
I've actually been looking up different royalty movies from the 1800s in Britain to see what the parallel is to some of those scenes and what the women have to wear, although the attire for the women is somewhat different than the men. The white tie, the white bow tie, and the cummerbund and all that.
I'm not really cut from that cloth, so I wouldn't know.
Well, I wouldn't per se. I'm just looking at that and thinking I'd probably be more interested in that. Just trying to wrap my head around how to fit into that than I would the conversations. I don't know how much actual stuff gets done at a meeting.
I imagine the president already knew anyway. I'm not sure this is going to be. Not sure this is going to be a new development for him. We're watching this come together in real time. This new era of statecraft. Mistakes can happen. This can get messy, I know, but this is the direction of travel being driven by this White House.
So who's next? And I think that that's the key question. Which tech giant is next to commit in some capacity to using Intel as a foundry? And can they do that with Intel pulling up its resources in tandem to meet the moment? And that, I think, has been the capability question that we've been asking, not just for the U.S., but also for China.
What does NVIDIA get in return? Does this open the door to certain chips being exported to China?
Great question.
These are things we've got to talk about.
That.
We'll talk about that. Kit Jukes, the SocGen's going to join us shortly, and we'll get you some movers, the big mover in the pre-market. Intel absolutely flying.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Middle East and Africa. Vibrant resources and high-yield investment opportunities abound. Join me on Horizons Middle East and Africa for the stories, newsmakers, and insight from this exciting region. Now weekdays, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
Equities flying up by 0.8% this morning on the S&P 500, up by more than 1% on the Nasdaq, up by 1.5% on the Russell. There's only one story in town, though, in the last 30 minutes or so. So let's get to your morning movers. Let's touch base with Yahara for more. Hey, Yahara.
Exactly, John. We are seeing a massive move in Intel shares. They are rising now 26% on news that NVIDIA is investing $5 billion, and the two will team up to co-develop chips for PCs and data centers as the AI infrastructure build-out continues. NVIDIA also rising on the news, down up 3.25%. But AMD left out of the party. It is down 5.4%. But going back to the partnership, it just feels like something bigger, especially after the U.S. recently took a 10% stake in Intel to prop up the American chip maker. Meanwhile, we are seeing shares of PayPal rising on another partnership. It is partnering with Google, so shares are up 2%. They are going to partner up in online shopping, combining PayPal's checkout tools with Google's AI. And this is part of something bigger down the line that could include letting autonomous AI agents shop for you, as if I need more help shopping. Meanwhile, we have Novo Nordisk shares. They are rising 7% after new data showed that Ozempic outperformed Eli Lilly's Trulicity in a massive study involving 60,000 people. It showed that Medicare patients on Ozempic were 23% less likely to have a heart attack, stroke, or die. And for Novo, this is the edge that it wants to present in the GLP-1 race, that its treatments do a better job than Eli Lilly's at warding off heart disease. So shares are up on that news. John?
Yahara, thank you. Appreciate the update. Let's get back to that main story on our radar this morning. Intel shares surging in the pre-market. NVIDIA announcing a $5 billion investment in its rival. The two will co-develop chips for PCs and data centers.
And I do wonder about what Jensen Huang's relationship will be with the CEO of Intel, especially because of his support from the president. Yes, this stake is less than a 5% stake in NVIDIA, in Intel. I'm talking about the stake that NVIDIA is making. And yet the idea that they're working together, I wonder how much this is Mr. President going to Jensen Huang and saying, you know, you can really get your fingerprints in this. You've done a really good job at NVIDIA. Maybe take a look at what they need to really get this underway. I'm just in the realm of speculation, but there is this sort of larger push to make it into a national champion, and I wonder how much NVIDIA is going to be a helping hand.
So many different dimensions to this. Let's build on the dimension we were talking about just moments ago, the prospect that NVIDIA has its own ask and wants to open the door to exporting the high-tech chips it would like to be selling into China, the moneymaker, Blackwell. Do you think the door opens off the back of this? Is that going to be part of the ongoing conversation with the administration? Because we've seen over the last few months, based on the experience we've had with foreign diplomacy, that Jensen Huang's ideas have been a key part of the change at the top of this administration, and perhaps he's pushing still to export those chips into China.
It goes to the question that you asked earlier. Is there a real conflict here? And there's a real tension rising for the likes of NVIDIA of how long they can count on their China business and how important that can be to the company, given the pushback that you're seeing in China on some of their local companies using NVIDIA's products. So there's this tension here that there is a push for NVIDIA to invest more on domestic production in the United States because of tension between the U.S. and the rest of the world, in particular China. And there's a push from China not to use U.S. chips in Chinese tech products. And at the same time, will there still be the ask by NVIDIA to have a larger presence in China?
Possibly, because if they can export that now, they know they'll be depended on, and they won't develop that technology themselves. Maybe that's the hope, at least that's the theory. To turn to things domestically, all the incentives are aligned here, I think, between all the partners anyway involved in this. Intel, NVIDIA, the administration, they all have a reason to build out domestic foundry capacity. And NVIDIA has a big incentive to make sure it's a success, because the last position they want to find themselves in several years down the road is being in a position where they're being coerced and pushed to use foundry capacity that doesn't have the cutting-edge technology that they require to build the chips they want to make.
And it has the extra added edge to it that it takes a really long time to get foundries up and operational. And it is a money-losing operation, which has been the challenge that Pat Gelsinger kind of complained about for a long time before he left as CEO. So it seems like this is the effort that the White House is making to try to fortify this project.
NVIDIA up in a pre-market by more than 3%. The clear winner here, though, is Intel, flying high by almost 30% in early trading. We're going to stay on top of that story for you. I believe Dan Ives of Wedbush is going to join us in about 40 minutes' time, the big bull himself, on this show to get his thoughts on the breaking news of the last hour. Elsewhere, JP Morgan CEO Jamie Dimon making a surprise visit to Capitol Hill yesterday and meeting with Senate Republicans. Dimon saying he told the lawmakers he's not worried about Fed independence and U.S. economic growth is so far so good. And finally, newly minted Fed Governor Stephen Myron pushing for a 50 basis point cut in yesterday's FOMC meeting, the Trump appointee acting as the lone dissenter in the board's vote to lower rates by 25 basis points.
I thought it was interesting that when you took a look at prediction markets after the fact, that his chance of being the next Fed chair rose substantially, almost doubled from 11% to 20% after that decision. And I just wonder whether his view, to your point earlier, was viewed by markets as credible. He didn't go for 125 basis points in one meeting, yes, by the end of the year, but still there was this feeling that maybe there was a credibility about him that allowed people to accept him as a governor, that maybe there were rumors that that wouldn't be the case earlier.
So in the news conference, let's park the word credible and talk about the word persuasive, because I think that's what Chairman Powell ultimately addressed just yesterday, that any one individual has to be persuasive enough to get other people on the committee to come with them. Governor Wallace talked about this directly too. As a governor, it's your job to go to the meeting and ultimately persuade others to come round to the way you're thinking about the world. And clearly Governor Waller and Governor Bowman did not join in that. And I wonder if the ultimate compromise was, I wasn't in the room and I don't know, but I'm just speculating, was that for Governor Waller and Governor Bowman, the commitment, if we can call it that loosely, to go a few more times into year end was worth it just to keep people on the same page and not dissent by pushing for 50. Just acknowledge that the committee will come with you to go another 25 at the next meeting and another 25 at the meeting after that.
I wonder if retail sales spooked them also. I mean, I do think that you're correct, but the fact that retail sales was mentioned as many times as it was, at least by Chair Powell, suggests that maybe there is this feeling that the risks truly are two-sided. But I hear what you're saying, that maybe there was a greater groundswell to keep going, which gave them comfort to just go 25.
Governor Waller's been around, he's seen it all. He's strategic, he knows how this works. To ultimately get what you want, don't embarrass people, and you'll get there anyway.
Although some people were speculating, given the fact that Mickey Bowman and Chris Waller didn't dissent with 50, does that take them out of the running?
They're out of the race now?
For becoming the next Fed chair. This was one speculation out there.
Let's stick with the Federal Reserve. Let's get to the FX market. The dollar raising losses after Fed Chair Jay Powell described Wednesday's rate decision as, quote, a risk management cut. Kit Juice of SocGen joins us now for more. Kit, welcome to the program. Did you get a few more reasons to be short the dollar yesterday?
I don't think I got more. I think I got comfort. Actually, I probably got more comfort than anything watching the dollar sell off again this morning, because I came in to find that it had bounced quite a lot. Yeah, look, the Fed's going to be cutting rates. The U.S. economy is slowing at the margin. The president wants a weaker dollar, and I think we're still in a position where the world has got a lot of underhedged U.S. assets. That's going to get cheaper to hedge. And you think more people will feel a sense that I probably ought to be less long the currency, even if I want to have as much tech stock as I can or whatever else it is I need.
Okay, is that the great repatriation? And is Japan at the epicenter of that flow story?
Japan somewhere in that inflation story. I don't think it's necessarily a great repatriation as a de-risking of the currency exposure itself. In other words, I'm not convinced that anybody's ready to give up on U.S. technology outperformance as an investment case or as U.S. equities outperforming over the long run. I think there are people at the margin who may think the Nikkei looks cheaper than it did or that European equities do. But the big issue is just the sheer scale of the long dollar position as well, that's what feels too big.
Kit, how long can people keep buying U.S. equities from overseas and hedging the dollar? This seems to be what everyone has been doing. Is this something that is in tension? Is this something that can persist for an ongoing time with the idea of a weakening dollar and a strengthening U.S. equity market?
Well, you need the hedging cost to get cheaper so that people can hedge. So the temptation not to hedge is a function of interest rate differentials and it being expensive to hedge your equity exposure. As U.S. rates come down relative to elsewhere, that cost is going to come down as well to hedge. So I think you'll see more people looking at it saying, look, I still like the U.S. economy at the margin. I still want to own U.S. equities. There isn't a real alternative. But I just don't need to be all in, unhedged, long both an expensive currency and a highly valued equity market.
The idea of a Federal Reserve that's going to prioritize growth over inflation is the reason why a lot of people are saying, like you, there is this ongoing dollar weakness. But at what point does growth outweigh some of the potential inflation if the inflation isn't that significant? The idea of growth differentials driving FX as much as anything else.
I think growth differentials are becoming more and more important, but we also have plenty of uncertainty about growth differentials. So, as we saw, earlier this year, we saw a big downgrade in people's forecasts of what the U.S. economy was going to do this year and next. They've edged a little bit back up, and then the European ones have edged back up as well. I think the next sizable move is going to be driven by how people think of the U.S. economy in the next 6, 9, 12 months. In other words, are we going to see that the inflation growth trade-off gets worse, or are we going to see that actually the inflation hit from tariffs isn't very big and the U.S. economy can fly on by? I think I think we picked it up from the FOMC as well yesterday, really. There is just astonishing uncertainty about the growth outlook, but the dollar's biggest single vulnerability is a slowing economy.
Well, Kit, let's build on that. We can enter a different regime. Sometimes it's rates, sometimes it's growth differentials, sometimes it's just about investor flows for whatever reason. Kit, if it's about growth differentials, the Europeans have set the bar pretty low. They're basically telling you, based on the ECB forecast, whatever the staff forecasts are worth, they're basically telling you things are going to be in the low ones, something around 1% for Europe in 2026. Kit, based on what we've heard from the Fed, they're willing to support growth. The real story in equities on this side of the pond is that we're going to see this reacceleration in growth in 26. And I just wonder from a growth differentials perspective, whether the risk is cutting the other way.
At the moment, I think the big question mark is how much the U.S. economy is going to slow. So if the U.S. ended up in, let's call it the low ones, and Europe in the low ones, I think at that point, I would see a significantly weak Europe. But I agree with you on anything other than a short-term view, which is that, this is why I don't think euro-dollar can go to 130, 140, 150. It got to 160 once. We're never going to get back to those levels. This is going to be the limiting factor for this dollar sell-off. Likewise, we're not going to see the yen go back to 100 for dollar yen anytime soon. I mean decades in that sense. So I think we've got a correction here that's got further to go, and it's going to. It's going to make the foreign exchange market happy, I hope, and it's going to certainly attract attention. But let's not get too excited. I don't think that on a 10-year view, Europe can outgrow the United States.
Kit, appreciate your insight. Kit Jukes there of SocGen. Listen to the different questions that people are asking right now. Kit's asking himself, just how much is the US going to slow? And you've got equity investors coming on the program talking about how quickly is the US economy going to accelerate in 26? Two completely different questions.
Every executive who we've spoken to in the United States over the past week has talked about a reacceleration in the United States and the pent-up demand that you're seeing in things like retail sales and mergers and acquisitions that are floating to the surface. So it speaks to, even with some sort of reacceleration, how much is actually priced in?
Looking at the dollar right now, A fair bit of weakness based on the year we've had. Dollar strength bouncing back just a touch so far this morning by about 1/10%. Let's get you an update on stories elsewhere this morning with your Bloomberg Brief. Let's cross over to Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. With shares of Alphabet rising in the pre-market, the Financial Times reporting China is dropping its antitrust investigation into the dominance of Google's Android. The announcement comes ahead of Friday's scheduled call between President Donald Trump and China's Xi Jinping. Tesla is working on a redesign of its door handles. The move comes after a Bloomberg investigation that uncovered incidents of people getting trapped in their vehicles. The redesign will make the handles more intuitive in a panic situation. An off-the-field victory for the NFL's Washington Commanders. The team won approval from the DC Council to move forward with a nearly $4 billion plan for a new stadium and mixed-use development site on the grounds of its former home at RFK Stadium. President Trump had previously threatened to block the new stadium if the team didn't change their name back to the Washington Redskins. And that is your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Up next on the program, the lone dissent.
19 participants, of whom 12 vote, as you know, on a rotating basis. The only way for any voter to really move things around is to be incredibly persuasive.
In just a moment, we'll catch up with the former Kansas City Fed President Esther George from New York City this morning. Good morning. You're watching Bloomberg TV.
When we looked at the businesses in the UK and the business in Switzerland, is our view that those businesses are subscale, and the amount of capital that it would have to go into those businesses to get it up to scale to meet our strategic ambitions would be misplaced. SPAR being where it is and how competitive the South African market is, we really just want to refocus on our home markets. Our liquor brand, Tops, has been around for also about 25 years. And through independent retailers, we've become the single biggest retail liquor brand in this country. Our business has the ability, and our independent retailers have the ability to compete directly with the chains. And we are now the second biggest supermarket brand in this country.
It's the countdown to the market open as we bring you the first trades across Europe.
We'll debate the most important stories and what will drive the big investment decisions throughout the morning. I'm Guy Johnson.
I'm Kriti Gupta.
And I'm Anna Edwards. Join us every weekday morning for the opening trade, live at 7 a.m. here in London.
Only on Bloomberg. Context changes everything.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
2 days of very mild losses in the equity market and bouncing back pretty strongly this Thursday morning, up by 0.75% on the S&P, up by 1 full percentage point on the Nasdaq, and the outperformance on the Russell returns, small caps higher by 1.3%. The movers to watch this morning: Intel, Nvidia. Intel up by close to 30%. If you're just joining us, you missed quite the announcement 50 minutes ago. Nvidia agreeing to invest $5 billion in Intel, saying the two will co-develop chips for PCs and data centers.
Yeah, that's almost a 5% stake that NVIDIA is taking in Intel at a time when the government has clearly thrown its weight behind Intel to try to make it into a viable competitor with foundries across the world. A real question about how far this partnership will go and who's next.
Dan Ives is going to join us next. Says this is bullish for NVIDIA and Intel, brings Intel to the table on AI and could change the thesis. Goes on to say this could change the way the stock is valued. It's a huge game changer.
I wonder how much this is a vote behind the idea of Jensen Huang also having a seat at the table when it comes to Intel management, because it's been a real question. You know, Pat Gelsinger left, new CEO came in, a question of how do you do this in a way where it takes a long time to get a foundry up and running, and then convincing people to use them when TSMC is very good at what they do.
That stock is the big winner so far this morning. Let's turn back to the Federal Reserve. Under surveillance this morning, the lone dissent.
19 participants, of whom 12 vote, as you know, on a rotating basis. The only way for any voter to really move things around is to be incredibly persuasive, and the only way to do that in the context in which we work is to make really strong arguments based on the data and one's understanding of the economy. That's in the DNA of the institution. That's not going to change.
So here's the latest this morning. The Fed Chair Jay Powell attempting to unite a divided committee at this week's policy meeting, with the newest governor, Stephen Myron, the only vote against the 0.25% interest rate cut. Joining us now to discuss, the former Kansas City Fed President, Esther George. Esther, welcome back to the program. I love talking to you about this because you've experienced it. You've been there.
Morning.
You've dissented on the committee yourself personally, and you've seen dot plots with huge dispersion and a wide range of outcomes for the years ahead. Is this different somehow from what you've seen and lived? Is this somehow different, what we saw yesterday?
Well, it's different in this sense, Jonathan. You have a lot swirling around today's economic decisions that have to be made about monetary policy. They come from challenges to the institution itself. They're coming from an economy that is far from clear in terms of what the ultimate impact is. And again, this is a committee that has to think about the long run, even as they make today's decisions. And so you have dramatic changes in trade policy and immigration policy, all that are hitting directly on both uncertainty about where that long run is, as well as where are things landing today. So not surprising, I think, that you see this kind of dispersion, given the changes going on in the economy.
Given that type of a backdrop, do you think, Esther, that we're looking at a scenario where forward guidance has no value anymore?
Well, I don't think this is a time you can make forward guidance. And really, forward guidance can be fraught anytime because we live in a dynamic economy. Things can change that make it hard for the central bank to fulfill commitments like that. And so, again, this is a time where you hear from businesses. They are still sorting out what the end game looks like here. They are still sorting out what increased costs are going to mean to both their bottom line, to their employment status. And so it's hard to put a pin that you can see a clear direction for the economy. I think you heard that coming out of the meeting yesterday. The committee had to make a decision. They made a decision. But the dispersion, I think, belies some of the consensus you saw.
Esther, can you talk a little bit about how hard it is to persuade fellow governors to get on your side? When you do dissent, when you do disagree with them, how difficult it is to make that case?
Yeah, so it's a requirement of the job. I always thought in that. And certainly you are trying to articulate in a very thoughtful way the factors that weigh on your judgment, how you put the weight on different variables, which everyone around that table is doing. At the end of the day, though, that you are the lone dissenter, that the majority makes a decision in a different place, doesn't necessarily undermine the argument that's being made It simply says that the weight was in another direction and there was consensus built around a different view. I think what's important is that you don't dismiss entirely when you hear dissenting voices about what it means.
Esther, as you look through the forecast, a lot of people have called them highly contradictory. There are some odd things going on just in terms of upgrading the outlook for growth and then cutting interest rates. Some things don't make sense to some people. You know, when these things were introduced, the dot plot and forecast, it was to enhance communication. Do you think we've got to the point where it started to compromise it?
Well, that's been the case at many times since the introduction of that dot plot. And again, I think it always bears reminding people, this is not a committee forecast. Yes, you can draw some conclusions about tendencies and the medians where they come out for this committee. But when you see dispersion like this, it tells you that we're looking pretty short term. This idea of meeting to meeting sounds right to me. You don't have a committee that agrees on what the long run is. And that's true either of their long run Fed funds forecast. Those are ranging from, below 2.5% to closer to 4%. That tells you that this idea about how restrictive they are has a lot of different views coming to bear at the table.
Esther, I think a lot of people would agree with you, most in fact, that you shouldn't draw too many conclusions from those forecasts. But there is one uncomfortable conclusion that many people have drawn, and that this institution is no longer credibly pursuing the 2% inflation target. Is that an unfair criticism?
Well, the committee certainly has not said that. We have not heard the chairman say that. But I think the actions here put them at risk over the next few months, frankly, because they continue to push away from thinking that inflation, although characterized as an upside risk, is one that they are not going to be able to deal with. And I think the challenge there is, this is a committee that has relied heavily on anchored inflation expectations. And as those move, and as the public, which has experienced high inflation, I think this will become a real challenge for the committee under the forecast that they've laid out.
Esther, you're always generous with your time, and we appreciate leaning on some of your experience as well. Esther George there, the former Kansas City Fed president. That was one of our big questions yesterday afternoon.
Yeah, exactly what the response would be to inflation that went up. Was it a short-term one-off, or is it something that the Fed is going to take under consideration? What Esther George said there was really interesting. Inflation expectations in the public. Which inflation expectations? Are we talking about the University of Michigan inflation expectations? Are we talking about the break-even rates in markets? How does the Fed measure this, given the difficulty getting your arms around such a concept?
Mohamed Al-Arian said this a few years ago. Took some heat for it too. He said if you were to design a new inflation target for the Federal Reserve, it wouldn't be 2, it'd be closer to 3. The world's changed. The world's changed.
And right now, it seems like tacitly, this Fed is acknowledging that, saying 2 years. 2 years.
Yeah.
Wait more, 2 more years.
2-year rolling view over at the Federal Reserve. Up next on the program, Alex Altman of Barclays, Dan Ives of Wedbush, Nita Richardson of ADP, and Adam Heads of Janus Henderson from New York City. You're watching Bloomberg TV.
Let me break down our CapEx into the buckets that we spend. Big part of it is to expand our reach of fiber. You cannot wait until there is certainty to build that. These have long lead times that require you to have conviction about where demand is going. Another bucket is, as more people are on our network, we also have to add more coverage and capacity. It's almost like a variable expense. Third, we are modernizing our wireless network right now. Through the investments we're making, we are driving down our unit costs over time and providing more capacity to serve the demand that we think is coming.
Do you have less confidence in that 3-year plan now than when you first came out with it, given that some people are having trouble deciding how things are going to look in the next 3 days?
No, I really don't. I look at the nature of our business. It doesn't matter the economic cycle. This is a critical goods or service, and we have every confidence demand for it will remain. Will it be harder in a more challenged economic environment if that ends up being the case? Of course, but remember, we are investing at record levels. Slight moderations of that would allow us to deliver a lot more incremental cash to the bottom line. So I have every confidence we're going to be able to deliver our guidance.
Good morning, this is Bloomberg Daybreak Europe. I'm Tom McKenzie in London. These are the stories that set your agenda.
Taking you from the U.S. market's close to the overnight session in Asia, we'll walk you through what you need to know to kickstart Europe's trading day. Live from our European headquarters, we bring you the day's top market-moving stories, unmatched expert analysis, and on-the-ground reporting from across the continent. Tune in to Daybreak Europe, only on Bloomberg Television. Context changes everything.
We have two crises, two essential crises, and for both it's now or never: democracy and climate, and they are absolutely interlinked, and we have to solve them together. We're losing the democratic infrastructure and norms to deal with the climate, and we're losing the climate stability that is essential for a democracy. We have to solve them together. We've never faced a threat like this to our democracy at a time when it's a perfect storm, at a time when we're being told by climate scientists, some of you may be in this room, that we have to cut our emissions, fossil fuel emissions, in half in 5 years now. You know, when I started to realize what was happening, it was 12 years, and we haven't done it.
In case you missed it, on Bloomberg Open Interest.
When we look at our portfolio, we see an IPO pipeline that's the biggest since it's been in 2021.
In M&A and IPOs, we've actually had close to record performances in that space. We're going to have an interesting year.
We're having a lot more conversations around putting dates on calendars. I think we could see a very active second half of the year.
Don't miss Open Interest live weekdays.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
This is an insurance rate cut. It doesn't really foreshadow what's going to happen going forward.
This is all about risk management.
This is a Fed that locked arms. One dissent was surprising.
It's really clear that Powell corralled the cats.
We're all kind of hot and bothered by this move, but the truth of the matter is we're not in neutral territory yet.
This is Bloomberg Surveillance with Jonathan Farrow, Lisa Abramowitz, and Anne-Marie Hordern.
Live from New York City this morning. Good morning to you all. For our audience worldwide, the third hour of Bloomberg Surveillance starts right now, and your scores look like this. What a rally, up by 0.8% on the S&P 500, up by more than 1% on the NASDAQ and the small caps. But it's the rally here that we need to talk about. Two single names in the pre-market, one absolutely dominant. Intel, up by almost 30% in early trading. NVIDIA up by 3%. The headline that dropped about an hour ago, 60 minutes ago. NVIDIA agreeing to invest $5 billion in Intel, co-developing chips for PCs and data centers.
This is getting a lot of people's attention, not just for what it means for Intel, which was beaten down and trying to be the singular national champion when it comes to foundries and chip production in the U.S., but going forward, how much weight the United States is going to put behind certain national champions. We already saw the U.S. government get a 10% stake in Intel, although we don't really know exactly what that looks like in its entirety. We still are getting more details on that. This just adds to that with the extra eyeballs of Jensen Huang in the Intel C-suite.
Who's going to follow? You asked the question. Who's next? Who else wants to invest in Intel? A lot of people could benefit from developing domestic foundry capacity. The other question we've asked too, what does NVIDIA get in return? What's the big ask they've got of this administration? Could that open the door to the high-tech chips being exported to China? Which
is the ultimate tension, given the fact that the foundry development is in direct response to trying to become self-dependent when it comes to chip production, and not dependent on Asia, not dependent on Taiwan, given its fraught relationship with China. This decoupling, how far can it go, and how far does it really push NVIDIA and other tech giants to choose, given some of the questions around the boundaries of their investments?
There's so many different stories here.
I mean, it's
Intel also has a big presence in China. What does China think about what's happening with Intel right now?
Yeah, and $5 billion for NVIDIA is essentially spending cash that you would find in your couch. So let's just be honest that this is a definite significant move in terms of what it signals for its arch rival, but $5 billion for Jensen Huang is basically what he gives to his kids for allowance.
Yeah, it's a few coffees and breakfast.
Exactly. It's ridiculous.
It's a different world, isn't it? Equities right now in the S&P 500 up by 0.75% on the S&P. In the bond market, yields are lower across the curve, 2s out to 30s. As we build and reflect on what happened yesterday at the Federal Reserve, a very divided committee and a chairman attempting to unite everybody.
Yeah, and failing to do so. I think that a lot of people would agree that this was a messy conclusion given the lack of clarity in the underlying economy, the lack of clarity as to what the committee is going to look like come next year, and the lack of any kind of conviction around both the dual mandate of employment and inflation. It does seem like the one takeaway is this committee is willing to live with inflation above 2% for yet another year, as long as you don't see any kind of dramatic weakening in the labor market, and that is the ultimate priority.
And stock markets kind of like it, apparently. 87 minutes away from the up and about, we could reclaim all-time highs. Coming up this hour, we'll catch up with Alex Altman of Barclays as stocks trade near those record highs. Dan Ives of Wedbush as NVIDIA has taken a $5 billion stake in Intel, and Neela Richardson of ADP as we break down the latest jobs data. Haven't mentioned it once. Jobless claims about 26 minutes away. We begin this hour with stocks edging higher as the Federal Reserve delivered its first interest rate cut of 2025. Alex Altman of Barclays joins us now for more. Alex, good morning. It's good to see you.
Good morning.
Odd situation. The Federal Reserve did not meet this market. It fell well short, and here we are Thursday morning with stocks running again. Makes sense of that?
I think we've already just discussed it, is that the Fed basically has a split committee right now, and trying to thread that needle is an incredibly challenging thing to do. They clearly are under pressure from the administration, and obviously Miran now sitting on the FOMC is going to add more of that pressure. I think that on top of that, you've also just simply got that you've got a very K-shaped recovery. And I think people overlook this, right? We've had one part of the economy that is basically the stock market, AI, technology that's dominated, is not interest rate sensitive at all. And another part, manufacturing, housing, small companies, and obviously several quintiles of the consumer. They've really been struggling, and they've been struggling for 2 years now. And you can see that in the performance of small caps. You can see the performance of the ISM. And I think that the Fed is now under pressure with the cue of the labor market to actually start doing something about that.
I'm pleased you brought this up because the payrolls data is driving the Federal Reserve, at least many members of the committee. It's not driving the equity market. What's driving the equity market is the capex intentions of a handful of companies and the kind of headlines that we were just talking about regarding Intel and NVIDIA. Are there limits to that story? How far can you push the bad data for the Federal Reserve and the good numbers for the equity market?
So I think that's one part. The AI component, without a doubt, Jonathan, is important. So we're talking about that contributing 1% of GDP this year, maybe 60 to 70 basis points, depending on where you sort of throw out consensus for AI capex next year. But then we've also got the OBBB, right? The one big beautiful bill. That's going to add 30, 40, maybe even 50 basis points of GDP next year in a more targeted way as well. And now you've got a nascent manufacturing recovery as well, as a function of that OBBB, as a function of that ancillary from the AI capex. So you're absolutely right. It definitely has been a big driver of the AI capex, but it's not exclusive. We've actually seen a broadening of the S&P rally over the course of 2025, more so than 2024. And that, was part of the reason why we were very constructive on small caps. And that, I think, actually continues as a function of these rate cuts. And people really forget that these rate cuts are having a massive impact on a regime shift within the equity market, where we're so used to just this AI story dominating it. And actually, you start lowering interest rates, you've got a huge cohort of not just the Russell, but also the S&P that's got variable rate debt and is going to start getting a real kicker from that pretty quickly.
So this goes to the question of yesterday's price action, and we saw rotation into the broader equal cap S&P 500, the Russell 2000. Do you think that has legs, or do you think that ultimately a rising tide lifts all boats? There is some catch-up, but that this is going to be still a very much tech-led rally?
So look, I think we need to, it's a really good question. We've got to clarify this because the US equity capitalization is $67 trillion, give or take. The Russell is $3 trillion. So this concept of rotation is, I think, a bit of a misnomer, right? I think that if you want to, people say, oh, we need to rotate out of AI and into small caps. I'm like, well, if you do that, you probably would tank the stock market. So it's when we talk about the broadening, we mean exactly that. It's not about being necessarily bearish on AI, although that's a bigger discussion about what does that forward of CapEx look like? How much emphasis do we need to place on that to rely on GDP growth next year? And we can discuss that. But it's more of a case of there's this corner of the market that is the market cap is smaller than Google or Nvidia, and it has been overlooked, and understandably so. But now I think it's time to shine, and that's what we've seen spectacularly, not just in things like IWM over the past couple of months, but residual volatility factor and certain factor behaviors within the equity market have seen some of the most incredible rallies, some of which we've really never seen since COVID.
So I'm struck by the fact that the committee of the Fed is split when it comes to just how much there is this concern around the labor market and some sort of slowdown. When we talk to the United CEO, when we talk to Bank of America and Brian Moynihan, they are talking about seeing a reacceleration in the economy. They're talking about companies that are borrowing more, pulling triggers on deals. How much is this increasing the international appetite for the United States and for equities here, given the fact that the Fed might be on the fence, but they're cutting rates, which is only fueling this expectation for a reacceleration?
I think that a lot of it boils down to the administration that wants to run the economy hot. I think a lot of it is driven by that, and I think we have to acknowledge that there has been that external influence on things, especially going into the midterms. And by the way, I just want to give you a stat on this. Anytime the Fed have cut interest rates within 1% of all-time highs for the S&P has been up 100% of the time 1 year later. In fact, it's been up 88% of the time 2 months later. So there is definitely a self-reinforcing mechanism here. And the whole notion, remember the old adage of stock market's not the economy? Well, given that the wealth effect of US households is so exposed to stocks now, there is this circularity where stocks being at all-time high can fuel consumer sentiment, can propel the economy in a very much sort of circular fashion. So it's no surprise that, that all of a sudden consumer spending is picking up again as the S&P is at all-time highs and they're cutting interest rates. The question is, what is the price we're going to pay for that down the line?
Can I just ask you something about the future? You run tactical strategies. When does someone like you start to consider the future of the Federal Reserve and the post-Powell world and the fact that that dot at the very bottom of the dot plot, which most people correctly assume is Governor Myron's, that ultimately that could be the Fed chairs in June next year?
I think we're thinking about it now. And I think that's contributed a lot of what we've seen within this internal rotation that's been going on since June. And that will most likely continue because there is still going to be a line of sight on the fact that the current Fed chair will not be in his seat from May next year.
You said for what the price is that we pay down the road. Are you saying this is creating a bubble?
I think there's a real chance that we do create a bubble, and I think that everyone who invests in equities has to acknowledge that. Ironically, we're actually trading at a lower valuation today vis-a-vis where real rates are versus this time last year. So I think that there's actually a case to be made right now that there was more exuberance in the market, say in parts of 2021 and even parts of 2024 in the wake of the election than there is now. That's not to say that we can't fuel and create a bubble. And I think what people often make the mistake of is assuming if there is a bubble, and I'm not saying that categorically there is one, but they can go on, that's it, that it's done. But it typically goes on for a lot longer than people tend to think.
Julian Emmanuel was talking about that career risk.
Yeah.
Do you feel some of that? You can be honest with us. You work on Wall Street. Do people you speak to feel that? Do a lot of people feel that career risk of not being long enough in a market like this one? Is that more important to them than worrying about downside risk?
I think for the most part, just from personal experience, having run money and also sitting on the sell side, I would say that generally in up markets, people are more relaxed. So yes, of course, if you're running a benchmark fund, long only, I think there's always going to be pressure to obviously perform that benchmark. And you would have seen the charts and the percentage of long onlys that underperform in any given year. From an absolute return strategy perspective, as long as you're making money for your LPs, generally you're in good shape. That is your job at the end of the day, and to manage drawdown risks. But within a bubble, of course, yes, if you start seeing explosive continued 20, 30% rallies in the market, and you're dramatic underperforming or not making money at all, then inevitably you're going to feel some pressure.
You don't get paid for being bearish in a market like that one. I've heard so many stories about the late 90s. We heard a few already this morning.
Yeah, this is the reason why bubbles can continue for a very long time, even if everybody thinks they feel a little frothy. Although what Alex just said there was really interesting, that based on where rates are currently, valuations are actually lower today than where they were last year. So I think it's important to remember, maybe we're, in the first inning of a 9-inning bubble. I hate using baseball analogies, but here we are.
You did.
There you go.
Anyway, Alex, thank you.
Thank you.
It's good to see you.
And you.
Alex Altman there of Barclays. Let's get you an update on stories elsewhere. Let's get to your Bloomberg brief. Here's Vonnie Quinn. Hey, Vonnie.
Hey, John, thank you. Shares of Intel surging in the pre-market following an announcement NVIDIA is investing $5 billion in its rival. The company said they will co-develop chips for PCs and data centers. NVIDIA will buy Intel common stock at $23.28 per share. That's a 6.5% discount to Wednesday's closing price. Sources telling us here at Bloomberg that the European Union is planning to present a new package of proposed sanctions against Russia as soon as tomorrow. The proposed penalties follow a phone call between the EU's Ursula von der Leyen and US President Donald Trump. Von der Leyen said the sanctions would target crypto, banks, and energy. And shares of Novo Nordisk are gaining in pre-market trading after beating Eli Lilly in a real-world study. The study followed nearly 60,000 people with diabetes and heart disease and found Medicare patients who took Novo's Ozempic were 23% less likely to have a heart attack, stroke, or die than people on Lilly's Trulicity. And that is your Bloomberg Brief. John.
Hey, Vonnie, thank you. Appreciate it. More from Vonnie in about 30 minutes' time. Up next, the morning calls, plus Dan Ives of Wedbush, as NVIDIA is taking a major stake in Intel. The big news of the last hour or so, that's next. This is Bloomberg.
At a time when policy in Washington is driving Wall Street, we draw a distinction between the rhetoric and the action, bringing you market-moving guests and original reporting. This is Bloomberg Surveillance.
I'm David Weston. Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. We go on the road for a look at what lies behind the headlines of today and what will likely be the headlines tomorrow.
We need more transparency.
Oil and gas is still important.
They said every citizen should be investing in the market.
Accelerate progress in all fields of science.
Watch Wall Street Week right here on Bloomberg. More than what you need to know, it's what you need to think about.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance. The president has respected the UK tradition of the last 24 hours, meeting the king, and reflected on an old partnership between the UK and the US. He's now alongside the British Prime Minister, Keir Starmer, talking about a new partnership potentially between Intel and NVIDIA. In Buckinghamshire, the United Kingdom, the President and the Prime Minister hosting business leaders in the UK today. And in that room is the Intel CEO, Jensen Huang, after NVIDIA agreed to invest $5 billion in Intel.
Yeah, you've got Jensen Huang of NVIDIA there. You have, of course, Tim Cook as well. You also have Mark Zuckerberg, and you have the OpenAI chair and founder, Sam Altman. And a real question here about what the commitment will be, how the UK will carry this out, and how much these tech leaders are a chip in a international negotiations for the United States in an increasing way.
We've got Mandeep Singh of Bloomberg Intelligence alongside us. Mandeep, good morning.
Morning.
It's good to see you. I have no doubt the president's happy with this move. Not on NVIDIA, but on Intel, higher by almost 30% in the pre-market. Your first reaction to that deal?
Well, I mean, look, from an NVIDIA perspective, I don't see a big strategic rationale, given Intel has been such a big competitor over the years, except for the fact that NVIDIA has a very healthy balance sheet, and it's been making investments, in CoreWeave and some other cloud providers. So $5 billion is not a big amount for them, given their balance sheet. And co-developing chips, to my mind, Intel's kind of ecosystem revolves around x86, and they dominate in the PC world. So that's where NVIDIA can use their distribution. But the fact that they are not using them in Foundry, I mean, that just goes to show that they don't want to touch that TSMC ecosystem where they dominate. And so it's more of, you have to convince the government that you're doing something about it. I mean, clearly, government has a 10% stake in Intel now. And, this was probably the best way to go about it.
What do you think NVIDIA might get in return? Have you given that some thought?
Well, the PC refresh cycle, we have been waiting for that for a while.
I'm thinking more of what the president might be able to give them. Access to China, selling their high-end chips.
That's definitely on the cards. And look, getting to a monopoly position is never a good thing for a company. That's what we have learned from Google, because, once you get to a monopoly position, it attracts so much attention. So to my mind, NVIDIA wants to keep competitors who are distant, third or second. And so from that perspective, it's good that Intel will be a competitor. But at the same time, NVIDIA still maintains the lead, and they don't get classified as a monopoly.
Dan out of Wedbush is standing by, wants to jump on. He calls the deal a huge game changer for Intel. Dan, good morning, and welcome to the program. Why do you believe this is such a huge game changer?
Pop the champagne. I mean, for Intel. Now you have NVIDIA, godfather of AI, doubling down, and this follows, obviously, U.S. government investment. I mean, what this essentially does, it brings Intel into the AI game. You think from a stock perspective, that changes the multiple. And, clearly, this is also going to be viewed very positively in D.C. I think that's something that could definitely help Jensen and others when it comes to China.
Dan, I do wonder, though, about Mandeep's point, this idea that this isn't NVIDIA going all in and developing their chips for the big semiconductors, the big hyperscalers, at the Intel Foundry. This is simply a $5 billion side project about PCs. How much is this essentially just an olive branch to the president and not an actual move of NVIDIA to try to fortify Intel's plans to become the foundry?
Yeah, look, Mandeep brings up great points as always. But look, this is also, it's a doubling down on investment in the U.S. I mean, that's also what it is. Now, clearly, that obviously olive branch to Trump administration and others. But what they're also doing is, when it comes to PC upgrade cycle, x86, I mean, this does give them another potential growth lever. And look, NVIDIA right now, it's NVIDIA's world, everyone else is paying rent. And they know that they're in a massive position of strength. But for Intel, I mean, think about it, you went from, call it a month ago, some worries about, in terms of the CEO potentially out. Now you get the investment from government, and you have Intel, now again, NVIDIA. I mean, that is a Goldilocks scenario for Intel.
This is coming at a time when China is trying to emphasize domestic production of their own technology and really trying to create national champions there that can rival NVIDIA and other U.S. tech giants. I just wonder whether it is possible to continue for the likes of NVIDIA trying to push into China, trying to sell more advanced chips into that country, while at the same time playing with this idea of U.S. independence from China.
Look, it's a tight wire act, but the reality is that there's one chip in the world fueling the AI revolution, and that's led by godfather of AI, Jensen, NVIDIA. And that's why in China, look, they could tell Chinese big tech in Beijing, don't buy NVIDIA chip. That's like telling a kid, okay, don't eat the candy that's on the table. So that's the reality, because they're years ahead of when you look at Huawei and others. But at the same time, I mean, Trump administration recognizes they have to strengthen AI infrastructure, AI chip making. And you look at Intel, I mean, they've gone obviously from a huge laggard. I mean, Intel, you know, all the red tape, all the sort of black eye moments, you finally have some positives at Intel.
If you are just joining us, welcome to the program. The President of the United States, Donald Trump, alongside the British Prime Minister, Sir Keir Starmer, hosting a business meeting. The President just opening up his remarks. Let's take a listen.
We have to deal with you, and you are the best. You're the best in the world, and you're here. And it's an honor to have all of these great leaders. Really an honor, but I'm sincerely grateful to Prime Minister Starmer and Lady Starmer for welcoming us to this very special home, this beautiful place. And I was here a number of years ago, but somehow today it looks even better, even more beautiful, and even more historic. Melania and I are forever thankful to His Majesty King Charles III and Her Majesty Queen Camilla. We had a fantastic evening last night. But the exquisite honor of a second official state visit, the first ever, it's the first time it's ever been done, was, really was an honor. Such great history, and to think it's a first. It's always nice to have a first. But the ties between our countries are priceless, and it's really an inheritance. It's a beautiful inheritance. Today we're making those ties closer than ever before. We've done some things that financially are great for both countries, and we work together, and it keeps us together, and I think it's an unbreakable bond we have, regardless of what we're doing today. I think it's unbreakable. But this is very big, and I want to thank all of the incredibly talented business leaders, the best in the world, biggest in the world, here this afternoon for investing in the Anglo-American Alliance, and you personify an important part of the unique national bond and really a world bond. What you've done is incredible. Our two countries do a great deal of business together. $340 billion last year was the number. In May, the United Kingdom became the first country to make a trade deal with the United States during my second term, and we sort of wanted to make it the first because the bond is so strong and the relationship so long. That agreement will create billions of dollars in opportunities for American farmers to sell their products into the UK, reduce barriers to trade, and give the U.S. manufacturers better access to the UK's world-class aerospace supply chain, which is really is world-class. A lot of people don't understand it. The importance of that particular asset that you have. It's a beautiful job you've done. There's no more natural partnership in the world. Together, we're building up the industrial capacity of both of our countries, which is crucial to our defense. And we work so well together in defense. I met so many of the leaders of your defending group, and many of them I've known by name, but now I know them pretty well. We had some very good meetings today and yesterday. So we're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right. But it's pretty amazing. Quantum computing, fusion, 6G, and civil nuclear energy, and align our nations through the approach of centered deregulation and innovation. And we're going to have a lot of deregulation and a tremendous amount of innovation. It's just happening. But this new accord is already helping spur a massive wave of private sector deals worth over $350 billion alone, headlined by a $136 billion from Blackstone. That's very nice. Steve, thank you. That's why you have that location, I think. It's considered the best seat all the year. Yours is pretty good too, Jensen. That's good. That's great, Steve. You know what you're doing. Better than anybody. American company X Energy and British company Centrica has been announcing, and really for a long while they've been talking about this deal, the deployment of modular nuclear reactors across the UK, all across the UK. It's been in the wind for a couple of years, and now we're getting it done, generating more than $50 billion in economic value, creating up to 2,500 jobs and powering 1.5 million homes. That's a lot of homes. 7 decades after British genius Alan Turing pioneered the field, this agreement will also help America and our British allies dominate the future of artificial intelligence. You need the energy. You have to have the energy. That's one thing I learned very quickly. They need a lot of electricity. In the United States, you need double what we have right now just to maintain that fight. We're right now, and I want to say, leading China and the world by a lot in AI, a lot. And we're creating tremendous amounts of energy and letting you create your own electricity in many, many cases. And we're giving you very rapid approvals. We're getting them approvals like they've never seen before. They used to wait 15 and 20 years to be rejected. Now they wait 2 weeks or 3 weeks to be accepted. That's a pretty big difference. And at the same time, we always have the environment in mind, but we move them along. But we're committed to ensuring that you have secure and reliable sources of American AI and quantum technology. We intend to always be the UK's strongest, closest, and most trusted business partner. Very important to us. The relationship is very important. 1 year ago, our country was in serious trouble. The King of Saudi Arabia, a great gentleman, you all know him. He said, "Sir, your country was dead 1 year ago, and now you have the hottest country anywhere in the world," and it's true. We'll have more than $17 trillion invested in our country this year. 17 trillion, which is many, many times what we had last year, and we're only in our just about almost 9th month. It's moving along quickly. It's amazing. I was saying we're in our 3rd month, our 4th month, our 5th month, but we're at, it's going to be over $17 trillion. No country has ever had anything like that, even close. GDP last quarter was 3.3%. Despite all of the things we're doing, one of the things we're doing, which I'm very proud of, is the border. We now have a totally closed border, totally secure for 3 months. 0 people came into our country, bad people. And they come in, but they have to come in legally. We have a great process going. And inflation is virtually non-existent. As you know, we're taking in trillions of dollars from tariffs, and they've been so incredible for our country, so incredible. We're keeping our companies happy. We're keeping them solid and sane, and they're very, very thrilled at what's happened. They can't even believe it. And we've never seen investment like this. Without the tariffs, we would have just a fraction of that. And we're really the only one that can do tariffs. Nobody else is.
Perfect timing from the president there as he started to reflect on the state of the U.S. economy. That's something we have to do in just a couple of seconds' time. We're about 20 seconds away from jobless claims, so I want to bring it from the UK back here to the United States to focus on that data as it crosses. Going into it, equity futures set up as follows. We're positive by about 0.8% on the S&P. On the Nasdaq 100, higher by 1.2. On the Russell, small caps outperforming by 1.3. In the bond market, yields are a little bit lower across the curve. Yields down by 2 basis points to the front end. With the latest economic data, let's cross over to Mike McKee. Good morning, Mike.
Good morning, John. Well, we do get a snapback in jobless claims. After the big rise last week, we fall back to 231,000. That's below the estimate. Last week was revised up by 1,000, so it was 264. But remember, this was all in theory because of fraud in Texas. Texas officials say there were a whole lot of illegal filings the week before, and that looks like it is the case. The ongoing claims number is 1,920,000. That falls from 1,927,000. So the jobless claims numbers improve, take a little bit of that edge off in terms of what's happening with the economy. Of course, the Fed sticking with that. Now, Philadelphia Fed is out as well. It jumps to 23.2 from negative 0.3 in terms of the overall number, and the prices paid index drops to 46.8 versus 66.8. So a significant improvement on the inflation side for Philadelphia Fed. Don't have the explanation for that yet, but we'll look into it.
That's the pickup in activity that so many equity market bulls are looking for. Mike, stay close. I want to come back to you on the Federal Reserve in just a moment. I want to break down these numbers with Lisa. So jobless claims come in with a nice downside surprise, 231. As Mike pointed out, in the previous week, had this odd quirk coming out of Texas. A lot of people thought that maybe they were the wrong kind of filings for unemployment benefits. Claims have come back down to 231. Fraudulent filings were the conversation that we were having last week. So the good news is that we've returned back to the 230s on jobless claims. That's taken some heat out of the bond market rally. Yields come back up just a little bit across the curve. Yields were down 2 basis points at the front end, now just about unchanged. With that kind of move, push it through foreign exchange, starting to see the comeback of the US dollar. Just a little bit of dollar strength against the euro. Euro dollar shaping up as follows on my screen on the Bloomberg, 118.06, so slightly negative now on the session. So that's some good news, Bremo. That's the right kind of downside surprise on jobless claims.
And it coheres with what we're hearing from a lot of people, which is, and I'm talking about business leaders who say that the labor market isn't falling off a cliff, and if anything, there is this feeling of reacceleration in the underlying economy, and certainly we've seen that in spending. I just wonder, based on the muted reaction in bond markets, how the 2-year isn't ripping higher. It is a little bit higher. How much this really signifies that the Fed has put a cap on how high those short-term yields could go, regardless of how good that economic data could be.
Mike, I want to build on the data and get your thoughts on the Federal Reserve. You spent time in the news conference, listened to Chairman Powell intently, had your own remarks to make and your own interaction with him. What is anchoring their view of the labor market right now? Is it payrolls? Is it the unemployment rate? Is it claims? What is it?
It is payrolls at this point. They're looking at the drop in the number of people getting hired and starting to worry that means that companies are going to start cutting back on people if their margins are compressed because of tariffs. But we haven't seen a sign of that yet. We're still seeing business leaders say, we're sitting on our hands, we're waiting to see what's going to happen. But the Fed sees more danger in that than they do in inflation, which they're describing as a one-off. But of course, Gary Cohn yesterday from IBM saying that this could stretch out. Companies could stretch out the process of raising prices. So it is sort of without a lot of conviction that the Fed is making the choice to focus on employment at this part, and that could change at any time when we get new inflation numbers.
Mike McKee with the latest. Michael, great work yesterday. Thank you, sir. Appreciate it. Nita Richardson of ADP joined us in the studio. Nita, good morning. It's good to see you.
Good morning.
This is a tough one to read. You help us out. Where is this labor market right now? What's happening?
Labor market is strong, actually. It's solid. And I think there is a comment that has to be made. It is weakening, but the labor market is not weak. And if you look at the stock, and that's what a lot of your audience is used to doing, looking at the stock and the flows. If you look at the stock, what you'll see is that the consumer is really smoothing out all the rough edges in the economy. And it's true for the labor market as well. There's very little turnover in this labor market. I was really shocked by that upward surprise in jobless claims last week, and now I know that that was just a mirage, and we're back to historical lows. There's very little flow out, and there's very little flow in, but what that means for the consumer is that they're not defying gravity when you see that pop in retail sales. They are well anchored by a functioning labor market where they are employed and working, and those incomes are fueling spending. And as long as that continues to happen, we can live with the uncertainty of fewer flows and hirings in and out of the labor market if the stock is healthy.
Well, and this raises the point that maybe this is the new normal. This sort of low hire, low fire type of churn. And I just wonder if that's true, if that's the case, or if you do see some sort of reacceleration in hiring, especially if there is some sort of commensurate reacceleration in the economy heading into the end of the year.
Yeah, so that goes back to the weakening. And I do think the labor market is weakening, but not for the reasons that were explained yesterday. Not simply because of the hiring rate, but really the concentration of hiring. And Lisa, you and I have talked about this a lot. If you look at the BLS data, if you look at the ADP data, what you'll see is a heavily concentrated hiring market in key consumer sectors, whether it's healthcare for the BLS or leisure and hospitality and ADP. It's the consumer who's driving hiring, and the consumer's whims are really forming and shaping today's labor market. I think that's a concern. You want broad-based hiring. You don't want it concentrated. That's not good for the future. So there are reasons to be concerned about this labor market, but the ones in terms of just the number of jobs that are added every single month, I think that's not the biggest problem with the labor market right now.
Going forward, we've been talking about the conflict between the real economy and this idea that there is something kind of quirky or not totally healthy about the labor market, and the idea that you're seeing this boom in a select number of stocks, but it does seem to be broadening. Do you think that that also is the new normal? That companies can keep doing really well but not increase their headcount considerably or invest in talent? Or do you think that this is something that has to reconcile?
In stock markets and companies, the truth is, if you're not growing, you're not going to be around for long. And I think that when we look at the labor market, what I see is a tipping point. I see a labor market that is very dependent on the consumer and a consumer that is very dependent on the labor market. And I think this is an uneasy truce. It's a delicate relationship because anything could upend it. And that is the issue for companies as well. If their demand is coming from a resilient consumer only, and that consumer is dependent, and most of us are, on the labor market, then you can see how these fractures could lead to something bigger for companies right now. So they're very dependent on that demand outlook, and it's uncertain. And there's a lot of risk around it.
So yesterday felt really messy. Listening to what you've got to say about things, could these decisions get messier, given how difficult it is to read things at the moment?
You know, Vice Chair Jeffries gave a speech about 2 years ago on the difference between uncertainty and risk, and that term risk management really stood out to me, because risk is something where you don't know the outcome, but you know the distribution, and therefore you can act in a way, if you're the Fed, to, you know, try to tilt towards an outcome that is preferred. Uncertainty, you don't know the outcome and you don't know the distribution. And I think we're there more now than we were even 2 years ago. We have an uncertain distribution, so it calls into question whether a short-term rate move is really going to affect these long-term structural issues tied to demographics, immigration, and higher inflation than we're used to.
With that in mind, as they get closer and closer to neutral, how do they confront the situation you've just described?
Historically, they've done so with data and really having a strong read of not only where the economy is now, but where it's going. And that is going to be critical because they have to work in two time dimensions, right? Now and the future. And right now, things look pretty good. The stock, like I said, for the labor market is pretty good. The unemployment rate is below what we've seen historically. But in the future, if these structural changes become live, real-time constraints to the economy, then the Fed has to act and act quickly. And that is the uncertainty that we're all going to be grappling with.
Just a random question from me. How long before college graduates actually get jobs?
Well, my son graduates in 2 years, so I'm hoping for that.
Serious though, when's that going to come back?
I think for early career, we're also seeing a complex relationship, right? Because we're seeing they're entering a jobs market where AI is becoming more and more present in their skill set. And when you think about where AI shows up for these for careers in general, it's showing up, according to research done by Stanford and using ADP data, in early career in AI-exposed fields. And that's not just software developers, that's marketing, that's finance, that's anything that you use a spreadsheet or some kind of document to do. So I do think that there is a transition point. The good news is, in this very stable labor market, companies are leaning into employee engagement, employee training, employee upskilling in a way that they weren't doing before the pandemic. So there's hope that if the economy stays strong, that this early career population, which is our future, will be trained into those durable jobs.
I share that hope, Nita. I hope you're right. Nita Richardson.
We got ADP. 2 years.
Not just for you.
I've got a little longer, but not much.
For everybody. Bramo, it's a huge issue. And if everyone's right, the equity bulls in this market that come on this program talking about the re-acceleration into next year, I hope that brings the labor market with it. And that's not the kind of jobless acceleration that you've been talking about.
Yeah, and how much companies, to Neil's point, invest in training. And we were talking to Brian Moynihan yesterday, and the sort of subtext to some of the conversation is that the big banks are training and some of the others are stealing because they don't want to train. And this does take money and it is inefficient. So how do companies have the conviction to do that if they kind of like ChatGPT and think, they can get their own coffee?
Some good news, at least this morning, in the last 10 minutes or so. Jobless claims down to about 231. 231 against an estimate of 240. The previous number, a revised 264. You want some coffee, don't you?
I have.
Yeah, okay.
I have like about a third of a cup. I'll get my own later.
Let's give you an update on stories elsewhere this morning. With your Bloomberg Brief, here's Vonnie Quinn. Hey, Vonnie.
Hey, Tom, thank you. Recapping that data then that we brought you just a few minutes ago. Initial jobless claims dropping by the most in nearly 4 years last week. Claims fell by 33,000 to 231,000. The median forecast in Bloomberg's survey of economists called for 240,000 applications. China's Huawei unveiled a plan to challenge NVIDIA's dominance in the AI chip market. The company unveiled its new SuperPod cluster designs that can link more than 15,000 of its Ascend AI chips together to boost computing power. Huawei plans to roll out the new models in 2027 and 2028. Shares of Alphabet rising in the pre-market. The Financial Times reporting China is dropping its antitrust investigation into the dominance of Google's Android. The announcement comes ahead of Friday's scheduled call between President Donald Trump and China's Xi Jinping. And that's your Bloomberg Brief. John.
Vonnie, thank you. Appreciate it. Thanks for this morning. Up next on the programme, Adam Heads of Janus Henderson as stocks trade near all-time highs. Plus, Yahira with your morning movers as Intel shares surge following a deal announcement with NVIDIA. That stock is up by 30%.
Said 25% last year, I believe, of Google's code is AI generated. You have over 180,000 employees right now. Is it half that in the future?
I expect we will grow from our current engineering base even into next year, right? Because it allows us to do more, right? I think the opportunity space is also increasing. I just view this as making engineers dramatically more productive. Getting a lot of the mundane aspects out of what they do, allowing them to spend on higher value-added tasks. But that means it's an accelerator. People will be able to do more, which means maybe we'll create new products, and hence we will need more people. At least in the near term, to me, it looks like we will expand engineering velocity, and that doesn't mean we're constrained in what we will do. We'll end up doing more as a company as well.
Africa, a region rife with potential for growth and opportunities, but not without its challenges. Bloomberg highlights the biggest stories, interviewing key players, and reporting on the issues impacting the region. Join us as we get to the heart of African business, politics, and economics, and ask the question, what's next? I'm Jennifer Zabasaja, and this is Next Africa. New episodes every month, only on Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Bringing you up-to-the-minute energy news whenever and wherever it happens. I'm Joanna Bersecci in Vienna, and this is Bloomberg.
The
This is a committee that has to think about the long run, even as they make today's decisions. Not surprising, I think, that you see this kind of dispersion, given the changes going on in the economy. When you see dispersion like this, it tells you that we are looking pretty short term. This idea of meeting to meeting sounds right to me.
There was a lot of dispersion in the forecast from this Federal Reserve just yesterday. That was the former Kansas City Fed President, Esther George. She's seen it all. She's been on the dissenting side of things, and she's seen a lot of those forecasts that looked a little like what we saw yesterday.
You know, she said something interesting. If you dissent and the rest of the committee votes against you, it doesn't mean that your view didn't count. People hear it, and I wonder how much they heard Stephen Myron's vote, even if it was very different from their own.
Pushing for 50, and let's be clear, we did think other people might join him, and they didn't. Governor Waller, Governor Bowman. Didn't happen, but there was a credible case for some people, at least, to make that case.
Yeah, especially before retail sales, and once retail sales came in, maybe not. I will say, I don't know how much consolidation there is around a view of 125 basis points of rate cuts by the end of this year, but nonetheless, that is the dot that we saw.
Yeah, I was talking more about the dissent for 50 than I was the dot itself.
But maybe that's the reason why there wasn't as much.
I said earlier this morning, stranger things have happened.
Yeah, it's
the
true.
Fed's been very offside at turning points. And if you look at the forecast, my favourite is the SEP from the end of 21. Not that I have a favourite SEP, but that's really sad. If you go to the end of 21 and look at their forecast for the end of 22, they're hundreds and hundreds of basis points off where they ended up. They were looking for 0.9%.
The point here, and I think it is very well taken, it is nice to have contrarian views, and sometimes it's really important to consider alternative scenarios, especially in a time of this much uncertainty.
Equities are higher this morning by 0.7%. What uncertainty? All-time highs potentially at the opening bell, 43 minutes away. With your morning movers, let's cross over to Yahira for more. Hey, Yahira.
Hi, John. We are seeing Intel shares absolutely soaring here in the pre-market, up 30%, because as President Trump just said moments ago, it feels like Jensen Huang is taking over the world. NVIDIA is investing $5 billion into Intel, and the rivals will now team up to co-develop chips for PCs and for data centers. And looking at the big picture, it comes after the U.S. government took a 10% stake in Intel, all while China continues to crack down on NVIDIA and prop up its own domestic chip industry. So this just all feels like a bigger chess game being played. And sticking with tech and China, we are seeing shares of Alphabet up more than 1% on a report that Beijing is scrapping its antitrust probe into Android, and the timing does not feel like an accident. It comes just a day before Presidents Trump and Xi Jinping are set to call. So this is being viewed as sort of an olive branch ahead of that highly consequential call. And we end on the consumer with Darden Restaurants down 8%. This is the company behind Olive Garden and Longhorn Steakhouse. Shares are falling after adjusted earnings per share came in below estimates in the latest quarter. And that is because the company, which caters to middle-income consumers, said that it was going to try to limit price hikes to keep diners coming through the door. So that is hitting profits, and its comparable sales outlook did not look good either. John?
Yahira, thank you. Appreciate it. More conflicting signals coming from corporate America.
Yeah, maybe just bad breadsticks. That's what I thought.
Yeah, they've got their own problems.
Yeah, I mean, I'm not
totally
saying
agree with
they're
you.
bad, but
I know you're kind of joking, but you're not far off.
I just wonder how much this is consumers being choosier, choiceful, whatever word you want to say, picky, and choosing the ones they like and prioritizing that. And this is really a competitive thing more than it is an economic thing.
Let's cut you down to the opening bell. Let's move on from there. Stocks hovering near all-time highs. Equities up by 0.7% on the S&P 500. Adam Hetz of Janus Henderson writing the following: with so many cuts already priced in, if there is a proper growth scare, there is risk that additional cuts won't mitigate the downside. Adam joins us now for more. Adam, welcome to the program.
Good morning.
That's a really thoughtful statement. I want to give you some time just to build on that a little bit. Are you suggesting that the rate cuts that are already priced, that haven't yet been delivered, are already starting to influence the economy?
There are high expectations right now for more rate cuts, and yesterday helped to affirm that. So the Fed's doing a really good job right now of balancing a wide range of good risks and bad risks, and we think investors should do the same. And portfolios should be balanced right now, which means more of like a 60-40 starting point, and a 60-40 should stay around 60-40. Even though that feels a little bit neutral at the top level, it's not under the hood. If we're talking about a base case of rate cuts with a resilient economy, it's great for growth, it's great for cyclicals, small and mid, it's great for REITs, it's great for international, and that broadening trade should have some room to run.
Why does the bond piece perform in the way you think it should? in an environment like this one, when the Federal Reserve is really losing some credibility about its pursuit of 2% on the inflation side. And it's also telling us basically they're willing to underpin the labor market and they're willing to sacrifice things on inflation.
Within that 60-40, that bond piece, right now rates are rallying, and we think investors should extend duration if they haven't already. And if those lower yields across the curve are forcing more of a search for yield in some multi-asset income portfolios, that's where you can look outside the core into the more of the credit, non-investment grade segments. The investors are seeing corporate spreads at all-time tights, nearly that, at least the tightest since the late 90s. This is where you can look outside traditional corporates into securitized. Janice Henderson is a world-class securitized team. We're the second largest active ETF provider with a lot of great securitized offerings there, and we're seeing that go from more of a diversifier to more of a strategic long-term piece of portfolios within the fixed income.
I guess I don't understand why the rate economy, and to John's point, the inflationary pressures where inflation still hasn't gotten down to 2% for more than 4 years. I just wonder, given the fact that equity valuations, yes, they are elevated, but you're looking at the moonshot in AI, you're looking at profitability other than Darden that has been going up, and you look at the idea that there is a lot of cash that is, I don't want to say on the sidelines because I don't like that expression, but in money market funds. Why aren't stocks the much better choice right now than bonds?
Well, you're seeing those balanced risks play out, and this goes back to why you'd want to keep more of that 60-40 baseline intact. So part of the concerns here and part of the bearish case is price levels are so high. That goes for valuations, top decile valuations in the S&P. You've got credit spreads near all-time tights, but those high price levels also feed into that bullish case about loose financial conditions, especially once you factor in lower rates in the 10-year and lower vol. So those bearish concerns about price levels also feed in and perpetuate that bullish case, which is why you don't want to be underweight equities right now.
How hard is it to convince customers, clients of yours, that bonds still deserve the same place in the portfolio?
This has been a long-term discussion. We get those questions every day, and this goes back to a decade ago, living through that ultra low-rate environment. That's not where we are right now. When you're looking at bond portfolios, you're looking at flexible, diversified bond portfolios, you're seeing yields still in the mid-single digits. And so that is a great cushion. And in that bad case scenario of rates going higher, there is still a small chance it could be from deficit fiscal concerns with global yield ceilings raising. But right now, if we see the yields go from 4 and you blink and yields hit 450 on the 10-year, right now, if you look at Fed projections, you look at the GDP nowcast with US GDP around 3.4%. Right now, if you're seeing yields rise, that actually could be good for risk assets, and that it might hurt your bond portfolio, but that's great for risk assets because the economy is recovering. So if you have the opposite effect and rates rally from here, that still makes bonds a great diversifier for a portfolio, and you're clipping mid-single digit yields.
Adam, what are you actually expecting for next year? Are you expecting a re-acceleration in growth? Is that the base case?
The base case here is you have to expect, if you're looking at the Fed projections, you're looking at broader consensus, you're having rate cuts into this soft landing kind of resilient growth scenario. There's a wide range of risks around it, but it goes back to that broadening trade. We're seeing a lot of opportunities in the SMID caps, in the cyclicals and international, and valuations have crept up, and you've seen that broadening trade work so far this year. But there's a lot of room to re-rate, and there's a lot of room for earnings expectations to go up from where they are.
Which is why we've seen this big outperformance in smalls, at least over the past, what is it, Bramo? 6 weeks, 6, 7 weeks?
Yeah, what did Alex Altman say? The market
$3 trillion.
$3 trillion. He said, you know, that's smaller than a lot of the mega tech companies in the United States. So hard to really call this a rotation, but it does speak to the idea that there are companies that have been left behind by these all-time highs that we keep talking about every day.
I think he was more comfortable with the word broadening. It's a broadening, not a full rotation.
I think the equal weight is the story that people keep turning to, right? The other 493, and at what point did they outperform given the moonshot of the Magnificent Seven? I just wonder, again, how consistent it is that bonds act as that diversifier. And I think it's really interesting to hear Adam's point, which is it's controversial, and yet the 60-40 coming back as a pitch and just sort of acting as that ballast.
We talked about this. The good news of the last 2 weeks through September is yields on 30s aren't at 5%. They're at 470. 10s aren't at 450. They're closer to 4. That's quite a change. Coming into September, that's not the conversation people were having. In fact, on the fixed income side, there was a real concern. We'd see a repeat of last year. Federal Reserve would lean into easing, and you'd see a sell-off at the long end. That's not developed this time.
No, and there doesn't seem to be a real significant rise in inflation expectations when you look at break-even rates either. So it seems like people still have faith that the Fed will ultimately rein in inflation should it get too hot, even if it is running above 2%.
Adam, enjoyed this. It's good to see you. Thanks for dropping by. Appreciate it. And for tolerating us. Adam Hetz of Janus Henderson. We appreciate that too. Coming up tomorrow, Marissa Adams of HSBC, the former St. Louis Fed President Jim Bullard, Congressman Jason Smith, Nadia Lovell of UBS. What a week so far. One more trading day still to go. Going into the weekend, with equity futures on the S&P 500 up by 0.6%, all-time highs just around the corner. We're almost there, Bramo.
You just said going into the weekend?
Yeah, like one more day after this, one more trading day after this.
Why are you teasing me?
Not there yet.
I know, well, maybe.
When we wake up Friday, we'll have record highs and, like, you know.
Yeah, we're practicing right now.
I'm wishing it forward.
Thank you.
Technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
There is a nice confluence between the long-term investor and what we're trying to do. We have an operating principle that's in our handbook, take the long view. When we went public, we put a timeline up on the screen for the whole company in an all-hands meeting. And that timeline went from founding to 100 years out. And the IPO was one dot in 1 year on that timeline. And we tried to orient the employees to, this is a wonderful event, this IPO, but it's a moment in time on a very long journey.
This is a company that you want to exist in 100 years.
We do.
Wall Street doesn't think in...
No, they think in like hours. Yeah. And what I've learned of Wall Street, and particularly Wall Street investors, when they say they are long-term investors, that means they'll keep your stock for like a month. There has been one instance where I did something that was just for short-term stock, and I felt so bad about it that I don't think I'll do it again.
What was that?
There was one quarter, a few quarters ago, we were not going to beat the quarter. We were going to probably just hit it. And so far, we beat every quarter. So we were all like, wait, what? Our perfect record. We're like a 4.0 student that is going to get a B for the first time. This is not good. And I decided that for a short period of time, at the end of a lesson in our app, we would show 2 ads instead of 1. Turns out that by itself was good enough to beat the quarter, but it's bad for the product. It's not good. After that, I never doing that again.
Bloomberg Screen Time is back this fall for year 3. We're bringing together the biggest names in business and pop culture, like Netflix co-CEO Greg Peters, Instagram boss Adam Mosseri, and Los Angeles royalty Will Obey. We're going to talk about how sports is eating entertainment, check in on the state of the movie business, and get an update on LA after the fires from Rick Caruso and Irving Azoff. You should expect newsy interviews from industry leaders, meaningful business networking, and of course, great food. We'll feature some of the best chefs and food trucks from my hometown of Los Angeles. Tickets are available now, and you should head to bloomberglive.com/screentime for details. I'll see you in Los Angeles, October 8th and 9th.
Bringing you up-to-the-minute news whenever and wherever it happens, I'm Matt Miller at the Circuit de la Sarthe in Le Mans, and this is Bloomberg. We are off to the races again. Futures pointing to new record highs as the 10-year Treasury comes below 4%. 30 minutes until the start of trading. I'm Matt Miller.
And I'm Danny Berger. Bloomberg Open Interest starts right now.
Coming up, a big chip deal. NVIDIA makes a $5 billion bet on Intel. A surprising move to help prop up its ailing arch rival. Intel shares soar on the news.
And that deal helps further a rally in stocks as the Fed delivers its first cut of the year and signals more to come.
This hour, President Trump and UK Prime Minister Keir Starmer hold a joint press conference at which more tech investments may be announced.
Matt, we have to start there because the move in Intel, it is a monster one this morning. How many times have we been head faked from Intel? Does it stick this morning? NVIDIA agreeing to invest $5 billion in the company, said that the two will co-develop chips for PCs and data centers. NVIDIA's stake in Intel will be just under 5%, so 2.5 rally for NVIDIA. For Intel, it's a 30.3% rally.
Anybody who got on board with Trump after that investment in August is getting paid today. Novo Nordisk's diabetes drug Ozempic beat Eli Lilly's Trulicity in a real-world survey of certain U.S. patients. Participants who took Ozempic were 23% less likely to have a heart attack, stroke, or die than people who took Trulicity. According to Novo Nordisk, you can see Novo shares up 8% this morning in the pre-market. Danny?
All right, let's get back to the big story this morning, and it is the NVIDIA-Intel deal. Bloomberg Tech co-host Caroline Hyde joins us for more on this. Caroline, it's $5 billion. What exactly are they hoping to achieve with this investment?
It's more about integration. It's about the forward-looking focus of Intel and its relevance here in the United States. So it's about not yet its fabrication of chips. Remember, TSMC is a little bit lower, but this isn't like a wipeout in terms of Intel making NVIDIA's chips. This is about NVIDIA and them aligning when it comes to AI PCs, when it comes to the future of gaming, when it comes to just making sure that Intel is more relevant in AI data centers, because thus far it hasn't been. NVIDIA, it solidifies its position within the future of AI, whether it's you're using, of course, Intel's own architecture, but also whether you're having companies like Alphabet and others actually design their own specific chips. It just makes them a little bit more relevant into the direction of travel and the future of AI accelerators. It really makes their software and their hardware ever more baked in to the ecosystem when you're aligning with Intel. But this is basically a political statement. This is NVIDIA getting on board with what Trump and the US administration needs. A homegrown domestic powerhouse that needed financial aid, so they get the $5 billion. Maybe this does signal eventually that Intel can think more about fabrication because it's got clear eventual demand maybe coming from NVIDIA, but that's not the one yet. What it's a big tell is that AMD is hurting bad. You're seeing AMD lower because NVIDIA could have done this sort of a deal with AMD. It makes CPUs, it's relevant in gaming, but instead it's gone with Intel because that is where the political winds have been blowing. Big day for AMD. Also look out at ARM because its own architecture is becoming ever more relevant in data centers. Maybe it gets set back a bit because Intel is once there again with x86.
By the way, also a reminder, when President Trump makes an investment or tells you to buy stocks, maybe you should think about getting on board. In terms of NVIDIA, Huawei is coming out with the Challenger chip. We talked about Broadcom challenging Blackwell in the past. Is anybody else going to be able to do what NVIDIA does?
Not for several years. And this is Huawei trying to make clear that eventually it's going to be able to beef up its manufacturing, meet some sort of supply that is just an outrageous amount of demand coming from China at the moment. And at the moment, the Chinese regulators do not want their powerhouses of Alibaba and Tencent buying from NVIDIA. They want them to go to Huawei. They want them to depend on Ascend. But thus far, they haven't had the chip equipment. They haven't got the infrastructure to make really sophisticated chips, let alone the designs thus far. And so they've had to go to NVIDIA. But if Huawei can signal that they're doing more with their lesser semiconductors, they're basically going to be grouping them all together, getting a super pod, basically these clusters that we're used to in the United States. They can make them ever more efficient. Then maybe they can do without NVIDIA for the time being. Maybe they can really make strides in generative AI models for their big clients, and it becomes ever more self-sufficient. This is potentially would have been a negative day for NVIDIA, but instead they've managed to write their own course with the Intel news.
Yeah, interesting to be up and chip at your own monopoly. Very interesting dynamic. Caroline, thank you so much. Bloomberg Tech's Caroline Hyde. By the way, Matt, we were talking in the break about how much $5 billion is for NVIDIA. MODL, the function you told me to go to, their cash on the balance sheet last quarter was $84 billion. So $5 billion is almost a drop in the bucket for NVIDIA.
It's a very small amount, obviously also for a company that's currently worth $4.1 trillion.
Yes, correct. Yes, so that gives you some context into how much this investment really is. Now, the other big story, Matt, of course, is what happened yesterday. The Federal Reserve lowering its benchmark interest rate by 0.25 percentage point and penciling in 2 more reductions for this year. Fed Chair Powell explained why there was not a larger rate cut yesterday.
There wasn't widespread support at all for a 50 basis point cut today. You know, I think we've done very large rate hikes and very large rate cuts in the last 5 years, and you tend to do those at a time when you feel that policy is out of place and needs to move quickly to a new place. That's not at all what I feel certainly now. I feel like our policy has been doing the right thing so far this year.
Joining us now is Michael McKee, Bloomberg's international economics and policy correspondent. Mike, just judging by what Powell said in the presser, meeting by meeting situation, it's a risk management cut. We have two-sided risks. Is this a Powell who is trying to push back on the idea that this really is the start of a rate cutting cycle?
Yes, but he's not trying to push people into the idea that it's not either. Basically, as he said, risk management, the Fed doesn't know what's going on with the economy. And so at this point, they thought it would probably be prudent to do one cut. If you look at the basically the charts of what's happening with their two mandates, they're both going in the wrong direction. Unemployment is rising and prices are also rising again, but prices have been coming down, certainly from where they were. And they think the risk going forward is more towards fewer people being employed, and that means less money going into the economy, slows it down, which would also push down inflation. So that's the direction they're going in at the moment. That is, as I put it yesterday, that's the story they're telling, and they're not necessarily going to stick to it because they're going to watch what the data do. Latest data out today are somewhat reassuring. We get the Philadelphia Fed number jumping on the month, 23.2 from a negative number in July. The prices paid index dropped significantly to 46.8, but it's important to note that is because fewer companies reported changes in prices. They're still reporting that prices are going up. They're not reporting that prices are going down, but a lot of them held their prices steady. Jobless claims fall back. We saw an apparent spike in fraudulent claims in Texas last week. That goes away, and the jobless claims numbers have gone back down. That was something that scared a lot of people last week, and it doesn't seem something to worry about. But right now, we're going to keep an eye on the data going forward if we don't get a government shutdown that doesn't get us the data. But October 3rd is the jobs report, and that's the first one that gives us any kind of clue as to where we go from here.
I wonder about, we have not been back down to the Fed's inflation target for over 5 years, right? And we're cutting. Stephen Myron just earlier this month forecast 4% GDP growth in 2027, and I believe that's his dot at the very bottom in 2027 at 2.375%.
That is his dot, yes.
Is this like what they teach them at Harvard these days?
I don't think so. And I don't think there is necessarily an intellectual connection between what he told the summary of economic projections and what he may think in his head. He was sent there to do a job for the president, and he did it, putting that dot that low.
But Mike, they're all doing it, right? As Danny points out, the summary of economic forecasts or economic projections has higher GDP growth, lower unemployment, and yet they're cutting.
But remember, the summary of economic, what we're looking at is the median. And when you look at the growth figures, the range rose, which means somebody gave a higher number. So that could have been Steve Myron as well. We also don't know about Anna Paulson, who's the new Philadelphia Fed president, who just put in her first SEP this month. But it could mean that Myron did say we're getting stronger growth because he's supposed to say that.
All right, Mike, thanks very much. We're going to continue, obviously, to talk about this for at least the next 2 hours, if not, the next 2 months. Mike McKee there is our international policy and economics correspondent. Joining us now at the desk is Meredith Whitney. She is the CEO of the Meredith Whitney Advisory Group. And Meredith, great to get your take on a day like today. We're running towards all new highs on stocks, as we have been, most of the days this year. But we now have the 10-year yield below 4%. What do you think about this market into which the Fed is cutting?
I think I expected this to be a really hard environment for the Fed going into this year because I see inflation in a lot of sectors. They're not coming out in the hard data, but everybody anecdotally feels the inflation, and particularly services, particularly insurance, homeowners insurance, auto insurance, things that really sting. So as an example, homeowners insurance is up over 69% in 5 years, and that's only going to rise with replacement costs as auto sector you know very well. And then the employment environment is really tough. So the areas where employment's coming out of the system are hospitality, leisure. That's where spending is really contracted. And the persistent grower within the employment situation is home healthcare aides, because we have the silver tsunami of an aging population, and more people are staying in their homes, and more people are having home healthcare. There's not enough to. There's a real employment crisis in that sector.
Meredith, why is everybody so sanguine on inflation when the price increases are just jaw-dropping, eye-popping?
Yeah.
I mean, I look at auto prices, and it's shocking how much they've increased, no matter if you're looking at domestics or foreign over the last 2 or 3 years.
I think because in the hard data, you don't see it in the aggregate numbers. So people are brushing over it, and there's the fear of missing out on a market that just keeps going higher.
Well, that's the thing. There's this weird dichotomy between consumption and the equity market looking incredibly strong, while you have a labor market and housing markets, to your point, that are looking more weak. Which of the two is a better forward-leading indicator for where we go?
It's tough, because I think this environment looks nothing like any environment I've seen before, housing market specifically. So the housing market is on track to be the slowest housing market in over 25 years. And that's because seniors own the vast majority of homes, and they're staying put. So the housing market's stuck. That has an impact on the economy, because if people aren't moving, they're not buying new furniture sets, they're not spending a bunch at Lowe's and Home Depot, and that has an impact on the economy. And then you have other segments where the high end continues to spend, but then there's the rest of the economy, which is 52% of households are still living paycheck to paycheck. And I think another factor that I focused on more recently is what's going on with folks that are between 24 and 38. I call that the avocado toast generation. So it's a mix between older Gen Zs and younger millennials. Now they're being stung. They owe 50% of student debt, and the Department of Education in August started wage garnishments. So already student debt has an 11% serious default, meaning 90-plus day default rate, and I think it's going to be much higher on the.
That bears repeating. More than 1 in 10 people with student loans haven't paid for more than 3 months.
For more than 3 months. But remember, people didn't pay. There was a forbearance period for almost 5 years,
In which they should have saved up maybe to get ready for this point.
Maybe, but they're totally unprepared. So people are like, I'm not paying. I'm not paying. So the rubber met the road in October 24. So we really only have a very short period of time, under a year, where people actually had to make payments. So there was an on-ramp period, but really the rubber met the road in October 24. I think that's going to put a sting on the economy as well. And a lot of these people are losing their jobs, don't have jobs, and that pressure takes, by my estimates, I mean, a wage garnishment can take 15% of your earnings. Right? So instead of making a payment around $200, $300, it can go up to $700 being taken out of your paycheck. That stings. So there are a lot of things that are coming into the economy that are going to test the consumer spending. I don't expect any impact from, again, the very high end, but from the sort of the edge, the folks that paid a lot on experience. This is the avocado toast guys that power the economy. American Express, that's been one of their biggest drivers of growth, which is this millennial and Gen Z. That's going to be something to watch over the coming months.
All right, Meredith, we have to talk more about this. You're staying with us. That is Meredith Whitney. And Matt, just quickly, some breaking lines to bring us. Sumitomo Mitsui is in talks to raise its Jefferies stake above 15%. It already had an investment in the U.S. bank. I will just say, not necessarily this is the reason behind it, but we are in this period of foreign companies making more investments in the U.S. How much of this is financial, and how much of this is Japanese companies and Japan as a whole trying to catch the attention of this White House?
Hey, Danny, this is the hottest country in the world.
I mean, it is. It is, to be fair, and financials are on fire, too, so why wouldn't you want a piece?
Speaking of, we await President Trump's press conference with UK Prime Minister Keir Starmer. We'll bring you that when it happens. This is Bloomberg Open Interest.
technology is embedded in every aspect of our lives.
And laying the foundation for the future.
From finance to defense, AI to entertainment.
And from the road to the stars. Bloomberg brings you the latest stories of the people and companies pushing the tech sector to new frontiers.
And the politics that shape global tech markets.
I'm Caroline Hyde in New York.
And I'm Ed Ludlow in San Francisco.
Watch Bloomberg Tech every weekday.
Only on Bloomberg Television.
The belief for climate change is going down right now. It's going down. And we've tried everything to shame people and blame people and put them in their place and tell them that they're doing things wrong and that they're killing everybody. But if we keep telling them that, then we are going to kill everybody. So we got to figure this out. And we're not going to do it by blaming people who are just trying to wake up and make ends meet every day, especially when a lot of those people have the same connection to nature and the environment that we all share here. I hike and I ski and I love the environment just as much as anybody else, but so does somebody who works in an oil field. The Cabela's shopper and the REI shopper want the same things. They want clean air and they want clean water and they want to be able to recreate outdoors. So until we figure out how to get on the same page, we will continue to lose. We cannot afford to lose anymore. We need to build a winning coalition of people across the political spectrum, or we will never create the solutions that we need.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories. Insight with Haslinda Onim, only on Bloomberg.
Let's get now to high interest. Look at what's making headlines around the world. Disney's ABC network is taking Jimmy Kimmel's late night show off the air indefinitely. This after a backlash over his recent comments regarding the killing of Republican activist Charlie Kirk.
We hit some new lows over the weekend with the MAGA gang desperately trying to characterize this kid who murdered Charlie Kirk as anything other than one of them and doing everything they can to score political points from it.
Yesterday, FCC Chair Brendan Carr said the agency has a strong case to punish Kimmel, ABC, and Disney. The FCC grants licenses to broadcasters such as ABC. And by the way, in the past, Carr has championed free speech, especially in terms of political satire. But he's not laughing. Now, Tesla is reworking its door handles after safety complaints and a federal probe. The new design would combine the electronic and manual release into one single button, making it easier to escape in an emergency. I spoke with Tesla's chief designer Franz von Holzhausen yesterday about the changes.
We actually have a mechanical release that's, basically right at the electronic one too, and we're combining the two. So, in the moments that you're in a panic situation, the muscle memory to go to, what is right there. So you just pull a little bit further on the lever and you have the mechanical release. So that's something that we're working on, yeah. And it's in the cars now.
And Meta is taking yet another stab at smart glasses at its annual Connect event. Mark Zuckerberg unveiled the new $799 Ray-Ban display, the first with a built-in screen. It shows text, calls, and visual results from queries to its AI service, all controlled with hand gestures that are detected by a neural wristband, whatever that is. The new glasses will go on sale September 30th. By the way, speaking of stuff you can buy, American Express is hiking the Platinum Card fee to $895. It's an increase of $200. To ease the sting, Amex is adding about $1,500 in perks, $400 in dining credits, $300 at Lululemon, $200 towards Oura Rings, plus richer hotel and Uber benefits if you pay for that stuff over their network, obviously. The 29% fee increase catapults Amex Platinum back to the top rung of premium credit card prices, eclipsing the price for JP Morgan's Sapphire Reserve card. Danny?
Who's asking for this stuff? Who is, I need $400 at Lululemon and an Oura Ring? That's such a specific person.
I feel like if you don't already have an Oura Ring, maybe you don't want one, but who knows?
Probably. Well, if you have the Amex, you have to now to justify it. All right. Still with us is Meredith Whitney, CEO of Meredith Whitney Advisory Group. Meredith, we were just talking about the break how, yes, this market, this risk market, equities are an all-time high, but credit spreads are so incredibly tight, too. Still the tightest since the 1990s. I was talking with a private capital executive who basically said to me that there is so much demand from credit coming from so many different corners of this market that you will essentially never see credit spreads widen again. Do you think that that's right?
I don't know about that, but I can tell you one of the themes we've been focusing on for the past year plus has been this, tidal wave of demand from private credit on consumer assets. And so you've seen consumer stocks like Rocket and SoFi and Upstart, particularly SoFi, has turned itself into an originate and sell model. So they cannot produce enough product for private credit. A company that just came public, Figure Technology, sells 60% of its production to private credit. So you have again, there's not enough consumer loan production to meet private credit. Here's where the rubber meets the road. Private credit doesn't want short-term assets like credit card assets. They want long-term assets like home equity loans, mortgages, et cetera. So you have seen an incredible change, 17-year change in home equity. So last summer, home equity went from shrinking for 17 years to growing, and that has been explosive. Rocket Financial has securitized 85% more year to date in terms of closed-end securitization home equity loans than it did last year. And interestingly, older seniors are taking out 41% of the home equity loans. So home equity is the fastest growing loan category, and seniors are the fastest at taking out home equity. And this means seniors can afford to stay in their homes. Most seniors, I think Redfin said 79% of seniors want to stay in their home, age in place, which is different from years past, and they're able to afford it thanks to private credit.
By the way, I will borrow a lot more when I'm super old also. I got to ask you about munis. You made your name in this sector, and there is concern still about huge pension obligations for a lot of states in this country, even at tight spreads. Are you concerned about munis? Are you concerned about any states in particular?
For the states why I looked at munis in the first place was because the states were going to have to make some really difficult choices. Constitutionally, municipals were guaranteed and pensions were guaranteed, but social services weren't guaranteed. And so I thought that the states would do the right thing. I was clearly wrong, because what the states did was they kept spending on pension funds, and they used a lot of the Obama stimulus to pad their pensions and their municipal debt. But the fact is they cut on social services. So you've seen massive state arbitrage. So you've seen Texas and Florida far outgrow states like New York and Connecticut, et cetera. And so that's what has happened. And so
to some extent, Meredith, the federal government chipped in to pay a lot of those social services, and now is going to pull out. So states are left on the hook for a lot of that bill. Are they in for a reckoning now?
I mean, it depends how friendly municipal investors are. So, it's tough to tell. I've taken a step away from it. I certainly look at which states are more powerful in terms of growth engines. New York is going to be in a tough position. California continues to be in a tough position.
Doesn't this also just reflect the bigger federal deficit too, and the issues we're having, but yet investors who aren't pushing back against it, the vigilantes that have disappeared?
Well, states are constitutionally, except for Vermont, 49 states are constitutionally required to have balanced budgets. This is why I focused on the states, also because the data is so much more granular with the states. The U.S. can keep spending until it decides that investors don't want to buy their debt anymore. But clearly investors are continuing to buy 30-year, 10-year. They're continuing to be supportive of the market. And I think more U.S. and foreign investors are continuing to buy. So least dirty shirt.
There's a ton of demand out there. Meredith, great having you, and I hope you come back soon. Meredith Whitney joining us here on set. Let's take a look at futures. We're 5 minutes or less until the open right now, and we're still looking at some decent gains. 0.4% on S&P futures, NASDAQ futures even higher after that NVIDIA Intel deal. You can see there, and NVIDIA and Intel are here. 2.5% makes a big difference on the indexes in which it's incredibly heavily weighted. Then Intel, the gain almost 30% still in the pre-market. I should point out that I'm always watching yields on treasuries right now, and we've been on 4% watch. Right now, we're back up on the 10-year yield to 4.116, but we came below it.
4.
Yeah.
But see, this is the crazy thing, that you can get yields ending up higher than they were before the Fed decision, and stocks still rocketing higher. Stocks still trading near all-time highs. It is a market that is split, and at some points, higher bond yields seem to upset equities, but we are so far from that.
It is pretty incredible that yields went from basically 4 flat at 8 o'clock this morning up to 4.12.
It speaks to the confusion of the Fed decision yesterday.
Absolutely. We're going to come back and talk about that. This is Bloomberg Open Interest.
Do you know what to tell people about what the tariffs are going to do on the United States economy and the investment environment, or is it not clear yet?
If you look at the impact of the tariffs, they were much more significant and broad than I think the market expected. Looks closer to 19% on balance versus 2 and change last year. So effectively, it's a 20% increase on 10% of household goods that are imported into this country.
And do you think it's going to lead to a recession?
Well, we think that it's going to impact both inflation and the economic growth scenario. So we were coming into yesterday expecting the real economy to grow at 2%. And inflation to be closer to 2.8%. If you just go through the math, it would suggest there's probably 1 to 2 points upward increase on inflation and a similar amount on economic growth. So it could put us in a position where we're teetering.
So the tariffs will likely depress the GDP growth rate and increase inflation. So what's the advantage of tariffs?
From our standpoint, we have a hard time seeing the benefits of tariffs. They do tend to be inflationary in the short term. As you're pointing out, the longer term impact on economies is probably the greater downside.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Moments away from the start of trading, this is Bloomberg Open Interest. I'm Matt Miller. The day after a Fed decision, we saw the 10-year yield go below 4%. Now it comes rocketing back like 12 basis points, but that doesn't stop us from rallying. Futures on the S&P up 0.4%, on the NASDAQ up almost 0.9%. And one of the big catalysts is this NVIDIA Intel deal that's pushing especially tech stocks higher. A couple of new participants ringing opening bells down on the New York Stock Exchange. You've got Waterbridge, WBI, the ticker there, and the latest IPO on the NASDAQ is Netscope. which is surprisingly a lot like the internet web browser that I first learned on.
Which is
Escape.
Oh, that's very
Right?
confusing. That
Yeah.
is very confusing. But hey, IPOs
But no one
are back,
remembers
baby.
that, because that was like 30 years ago.
Well, I mean, it's kind of worrying, a sign of the times. 30 years ago, things happened. IPOs are coming back. You know how that goes.
Enron.
We'll go beyond that right now. Matt, I have something that is moving the market. It's clear you're talking about 4% on the 10-year yields moving much higher. It's not the Fed dominating markets. That's not what's driving things. It is this. Look at the share price of Intel, 25% gain. After NVIDIA agreed to invest $5 billion in the company, it said the two will co-develop chips for PCs and data centers. NVIDIA's stake, though, Matt, in Intel will be just under 5%. I mean, I know $5 billion sounds like a lot, but in the context of NVIDIA, it's kind of like a cute little pet project for them.
That's true, although in the context of Intel, it's huge, right? I mean, Intel has a market cap, or had, of less than $100 billion before President Trump and his administration made this investment. Right now, Intel has a market cap of $144 billion. So I guess getting Jensen Huang on your side really does help. By the way, let's shift gears to weight loss drugs. Novo Nordisk's diabetes drug Ozempic, of course the weight loss version is Wegovy, beat Eli Lilly's Trulicity in a real-world survey of certain U.S. patients. Participants who took Ozempic were 23% less likely to have a heart attack, stroke, or die than people on Trulicity, according to Novo Nordisk. Now, Novo shares are up 5%. I feel like every day there's a new study like, you can lose more weight on our pill. Well, you die less often on our shot.
Right. Your
You have lower blood sugar on our pill. You know, and
just take them all.
Yeah.
Stabs of every single medicine, you're good to go. That is not medical advice. Don't do that.
No, please don't. If you take too much of these drugs, it can lead to disastrous consequences.
Okay, let's get back to markets, and please away from that. Bloomberg macro strategist Michael Ball joins us a day after a Fed decision when stocks are at all-time highs. Yields are bouncing back up from 4%. Michael, Matt and I were talking about this strange dichotomy that you got in the SEP yesterday. Inflation or growth targets moved higher, unemployment lower, but more cuts. Anna Wong over at Bloomberg Economics makes this interesting argument that the net sum of that, of what you read, is a Fed whose reaction function is just more dovish now. Was that your read too?
Yeah, I think so. And it's funny that the initial reaction was that, and then we had this kind of turbulence as he spoke about kind of this safety risk management aspect that they were still thinking about, showing a reluctance to kind of really commit to a further rate cutting cycle that a lot think are warranted after what we've seen with the job revisions and the weaker job prints over the last 3 months. So overall, I think it is a very dovish signal for people, and I think finally equities kind of latched on. Obviously, there's been some other stories coming forth to help NASDAQ kind of outperform with this NVIDIA you're just speaking to. But this is a positive thing. This is lower real rates on top of still positive growth. And overall, that's easier financial conditions, which should support risk and people moving out the curve into equities and credit.
You know, I grew up in the Reagan era, and he would say, you know, inflation is more dangerous than an armed robber. For savers, for retirees, inflation just sucks, right? But it seems like the U.S. government and the Fed have this shtick where they want to convince people they're really trying to get inflation down, and they're not. Do investors see through that ruse and realize that we're going to keep running it hot?
Yeah, I think market implied inflation measures are seeing it. I think what's interesting and what Powell took comfort in is that the consumer-based ones are still well anchored. I think honestly, nominal GDP growth is going to pick up because of this inflation and because of probably the fact that we will get this benefit from the One Big Beautiful Bill and all these other aspects from the easing cycle that they are now commencing upon. And when I say the cycle, I mean there is still going to be some further cuts coming, and people will latch onto that. Animal spirits will be unleashed, not only in the financial markets, but businesses themselves will probably commit more to CapEx. So we might get through this no hire, no fire period that was brought on by all the policy blitz uncertainty. And if we get into the beginning of next year and all of a sudden we have a better fiscal pulse, we have a better monetary pulse, and all of a sudden there's less uncertainty, boom, we're going to have somewhat of a nice catalyst for growth, and it's all going to be picked up by inflation. So the nominal prints of GDP will be much higher, and equities like that.
And by the way, I think, you know, almost a genius stroke. 1B3 is going to put off complaints by retirees and savers because it gives them no tax on Social Security. So they continue to see prices rise to levels that they never could have imagined they'd be at, but they have a little bit more money in their pockets.
But it's a
because of that
sugar rush,
legislation.
though, right? Because it's all concentrated in the first half of 2026.
Right.
To your point, Matt, people hate inflation. They still hate inflation. That hasn't gone away. So what does it say that this is...
But apparently not Fed governors.
Well, see, that's what I don't understand. If this is an environment where people still abhor inflation, they remember coming out of COVID and hating how much they have to spend, why isn't this a Fed that's biased towards bringing inflation down and is still biased towards the labor market?
Well, I think it is. I mean, you saw it, like Michael McKee wisely pointed out, there's a big dispersion. So there is a debate. There are two camps still. Powell was successful in kind of wrangling everyone together, and I think there was this rally around him for Fed independence purposes.
But that in itself, should we even look to the Fed for a guide for the future? Should we even care about the SEP if there's such a wide range? And all this is just Powell wrangling everyone together?
Yeah, exactly. I mean, wrangling everyone together, is that really a great thing for the Fed to do? Don't we want there to be two camps and real live debate?
We do, and this is the worry, right? And especially when policy and personnel are very well interlinked. And next year, we don't know what we're going to get. Obviously, there will be two changes for sure, possibly a third. We don't know what's going on with Lisa Cook. But all that said, yeah, you could discount 2026, and I think that's what caused the initial confusion. And now people are actually going to, again, go back to this concept where you have to make a call yourself as an investor on where you think growth is going, because that is all that matters now for the Fed. But we can look ahead only a month or two now as far as where we think things are. Our confidence interval is much weaker for further projections out, and the Fed's been saying that for a while, and nothing has changed there.
And all that matters for the market is that AI giants are still spending money.
Right, and then there's this, you know, kind of K economy for the wealthy and the poor, and then this CapEx story where it's all AI. So yeah, there's a lot of these nuance which don't make for a great growth story, but we are seeing the prints at the hard data level still holding up, which gives earnings comfort.
Crazy move by Intel this morning, up just under 26%. Michael, thank you so much for joining. That's Bloomberg macro strategist Michael Ball. Speaking of which, let's get a check on the stock market right now, about 7 minutes into your trading day. We're higher by 0.5%. I think I can bet what the first company is going to be in terms of moving this market. It's going to be NVIDIA. It's going to be NVIDIA. It's going to be Intel. Those are your top two movers. NVIDIA contributes more just because it is worth so many trillions of dollars. Again, this is a market. It is not trading on a Fed decision yesterday. It is trading on NVIDIA investing $5 billion into their cute little pet projects, that is Intel and PC and data center developments. On the downside, you also have something similar moving on that. It's AMD, because they were snubbed in this deal. Caroline Hyde was telling us NVIDIA could have gone for AMD. What's the difference between the two? It might have to do with that little 10% government stake being taken in Intel that made NVIDIA go towards them. Let's look at the sectors. It's going to be an interesting one because you do have this push and pull from tech as to what's leading, what's not. But the fact that NVIDIA's up means that the entirety of infotech is leading us on the way. You also have commodities, industrials, that follows. On the downside, consumer staples, you did have some pretty poor earnings from Darden. People aren't going out to Olive Garden and Longhorn Steakhouse. Cracker Barrel earnings were pretty bad too. They're still feeling the backlash from the whole logo debacle. So hence why you see some of consumer discretionary and those more consumer names on the bottom of the stack, Matt.
Yeah, interesting. We'll continue to watch restaurant operator earnings. Coming up, we await President Trump's press conference with UK Prime Minister Keir Starmer. We will bring you that when it happens because we're expecting more tech deals to be announced. This is Bloomberg Open Interest.
Now, your co-headquarters is in Miami, so you spend a lot of time in Miami and Florida. People often think the hedge fund world is centered in New York or London. Do you have enough access to talent and information in Miami, or does it make a difference anymore?
Information is,
everywhere at this point. So information's not the challenge. I think young talent tends to want to be in New York. I'd say 75-25, just because the ecosystem of young people and social reasons. But we are having more big hedge funds, obviously Citadel being the most prominent, come down to Miami. And that causes management teams to increasingly come through Miami. So it is a perfectly good place to run a hedge fund, and there are many good hedge funds down there.
It's the most fascinating time for the global economy in years, and our conversations are front and center.
We're stress testing consequential ideas, and investors around the world are scoring them in real time, helping to translate the policies from Washington into actionable ideas for Wall Street.
It's the morning call you actually want to be a part of.
Separating the signal from the noise, with some fun along the way.
This is Bloomberg Surveillance.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Lizzie Burden outside Windsor Castle, England, and this is Bloomberg.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Right, okay, ready?
David, what initially sparked your interest in this topic of longevity?
15 years ago, I turned 60, and I began to wonder how much longer I'm likely to live and what I could do to extend my life. On longevity, I talked with the leading experts in science and medicine to educate people about how they might be able to change their conduct so that they can live a happier and healthier life. I'm David Rubenstein. Join me on a 4-part journey as I explore the great quest for longevity, only on Bloomberg.
Let's look at some of the top calls this morning, some of the analyst action that we're focusing up on. First up, Nike, that gets an upgrade at RBC Capital Markets thanks to increasing revenue tied to the upcoming FIFA World Cup. Those shares up just 0.5% as I pray and hope to the soccer gods I can also get a ticket. Next up, BTIG initiating coverage of Abercrombie & Fitch with a buy rating, saying the brand is returning to growth with multi-year tailwinds at teen-focused Hollister unit. Those shares up more than 2.5%. Finally, CSX, that gets upgraded to a buy at RBC Capital Markets. RBC says shares can benefit under virtually all consolidation scenarios on the back of the planned merger between Norfolk Southern and Union Pacific. Those shares up just under 1%, Matt.
All right, let's get to the big tech deal of the day that Danny and I have been talking about all morning. I assume Faro and Bramo were talking about it as well. NVIDIA now owns a roughly 5% stake in Intel. The two companies are going to co-develop AI chips meant for personal computers and data centers. Let's get a read from Bloomberg Intelligence and Global Head of Tech Research, Mandeep Singh. And Mandeep, a lot of people are surprised by this news this morning. Obviously, the market was, considering the stock is up like 25% and change. But you could have, maybe should have forecast this, right?
Well, it was hard to anticipate who it will be. In this case, it turned out
somebody is going to throw them a paltry $5 billion.
Either I thought it would be one of the hyperscalers, because if you go back 1 year, Amazon had announced a partnership with Intel to use their foundry. Obviously, that didn't help turn around the foundry business in a big way, but clearly, you had some sort of a sentiment that, one of the hyperscalers would step in. And now with the government taking a stake in Intel, the catalyst was there that, for a turnaround in Intel, there has to be somebody who provided the funding in addition to, the government stake. And
there have been so many false dawns with Intel, though. It was SoftBank, what, a $2 billion investment from SoftBank. You've had Apollo do joint ventures with them. You've had Brookfield do joint ventures with them. The government money, now NVIDIA. Is the time finally here? Is this finally enough for Intel to get their foundry business really up and running?
Well, this is not for the foundry.
Oh, sure,
so that's the surprise
That's actually
element.
an excellent point. It's for what, PCs?
It's for their chip design business. And look, x86 is still their dominant architecture in desktops and laptops. And we have all been waiting for a refresh cycle because of AI. So the hope is with NVIDIA providing the GPUs and Intel providing the CPUs, that chiplet architecture could help drive a PC refresh cycle. I mean, these roadmaps take a while to, execute. So it's not as if today there is an announcement and within 6 months everything will come together. So that's where I go back to that Amazon announcement. Like within the last 1 year, we haven't seen a big change in Intel's fortune. So from that perspective, expectations should be tempered, but there was a catalyst when it comes to the stock after the government investment, and from a sum of the parts basis, Intel still has a dominant share in PCs, and you could see how a catalyst like this would change the sentiment.
Intel shares, by the way, year to date are up 54%. MP Materials, in which at President Trump's behest, the U.S. bought a stake, year to date up 329%. I'm not looking at U.S. Steel or Nippon Steel, but what other investments should we get on board with? Like if this administration makes a deal, and by the way, President Trump's, at the time he tweeted, I paid $0 for Intel, which isn't exactly true. I mean, they paid $11 billion for it. It's worth approximately $11 billion, all goes to the USA. Why are stupid people unhappy with that? I will make deals like that for our country all day long. I will also help those companies that make such lucrative deals with the United States. He's gonna help them out, right? He says the price is gonna go up, and it is. What's the next deal we should watch out for?
Just now, an hour back in the press conference he had with the UK Prime Minister, he called out energy being a big bottleneck, and he called out, that permits are being granted for the build out of energy. So clearly, the signal is very clear that there will be a big build out of power to supply to these data centers, and it's being acknowledged by him. So that's where I would look at.
Yeah, it has a feeling of a little bit of a shotgun wedding, I have to say, Mandeep, between Intel and NVIDIA, because it's a government-owned company, and it's NVIDIA, and it's Jensen Huang trying to get in the president's favor.
I mean, it's a very, I think NVIDIA is a politically sensitive company because of all the things that are going on with China, and, they need access to the China market, so this is probably one way to please the administration that they care about, the goals, and I don't think it's going to change anything in a big way in terms of the roadmap that NVIDIA has, because they will still rely on TSMC for their manufacturing of data center chips. But clearly, this could be one way for NVIDIA to kind of get to the PC ecosystem where NVIDIA doesn't play. They are in the gaming market. That's high single-digit portion of their revenue, but they don't play in PCs. So if they're able to develop something, that's the market that they could cater to the x86 kind of ecosystem that Intel has.
PCs are the bane of my existence. So we really have to keep using them?
No, because we're just going to get sunglasses on our face that do the exact same thing.
Actually, it may create some pressure on Apple to do something. Now that Intel has done something about PCs, what does it mean for Apple? Because Apple is the only one that hasn't partnered with NVIDIA in any way so far. So maybe, we should watch out for that.
I love this. The winners are those that partner with NVIDIA.
At least in this cycle.
Mandeep, thank you so much for joining. This has been great. That's Bloomberg Intelligence's Mandeep Singh. Coming up, we are awaiting President Trump's press conference with UK Prime Minister Keir Starmer. You're looking at live images of Buckinghamshire, where Chequers is, where we're awaiting that press conference. We will bring it to you when it begins. You're watching Bloomberg TV.
up-to-the-minute geopolitical news whenever and wherever it happens. I'm David Gura in Alberta, Canada, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are basically deep in the European earnings season.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
This is Open Interest. I'm Matt Miller. Quick check on stocks hitting all new highs today. We actually dropped a little bit, just about 0.1% yesterday after the Fed decision. But Romain Bostic of the close was on balance of power. I heard him illustrate an incredible event. So a year ago today was the Fed cut, the first Fed cut, and on the next trading session is when we got the rally. That's happening again now. S&P 500 up 0.5%. NASDAQ up 0.9%. Now, is it really driven by the Fed, or could it be the NVIDIA Intel investment? I guess you can decide. NVIDIA is up more than 2% right now. Obviously, that huge weight driving up every index on which it's listed. Intel gaining by 25%. It's not such a huge weight, but it still makes a little bit of a difference, gaining, what, like $40 billion in market cap. Novo Nordisk is up after saying that their shot is better at reducing the risk of heart attack than Eli Lilly's. Eli Lilly is up because yesterday they said their pill is better at reducing your blood sugar levels. And of course, they each go back and forth at who can make you lose more weight. Meta Platforms releasing a new kind of glasses. They're saying they're AI glasses because they have a screen on the inside. So this is, I think, 3.0 for those glasses. Mandeep Singh has a pair of the old ones. I should ask him if he's going to buy the new ones. They're like $800. And Tesla is rising about 0.4 or 0.5% really after I talked to the chief designer yesterday, Franz von Holzhausen. He says that they're going to make a new interior door mechanism that's easier to open, even if the battery's dead, Danny.
Such a great interview, and we're going to have more of that for you later.
And it's on my podcast.
And it's on the podcast.
Check out my podcast, Hot Pursuit.
Do it all. Keep watching this show and listen to Matt's podcasts, hopefully not at the same time. Anyway, President Trump and UK Prime Minister Keir Starmer are set to hold a joint press conference at which some tech investments may be announced. Let's get the latest from Anne-Marie Horjern, Bloomberg's chief political correspondent and co-host of Bloomberg Surveillance. And Anne-Marie, we already had a big tech announcement just this morning.
Yeah, we had a massive tech announcement in terms of the culmination of all the deals that have been announced on the sidelines of this state visit, whether it's Microsoft, Google, NVIDIA, Palantir. So you had the Prime Minister, Keir Starmer, and President Donald Trump sitting side by side, signing this tech partnership. Jensen Huang was an individual that the president called out during this business reception. He was sitting in the front row, and the president said, "Oh, Jensen, you're here. We all hope you're right. What are you doing?" And this comes on the heels of what we learned this morning of NVIDIA taking a stake in Intel. Just a month ago, almost to the day, you'll remember the U.S. government took a stake in Intel. And when you were watching the feeds, I caught a glimpse of Jensen Huang having a bit of a huddle with the press secretary, Caroline Leavitt, and the White House Deputy Chief of Staff, Stephen Miller. So we can connect the dots here. It does look like this administration, with a heavy hand, is potentially putting pressure on some companies to help build up national champions. I think some might call what the U.S. administration did state capitalism. Others might look at it, given national security concerns, calling it state warcraft. Today's announcement also comes on the day when you want to think of national security. News out of Beijing with Huawei basically mapping out a plan to compete with NVIDIA and make sure they are not the dominant player in this market. So really some interesting news, and we're still waiting. We should note from the White House reaction to what NVIDIA announced today, and maybe we're going to get that reaction when President Donald Trump holds this dual press conference with Keir Starmer.
Anne-Marie, I saw you also posted a photo of Larry Fink there. So it really is the good and great meeting at this event.
Yeah, absolutely. You have also financial chiefs that were at this business roundtable. Many of them were also at the banquet state dinner last night. Larry Fink, Steve Schwartzman, who also announced billions of dollars when it comes to investment in the United Kingdom. Citi's Jane Fraser and Bank of America's Brian Moynihan. All of these individuals were at this event. It really goes to show that there are deep economic and business ties between these two countries, but that special relationship may get tense with some questions at this press conference.
Anne-Marie Horton covering all the president does for us. Thanks very much, our chief political correspondent and co-anchor of Bloomberg Surveillance. Coming up, we're going to show you President Trump's press conference with UK Prime Minister Keir Starmer when it happens. And remember, we expect some deals, so this isn't just pomp and circumstance. This is open interest.
Estava sitiada.
Isso, ao começo, eu também não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home, they are suffering. And someone is driving a Range Rover with their money. Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
Why do the biggest names in business choose Bloomberg Television?
That's a great question.
It's a very good question.
Interesting question. Good question. Great question.
I so appreciate that question.
You certainly ask interesting questions.
Bloomberg Television. Top experts, great questions. Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
go, Tom. Thank you very much. Appreciate it. Yes, Tom, we are the Bloomberg Intelligence Program for the next 2 hours here on this Thursday morning. We got Alexis Christophorus sitting in for Scarlett Fu. I'm Paul Sweeney. We've got John Tucker with us as well. So we'll cover you for the next couple of hours. And when President Trump and Prime Minister Starmer begin the press conference, we will bring that to you live. But we got a packed couple of 2 hours here on a day when the market's trading higher. Big news on Intel. So we'll get the latest with Bailey Lipschultz, who will join us to tell us where the big movers and shakers are as well. Anne-Marie Hordern, she's a host of Bloomberg Surveillance TV. She's going to discuss President Trump's visit to the UK. We'll get to her. Ed Ludlow, a Bloomberg Tech co-host on the Meta Connect event. We'll also talk to him about this big news on NVIDIA. So a lot going on in the world of tech, a lot going on in the world of U.S. And UK politics. We'll bring all that to you over the next 2 hours. But right now, as we like to do, we kick things off with the Bloomberg Business Flash with John Tucker.
All right, guys, and this report being brought to you by IBKR. Will the Fed leave the rate unchanged at the October 29, 2025 meeting? At IBKR Forecast Trader, the yes was recently at 38%. You can start predicting today at ibkr.com/forecast. Last trading day for this contract, October 29th. Look at this, on track for more records. Intel surging, you just mentioned that, up close to 25%. In fact, the best performing stock of the S&P 500. Bailey Lipschultz will be along to take a deeper dive into that. S&P 500, as I say, on track for another record, 32 points higher right now, up 0.5%, 6633. The Dow up 122 points, up and on track for a record. The NASDAQ 100. Also on track for another record, 217 points higher. That is up 0.9%. Let's do the worst performing stock in the S&P 500. Darden Restaurants, the Olive Garden parent, first quarter comp sales for the company's core restaurant brands actually showing greater than expected deceleration of profits, also trailing street expectations for the quarter, hurt in part by food inflation. And after the records, Tracy McMillan at Wells Fargo sees stocks moving higher still.
We've recently changed our forecast on the S&P 500 to reflect that, and we're now sitting at 7,500 as our forecast for next year. So some good upside potential for investors.
And we don't know how long indefinite is for Jimmy Kimmel, or if Disney ABC will even have him back. For now, shares of Disney, they are lower in today's trading. Right now, down 0.6%. And we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker. And that's your Bloomberg Business Flash. Alexis and Paul.
All right, John Tucker, thank you so much. We appreciate that. Alexis Christophorus, Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Well, Alexis, the market likes what they heard from the Fed yesterday, and a little bit of a delayed reaction here.
I would say so. Initially, it was a little bit weird, right?
Yep.
We didn't know, okay, was this a dovish announcement? Was this a hawkish announcement? But it seems like investors had an opportunity to sleep on it. And they came back excited about the market because they're jumping in. And we also have yields higher as well. I want to add bouncing back.
Yep, exactly right. And then we had what I think is just a huge piece of news out today regarding NVIDIA taking a 5% equity stake in Intel through a stock purchase. I'm not sure if they made it or going to make it, but that will result in about 5%. And they're going to do a lot of business together. That puts Intel stock today up 25%. And so my first view of this was, hey, this is smart for NVIDIA. They're effectively co-investing alongside the U.S. government.
Exactly.
That's got to be a good thing.
And by the way, Intel stock, the biggest one-day gain since 1987.
Is that right? Wow.
But get this, AMD, not loving it too much.
Yeah, although this just seems to me, if I'm AMD shareholders, I'm like, this pie is so big, it's growing so quickly.
Okay.
AMD is in such a good, I think, from what I understand, competitive position that I'm like, all right, yeah, it makes Intel a little bit or more competitive, but stock's hanging in there. So, but it's interesting. I think it's just another big validation for this AI trade, and if there's a way for the U.S. Economy and U.S. government to benefit, that's kind of what seems to be developing here. So it's an unusual transaction. First, the U.S. government taking a direct equity stake, and then second, a competitor taking a direct equity stake. You don't see that very often in the U.S. economy. But there you
and
go.
now it seems like the news about China maybe banning NVIDIA's AI chips sort of on the back burner.
Yep, yep,
You know?
and giving a little bit of a break to Google. So we'll have that as well. So maybe a little bit of thaw between the U.S. and China here as we move forward here. Maybe get at some point soon a meeting between Presidents Xi and Trump. All right, let's take a look at what's happening in the marketplace today. I'm Paul Sweeney alongside Alexis Christophers. We're joined by Bloomberg's Bailey Lipschultz. Bailey, what are you looking at today?
Yeah, I want to start with Intel, the story of the day right now, up about 25%, biggest intraday jump since 1987. This coming after NVIDIA unveiling plans to invest $5 billion in plans to co-design chips. A big move, Paul, for what has been really a company that struggled for the last few years, though. You do have that big government stake, plans to take about a 10% stake in the company. Add on to this, a big rebound for the stock, but still kind of looks a bit like an EKG to me when you look at where this thing has been trading over the last 2 years.
All right, also got Novo Nordisk on the move today. I guess we keep going back and forth with these companies and their diabetes drugs, their weight loss drugs. What's the news there?
Yeah, it's a bit of a two-horse race. Novo Nordisk ADR's ticker NVO rallying more than 6% today. This coming after a study showed that its diabetes drug outperformed Eli Lilly's. So Ozempic, that's the Novo drug, outperforming Eli Lilly's older drug, Trulicity, in a real-world survey of certain U.S. patients. This showed that Medicare patients who took Ozempic were 23% less likely to have a heart attack or stroke. So seeing some positive news there. One thing to keep an eye on, though, Novo Nordisk, again, while it is up more than 6% today, biggest jump since August, still down 53% in the last 12 months. So these are two stocks that really rode a lot of momentum.
Yep.
And that has fallen pretty flat.
But I think the next thing in this whole weight loss thing is the pill format. And that's going to make it, I would think, easier for a lot of people to take, so that broadens the market. Hopefully, a lower cost, maybe eventually to consumers. That could be like the second derivative or second wave of this whole thing.
Well, and that's been the big issue with these two companies is that you saw over the last few years so much excitement around Ozempic, but as a person who covered biotech and healthcare for the first 5 years of my career here at Bloomberg, there's always a question of what the next generation is. Who's going to be the company that kind of drives that and is the pioneer? So the big question is, to your point, who and when will bring an oral medicine to market?
Yeah, that's going to be big because, I mean, you walk around now and you see someone who maybe could benefit from this and you wonder why they are not taking it. There could be a million reasons, but one of them I would think would be just kind of they don't like shots or maybe the cost is too high or things like that. So to the extent that they continue to move that forward, that could be big for a lot more people. Cracker Barrel. I mean, it's almost a segue.
Stop
it's
talking
almost
about
a segue from weight loss.
Barrel de Cracker.
Speaking of, I don't know, but let's go to Cracker Barrel because I'm a huge fan, as everyone knows.
You're a fan. I'm a huge fan. I go back and forth. I don't know about you between the chicken fried steak and the chicken and dumplings.
I'm a country boy breakfast. That's my go-to.
I love it.
But can I admit I've never eaten at Cracker Barrel?
There's not one in Manhattan. That's the challenge.
Well, I do leave Manhattan.
Oh, you do?
But,
Okay.
you know,
You do get off the rock. Okay.
But to your point, Cracker Barrel ticker CBRL under a bit of pressure, down just about 2% right now, though it is trading at the lowest level since early May. This coming after the company laid out a weaker than expected forecast showing lingering issues related to that logo backlash. The company projecting revenue for fiscal 2026 between $3.35 billion and $3.45 billion. Analysts were above that with just about $3.5 billion. So falling short. Again, big question is how do they kind of deal with the fallout from that rebranding, given that we did see some data from the same store sales and foot traffic showing that there actually was a pretty notable drop-off.
Just going back to what we were saying earlier about maybe some thawing of the trade and the tech between China and the U.S., I'm just seeing a Bloomberg Red headline here crossing the tape. President Trump and President Xi have a call scheduled for 9 a.m. Eastern time Friday. That's according to a U.S. official. So maybe that's the first step in kind of getting some things moving there. So I'm going to be interested in talking to Michael Halen. He covers all the restaurants for Bloomberg Intelligence. We'll talk to him about what's going on in the restaurant space, including Cracker Barrel, because he was saying that the revamped stores were actually showing some very good metrics in terms of same-store sales growth. So investors and analysts thought that this CEO was actually onto something before this backlash.
Before the issue with the logo, which is always an interesting thing.
All right, thank you very much, Bailey Lipschultz. We appreciate that. Right now, let's head over to England. We have a press conference. Prime Minister Keir Starmer and President Donald Trump. Let's go to that right now.
This historic second state visit is a moment to celebrate the unique bond between our two countries. But today we've gone far beyond that. We've renewed the special relationship for a new era. The United Kingdom and the United States stand together today as first partners on defence, first partners in trade with the groundbreaking deal we struck in May, and now with the new agreement that we've just signed this afternoon. We're confirming our status as the first partners in science and technology, ready to define this century together, just as we did the last. This tech partnership has the power to change lives. It's our chance to ensure that technologies like AI, quantum, and others amplify human potential, solve problems, cure diseases, make us richer and freer, strengthen the cause of democracy, not tyranny. This is the territory on which the future will be won. So this partnership today is a signal of our determination to win this race together and to ensure it brings real benefits in jobs, in growth, in lower bills, to put more hard-earned cash in people's pockets at the end of each month. That's what we're determined to deliver. And we're bringing businesses with us. We've just come from a fantastic meeting with business leaders where we set out this vision. They have responded with new deals and investment, breaking every record that we have. £250 billion flowing both ways across the Atlantic. That is a record. Expected to create 15,000 jobs here in the United Kingdom. High-skilled jobs in cutting-edge sectors where people can build careers for the long term, changing lives in communities up and down our country. And look, while we shape this bond for a new era, the fundamentals have not changed. Security remains the cornerstone of this special relationship. We have the deepest, most advanced defense relationship in the world. Our warriors train together and they fight together. Our industries build together, everything from fast jets to the new AUKUS-class submarines. So now, as we drive up defense spending, we're going to sweep away the barriers to working together on new defense technologies so we can stay ahead of our adversaries. We're united in defense and security, yes, absolutely. But we're also united in the pursuit of peace. We are working together to end the humanitarian catastrophe in the Middle East, get the aid in, free the hostages, and ultimately bring Israel and the region back towards a comprehensive plan which can deliver peace and security for Israelis and Palestinians alike. We're also working together to end the killing in Ukraine. In recent days, Putin has shown his true face, mounting the biggest attacks since the invasion began, with yet more bloodshed, yet more innocents killed, and unprecedented violations of NATO airspace. These are not the actions of someone who wants peace. So we've discussed today how we can build our defences further, support Ukraine, and decisively increase the pressure on Putin to get him to agree a peace deal that will last. And President Trump, you have led the way here, and we will continue to stand and work together for security and for peace. Mr. President, next year we'll celebrate the 250th anniversary of the United States. We've come on a long journey together since 1776. But it's no exaggeration to say that the partnership our two nations have built has shaped the world from the beaches of Normandy to the founding of NATO, to the creation of technologies that have revolutionized our lives. Time and time again, it is British and American men and women side by side, changing the path of history and turning it towards our values, towards freedom, democracy, and the rule of law. In Britain, we take huge pride in that. And let's be clear, this relationship is not just about history, it's about the future. It's about the benefits it delivers now and for decades to come, to make our people safer and better off. We've shown today that we're delivering those benefits, improving people's lives. So we will go into that anniversary year more optimistic than ever and more confident than ever about our two great nations and what they can achieve side by side. Thank you. And it is now my pleasure to give the floor to Mr. President. Thank you.
Thank you very much, very much. Prime Minister Starmer, Melania and I are tremendously thankful for the wonderful hospitality that you and Lady Starmer have extended today at Chequers. Quite the place, I must say, quite the place. And we're grateful beyond words for the spectacular honor of the state visit yesterday at Windsor Castle, hosted by His Majesty King Charles III and Her Majesty Queen Camilla. These are two fantastic people. We will never forget it. As I said last night, the bond between our countries is like no other anywhere in the world. The United States and the United Kingdom have done more good on this planet than any two nations in human history. That is thanks in large part to the traditions of British liberty, which grew up on these isles, these beautiful, magnificent isles, and were carried by our ancestors to the New World. We're forever joined, and we are forever friends, and we will always be friends. This enduring connection is why I was thrilled that the United Kingdom was the very first country with which we made a historic trade deal, and a very good trade deal. He's a tough negotiator. I think it was a better deal for you than us, but these are minor details.
It's a very good deal for both of us.
He's a great negotiator who will extend our unparalleled security alliance into the realm of economic security for the first time, and I look forward to finalizing it very soon. We'll have it done very quickly. We have also just signed a historic technology prosperity deal, one of a kind, to ensure our countries lead the next great technological revolution side by side. In fact, we just left the business leaders, the biggest in the world. Some are in this room right now. And that was quite a meeting we had on business and trade and technology. This trip has galvanized $350 billion in deals across many sectors, and we're committed to ensuring that the UK has a secure and reliable supply of the best AI hardware and software on Earth. And we supply that, and we'll make sure we supply it in quantity to the UK. And we also are joining forces on quantum computing and nuclear power, a natural partnership for close allies. The United States, as you probably have heard, is doing better than it has ever done in terms of business and investment. The stock market has hit a new high, as you know, and that's for many, many days out of our fairly short 8 months. And we seem to be hitting new highs, and I think we're going to do much better even as time goes by. Jobs are at a record, and most importantly, we have more than $17 trillion, $17 trillion, and this is during an 8-month period being invested in the country, which is not only a record, but if you compare $17 trillion to the last year of the Biden administration, they did $250 billion. They didn't do $1 trillion for the 4-year period. We did $17 trillion of investment coming in. A lot of it's because of tariffs, and a lot of it's for a lot of other reasons, but there's never been anything like it. It's an economic superstar. That's what's become. It was mismanaged and badly handled for a long period of time, but it's not badly handled anymore. So that's a record. And remember, that's up until 8 months. We have another few months to go, and that number is going to get significantly higher, especially if we win a certain case that we're waiting to hear. That will be something like the world has never seen. I want to congratulate the United Kingdom on making the vital commitment to spend 5% of GDP on defense at the NATO summit this year. We've worked together very closely in so many ways. I'm very honored to tell you that we've solved 7 wars, wars that were unsolvable, wars that couldn't be negotiated or done. The U.S. has done 7 of them. The one that I thought would be easiest would be because of my relationship with President Putin, but he's let me down. He's really let me down. It was going to be Russia and Ukraine, but we'll see how that turns out. But that turned out to be, I thought it might be among the easiest of the group, but we had settled just about every conflict. And as you know, we're working very hard on Israel and Gaza. All that's happening over there. Complex, but it's going to get done. It'll all get done right. And likewise, Russia and Ukraine will get done. But you never know in war. You know, war is a different thing. Things happen that are very opposite of what you thought. You thought you were going to have an easy time or a hard time, and it turns out to be the reverse. As we saw in the unforgettable parade yesterday at Windsor Castle, what a place it is. The British Armed Forces carry on one of the finest military traditions in the world, one of the greatest marching bands, one of the most magnificent sights I've seen. I know that our service members look forward, and we do look so forward to working even more closely with yours as you push toward that 5% goal. And I think, Mr. Prime Minister, you're just about there. You're going to be there very quickly, along with a lot of other great countries. I want to thank NATO and our wonderful head of NATO, who's really worked very hard, Mark, for the job they've done. As you know, NATO is at 2% GDP, and they didn't pay it. Now they're at 5%, then they pay it. And we appreciate that. And we're sending a lot of weapons to NATO. NATO is paying for those weapons in full. But we're sending them, and we're doing a great job at getting them what they need. And we appreciate the fact that they're taking care of, because the United States is into that war for $350 billion. And just really very sad. It just got out of control. They didn't know what they were doing. But over the generations, British and American warriors have shed their blood side by side in defense of liberty and freedom. And that's why it's so imperative that the United States and the United Kingdom stand together for these fundamental rights and values of the English-speaking world. And we've always stood together, and we will continue to. Just last week, a great American, Charlie Kirk, was heinously assassinated for speaking his mind. He was a great young man, incredible future. Some people said he might be president someday. I told him, I said, Charlie, I think you have a good shot someday at being president. And he just wanted to take care of youth. He loved youth. I've never seen anybody relate to youth like Charlie, and they related to him, and they're devastated. But I appreciate the many British citizens who have offered their condolences. And again, Charlie was a great person. We'll be going out to a service on Sunday. I'll be leaving with some of the people in this room just to celebrate Charlie and all that he's done. So incredible. Never seen anything like it. But I hope that together our nations can lead a movement to defend the glorious traditions of freedom on both sides of the Atlantic. There could be no greater tribute to the immortal bonds of affection and loyalty that unite the British and the American people for all of time. We have a relationship like no other. It will always be that way. We will always be united. We'll always be together. And I just want to thank you, Mr. Prime Minister, for the great job I think you're doing. Thank you very much. Thank you.
Thank you very much, Mr. President. We're going to take some questions. I'll call 2 or 3 to start with, and then I'll pass over to the President. I've got Chris Mason from the BBC first. Chris.
Thank you both. Chris Mason, BBC News. Mr. President, the UK is expected to recognise a Palestinian state in the coming days as the killing in Gaza continues. It often seems that you're the only person that Israel will listen to. What more can you say to them to tell them to stop? And why is the UK's position on a Palestinian state, in your view, wrong? And Prime Minister, what will the recognition of a Palestinian state actually achieve? Is it not just gesture politics to appease people in your own party? Thank you both.
Well, Chris, let me just start with that, because we discussed this amongst other things. We had the best part of an hour, I think, upstairs earlier today, just one-to-one, going through a number of affairs, world affairs, in private. And we absolutely agree on the need for peace and a roadmap, because the situation in Gaza is intolerable. The hostages have been held for a very, very long time, and they must be freed. And we need aid to get into Gaza at speed. And so it's within that context of a plan for peace, which we're working hard on, which not only did we discuss this morning, but our two teams have been working together on, the question of recognition needs to be seen. And so it's part of that overall package which hopefully takes us from the appalling situation we're in now to the outcome of a safe and secure Israel, which we do not have, and a viable Palestinian state. Thank you.
Well, simply, I want the hostages released now, right now, not 1, 2, we'll give you 3 more tomorrow, and, you know, like it's been, but we're the ones that got all the hostages released. We got many, many came to the Oval Office, and I've heard stories like I've never thought even possible. There was no humanity, no anything. I said to them, I said, was there any warmth shown during this stay? Like they offered you a little extra meal, they gave you a little smile, and they said, don't worry, you'll be okay. And every one of them said, not even a little bit. Amazing, you know, to think that during this stay, long stay in some cases. We had a man the other day, 451 days he was there. I always ask that question. And was there any warmth shown? Just a little word of, you know, encouragement. And the answer is every time, absolutely not. I'm shocked to hear it, because in the worst cases, there's always somebody that comes through. We have to remember October 7th, one of the worst, most violent days in the history of the world, not just there, in the history of the world. And I got to see the tapes, and I wish I didn't see them, actually, but I got to see them. And I want an end. I want the hostages released, and I think it's going to be okay. But it has been a brutal period of time. But this has been going on for a long time. This is not something that's over the last year, 2 years, but this has been for decades and decades. But we want it to end. We have to have the hostages back immediately. That's what the people of Israel want. They want them back. And we want the fighting to stop, and it's going to stop. But a lot of bad things. You know, Hamas said that they're going to put the hostages up as bait. They're going to put the hostages in front of any attack. And that's pretty brutal. We haven't heard that one in a long time. So we have to remember that. So I have a disagreement with the Prime Minister on that score. Okay? One of our few disagreements, actually.
Great. Can I take Jack from The Sun? Jack.
Thank you both. Jack Elson from The Sun. Mr. President, in the 9 months you've been in office, you've been incredibly successful in all but eliminating crossings on your southern border.
Yeah.
Meanwhile, illegal migration is at record levels in Britain. The Prime Minister is trying to tackle that. What advice would you give to the man standing next to you on trying to stop illegal migration in Britain? And Prime Minister, if I can just ask, the President is all about drill, baby, drill in terms of trying to secure American energy and cut bills for Americans. Meanwhile, you are turning Britain's back on oil and gas in favour of renewable energies, such as wind turbines. Why do you think that you are right and he is wrong?
So we had millions of people flowing in, totally unchecked, totally unvetted from the Biden administration. 25 million, in my opinion, that would be about 25 million. They came from prisons, they came from mental institutions, they were gang members, they were drug dealers. They came from the Congo. They came from all parts of South America. They came from everywhere. Think of it. Prisoners from the Congo being released into the United States. Prisoners opened up in Venezuela and many other countries, pouring into the United States. And I couldn't believe it. One of the reasons I decided to run. I decided to run because I don't want to be controversial, but you see what's happened and you see all the information that's come out. We won in 2020 big. And I said, let's run, we got to run, because I saw what was happening. And the worst thing that I saw was all of these people. You know, we've already solved inflation. We've solved prices. Oil is way down. Energy is way down in the United States. But what I saw happening with millions of people pouring into our country, I couldn't stand to watch it. And we've done a great job. Nobody, if you've seen the last, I appreciate your question, by the way, nobody, absolutely zero, and I'm not even sure that's possible, but it's a very liberal group that come out with those statistics. The last 3 months, we had zero. From millions of people a year ago, we had zero people enter our country illegally. And we do have people coming in legally through a legal process and testing and lots of other things. I think it's very important, and we speak about it. And I think your situation is very similar. You know, you have people coming in, and I told the Prime Minister I would stop it, and it doesn't matter if you call out the military, it doesn't matter what means you use, but it's going to destroys countries from within. And we're actually now removing a lot of the people that came into our country. It's a very hard chore. We were given a very, very bad hand. Millions of people came in from prisons and mental institutions. We have to remove them. And we are removing them. We have no choice, and I feel very strongly about it. Thank you very much.
Jack, let me just deal with the question of returns, because this is obviously an issue we're taking incredibly seriously. We've struck a number of deals, both on cooperation with other countries, because this is a problem right across Europe, to tackle the problem of actually breaking up the gangs that are running this trade. We have had a record number of returns, over 35,000 now since we came into office. That's the highest number for the best part of 10 years. We struck the returns arrangement with France, and notwithstanding the challenges to that scheme, which you've seen in the last few days, a flight went off at 6:15 this morning, successfully returning someone under that scheme. So that is an important step forward. Obviously, there's no silver bullet here. There's a range of things that need to be done. But given the challenges of returning people, it is important that we're able to prove it can be done. It was done. It was done early this morning. So I can confirm that that flight went. It went successfully. And I'm pleased about that. Now we need to ramp that up at scale, which was always envisaged under the scheme, but it's very important that we have been able to prove that the proof of concept, if you like, that this can be done, and will continue in that way. On the question of energy, firstly, let me be really clear that I am absolutely determined to ensure that the price and cost of energy comes down, so that bills come down, both for individuals, for families, with their household bills, but also for business, because this is so important. The mix will include oil and gas for many years to come from the North Sea. We've been clear about that for some time, but we also need to mix that with renewables, and it's the mix that's really important. And the approach I've taken on this is the same approach that I take to many other things, a pragmatic approach. Thank you, Jack.
I would like to say that we inherited the worst inflation in the history of our country. We had inflation, the likes of which we've really never seen. They say 48 years, and I'll accept that, but I really don't. We had the worst inflation in the history of our country. And we had a expression that I used a lot, drill, baby, drill. And as you know, we brought fuel way down, the prices way down. And we don't do wind because wind is a disaster. It's a very expensive joke, frankly. And we got our energy prices way down. That brought the inflation way down, and now we have very little inflation, and we have a very, very strong economy. So that was very important. Drill, baby, drill. And you have a great asset here, and we spoke about it. It's called the North Sea. The North Sea oil is phenomenal, and I hope, because I love this country, you know. My mother was born in Scotland, and the Hebrides, Stornoway, that's serious Scotland. We were talking about it. And I want this country to do well. And you have great assets that you're going to start using, I believe, under this Prime Minister.
Thank you. And I've got Matthew from The Economist. Matthew.
Thank you, Prime Minister. Mr. President, you say that President Putin has let you down. Have negotiations run out of road, and what are your next steps to compel an end to this war?
Well, he has let me down. I mean, he's killing many people, and he's losing more people than he's killing. I mean, frankly, the Russian soldiers are being killed at a higher rate than the Ukrainian soldiers. But, yeah, he said, let me down. I don't like to see. It's death. It doesn't affect the United States. We have, other than unless you end up in a world war over this thing, you could. This was a thing that would have never happened had I been president. If I were president, it would have never happened. And it didn't happen for 4 years. Most people agree it didn't happen, nor was it close to happening. And I spoke to President Putin about Ukraine. It was the apple of his eye. I've said that many times. It was. But he would have never done what he did, except that he didn't respect the leadership of the United States. They just went through the Afghanistan total disaster for no reason whatsoever. We're going to leave Afghanistan, but we're going to leave it with strength and dignity. And we're going to keep Bagram, the big air base, one of the biggest air bases in the world. We gave it to them for nothing. We're trying to get it back, by the way. Okay, that could be a little breaking news. We're trying to get it back because they need things from us. We want that base back. But one of the reasons we want the base is, as you know, it's an hour away from where China makes its nuclear weapons. So a lot of things are happening, but I am very disappointed in the fact that that one's not settled. To think that we settled Azerbaijan and Albania as an example, it was going on for years. It was never going to be settled. If you remember, the prime minister and the presidents, they were there for many years. They said, when they were in my office, we settled. And they started off at both sides of the Oval Office, so far away. I didn't know you could be so far away. And as we were together for an hour, they kept getting closer, closer. And by the time we finished, we all hugged each other. And one said, I've been in this position for 22 years, and all I've done is kill their people. The other was there for 7 years, and all he did was kill their people. And we got it settled. And we did others, as you know. The Congo, we settled the Congo with Rwanda. That was going on, and that was a machete war. That was a gruesome war. Many people, close to 10 million people killed. We got that settled. My biggest disappointment, but it's, look, we did 7, and most of them were not thought to be settleable. We did India and we did Pakistan. That's 2 nuclear. That was purely for trade. You want to trade with us, you're going to have to get along. And they were going at it hot and heavy. But the Russia situation, I hope we're going to have some good news for you coming up. But again, it doesn't affect the United States. And it doesn't so much affect you. Of course, you are a lot closer to the scene than we are. We have a whole ocean separating us. But I will say this, it's millions of people have died in that war, millions of souls. And they're not American, they're soldiers, mostly soldiers, as you know. The soldiers are being killed at levels that nobody's seen since the Second World War. But they're being killed, and I feel I have an obligation to get it settled for that reason. Thank you.
And just to add on that question, because we have to put extra pressure on Putin. And it's only when the president has put pressure on Putin that he's actually shown any inclination to move. So we have to ramp that pressure up. I think it's important to have this conversation in the context of what's happened in recent weeks. We saw damage and bombing to the British Council in Kyiv. These are targets that it was thought until recently were not targets that would be hit. The British Council, the European Union Embassy, the Council of Ministers, where President Zelensky's ministers work was hit. Again, these were thought to be places that wouldn't be hit. And then the incursion into Poland last week. And if you put that together, what you can see is either an emboldenment or at least an increased recklessness on Putin's part. And that's why I said earlier that they're not the actions of someone who wants peace. So we have to ramp up. And we discussed earlier today, we have built the coalition of the willing with British leadership and French leadership, stepping up with military planning in the seas, in the sky, on the ground, and ramping up what we do with the Ukrainians themselves. And of course, that, taken with an American guarantee, is now an example, I think, of the challenge of Europe stepping up to the plate, which it has done in the last few months, to show through what we and the French have done, that we're prepared to take the lead in this and take the necessary measures.
But that's a war that could have been a third world war, and I don't think we're going to be there now. But that was heading to a third world war, and what a shame it is. What a shame it is.
Mr. President, do you want to call some of the...
I would love to call a few of them. Bev, do you want to have a question?
I'm going to come back to you.
Bev Turner, GB News. Thank you. Having been in DC for a few weeks, it's really interesting to see how you run the country as a proud Christian leader. And it really begs the question to the Prime Minister, if you don't mind, are we still a Christian country? But also...
when you say we, are you talking here or...
Here. The
Here?
UK. I'm still British. I might
I'd
live in
rather
America.
have him
I'm still
answer
British.
that question.
But also,
I can't give you that answer.
That's for the Prime Minister. But also, despite what we talked about in Scotland a few weeks ago, we still have 12,000 people a year here being arrested for social media posts, for free speech violations. Does that not remain an important area that there is still a lot of disagreement on?
I'd like to have you answer that.
Yeah, look, I mean, in terms of a Christian country, I was christened, so that is, my church has been all my life, and we are, that is wired into our informal constitution. Of course, we celebrate many other faiths as well, and I'm really proud that we're able to do so as a country. And on free speech, that has long lived in this country, free speech. It's one of the founding values of the United Kingdom, and we protect it jealously and fiercely, and always will, and we will bear down on any limits on free speech. I draw a limit between free speech and the speech of those that want to peddle paedophilia and suicide social media to children, and therefore I'm all for free speech. I'm also for protecting children from things that will harm them, paedophiles, those that peddle suicide, which has had a terrible consequence for individual, particularly teenagers. And so that's the balance we strike. But we have had freedom of speech in this country for a very long time, and we will always protect it.
Thank you. Thank you very much. Brian, please.
Thank you. Prime Minister, it's good to see you again. You have a beautiful country. Thanks for having us.
Thank you.
Two questions. One, just recently, President Trump labeled Antifa domestic terrorists. Would you consider doing something like that in your country?
Well, we obviously will take decisions for ourselves. I don't want to comment on the decisions of the president, but we take our decisions ourselves.
And my question to you, President Trump, is there any update on the auto pen?
Yeah, it's just gotten worse from their standpoint. The people that used it, and in particular one person, was never told by Biden to do it. Only spoke to Biden twice, and that was just talking about the weather, not talking about any order. And he was taking orders from people other than Joe Biden. Joe Biden wasn't giving those orders. You know, Joe Biden didn't believe in open borders. He didn't. I've known him for a long time. He was never the brightest bulb in the ceiling, as we know. You can go back 40 years ago and you'll see that. Go back and take a look at the hearings on Justice Thomas, and you'll see that very much. But he didn't believe in open borders and all of this nonsense that they're peddling now, which is why they're not in office any longer. It's a shame. The auto pen was illegal. It was illegally used. He never gave the orders. He never told them what to do. And I guess the only one he signed, or one of the few he signed, was the pardon for his son. But you had the congressman who, when they got the information, they found out they were guilty, and they deleted and destroyed all information, everything. You couldn't get any of it. They found out that Nancy Pelosi actually was offered the 10,000 soldiers, and she turned them down. They found out many things that were very bad. So they deleted and destroyed all information. You talk about freedom of the press and freedom of speech. How about that one? And there's not a thing. This is after a year and a half of hearings. They destroyed everything. And somebody's got to be held responsible. So Biden, what he did is they knew, I don't think he knew, but somebody knew. I don't think Biden had a clue about anything, if you want to know the truth. But they gave a pardon to those Congress people. They gave a pardon. Those people are so guilty. They gave a pardon, but Biden didn't know about it. The people, whether it's Lisa or any of those people in there that really ran it, I know them all. And they're sick people. They're smart people. They're very smart. They're probably brilliant, but they're sick in ideology. And they were running the auto pen, and it was totally illegal what he did. And I hope it's going to be so adjudged.
Do you want to take one more, then I'll
Okay.
go back to British.
Let's see. Peter, go ahead.
Thank you, President Trump. In the deal that you're working on for the Chinese to sell TikTok to an American buyer, are the Americans going to have to come up with their own algorithm, or are they going to continue to use the successful but addictive Chinese algorithm?
So what we're doing, and we're speaking to President Xi on Friday to see if we can finalize something on TikTok, because there is tremendous value, and I hate to give away value, but I like TikTok. It helped get me elected. In fact, Charlie said, "Sir, you ought to get on TikTok. You'd be great." I said, "Really? Tell me about TikTok." And we, as you know, we did unbelievably well with youth, like at a level that no Republican has ever even dreamt of. And in what, look, I think we won it for a lot of reasons, but that was a reason we won the election by such a big number. TikTok has tremendous value. The United States has that value in its hand because we're the ones that have to approve it. I specifically get the right to approve it. The people that are investing it are among the greatest investors in the world, the biggest, the richest, and they'll do a great job. And we're doing it in conjunction with China. But we are getting, the United States is getting a tremendous fee plus, I call it a fee plus, for just making the deal. And I don't want to throw that out the window. I can say this, that you'll have a lot of very unhappy youth. And I use TikTok very legitimately, very straight, just statements every day, little statements, short statements. "Sir, make it short, please." And TikTok Jack, we call him. It was pretty good. Did a good job for me, I guess. But no, I'd rather reap the benefits. I mean, the kind of money we're talking about is very substantial, and it'll be owned by all American investors and, the best investors and the, very rich people and companies are going to be owning it. Very, very straight, very legitimate companies, and really companies that love America. So they're going to be owning it. It's a big thing. And on a much bigger scale, and probably that's why we were able to get that, but on a much bigger scale, we're pretty close to a deal. We may do an extension with China, but it's an extension based on the same terms that we have right now, which are pretty good terms.
And my question for Prime Minister Starmer, if you feel so strongly about officially recognizing Palestine for statehood, why are you waiting for President Trump to leave the country? Why can't you just do it right now? And isn't there a risk in rewarding Hamas with that?
Well, let me be really clear about Hamas. They're a terrorist organization who can have no part in any future governance in Palestine. And what happened on October the 7th was the worst attack since the Holocaust. We have extended family in Israel. I understand firsthand the psychological impact that had across Israel. So I know exactly where I stand in relation to Hamas. Hamas, of course, don't want a two-state solution. They don't want peace. They don't want a ceasefire. So I'm very clear where I stand on Hamas. Okay. On the question of recognition, I made my position clear at the end of July as to the timing, which has got nothing to do with this state visit, and I've discussed it with the President, as you would expect amongst two leaders who respect each other and like each other and want to bring about a better solution in the best way that we can. Thank you so much. Can I go back then to Robert at ITV?
Robert Person, ITV. Mr. President, you uniquely, you alone in the whole world, have the power to persuade Prime Minister Netanyahu to stop the demolition of Gaza City, to stop the starvation of Palestine, and to stop the killing of civilians. If not now, when will you exercise that power to tell him to stop?
Sure.
And then for both of you...
But you do understand about October 7th.
You do understand. So believe me, I understand.
One of the worst days in the history of humanity. What happened, I have seen the tapes. Babies that are 4 months old, and just chopped up to pieces. And you've seen the tapes, and I've seen the tapes. You're a professional, and so am I. And people forget about October 7th. I can't forget about it. So I want it to end, but I want the hostages back. I don't want the hostages used as human shields, which is what Hamas is threatening to do.
But as soon as they're back, that's the moment you will tell Netanyahu
Well,
to stop.
it would certainly help, but I have to have the hostages back. And I don't want them back piecemeal, as I said before. I want them back.
And on a separate issue, free speech, your Vice President Vance said that free speech is under attack in the UK. Do you agree with him? And Prime Minister, we saw the dismissal of a very well-known chat show host in America last night, Mr. Kimmel. Is free speech more under attack in Britain or America?
Well, Jimmy Kimmel was fired because he had bad ratings more than anything else, and he said a horrible thing about a great gentleman known as Charlie Kirk. And Jimmy Kimmel is not a talented person. He had very bad ratings, and they should have fired him a long time ago. So, you can call that free speech or not. He was fired for lack of talent. Yeah, please, go ahead.
Yeah, I mean, firstly, on the question of Charlie Kirk, can I just express how shocking that is, I think, to everybody who believes in free speech and in democracy. It sent shockwaves through the world. And I know that he was a friend of the president, and I reached out straight away to the president because I understood how impactful it'd be on him and his family. And we all need to be absolutely clear about that. Whatever our political views, it is shocking and is to be condemned. On free speech, not much to add to the answer I gave earlier. This country's had free speech for a very, very long time. It is part of who we are as a country, and it is the values that we fought for. We fought for it during the Second World War alongside each other. So we need no reminding of the importance of free speech in this country. Thank you, Robert. And I go to Beth for the final question, please. Beth.
Thank you so much.
Sky.
Thank you, Beth Rigby, Sky News. Thank you, Prime Minister. If I could start with you. Prime Minister, President Trump has said he's ready to impose major sanctions on Russia if NATO countries stop purchasing Russian oil. He's got a point, hasn't he? Is that what you now believe is needed to bring Putin properly to the table? And what's your message to the President on US sanctions? And Mr. President, if I may, the King praised your personal commitment last night to finding solutions to the world's most intractable conflicts. You have invested much of your time and effort in Ukraine, but even as you seek to broker a deal, President Putin is escalating the war. He's firing drones into NATO airspace. You say he has let you down. Was it a mistake to invite him to Alaska? Do you regret it?
No.
And is it time to squeeze him, sir, and scare him and impose sanctions? And finally, if I may, the elephant in the room, Lord Mandelson, he is no longer the ambassador. Do you have some sympathy with him that he lost his job over historic links to Jeffrey Epstein? Thank you very much, sir.
I don't know him, actually. I had heard that, and I think maybe the Prime Minister would be better speaking of that. That was a choice that he made, and I don't know. What is your answer to that?
Well, I mean, it's very straightforward. Some information came to light last week which wasn't available when he was appointed, and I made a decision about it, and that's very clear. On the question of the pressure on Putin and on Russia, which is obviously really important, look, I think it is a challenge to Europe. There are a number of European countries which are too reliant on energy from Russia. The UK actually obviously has almost got nothing at all, but we do need to bear down and work with our European counterparts here. There are one or two countries, I think, that do need to look again at the question of energy. There's no one silver bullet here. We do have to have a wider suite of sanctions, which we've put in place a number of times, working across Europe and with the United States. And of course, we must, and we are, making sure that Ukraine is in the strongest position now, because one of my long concerns here has been that whilst we talk about a ceasefire, and we all want a ceasefire, and we talk about what might happen after a ceasefire, we mustn't forget that Ukraine needs our support now. We've said we stand with Ukraine from the start to the finish, and that means we must continue to supply them with what they need in order to fight this war, which of course resulted from and is a result of Russian aggression. We have particularly done the sort of leadership role in the coalition of the willing, so that if there is a ceasefire and if there is a deal, and I do hope there is, that is then lasting and not then broken, because given previous history, I don't trust Putin. Thank you.
Very simply, if the price of oil comes down, Putin's going to drop out. He's going to have no choice. He's going to drop out of that war. And when I found out that the European nations were buying oil from Russia, and as you know, I'm very close to India. I'm very close to the Prime Minister of India. I spoke to him the other day, wished him a happy birthday. We have a very good relationship. He put out a beautiful statement, too. We have, but I said, you know, I sanctioned them. China is paying a very large tariff right now to the United States, but I'm willing to do other things, but not when the people that I'm fighting for are buying oil from Russia. If the oil price comes down, very simply, Russia will settle. And the oil price is way down. You know, we got it way down. We're drilling and we produce more oil than anybody else in the world. We're doing a lot. But I was disappointed to see that. And the Prime Minister was disappointed to see that. And it wasn't him. It was other countries. And you can't do that. You can't do that. You can't. That's not playing fair with the United States. And we can't have that. Thank you.
Thank you very much indeed. Thank you.
Thank you. Thank you.
All right, that was President Trump and Prime Minister Starmer at a joint press conference in England following the state visit of President Trump to England. That's occurred over the last couple of days. We had pomp and circumstance yesterday. We had a day of, I think, some constructive meetings is kind of how they're being portrayed, Alexis.
And that was such a far-reaching press conference just now, especially in the Q&A section. I mean, just the back of the envelope notes that I took, right? Not just the tech deals, but also we talked a little bit about TikTok, free speech coming under attack, immigration and energy policy. So let's get the big takeaways here from Tyler Kendall, Bloomberg Washington correspondent there in Washington. Tyler, you were listening as we were. What are some of the big takeaways for you?
Yeah, hey, Alexis. Well, you really said it there. He hit on a range of issues during this press conference, and I guess we could maybe separate them at the moment into two big buckets that we could dig into. One, of course, the economic partnerships and any updates there, whether it was on tariffs or TikTok, and the other around security concerns. Both leaders started their remarks by touting this U.S.-UK trade tech partnership that was announced earlier this morning when they were flanked by some of the biggest tech CEOs, including NVIDIA's Jensen Huang and Palantir's Alex Karp, who were there in London for these meetings. And that agreement's meant to promote this tech investment in both nations. You heard President Trump say that the U.S. is committed to making sure that the U.K. has reliable artificial intelligence. By the end of this trip, we are expecting about $10 billion worth of deals when it comes to investment in the U.K. to be announced between these companies and the government. Of course, the other big focus, if we go into the second item here, are the security, those national security and foreign policy implications. You heard President Trump say that he is committed to the U.S.-UK security alliance, and he actually called out the NATO Secretary General Mark Rutte by name, calling him a good friend, saying that he's very happy with what he's seeing when it comes to European countries boosting their defense spending. And that becomes a really important part of the discussion when we're talking about any sort of updates and developments around the war in Ukraine, which we really saw come to the forefront during this press conference. President Trump saying that Vladimir Putin has really let him down, but added that he's confident that the Russia-Ukraine war will get done. I'll leave you with really the last question we heard there. A reporter asking about the so-called secondary tariffs. We know the U.S. has imposed those on at least India over its imports of Russian energy supplies. The U.K. Prime Minister said that he was in favor of a broader sweep of sanctions, but we didn't really hear a firmer answer when it came to whether or not our European allies are going to impose these so-called secondary sanction tariffs, which we know would hit countries like India, but also, importantly, China, which, of course, the U.S. is in the middle of this big trade negotiations with.
Tyler, after rolling out the red carpet over the last couple of days, literally and figuratively, for President Trump, does the UK have a certain expectation that they will get better, favorable, less onerous tariff agreements with the U.S.?
Well, that was one of the questions going in here, right, Paul? Because the UK was actually one of the first, actually the first trading partner to clinch a trade deal with the US and get that more preferential rate of 10%. That's in place, but really where the big questions are around if whether or not those sector-specific tariff rates can be lowered, most notably when it comes to metals. The UK facing a 25% tariff there against steel and aluminum, and that's something that we've been watching for really closely, but as of now, that still remains an open question. We know that there's a lot of negotiations going on, but of course, this White House has often prioritized this idea that investments, reshoring manufacturing, things along those lines could ultimately help our trading partners secure more preferential treatment.
Tyler, thank you so much. We appreciate that. Tyler Kendall, she's a Washington correspondent for Bloomberg News, giving us a little recap on what we saw over the last couple of days, including today's press conference including President Trump and Prime Minister Starmer. So coming up, we've got another hour to go here. We're going to check in with Anne-Marie Horder and get the sense of what's going on in the UK, how this trip is kind of winding up here. Amara Omokwe, Federal Reserve and an economic reporter, get her thoughts on the Fed's move yesterday and maybe how the Fed moves going forward. And Sean O'Hara, president of Pacer ETFs, is going to join the show to talk about ETF investing as well. We're also going to have a simulcast. Meta Platform's Chief Product Officer, Chris Cox, he's speaking with Bloomberg Tech's anchors Ed Ludlow. That's going to be coming up later in this hour. So a lot coming up. We'll get you caught up on the markets right now by getting a Bloomberg Business Flash with John Tucker.
All right, in this flash, Paul and Alexis, brought to you by Oracle. Attention, growing business. Oracle offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. See if your company qualifies at oracle.com/Bloomberg. Well, the major stock averages, they are on track to set more records. S&P 500, 38 points higher. That's up 0.6%. We're at 6639 on the index. The Dow Jones Industrial Average up 126 points. That's up 0.3%. And the Nasdaq 100, 275 points higher, up 1.1% right now. Best performing stock in the S&P 500. Got to go back to Intel. Those shares now up 26%. NVIDIA investing $5 billion in Intel. The two companies are going to team up to work on custom data centers that form the backbone of AI infrastructure, as well as some personal computer products. NVIDIA shares, they are up 3.2% this morning. Meantime, Julian Emanuel of Evercore ISI says artificial intelligence stocks can continue to lead.
You need to stay with the AI theme. It is the theme that has brought us to this point over the last couple of years. History tells you that what has been working, what had been the market leaders, despite the fact that there's a lot of catch-up being played, tends to work in the later stages as well.
And then we have to do StubHub. I'll finish there. StubHub falling 6.4% from its initial public offering price of $23.50 per share. That was on the first day of trading yesterday. Now on its second day of trading, it is down I'm going to call it 5%.
If you don't have AI in your story these days, I don't know.
How can they not?
Then you'd know everything.
I don't know who timed this one out, but this is like at least, the second goal for StubHub in terms of trying to time that initial public offering. Anyway, we check the markets for you all day long, right here on Bloomberg Radio. I'm John Tucker. That's your Bloomberg Business Flash, Alexis and Paul.
Hey, JT, thank you so much. We appreciate that. Alexis Christophorous, Paul Sweeney, live here in our Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Let's take a look at some of the stocks on the move today. We're joined by Bloomberg's Jordan Fitzgerald. Jordan, what are you looking at today?
I mean, Intel's the indisputable story of the day. Shares up as much as 27.7%. That's the biggest jump for the stock intraday since 1987. Wow. It's well before my time. And, wow.
Yep.
Intel has brought up semiconductor stocks generally. The Philly Semiconductor Index is at a record high today, but AMD and ARM in particular are underperforming the rest of semiconductor stocks. AMD down 5.9%. And ARM down as much as 7.4% today. ARM already works pretty closely with NVIDIA, so I think traders are a little spooked that that could threaten that partnership. And AMD being such a close rival of both NVIDIA and Intel, seems like in an alternate world could have benefited from that NVIDIA boon. But outside of the tech space,
I don't know. I mean, I just think this whole AI spending, everything I hear about it, it's just more and more and more dollars, and it seems like there's enough for the AMDs of the world, the NVIDIAs of the world.
Yeah, you
and
think the pie is big enough.
And now even Intel looks like it's going to get its take. We'll see.
I know, even Intel. Interestingly, Intel had that really big drop last August, and finally it took this $5 billion investment from NVIDIA to push it back into that range that we haven't seen in over a year.
Yep.
Which also underratedly, I mean, Intel's kind of boosting NVIDIA today. NVIDIA was down big yesterday on that China news.
Yeah, right. So we got Intel up 57% year-to-date, 52-week high for the stock. That'll work.
Not too bad. I want to talk restaurants because Darden's having a time of it today. Last I checked, it was down about 10%.
Yeah, most since March 2022. Soft sales for Olive Garden didn't rise as much as people were hoping. The never-ending pasta bowl does not seem to be the moneymaker it might have once been. I think those are free. That might be the problem.
Maybe that's oh no, don't tell me Olive Garden's going to start charging for those.
They did say on their earnings call today that they're making portions smaller and prices might be going up. So if you were an Olive Garden fan, that might be...
Well, we knew that was going to come to an end at some point because their portions are huge.
Their portions are huge. I can't say I've been to an Olive Garden in a while, but, you know, that's a lot of carbs they put in front of you.
That's right. All right, Jordan, thank you so much. We appreciate that. Jordan Fitzgerald, she covers the equity markets for Bloomberg News. For more conversations like this, subscribe to our Stock Movers Reports. Listen for 5-minute audio reports on the biggest winners and losers in the stock market. Subscribe to Stock Movers on Apple Podcasts, Spotify, and anywhere you listen. So, again, the big news is, I think if you're in the marketplace here, a little bit of a delayed reaction from the Fed yesterday, but we're starting to see strong, solid moves across the board. S&P up 0.5%, and even in the tech-heavy NASDAQ up a little over 1%.
Yeah, and you know what? We've also got, I just want to mention gold because it's been on a tear, I guess not surprisingly, though, down about 1% right now.
Yep. All right. Very good. So we'll keep an eye on the markets here. We're waiting for Anne-Marie Horder, and you'd like to get some reporting coming out of London before everybody jets back to the U.S. But right now, let's check in with Amara Omake, Federal Reserve and economics reporter. Amara, talk to us about kind of what you're hearing from your sources about the Federal Reserve and the move they made yesterday.
So yeah, what my sources are saying and what the big takeaway from yesterday's decision and Chair Powell's press conference yesterday is that you have Fed officials who have grown a little bit more concerned about the labor market. And you heard Chair Powell describe the decision to cut yesterday as sort of an insurance cut, right? The labor market is showing growing signs of weakness. We've had all these revisions that have indicated that jobs growth was much weaker than we originally thought earlier this year and last year. And so what you see is the Fed really reacting to that. But at the same time, you heard Chair Powell talk about the fact that the Fed faces a really challenging situation because inflation is still above their 2% target. There is still some concern that tariffs could lead to inflationary pressures. And so the Fed does have to balance these two situations that they face now, right? Inflationary pressures potentially and a weakening labor market. And so, yes, they did cut, but the path forward is not necessarily clear.
You know, I just want to bring up an interview that we had on Bloomberg earlier with former Treasury Secretary Larry Summers, who's being critical of this Fed, saying that the U.S. economy's biggest risks lie in inflation, not the job market. I mean, we did get jobless claims this morning. They were better than expected, right, coming off that big jump we saw the prior week. Hard to know what to make of the job market, but do you think this Fed's going to face a lot of criticism for thinking the job market is now the biggest threat to this economy?
I think the Fed is facing questions about how they manage this tension in their mandates, right? They have a mandate to foster stable inflation, but they also have a mandate to foster maximum employment. And I think what Chair Powell was saying yesterday is that, you know, for much of this year, the Fed was on hold because the labor market wasn't flashing these warning signs that compelled them to cut, right? And they were concerned about inflation. And so in some ways, the labor market was kind of giving them the luxury of remaining on hold. But what Chair Powell was saying yesterday is, look, we're seeing growing risks and we want to respond to that. I don't think he was saying that, they're no longer concerned about inflation, but he's saying we're trying to figure out how to calibrate appropriately here as we try to manage risks on both sides of our mandate. And so I think you're going to see people continuing to question whether the Fed is striking the right balance in the months ahead.
Amara, so it appears that the labor market seems to be a little bit more front and center for this Federal Reserve vis-a-vis the inflation. I don't know, you could read it either way. I look at it, unemployment rate 4.2, 4.3%. I'm okay with the labor market, but a lot of folks feel like there's some undercurrents out there that are a little troubling. How do you think the Fed views it?
Yeah, I think the Fed views it just the way you said, because Chair Powell said yesterday, the unemployment rate suggests that things aren't necessarily falling off a cliff, but the Fed officials often say that once you have a labor market that starts to weaken, a further weakening can happen really quickly. You can start to see a very fast rise in unemployment and more economic pain for people. And so that's what they're trying to guard against. I think also, so far in the inflation data, it seems that companies are really sort of absorbing the tariffs, at least for now. And so on the inflation side, the worries have receded a little bit from where they were when President Trump first announced the tariffs back in April. But then at the same time, you've seen these labor market concerns start to bubble up. And I think if you look at some of the data under the hood in the labor market, that's also where the concerns are coming from. If you look at the Black unemployment rate, for instance, at 7.5%, that's pretty high. We hear a lot about new entrance into the labor market, young people having a very difficult time finding jobs. We hear about it being a low firing but a low hiring environment. So if you are a person who is looking for a job right now, a lot of people are out there reporting that it's very difficult to find a job if you don't have one. And so all of these things are contributing to the Fed saying here, look, we wanted to cut to give the labor market a little insurance, give it a little support, but we're also going to keep our eye on inflation and the potential for tariffs to maybe add some inflationary pressures here.
Amara, thank you so much. We really appreciate getting some of your time. Amara Omoke, she is Bloomberg's Federal Reserve and economy reporter. She is giving us some color there on what we saw from this Federal Reserve, and the market certainly reacting well here today. Certainly the news of the day from a company perspective is Intel. We saw early this morning, we saw a pretty cool story. NVIDIA deciding to buy or invest $5 billion into Intel vis-a-vis a stock purchase, a straight-out purchase of common stock there. And that's alongside the earlier investment by the U.S. government of a 10% stake in Intel, and the stock reacting favorably here today. Shares of Intel up about 26% today. That sets a new 52-week high. Stock's up 57% year to date. This stock was really hurting as recently as 6 months ago, but boy, it's gotten a couple big shots in the arm as it relates to their AI outlook. Let's check in with Mandeep Singh. He's the senior tech analyst for Bloomberg Intelligence. Mandeep, how surprised were you in Silicon Valley when we woke up this morning and saw that a competitor was going to make a $5 billion investment?
Yeah, I was expecting something to happen in terms of an investment in Intel after the administration took a 10% stake, but an investment from NVIDIA, that was the last thing that I anticipated. So I was more in the camp that one of the hyperscalers, whether it's, and Amazon did have a partnership with Intel. It was announced back in 2024. So I thought it would be one of the hyperscalers that would make an investment. So clearly the surprise element was the fact that the partnership or the investment wasn't for foundry, but it was more chip co-design. And look, that's where NVIDIA has taken share from Intel over the past 2 years. Right. Intel was a dominant force in data centers. With their x86 architecture, NVIDIA, with the shift to AI, really took share from Intel. And so it is a big surprise, the fact that they are investing $5 billion. And the plan is to develop a co-designed chip for PCs as well as data centers.
And to help them better compete against AMD, which we see a little under pressure today.
To my mind, NVIDIA is almost a monopoly in AI chips. So the fact that...
Look out, antitrust regulators.
Yeah.
But when I heard about this deal, I just thought, irony, right? This tie-up between two Silicon Valley rivals, but I think it also really underlines the power shift. When you think about it, you would have thought years ago, well, Intel would be the aggressor here, right? But the sort of the tables have turned.
They have, and look, that's just a function of where Intel is at right now, both in terms of their foundry positioning as well as, the data center market share that they have lost. Where they still have a dominant share is in PCs and desktops. And that's where everyone was anticipating a big refresh cycle because of AI. At the end of the day, if AI was to become pervasive, we'll have to upgrade our devices, whether it's PCs or smartphones. And to my mind, Intel does have a good chance of being part of that refresh cycle. So what NVIDIA has done is really kind of put a stake in that refresh cycle where if they can develop a co-designed chip for the PCs and laptops, then that's where it could create another line of business similar to gaming. So right now, gaming is about a high single-digit percentage of NVIDIA's revenue. Well, this could be another line of business that they could add if this partnership was to result in a product or a chip that everyone would want to use.
All right, Mandeep, I'm going to put my cynical Wall Street hat on. This is simply a political move by Jensen Huang to cozy up to the Trump administration by co-investing alongside the U.S. government in Intel, whether it's a good investment or not.
Yeah, $5 billion is like change for a company like NVIDIA that's almost generating $100 billion in free cash flow every year right now.
So the clients you talk to, the investors you talk to, they think there is some soft upside to NVIDIA by investing alongside the government here?
I mean, NVIDIA right now is taking stakes in a lot of companies, CoreWeave and a lot of NeoClouds, because they want to make big bets. With that kind of balance sheet that NVIDIA has, they can afford to do it. And so this is another one of those minority stakes that they took. I don't think they have any high expectations here, but still, it does help them politically.
I mean, these are the numbers that blow me away with the tech companies that Mandeep sings that follows. This year, call it, the calendar year 25, fiscal year 2026, $100 billion of free cash flow. Next year, $140 billion of free cash flow.
Free cash
This
flow.
is the stuff, like, literally, we don't know what to do with it. So we're either going to give it back to shareholders,
right?
We're going to, I don't know, or we're going to make
buybacks,
or make
yes.
investments
Right.
so there you go.
But Paul was talking earlier about how he thinks the pie is big enough, right, for all these players, and that not to worry too much about AMD. Is this tie-up a threat to them, do you think?
It is if they come up with a product. So if they come up with a chip that can drive a PC refresh cycle, it's going to hurt AMD. But look, these design wins take time to result in a product, and strategically, yeah, they will develop something. That's why I go back to what Amazon and Intel did a year back. Did anything change after that? No.
Good point. Is there anybody out there that maybe AMD now should start to cozy up to?
Probably one of the hyperscalers, because the hyperscalers are doing a lot of their custom chips, and if AMD is part of that ecosystem, that certainly will help drive up their orders. So I expect them to partner with one of the hyperscalers.
All right, Mandeep, thank you so much. We appreciate that. Mandeep Singh, Senior Technology Analyst for Bloomberg Intelligence, joining us live here in our Bloomberg Interactive Broker Studio. He leads our global team of technology research analysts around the world. Take a look at this market here. Boy, got it ripping. S&P up 40 points. NASDAQ up 255 points. That's 1.1% there. So we've got some continued movement in this market. Coming up, we're going to check in with Sean O'Hara, president of Pacer ETFs. He's going to join the show to talk about ETF investing and current flows. Where's the money going? This is Bloomberg.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
It's 11:21 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ, all moving higher. This Bloomberg Business Flash is brought to you by Oracle. Attention growing businesses. Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. For new U.S. customers with minimum financial commitments, see if your company qualifies at oracle.com/Bloomberg. Developing story with the Federal Trade Commission and 7 states suing Live Nation Entertainment and Ticketmaster for failing to stem the use of automated ticketing bots and large-scale resale operations. Live Nation shares trading lower now, down by 2.1%. Equities are jumping as a risk-on sentiment permeates Wall Street after the Fed delivered its first interest rate cut this year and signaled more are ahead. S&P up 43 right now, off session highs 66.44, up by about 0.6%. The Dow up 140, up 0.3. NASDAQ up 263 for the NASDAQ Composite Index, a gain of 1.2%. The 10-year 4.11% with the 2-year 3.56%. Gold is down $20 the ounce, 36.39, down 0.6%. And West Texas Intermediate crude lower by 0.7%, 63.58 for a barrel of WTI. American Express is boosting the annual fee for its Platinum Consumer Credit Card to $895. That is a $200 increase. It is also adding about $1,500 worth of potential perks. American Express shares, they're up 0.8%. Recapping, S&P up now by 41, gain of 0.6% with the 10-year, 4.11%. I'm Charlie Pelleton. That is a Bloomberg Business Flash.
All right, Charlie Pelleton, thank you so much. We appreciate that. Alexis Christophoulos, Paul Sweeney. We're here in the Bloomberg Interactive Broker Studio, streaming live on YouTube as well. Looking at the markets here, ripping as Charlie was just reporting here. Where are investors putting money these days? That's a question I have. The market's been up across the board, but it's really been focused on some of those big cap tech names. But let's see where people are putting the money to work these days. Sean O'Hara joins us, president of Pacer ETFs down there in Malvern, PA. I know a couple of companies down there in Malvern, PA, financials. Sean, thanks so much for joining us here. I'd love to get a sense of, as this market continues to move higher, Sean, where are your clients putting their money in your ETF complex?
Well, good morning. I guess thank you so much for having me today. You know, we're seeing growth continue to take in assets. We sort of have a different take on growth. You know, one of the things that I think is a concern to me is that, you know, those 7 stocks that dominate the top of these broad indexes and have so much weight, they sort of squeeze out, if you will, some of the other players in these broad indexes. And so there's great names sort of, you know, in the middle and towards the bottom of the S&P 500 or the Russell 1000 that have as good a growth prospects as some of the big mega cap stocks, maybe even more. So what on the growth side, what we do is we use free cash flow margin as our screen. The reason NVIDIA is such a great company, and I think the previous tech analyst you had on said it very, very well, is they have a very high free cash flow margin. And for those listeners, free cash flow margin is the free cash flow a company generates divided by its sales. So it's just a simple measure of how effectively they convert their sales into excess free cash flow. So for every $1 worth of new sales that NVIDIA makes, they generate like 60 cents worth of free cash flow. So we use that screen to pick stocks, and what that allows us to do is own names that are in the Russell 1000 growth, for example, that just have insignificant weights in the broad index. The Russell Growth Index is 392 stocks, and 7 of them have 52% of the weight. And so it's like, you know, there's a big dinner party, and all the adults are stealing all the food from the kids. And so we're taking in money in our growth strategies these days. We're taking in money in some of the risk management strategies that we use. We have an income play off of the S&P 500 as people are focused on yields, and it looks like we're entering an easing cycle. I think investors are looking for other ways to generate yield.
And you just hit it. I mean, we need breadth in this market, right? It's one thing to go up, but you just want to see more participants. Looking at the Bloomberg terminal, I see here that inflows into ETFs week ending September 10, $22.2 billion. I mean, that sounds like a significant number to me. Am I right?
Yeah, and most of it, if you looked at, you know, the day-to-day flows, most of it's big broad market, S&P, NASDAQ, A lot of money flowing into short-term fixed income strategies these days. I don't know that that's necessarily going to be a permanent trend, given especially if interest rates go down. But that's sort of creating this ongoing fulfillment of this prophecy. If the more money that goes into the S&P based ETF, the more money goes into those big 7 names. The more money that goes into the NASDAQ, as example, the more money goes into those 7 names, so that they do have support by those flows. And we're obviously not a big market cap weighted cheap beta ETF shop here at Pacer, so we try to find innovative or unique ways to give access to investors to the names that are not getting as much attention in those broad indexes. Like Apple Oven, for example, is a stock we've owned for 3 years in our growth fund. It just got added to the S&P 500. We've made almost 500% on Apple Oven before it went into the S&P. And it's such a small weight in the overall index that even if it continues to rip like it has, you almost won't feel it. And so what we try to do is find names that have high free cash flow and high free cash flow margins, and then we weight them by momentum. When we pick 100 stocks out of the broad index, as opposed to owning the whole breadth of the index. And we don't market cap weight, which is another big thing. So that market cap weighting has become sort of what used to be a broad index like the S&P, because it's cap weighted, is becoming very, very narrow and very, very concentrated. And so there's just many, many opportunities beyond the top 7 names that investors should be paying attention to.
Fascinating stuff. Sean O'Hara, president of Pacer ETFs, thanks so much for joining the show. We appreciate your time. Want to talk supply chain now, and who better to do that with than Gene Soroka, CEO of the busiest port in the U.S., the Port of Los Angeles. And guess what? He's here on the East Coast, right here in our New York studios. So, Gene, thanks so much for joining us.
Great to see you, Alexis.
Great to see you. I know the LA port handles a lot of international cargo, especially from Asia. I know that trade volumes in August were near all-time records. Here we are, mid-September. Where do things stand now?
It's been a roller coaster of a year. When hard trade policy comes out, you see a real slowdown in cargo flows. Then when that policy is softened and deadlines extended, cargo picks up for that window of opportunity, and that's what we've seen. But July and August combined are our busiest 2 months in the 117-year history of the port. Wow. Folks are bringing in inventory before the next policy statement may come out, trying to protect themselves for the all-important year-end holiday season for retailers, and the parts for American factories are keeping a lower but very steady flow.
So, Gene, a lot of people are unsure how tariffs work, but the reality is, I believe they occur at your port. The actual collection of the tariff occurs on your turf, right?
That's right, Paul. And a cargo container cannot leave the port without that tariff being paid by the importer of record to U.S. Customs.
So there's a customs office at your port, and what they do is collect whatever tariffs may be on any particular good, and that's how that happens all the time, I guess.
That's exactly right. And LA is the largest customs district in the nation. Director Africa Bell runs that shop for U.S. Customs, and her rank and file members are working around the clock, just trying to keep up with what the tariffs are, how to apply them to the shipments, and keep the commerce moving.
It's got to be really confusing for them, because I just feel like the needle moves constantly. How many companies, though, are really able to pull forward their inventory? Are you still seeing that in a big way as we move closer to the holiday shopping season?
Yeah, Alexis, here's the interesting fact. You've got about 125,000 companies that call Los Angeles home to import their goods over the course of a year. No one company has more than a 5% share. So we're made up mainly of small to middle-sized businesses, some of whom are telling me now they're dipping into savings to pay these tariffs.
So is our customs office, are they in fact keeping up with the collection of tariffs on all these additional goods? I mean, do they have the manpower to do it all? Do they have the facilities to do all, the technology to do it all?
They truly have risen to the occasion, Paul, and doing a great job. I look at those vital statistics of the port through the Port Optimizer every morning, a 90-second flash report. Our numbers on velocity are better than they were before COVID.
Wow.
You know, I think we also, those dramatic photos of the cargo falling off in Long Beach, not your port, but at the port of Long Beach. I think it highlights also what a dangerous job this can be for those workers. But I'm just curious, did that have any impact, knockoff effect on your port?
That's right, Alexis. You know, the first thing is, thank goodness no one got hurt. The men and women of the International Longshore and Warehouse Union are on the ground moving all this cargo, and thankfully no one was in harm's way. The investigation will continue. I was talking to some folks last night at a big industry event back in Long Beach, and they haven't been able to get their cargo out yet. So the U.S. Coast Guard, National Transportation Safety Board are going to take a deep look at this, see what the causals are and how we can make sure it doesn't get repeated again. But effectively, that particular terminal in the Port of Long Beach is an investigation site. So shipping lines are having to maneuver around that as best they can, but no real slowdowns because of it.
Amazing.
So the economic data seem to suggest that in terms of tariffs, the question is who pays for it. We know that it gets collected at your port by the U.S. Customs Office. And then it's a question from that perspective, how much gets passed along down the line to the wholesaler, to the distributor, to the retailer, and then ultimately to the consumer. What's from your view at the port? Do you have any understanding of how that's happening, how that's playing out?
Yeah, Paul, three real areas that importers have been focusing on. Can I go back to my manufacturer and negotiate a little bit on the price and see if we can mitigate? Some mixed effect there. Do I just absorb it and try to find efficiencies in my own company? We've seen the results from the big auto companies in Detroit. That hasn't gone well either. Mary Barra announcing big tariff hits on cost. Same thing with Jim Farley over at Ford. And then others are saying that they're trying to pass on to their customers if they're in the factory business, manufacturing, or to consumers. And we have seen that as well. So it's just kind of a spread across those three categories. And I think we'll start seeing even more of that hit towards the fourth quarter of this year.
I know that in just a few weeks, if it holds, we're supposed to be collecting tariffs on Chinese ships that call at ports, at U.S. ports. I know that President Trump's going to be speaking with Xi Jinping in a phone call Friday, tomorrow.
Yeah.
How do you guys at the port sort of prepare for something like this?
This is another cost that probably will be passed on as well, according to the shipping lines, to their importers. So right now, early days, the new penalty fee goes into place on October 14th. It'll be phased up. But right now, we are estimating that it could be anywhere from about $125 to over $300 per container. The shipping line will pass that to the importer of record on these fees. About 30% of all vessels that call Los Angeles today are built or managed from China. There's going to have to be some movement around this. Some companies may try to absorb, others will shift different vessels into the rotation to avoid this penalty as a whole.
Gene, thank you so much for joining us. Really appreciate it. Gene Soroka, he's the Executive Director, the Port of Los Angeles, joining us here in our studio. And folks, I first started talking to Gene back in the very early days of the pandemic when we first started hearing about, gee, we might have some problems if everybody's shutting down and getting stuff through our ports and getting it on our shelves. You think about the toilet paper and all that kind of stuff. Gene Soroka was kind enough at that point in time to come on and help us understand kind of how this whole supply chain system works and how they were working, and the folks at his ports and other ports around were doing a great job in helping us understand how this whole thing works. I think we all became experts on global supply chain like overnight. We're like, oh yeah,
I've said supply chain so much in my life.
I'm talking about in cocktail parties. Hey, did you hear about the supply chain? Gene Soroka, thanks so much for joining us. Looking at the markets, still got green on the screen here. Today, the S&P's up 45 points at 0.7 of 1%. We're going to have more coming up. This is Bloomberg. Good morning.
markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
Yeah, it's 11:40 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ 100 index, and Russell 2000 all rallying. Equities jumped as a risk-on sentiment permeates Wall Street after the Fed yesterday delivered its first rate cut this year and signaled more ahead. S&P right now up 44 to 66.44, up by about 0.7%. The Dow up 145, now up 0.3%. NASDAQ up 1.2%. The tech-heavy NASDAQ 100 index up now by 1.3%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie Pellet, thank you so much. We appreciate that. Right, let's get back into the world of technology. Meta Platforms Chief Product Officer Chris Cox is speaking with Bloomberg Tech anchor host Ed Ludlow. Let's listen in.
That was being dog-fooded internally, right? This was about testing. Fast forward to today, and we have a halfway, the Meta Ray-Ban display. Smart glasses with a display in the lens. And the reaction has been, this is a consumer technology innovation worth talking about. So delighted to do so with Chris Cox, Meta's Chief Product Officer. I think that context is really important, right? The evolution from Orion to this halfway point. But my question to start is, who is this targeted at, right? You have generations of prior generation Meta Ray-Ban wearers, or is this a new entry, people starting from scratch?
I think it'll probably be some combination of both. So just because we're talking about it here, these are the Meta Ray-Ban displays. Right. You can see we've worked with Ray-Ban to get them into the form factor that people are comfortable wearing. This is the most worn design for a pair of sunglasses or glasses. And so we're starting with something. We didn't want to put something onto the market that was clunky. We're starting with something that's really, really nice. And I'll also just mention there's a waveguide in here.
Okay,
which
a waveguide being?
Basically, it's light that's being projected through a series of mirrors into a small display that appears just below your right eye, and you can actually change where that is.
It's $800, right?
That's right.
But the emphasis over and over again is like, this is a consumer product.
Yes.
It's not for engineers.
That's right.
What is the one killer feature in it then that you think is going to appeal?
Messaging.
Just messaging.
Well,
so
that's,
Mark
if you
Zuckerberg was
ask me
talking
for a
about, that's how
killer,
he uses it, yeah.
Yeah, messaging I'd say is going to be the most useful to start. It comes with this wristband, which is an EMG wristband. You wear it around your wrist. It detects very subtle muscular and nervous system sort of activity so that you can just use a tiny gesture with your fingertips to control essentially a cursor that controls the display. So we've worked to get into something that means that you can use a display in glasses without needing to wave your hands around in the world or carry around a mouse or something like that.
And this is why evolution is important. The neural band is directly from the Orion project. I remember experimenting with the technology 1 year ago.
So the R&D here is you have the North Star, which you've seen, which is Orion, like you said, and then you're also working forwards from what we know people are comfortable wearing, which is the Ray-Bans. I think we're going to see early adopters pick it up, to your question.
Yes.
I think we're going to see enthusiasts, like you were mentioning to me before, you wear the Meta Ray-Bans a fair amount.
But I wear them when I'm driving.
Well, that's a thing.
Because the display in the Ray-Ban display,
right.
Obviously, if you're driving, not the best use case.
Yeah, not intended for driving.
Last night, you did live demos. Some of them didn't go very well, but you're getting a lot of credit for doing live demos. Just very simply and for transparency, what did go wrong in those demos?
I haven't looked into them. I believe it was the Wi-Fi, but we're trying to have these events where we're not canning them. We know people don't want something that's canned, so we're erring on the side of trying to do it live.
I've got a question from our audience.
Yep.
Ray-Ban display, will it be available for prescription lenses?
Yes.
And why was that important? This is a question that's come up a lot with Ray-Bans.
Well, just we know around 1 to 2 billion people on Earth wear glasses. A bunch of them are wearing them as sunglasses, and then a whole bunch of folks are wearing them with prescriptions.
Chris, where are these going to be manufactured?
I'm not 100% sure.
You're Chief Product Officer, and you don't know where?
Yeah, I think it's in a handful of places. The parts are assembled in a bunch of different places.
Not China? Or is there a sensitivity around supply chain hardware in China?
I believe there's some work being done in China, but I'm not 100% sure.
What I'm always trying to understand with Meta is where the company stands today. At times, and presently, I think about the family of apps. You ran Facebook. those people that are religious users of Facebook or WhatsApp, what is their relationship to this new generation of hardware?
So you'll be able to use WhatsApp on the device. We're trying to make sure that we're starting with communication, which is where the company comes from, making sure those products work well on the device. You're also able to view Instagram Reels, which we know people love. We're trying to just get a handful of first-party experiences right, and then eventually we'll be able to open that up.
Mark was talking about this as the vehicle for superintelligence, but you also have a background in software. So this is the interface. This is how I interact with it. But what other AI features can we expect to come through this mechanism and the family of apps as well?
We mentioned yesterday translation, live translation.
Yes.
Including the ability to caption somebody you're speaking to in a different language. We also mentioned the ability to focus a conversation. We're calling it conversation focus. So if you're in a crowded room, if you're at a party, if you're at a concert, you're able to focus in on the person who's speaking to you and get a clear audio of that. And so all of those things involve applications of AI to bring these things to life in ways that are practical.
I got a lot of questions from Meta users and the audience about what the developer community needs to know, but also your role in AI at Meta. What is it that you are focused on right now? Because we've reported a lot on the team changes, the superintelligence team. From a product perspective, I think people really want to understand, like, what is your focus?
Yeah.
And why are you going to bring more functionality to that?
Well, so there's the wearables, but there's also creative tools. So the ways that people are creating video, creating content, making that's really, really easy. AI is going to make it a lot easier for folks to do that. And a huge part of what Facebook and Instagram are is just, viewing the content that we create for each other. So that's where we're expecting to land a lot of the newest technology.
Okay, so September 30th, it's very close. And you will soon be able to, if you wish to, Caro, get Meta Ray-Ban displays. But the market, 1% gain, I think you said. The reaction is that this is a genuine innovation in consumer technology. And so it'll be interesting to see out the gate who goes for it. Back to you in New York.
Fascinating.
All right, that was Ed Ludlow, Bloomberg Tech anchor, speaking with Meta Platforms' Chief Product Officer about the new glasses coming out here. The Meta is continuing to push these glasses. They got a lot of cool technology in those glasses. I think they're retailing for $799. So we'll have to see how that plays out, but good to hear some
I'm afraid they're going to make me feel dizzy.
Maybe. We'll see.
I don't know.
We had, while we were listening to that interview, there's a red headline crossing the Bloomberg terminal. President Donald Trump has asked the U.S. Supreme Court to let him oust Federal Reserve Governor Lisa Cook while the legal fight over her firing proceeds, pulling the justices into the battle over the central bank's independence. The Justice Department asked the court on Thursday to at least temporarily pause a federal judge's ruling that has allowed Cook to remain in her position for now. We'll have more reporting on that coming up. Right now, let's get back to the stock market. It's been a busy day for the restaurant companies reporting earnings. We had Cracker Barrel, we had Darden earnings. We check in with our expert on the restaurant business, because not only is it a view just kind of what's happening out there in the restaurant business, but I always view the restaurant companies as a pretty good gauge of how people are feeling, consumers are feeling, and how they're spending their money. Michael Hanlon joins us, Senior Restaurant and Food Service Analyst for Bloomberg Intelligence. Hey, Mike, let's start with maybe some good stuff. Darden, what's going on with our friends at Darden?
Yeah, Darden, it was an interesting quarter. Sales were fantastic, but slightly below, very high expectations. And the most interesting part of their report was that their margins contracted, largely due to beef costs and Uber fees, because they did this 1 million free delivery promotions supported by, Uber Eats marketing dollars, right? And so it actually made up 5% of sales, and that's very impressive for something that's been instituted, within a year. So, yeah, the margins, this company has best-in-class margins. They've always protected their margins. And so seeing a same-store sales gain that, a very strong same-store sales gain without the margin expansion, I think shocked some investors today.
So what are they planning to do to widen those margins? I heard the portions might not be as big. Are they looking at possibly raising prices on the menu?
Well, they're going to raise prices, but not too aggressively. So they're very careful about increasing their prices. A big reason why we think they're outperforming is that they've increased their prices a lot less than competitors since the pandemic, right? And so They don't want to lose that advantage. So they are going to raise prices this year, but it's going to be modest and less than peers. You know, you mentioned the smaller entrees. That's really a move to boost traffic. So what they're doing is they're taking 7 of their popular entrees. They're making an additional lighter menu with those 7 items. They're shrinking the portion and they're lowering the price. And they're hoping that actually brings in greater traffic with low-income consumers. So shrinking the size of the entrees isn't a major plan in terms of saving the margins. With the margins, it's going to be, you know, executing, right? That's what they're known for, you know, consistently becoming more productive in their restaurants. That's how they're going to try to fund this. You know, there will be some slight price increases, and they mentioned they could be a little bit more aggressive if, you know, the higher beef prices remain stubborn.
All right, let's move on to my favorite, Cracker Barrel. They're still paying the price for some of that rebranding issues. What's going on there?
Yeah, that one, oh man, it's the timing of everything that happened to them is such a shame because they recorded a great quarter. You know, same-store sales were up 5.4% in the restaurants, a couple hundred basis points ahead of the street. But, you know, sales have decelerated pretty significantly here, you know, since August 19th and the logo controversy. So, you know, the stock is down a little bit today. It opened much lower. You know, we think the call was a good one. I thought Julie Massino did a great job in the call. I don't think there was any panic in her voice. You know, I think she's running a steady ship right now. And you know, they're focusing on the things that they've been focused on from the beginning, which is providing better service and higher quality food at a good price point. I would say it seems like they may have sandbag guidance as well. I think that's a big part of the reason why the stock's not down more, right? Is that they basically are extrapolating current traffic trends throughout the rest of the quarter. You know, when second measure data that Bloomberg owns that we follow is showing that traffic may be stabilizing here over the last week. So I guess we'll see.
Yeah, I mean, the latest CPI report showed that food away from home, so at restaurants, actually outpaced what we're paying for food at the supermarket. But I mean, if you look at these 2 reports from Cracker Barrel and Darden restaurants, are people eating out less, or is that really not holding true when you look at the numbers?
They both reported 5. You know, Olive Garden was over 5%, Longhorn's over 5%, Cracker Barrel's over 5%. You know, a lot of these stories about the death of the consumer, I think, are overstated. You know, we've been saying it all year. Restaurant sales are going to continue to be better than they were last year. Second half's going to be better than first half. It's not an issue. To me, the bigger issue is what we heard out of Darden. It's inflation, right? The Fed just cut rates in an inflationary period, right? While we're seeing inflation go up, while we're seeing CPI and PPI go up, right? And so beef prices are stubbornly high. I mean, I look across my Bloomberg monitor and commodity prices are up across the board today, and they've been up for basically this whole year. So, you know, I think through year-end, margins are going to be the bigger concern for restaurants.
All right, Mike, thanks so much for joining us. Mike Halen, Senior Restaurant Analyst for Bloomberg Intelligence down there in Princeton, New Jersey, giving us the latest on some of these restaurant companies reporting earnings. Again, news just crossing the Bloomberg terminal. President Donald Trump has asked the U.S. Supreme Court to let him oust Federal Reserve Governor Lisa Cook while the legal fight over her firing proceeds. Now, this is pulling the judges into the battle over the central bank's independence. Let's get some more reporting there. We're joined by Sarah Fordham. She is a D.C. legal team leader here. Sarah, what do you make of this move by the Trump administration going to the Supreme Court?
Yes, hi. Well, this was expected. It just took a few more days than we were expecting, but he has been routinely taking his cases up to the Supreme Court in hopes of getting favorable rulings from them. And they have in the past allowed him to fire other federal officials. But they've also said in an earlier case that the Fed is a different entity than some of the other federal agencies that he's gone after. So it remains to be seen how they're going to handle this. He wants them to stop her, like from working in her job right now. We have 2 lower courts that have said she can continue working while her lawsuit over Trump's attempts to fire her plays out.
It's probably too early, Sarah, to know whether or not Lisa Cook's camp has responded. So that's, I guess, my first question. Have they? But also, yes, President Trump has gotten some, agreements to go his way from the Supreme Court recently, some decisions. But this dispute over Cook's position is really uncharted territory, isn't it?
Yeah, we are in new ground. The law says that a Fed governor can be removed for cause, and there's a lot of discussion on what that means. She is arguing that these allegations of mortgage fraud that he has levied at her are just that, allegations. She has not been, charged with anything officially, and so now, we're going to see these issues play out further in the courts.
Sarah, when do you think the Supreme Court will decide whether or not to take up this case?
This could move quickly. They're asking on an emergency basis, so we don't know exactly when they're going to decide. But so far, they have been acting pretty fast on his requests.
Have they generally been agreeing to his request to hear these cases, or are they saying, hey, we got day jobs here. We've already got a docket that we have to deal with here. We can't keep every day responding to what you need?
Yeah, so these are 2 different things. These are filings on what is called the emergency docket or shadow docket, where they can act very quickly. It's different from when they decide to take up a case and, hear arguments and then issue a ruling. So, so far we've seen, an unprecedented number of requests going up from the Trump administration to the Supreme Court's emergency docket, more than other presidents have in the past. And then occasionally they will take a case and decide they're going to actually hear the underlying issues, for example, as they're doing on the birthright citizenship case.
Sarah, could they just kick it back to the lower court, though?
Yes, I mean they can do a number of things, and we don't have we don't have the crystal ball, but they could kick it back. They could decide not to take it, or they could decide to issue a decision on whether or not she can stay in her job.
Sarah, what's the, I guess, the consensus, the current feeling among folks in the legal world about kind of how this case is likely to go? Does the government have any case to say she needs to be out, or does she have a stronger case?
Yeah, no, it's difficult to predict this one. What we have seen, as I said earlier, they have allowed Trump to fire some federal officials, saying that he has, he's the executive, he has the prerogative to shape federal agencies the way he wants to. But they have also said that the Fed, the Federal Reserve, the central bank, is a different entity. It has kind of a ring fence around it in terms of the officials who serve on the board, and that they can't just be removed, at the whim of the president. They can only be removed for cause. And cause means things like, negligence, malfeasance, sort of serious allegations.
I mean, either way, though, if their ruling will be precedent setting, will it not?
Yes, I mean, as you said, we're in uncharted territory. So what they decide here is going to send a long signal.
All right. Sarah, thank you so much. We appreciate that. Sarah Forden, she's a D.C. legal team leader, giving us the latest here. Again, the news just recently crossing the Bloomberg terminal. President Donald Trump has asked the U.S. Supreme Court to let him oust Federal Reserve Governor Lisa Cook while the legal fight over her firing proceeds, pulling the justices into the battle over the central bank's
And interesting, because she sat at that meeting yesterday and she voted for the quarter-point cut in rates.
Yeah, it's so, a lot of folks kind of view this as a political situation here, not so much as it relates to economic policy or performance of her duties at the Federal Reserve.
What's interesting, Treasury Secretary Bessent has similar discrepancies in his mortgage applications that Trump is pointing to with Cook. So so many things are going to come down in the next few days.
Yeah, and that was a news story coming out of Bloomberg News yesterday about Mr. Bessent. So again, kind of ironic there. For our listeners in the U.S., hey, a reminder, you can listen to us via satellite radio on Sirius XM Channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Stay with us. Your top stories and global business are coming up in just moments. Again, green on the screen today. The S&P's up 35 points. That's a 0.5%. NASDAQ doing a little bit better, up 215 points. That's about 1%. And the small cappers, the Russell 2000, it's up 1.7%. Lower interest rates will do that to you. Alexis Christophers, Paul Sweeney. We'll have more. This is Bloomberg.
So we do get out.
This is CBS News on the Hour, sponsored by ZipRecruiter.
I'm Steve Kathan. As he wrapped up his state visit to the UK, President Trump took on an issue that's a major talking point back here at home, as we hear from CBS's Linda Kenyon.
President Trump was asked about free speech and ABC's suspension of the Jimmy Kimmel Show.
Jimmy Kimmel was fired because he had bad ratings more than anything else, and he said a horrible thing about a great gentleman known as Charlie Kirk.
Charlie Kirk, a conservative activist who was assassinated, connected with young American voters and was a personal friend of President Trump's. On other issues, including ending Russia's war against Ukraine.
The one that I thought would be easiest would be because of my relationship with President Putin, but he's let me down.
The president also said he disagreed with Prime Minister Starmer on recognition of a Palestinian state.
Well, Trump also vowed to return the Bagram Air Base in Afghanistan back to U.S. hands.
We're trying to get it back, by the way. Okay, that could be a little breaking news. We're trying to get it back because they need things from us. We want that base back. Because they need things from us. We want that base back.
The U.S. gave up control in 2021 when the Taliban seized power. A judge is blocking the Trump administration from deporting Guatemalan migrant children who came to the U.S. alone back to their home country. And the administration's asking the Supreme Court for an emergency order to remove Lisa Cook from the Federal Reserve Board. Now to southeastern Pennsylvania, where 2 law enforcement officers are hospitalized after yesterday's attack that left 3 others dead. This woman lives near the scene where they tried to serve a warrant in York County.
You could tell that it was no longer just one gun shooting anymore, that it went from like pap, pap, pap to pap, pap, pap.
Middle school student in New York is under arrest for allegedly soliciting explicit photos from other students. Police Detective Andrew Krieger says he posed as a female.
They were requested for pictures, videos of themselves to be sent, that if they didn't send more, that their pictures and videos would be sent to their friend groups. And they were also requested to send gift cards as a form of payment.
Well, CBS's Omar Villafranca tells us economic conditions could make Halloween costume shopping scary.
Derek Kennedy owns Magic Etc. Fort Worth Costume in North Texas. This year, Kennedy says the tariffs have had a terrifying effect, like slower shipping times and higher wholesale prices.
Most of the costumes are made overseas, and through the different manufacturers, the tariffs have ranged anywhere from 5% to 19%.
The U.S. is suing Ticketmaster over what it calls an illegal ticket resale tactic. Wall Street, right now the Dow is up 80 points. This is CBS News. Death by chocolate? Not likely, according to some new findings.
Freaking out about getting older? Try chocolate.
Results of a trial by researchers at Brigham and Women's Hospital show cocoa extract supplements may actually help you live longer by slowing down the inflammation that accelerates aging and reducing the risk of chronic disease. One of the authors, Dr. Howard Sesso, says the results call for more attention to the advantage of plant-based foods for cardiovascular health, including cocoa products, which are rich in flavonols. Others include fruits, vegetables, and tea, all hailed for their antioxidant properties. Deborah Rodriguez, CBS News.
The NCAA has moved to go to one transfer portal in college football instead of two. A committee voted to end the one in the spring. The proposed window now for players to switch schools will be a 10-day period in early January. Steve Kathan, CBS News.
Live from Washington, D.C., this is Balance of Power with Joe Matthew.
President Trump wraps the trip overseas. Welcome to the Thursday edition as the President and Prime Minister Keir Starmer talk geopolitics today and meet the press. This is the business portion of the journey, and we'll get an update on what we learned in that news conference in just a moment. Bloomberg's Anne-Marie Hordern is there. NVIDIA announcing a multi-billion-dollar investment in Intel. One of the takeaways from this trip, Jensen Huang is out there, and we'll discuss it with Bloomberg's Mike Shepard. We'll count down to a possible government shutdown with Mike Dorning from our Capital Influence team, review the data with Bloomberg's Molly Smith, and we'll have analysis from our political panel. Bloomberg Politics contributor Rick Davis with us alongside Democratic strategist Arshi Siddiqui, Bellwether Government Affairs, and it's all after a look at Wall Street. Let's start right there right now with Charlie Pellet. He's got his view on the markets from world headquarters in New York. Charlie, how's it look?
Thank you very much. Here's what's going on. We've got the Dow, the S&P, NASDAQ all advancing. We are off session highs, but a lot of green on our screens right now. S&P up 36, trading at 66.36. That is a gain there of just about 0.5 of 1%. Dow Industrials up 102, higher by 0.2%. The NASDAQ Composite Index up 228 right now. NASDAQ higher by 1%. Equities are jumping as a risk-on sentiment permeates Wall Street after the Fed delivered its first interest rate cut this year and signaled more ahead. Updating you on the Netscope IPO. It opened at 23, IPO'd at 19. Stay with Bloomberg. We'll bring you more on Netscope as trading progresses. 10-year right now, 4.11% with the 2-year, 3.57%. Spot gold down $17 the ounce, 36.42 on the precious metal. Right now, we do have gold down 0.5%. West Texas Intermediate crude 63.61 a barrel, down 0.7%. President Trump is asking the U.S. Supreme Court to let him oust Federal Reserve Governor Lisa Cook while the legal fight over her firing proceeds, pulling the justices into the battle over the central bank's independence. White House National Economic Council Director Kevin Hassett is offering an endorsement of the Fed's decision to cut rates by 25 basis points. Even after President Trump and his allies had pressed for a bigger move, there was one dissenting vote in the decision cast by Stephen Myron, who wanted a 50 basis point reduction until joining the Fed board Tuesday. He was the president's chief economist. Hassett made the comment this morning on CNBC.
Moving kind of slow and steady and heading towards a target, watching the data come in. That's what prudent policy is. And so I know that my colleague Stephen wanted to go to 50, but I think 25 is a pretty broad consensus, and I think that's a good first step in the right direction of much lower rates.
National Economic Council Director Kevin Hassett interviewed on CNBC. NVIDIA has agreed to invest $5 billion in Intel, says the two will co-develop chips for PCs and data centers. A surprise move this morning. Intel now up 28.8%, NVIDIA up by 3.3%. And again, updating you on the Netscope IPO, opened at 23, IPO'd at 19. Recapping, stocks higher. S&P right now up by 0.5%. I'm Charlie Pellet. Balance of Power continues right now. Back we go to Washington. Balance of Power continues with your host, Joe Matthew.
All right, Charlie, we wind up the band once again here. Welcome to the Thursday edition with the great Charlie Pellet in New York. He'll be back in about 15 minutes with another look at Wall Street. We're tracking the Thursday trade as, again, Wall Street influenced by Washington. What did they talk about at dinner last night? Donald Trump, Jensen Huang, all of a sudden there's $5 billion in the air for Intel. We're going to get to that in a moment with Bloomberg's Mike Shepard, who owns this story, of course. Welcome As I mentioned in the Thursday edition, on Bloomberg Radio, on satellite radio, channel 121, we see you on Sirius XM and on YouTube. Search Bloomberg Business News Live if you want to watch the program. We've got some great voices and a lot of breaking news lined up for you as President Trump wraps the big trip. Pretty good trip for the president. He seemed to enjoy himself. Yesterday was all about the ceremony. Of course, today was more about the business at hand, including meetings with business leaders who followed the president overseas. The president sat down to talk geopolitics with Keir Starmer. They held a bilateral news conference as well. Here's a taste of what the president had to say.
The ties between our countries are priceless, and it's really an inheritance. It's a beautiful inheritance. Today we're making those ties closer than ever before. We've done some things that financially are great for both countries, and we work together, and it keeps us together, and I think it's an unbreakable bond we have, regardless of what we're doing today. I think it's unbreakable.
An unbreakable bond, said the president. Keir Starmer also echoing that sentiment. Bloomberg's Anne-Marie Hordern has been traveling with the president on this trip and joins us right now from outside Windsor Castle, where she's been the last couple of days here. Anne-Marie, how's the White House framing this journey?
Well, I think they think this journey and this state visit has been a massive win for the U.S. administration. The president continuously talks about how it's unprecedented that he got invited for a second state visit, and that really set the tone for this trip. The hardest part of this was going to be, of course, the bilateral press conference, and I think both of these leaders came out unscathed. There potentially could have been squabbles in front of the press on disagreements they have, given specific policy proposals. At the same time, they said that they had some disagreements on some issues, but then left it as such. Most notably, Joe, when it came to what we expect from the UK government this weekend, Prime Minister Keir Starmer is set to recognize Palestine as a state formally. The president did say this is one of the areas we have a few disagreements, but then he stopped there. He didn't go on to try to change the prime minister's mind in front of the press. So I would say they both somehow got out of that press conference with a lot of questions from the press unscathed, and they're really viewing this as a monumental trip on the personal front, all the theater that took place with the royal family yesterday, but on the business front, of course, tens of billions of dollars of U.S. tech companies right here coming into the United Kingdom.
Well, Anne-Marie, I will note that the president was very careful to pick certain individuals from the U.S. press corps who asked some pretty friendly questions.
I'm talking about the UK journalists too, though.
Well, no, absolutely, that's true. He didn't get a question from Anne-Marie Hordern, though, and that would have been an interesting moment. Anne-Marie, I want to get to the point of disagreement on Palestine. This is the area in which these two could not find common ground. Listen to President Trump answering a question on this from earlier.
If you feel so strongly about officially recognizing Palestine for statehood, why are you waiting for President Trump to leave the country?
Well, let me be really clear about Hamas. They're a terrorist organization who can have no part in any future governance in Palestine. On the question of recognition, I made my position clear at the end of July as to the timing, which has got nothing to do with this state visit, and I've discussed it with the president, as you would expect amongst two leaders who respect each other and like each other.
President Trump was asked repeatedly, they both were, about this, and at what point he might tell Benjamin Netanyahu to pull out of Gaza. He wouldn't answer that question, Anne-Marie, even in light of, or as suggested, if all hostages were released. He was not definitive, was he?
No, but the president continuously said, and he repeated a lot during this press conference, simply he wants every single hostage being taken out of Gaza right now. We should know Prime Minister Keir Starmer also said the same. Keir Starmer, though, put a lot of emphasis as well on what is going on in terms of the tragedy taking place in Gaza, in terms of the number of Palestinians due to humanitarian aid not getting there in place. And he also wanted to frame his decisions this weekend as completely in isolation of the state visit with President Trump. He said, I said this over the summer, if there was no ceasefire agreement between Israel and the Palestinian people in the conflict in Gaza, then he was going to formally recognize a Palestinian state. So he was framing this as this has already been out in the forefront, a discussion that they have had with a number of their partners, because he has been saying this publicly. The United States, for their part, for the past few weeks have been talking about the fact that they do not want to see anyone recognize a Palestinian state because they think that gives leverage to Hamas in the negotiating table, as well as continues to give leverage to them to continue running Gaza. So this was one area where definitely the two, as the president said, disagreed. He says one of the few areas they disagreed, but they didn't debate it in front of the press. Potentially, though, there's a bit more of a frank conversation. Keir Starmer said that the two spoke for at least an hour, one-on-one, on a number of issues, and of course, this was one of them.
Fascinating stuff. Anne-Marie, we're glad you're there, and Anne-Marie will have another update for us an hour from now, live from the UK as the president heads for Air Force One. Really interesting headline that broke in this trip, knowing that Jensen Huang was sitting right in the front row left at that business meeting. An incredible headline here on the terminal that most of us woke up to this morning. NVIDIA making a $5 billion investment in, of all companies, Intel, the chip maker so many had left for dead. And this is a massive stock mover today. A lot of us are wondering how and why this deal emerged. And that's why we turn to Bloomberg's Mike Shepard for more on this. Was this something they cooked up on the back of a napkin last night? How did it happen?
Well, deals like this don't happen overnight, but the timing is
even with Trump.
Well, even with Trump. But the timing, of course, there is coincidence and then there is politics. Sure. And we see in this moment, just an hour before the two men appear at this tech leaders forum, the news emerge of this $5 billion investment from NVIDIA. It's a crucial shot in the arm for Intel, which so many out there had really, as you put it, left the company for dead, thinking that its prospects for a turnaround remained years away at best.
Yes.
This provides it not only with capital, but also the prospect of a partnership with NVIDIA on two new products. We still don't have very many details on those, but that's just the kind of thing that Intel needs to set itself up to try to build the customer base it is looking for and that it will need for the long haul.
Really interesting. We've come a long way from when the president called for Lip-Bu-Tan's immediate resignation, calling him highly conflicted. He wanted him to be fired or resign. Now we're making multiple deals with the man. Some of the analysis has been really interesting. One analyst I'm reading about on the terminal here says NVIDIA's investment less about money and more about influence. Is that what we're talking about here?
Well, the influence play in this is not zero, certainly, Joe. And we have seen Jensen Huang really go above and beyond the call of duty for a CEO typically in trying to build a relationship with President Donald Trump, who views himself in a way as CEO of the United States of America, and he is really trying to run the government in a lot of ways as a business. We heard him today in reference to TikTok saying we will get fee plus from whatever deal that emerges. So he is trying to negotiate in so many different ways with companies, not only unveiling deals, but also attaching terms for the U.S. with them. And when we're thinking of NVIDIA, we also have to think about the permission that Trump's administration has granted back to the company to sell its H20 AI chips in China. That comes with a catch, the 15% cut that will go to Uncle Sam.
Which I'd still love to hear more about once that's actually codified. Mike, we still have a lot to learn, and this is his specialty. Shep, we thank you as always on this one. We're going to have much more to follow here on Balance of Power. Intel shares up over 30% when this news hit, and NVIDIA is rising as well. If you're in the good graces of the Trump White House, it seems you're good for business. We'll have a lot more ahead on Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all moving higher. Day after that Fed decision, S&P right now up 39. That is a gain of 0.6%. Dow up 140, up by 0.3%. NASDAQ up 233, higher by 1%. Intel certainly giving a lift to markets and sentiment. Intel up now by 28%. NVIDIA up by 3.5%. The tech-heavy NASDAQ 100 index up 1.2%. The Russell 2000 index of small-cap shares a day after the Fed decision up now by 2%. 10 years currently yielding 4.11% with the 2-year, 3.57%. Gold down 0.4%, 36.41 the ounce. And West Texas Intermediate crude down 0.7%. WTI 63.59 a barrel. Cannot ignore the move in Bitcoin today, up 1.9%, 117,811 on Bitcoin. Goldman Sachs' chief U.S. equity strategist David Kostin is going to retire. Goldman says Ben Snyder will take over as the new chief U.S. equity strategy. And keeping tabs on cloud cybersecurity company Netscope, its IPO shares opened at $19, now trading at just about $23 each. Novo Nordisk higher after its diabetes blockbuster Ozempic beat Eli Lilly's older drug Trulicity in a real-world survey of certain U.S. patients. Right now, we do have shares of both companies. They are advancing. Novo Nordisk up by 6.4%, Lilly up by 0.5%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your host, Joe Matthew.
Okay, Charlie, many thanks. He'll be back with more in about 20 minutes on Wall Street, the voice of the market and the New York subway. Charlie Pellet with us every day here on Balance of Power. As we talk business and politics and often mix them up together, we're counting down here 5 working days, right? 5 legislative days left to figure out how to keep the government open after September 30th. And you know, this is a big game in the media. As I say, they'll have the countdown clocks up pretty soon and count down to the shutdown. Big sort of deep voice, you know, promos. And then somehow they pull it out of the fire and we don't shut down. That's been the model recently. But this time has felt a little bit different to people because of the discord between the two parties having to do with the rescissions, having to do with the president's big, beautiful bill. And Democrats say they want something for this if they're going to go along with Republicans this time. Republicans would love to not need that. And the speaker is going to move ahead, it seems, at least on the House side here. The speaker is going to move ahead with a clean stopgap that will keep the government open until about Thanksgiving, the 21st of November. What happens in the Senate is a very different situation and a big question right now that we have for Mike Dorning. You know, August recess is over when Mr. Dorning is with us, Bloomberg Capital Influence Deputy Team Leader. Great to see you. It's been a while.
Yeah. Like when you're in Congress, covering Congress, you get 6 weeks for August.
The life of a lawmaker. So where's your head on this one? Is it different this time or not?
It's a little bit different, but I'd still have to agree with Bloomberg intelligence analysts who only put the chances of a shutdown this time at about 30%. There's this pressure. Democrats need to do something. There's been more and more criticism of the president and the feeling that, you know, he's been acting unilaterally and essentially taking away a lot of power from Congress. That said, there is an off-ramp here temporarily to do a short-term solution that might last until Thanksgiving or so. That often happens with Congress, and they might have the bigger fight next time. The reason I say that is one of Democrats' big demands is to do something about the big increase in health insurance premiums that are that's going to come later this year because they're rolling back the Obamacare subsidies.
We're hearing a lot of Republicans on the air say this is not going to happen. We're not playing that game. That's a matter for December, and we'll deal with it then.
So
is that a deal breaker?
It's right now, from the Democratic standpoint, it's a deal breaker. But there is an argument for Democrats waiting because people will get the notices for those premium increases on November 1st. So it might make the public more engaged in this issue. I was kind of struck by something Senator Schumer did today, which was instead of trying to drag things out, he said, let's have a quick vote on the Republican plan and on the Democratic alternative in the Senate. And that suggests to me that maybe they have an end game where there's a temporary reprise here, or maybe they just want to message things and get everyone on the record before, the alternative way would be they're just trying to get everyone on the record on each plan first before they have the shutdown.
What's the Democratic alternative?
The Democratic
How different is the plan?
The key differences between the Republican plan, which is basically, hey, let's just fund things as they are
Clean CR.
for the next 6 or 7 weeks, and then we'll, figure it out later. The Democratic plan is, let's fund things pretty much as they are for the next little bit, but give back those Obamacare subsidies that are going to be eliminated, so there isn't the premium increase. And take back all of the Medicaid cuts that happened in the Trump tax cut, because a lot of that was paid for by Medicaid cuts.
Okay.
And then change some of
That's
the
going nowhere with
rollbacks. Yeah,
Republicans,
that
right?
one especially is going to be a hard line for the Republicans.
Keep dreaming. Yeah. So September 30 rolls around. We're likely going to be spending, we'll be here the Saturday.
Yeah, Congress is not going to get this done ahead of time. I can.
Fine.
We will. There's a very strong chance that we will not know the answer to this until September 30th, late in the day.
Got it. So yeah, don't make weekend plans.
Yeah.
When we come back, then assuming that passes, and we shouldn't assume that, but if you say, Nathan Dean keeps telling us that, to your point, 30-40%, they pass the CR. That means it's a massive funding fight ahead of the Christmas break.
If they put off a shutdown now, there's still a likelihood, and I think a greater likelihood, that they would have a shutdown after the next go-around.
We've got a lot to talk to Mike Dorning about. Stay close to us. It's great to have you back, and we'll do this again as we learn more. We've got a couple of plans out there, maybe a vote today. As I mentioned, the Speaker wants to see this happen pretty quickly. If Chuck Schumer calls everybody on the carpet, then we'll have a better sense of where we are. On this day after the Fed meeting, pretty interesting to hear from Charlie Pellet here, because Wall Street isn't concerned about a shutdown. Nathan tells us that on a regular basis as well. Had a little bit of a sell-off yesterday, or at least a soggy session, we'll say, following the Fed. But everybody's in a good mood today. S&P 500, 66.43, up 0.5%. The NASDAQ up 1%. And it's following the Fed meeting, the dot plot that would suggest now another couple of interest rate cuts are coming, or at least 50 basis points. Let's listen to Jay Powell from the news conference yesterday.
Risks to inflation are tilted to the upside and risks to employment to the downside. A challenging situation. With downside risks to employment having increased, the balance of risks has shifted. Accordingly, we judged it appropriate at this meeting to take another step toward a more neutral policy stance. You could think of this in a way as a risk management cut.
A risk management cut. I like that. I wondered immediately what Molly Smith thought about it, because Jay Powell's in a tough spot here, thanks to the dual mandate, right? If inflation is up, how can you cut rates? Because the job market is weak. But then if you cut rates, you could have an inflation problem. And so Molly Smith joins us, Bloomberg News economics editor here in D.C. for the very meeting we're talking about. Great to see you.
Great to be here.
You wouldn't want to be Jay Powell right now.
No, I don't envy him or any of the people on the committee.
Right. So this conversation was really something. And now we're looking at 2 more cuts going into this meeting. The market seemed to be there, but the Fed was not. Is this evolving in the wrong direction? Are we expecting more cuts because of the economy slowing down? And what would that mean for prices?
Well, I think that's exactly the challenge right now and there are a lot of economists who are also worried of, is the Fed taking the wrong path? Because are you now kind of ignoring the inflation side of the mandate? And do you really think the labor market is in that weak of shape? That would obviously be very concerning if we really do think that it's on the cusp of serious deterioration. But then are we going to, we never have really solved the inflation issue of coming out of the pandemic. And here we are now, with inflation still running well above the 2% target. Powell is talking about how there's reason to think that the tariff pass-through is going to build in inflation. So you wouldn't really think that adds up to an environment right now where we should be cutting interest rates. And that's where a lot of economists are really wary that the risks to inflation are really very tilted to the upside.
And this is why we keep hearing people throw around the word stagflation. Is that responsible?
I mean, yeah, that would be this kind of environment exactly where you have a slowing economy, but still high inflation. And I mean, to be clear though, stagflation, I think, refers more to like, you're talking about like stall speed growth, like really closer to zero. We don't have that, thankfully. You know, we have growth right now that's like more in the area of, well, 3% in the latest quarter. This year looking to be somewhere in that neighborhood of 2%. So this really is still an economy that is growing at a decent pace. But again, that so much of that here depends on the labor market.
You mentioned inflation running hotter. We're above 2%. Fed said yesterday take till 2028 to get us back down to the target level, which is quite a while from now.
Yeah.
What's changing here in this dynamic? Is it tariffs or is there more to it?
I mean, I think that there's just still so many of the lingering pressures that have still just never really fully gone away.
So this is still a post-COVID world we're trying to manage.
A lot of it is. And I think that's where when we saw, you know, the disinflation happening in the last couple of years, when inflation peaked in 2022, you know, it's come down in the last 3 years a lot. So like there's certainly, that's nothing to ignore. You know, we did have 9% inflation 3 years ago.
It's incredible to think
So
about.
it has come down. That's on the CPI basis. It has come down quite a bit. But 2% being that magic number, we're not quite there yet. And a lot of what the disinflation was due to was that goods prices were coming down. Remember, so much of us were buying so much stuff when we were locked up at home. And then we wanted to go out and experience the world again. And services was the bigger factor. But now services inflation is proving to be quite a bit stubborn. And that's really the risk here, because so much of that, again, is stuff that it tends to be a bit more persistent than the good side of the equation. But Powell's also talking about that the good side of the equation isn't really settled either. So it's hard to then see where that next big chunk of disinflation is going to come from.
Fascinating. So we get back into this last mile conversation that's apparently never going to end. Talk to us about the data quickly. This is your main job here as our economics editor. Coming off of the last jobs report, we got jobless claims today. How would you describe this job market that Jay Powell's trying to handle?
I mean, it's so tough, especially with the jobless claims data lately. It's been quite a bit choppy. You know, we're coming off of that Labor Day holiday, so that can introduce some volatility into the data. Plus, we had, you know, some states individually maybe had some, there was a case of like attempted fraud in Texas that had boosted the numbers in the prior week. Looks like that came down in this week's report. It's challenging, you know, just to say that week to week based on the jobless claims numbers. But what those indicated to us today, at least, is that the jump that we saw in the previous week seemed to be a one-time issue, and that the overall level of claims right now is certainly not flashing red. It does not seem to be on the, would suggest that layoffs are picking up in any material way. So that is a positive. But we do also then get all these other signals that show that demand for workers is slowing. So it is a slowing labor market for sure.
It's still data dependent when we talk to Molly Smith or Jay Powell for that matter. It's great to have you in Washington. We're going to lose you now again.
Sadly,
let us know
back in New York.
When you're back. Back to world headquarters. At least you'll be with Charlie Pellet, which is the good thing. Stay with us here on Balance of Power. We're going to assemble our panel next. And it's only here on Bloomberg Radio.
1240 on Wall Street. We do check markets all day long here at Bloomberg. The Dow, the S&P, NASDAQ continue to push higher. Right now we have got the S&P 500 index close to session highs, up 46. We're looking at records 66.46 on the S&P, up by about 0.7%. The Dow higher by 206 points, up 0.5%. Tech names, though, and small caps, the outperformers. NASDAQ up 1.1%. NASDAQ 100 index up 1.3%. The Russell 2000 index of small cap shares up 2.2%. The 10-year, day after the Fed decision, 4.10%, with the 2-year, 3.56%. Gold is down $15 the ounce, $36.44. That is a drop now of 0.4%. West Texas Intermediate crude down 5/10, 63.68 a barrel. And Bitcoin right now at 117,733. White House National Economic Council Director Kevin Hassett is offering an endorsement of the Fed's decision to cut rates by 25 basis points yesterday, even after President Trump and his allies had pressed for a bigger move. Hassett's comments came on CNBC. There was one dissenting vote, though, yesterday. That was cast by Stephen Myron, who wanted a 50 basis point reduction. Until joining the Fed Tuesday, he was the president's chief economist. On surveillance this morning, Goldman Sachs Vice Chair Robert Kaplan, former president of the Dallas Fed, talked about the Fed decision and that lone dissent.
What you also saw yesterday, I think, is support and a desire to work as a team and work with the chair. And so you could have gotten more dissent yesterday. You didn't.
Goldman Sachs Vice Chair Robert Kaplan interviewed this morning on surveillance. Lyft is testing a feature that will tell drivers how often a rider tips and how punctual they are, providing additional information that drivers can use when deciding which trips are going to be worth their time. Lyft down today by 1.6%, rival Uber up by 1.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. Charlie Pellet, Charlie's a big tipper. I don't think he's going to have a problem. I don't know about everybody else around here. It's really interesting to hear. I'm Joe Matthew in Washington. It's great to have you with us on the Thursday edition of Balance of Power. We're getting there. It's Little Friday, and we have a lot to talk about. Pretty interesting situation that's coming out of New York as we consider this idea of political violence in America being perpetrated only by the radical left. As we hear, J.D. Vance made that assertion once again last evening on Fox News, as we'll show you, and it lands as a Texas man is arrested, charged with making anti-Muslim death threats against Zoran Mamdani, of course, the Democratic candidate for mayor in New York. Jeremy Fistel, now in custody in Texas. The U.S. Marshals and NYPD got their hands after an investigation leading them to 4 threatening phone calls that he made to Mamdani's Queens office. It reminds us that we have seen repeated threats and attacks, even deadly ones in the case of Minnesota, against Democrats as well. So consider the words of the vice president last evening on Fox News. He was talking about the shooting death of Charlie Kirk and the reaction that we've seen and heard. Listen to the vice president.
This is a person who grew up in a pretty normal family, actually had a pretty good home life, who was radicalized by the far left, by the social networks of the far left, by the ideas of the far left, and got so far down the path of radicalization that he killed my friend. That is not a both sides problem. My friend is dead because of left-wing political radicalization, and if you want to cut that out, then be honest about it.
Once again, bleeping the vice president, as we frequently do the president of the United States, and we assemble our political panel to talk about this. Rick Davis is with us live from New York, Bloomberg Politics contributor, Republican strategist and partner at Stone Court Capital. And Archie Siddiqui is back with me in Washington today, former senior aide to Speaker Nancy Pelosi, founder, CEO, Bellwether Government Affairs. It's great to have both of you with us. Archie, there's something else that's been going on here as well. There was an attempt in the House of Representatives to censure Ilhan Omar and remove her of her committee assignments for criticizing Charlie Kirk. We're in a moment right now that's very confusing for a lot of people. I think Spencer Cox called it an inflection point, one that could lead to something better or something much worse. What is your thought?
Well, I think the governor
Governor Cox has shown great, I would say, leadership in trying to take down the temperature. Obviously, this is really a personal issue. Not only these acts of violence have become much more common, and they're not the exception anymore. But also, there are a lot of really strong relationships that we've seen in Washington, D.C., where folks are expressing their grief in real time. And I think that Governor Cox has just done a good job of really just lowering the temperature and showing some leadership in the sense that we can only solve this if we're in it together.
What would you say to J.D. Vance, who says this is not a both sides issue?
Listen, obviously the vice president has some very strong feelings and a great deal of grief. So there's no doubt about that. But I think when you do look at what happened to Mamdani, there are examples across the spectrum. And the question becomes there's two issues, I think, in play in Washington, actually across the country right now: freedom of speech, and also how do we disagree in a respectful way? And I think that only gets solved as folks join together.
Of course, we've already had a lot of opportunity to talk about this since the shooting of Charlie Kirk, and I'm curious your thought on this vote in the House. It was a squeaker, 214 to 213, to table the resolution to censure Ilhan Omar. Was that the right thing?
You know, these things are always difficult in the House of Representatives, especially. No member wants to vote to censure another member, especially throw them off committees. We've seen that happen before in the past, and it's a very, very difficult vote for anybody to take, R's or D's. But there's always a backstory to these things, too. And Nancy Mace brought the resolution to do it, and she's now, last month declared that she's running for governor of South Carolina. And my suspicion is that her political ambitions might have weighed heavily into her current activities on the floor of the House of Representatives. So I think a lot of Republicans shrug their shoulder. They see this as performative, and it doesn't surprise me that it failed. I'm actually surprised that it didn't fail by more.
Interesting. There's been talk of targeting so-called left-wing organizations. Everyone reaches for Antifa because I'm not sure anyone really knows what these organizations are, Archie. Maybe you can shed some light on this. The president says he will designate Antifa a major terrorist organization. How do you do that? Where's the head office for Antifa?
I think for the president and for those who are going after some of these organizations, that is actually the piece where not many people know what Antifa is, but they have a negative connotation.
Yeah.
Right. But there are all sorts of other organizations that are well cemented, well founded, and really doing good work out there. That this is a message to everybody, and I think that is where it's creating a chilling effect.
But they're being accused of funding political violence.
And
subsidizing
and I would say that it's hard to find the facts there, so I think that makes it the perfect poster child.
Do you worry about this targeting, Rick? And what about this Antifa bit here? Can you call the CEO of Antifa on the phone? Aren't these a bunch of guys running around kind of making their own decisions?
Yeah, I haven't spent a lot of time on sort of getting to know Antifa. In the little bit of time I have spent, I think I know less now than I did before. It's being referred to as an ideology, not an organization, anti-fascist. All that stuff makes sense to me. We've gotten indoctrinated into the world of domestic terror organizations, even though there's no classification that really calls them that. Proud Boys during January 6th, a good example. Everybody can say they know what a Proud Boy is. Nobody can tell you what an Antifa is. So at the end of the day, the FBI has been making warnings in multiple administrations that the greatest threat is not from terrorist organizations outside the country, but those that are resident inside this country. And if this actually generates a conversation around these radical groups that are not got stability and a normal way of life that most Americans would want to see and not be anarchist in their behavior, I think that's a good conversation to have. Whether or not there is something the administration is going to do specifically on this, I don't know what that would be or who that would be too, but it's worth a conversation because we can't keep sweeping this stuff under the rug.
Really interesting that the cancel culture seems to be moving around now. Speaking, Rick mentions Proud Boys. It was the head of the Proud Boys who's now leaving phone messages at employers to get people fired for talking about Charlie Kirk. Should both of these types of organizations be considered? Because the White House doesn't seem concerned about the Oath Keepers or the Proud Boys. In fact, many of them were pardoned.
Well, I think it's an interesting point how we were talking about domestic terrorism, because obviously there's bipartisan will to really root that out. We've seen the consequences. We saw that in Oklahoma City. We don't want that repeated. There have been smaller incidents. I think the challenge here is, though, again, it's the culture of intimidation, and where are you going into free speech and political expression. But anything else, there should be a bipartisan effort, and I think there is. You do see that under the radar piece with Democrats and Republicans on that front, but this has just expanded at a whole new level.
Boy, that's for sure. And I always try to connect these kinds of conversations to policy, because that's what we do here at Bloomberg. And I am deeply curious if this corrosion in the relationship between Democrats and Republicans make it more difficult to get anything done in Washington, which brings us to this idea of a shutdown, Rick. What happens if anyone does get to the table, what do Democrats and Republicans tell each other in the spirit of bipartisanship and keeping the government funded when everyone's so angry about all of this?
Well, I think you see some of these record retirements, especially in the House of Representatives right now, is indicative of the fact that the caustic environment that they work in now is taking its toll. And, look, years ago, we've always had continuing resolutions, in this government for the last 50 years. And the reality is it's a failure of the budget process as much as anything. But there would never be this kind of a debate over a 2-month continuing resolution like this, where the party in power is basically endorsing spending that was put in place by the party prior to it. and so you really wonder, what's the argument here? All the various policies that they're debating now, ACA, insurance subsidies, can be dealt with in the appropriations process and should be dealt with in the appropriations process. And so I think Thune has the right idea. Everybody take a step back, calm down. We're just trying to fund the government for a couple months while we work out the appropriations. That's the proper place to have the debate over what goes and what doesn't go into government spending.
Archie, Rick really effectively frames what we've been hearing from Republican lawmakers the last couple of days here, that conflating a December policy issue with a September funding demand is not productive. And in fact, this is a Biden budget that we would be extending. Do Democrats see it differently?
Democrats see it very differently, Joe, because the fact of the matter is that there is a real and urgent deadline with these ACA subsidies. So Rick is right, absolutely. The expiration date is at the end of the year. Sure. But now states are looking at their premiums, and they've worked with the various health insurance plans. We're talking about up to 75% increase in ACA premiums, and that's coming down the pike in October and November. So I think Democrats are saying that, listen, there was a decision not to include this in the reconciliation bill, the Republican reconciliation bill. There was a decision not to include this in the CCR. You do need Democratic votes in the Senate. So there should be a back and forth in terms of addressing this issue, because otherwise 5 million Americans are going to lose their health care if these aren't extended, and that's according to the CBO. But also the premiums are going to be higher, and that is all self-inflicted. So there's a way to fix and right the ship. And then the last point I would say is that there are Republicans that actually support this strongly, and if anything, I think the Democrats are being very productive and constructive and pragmatic, because they could have been a little bit more aggressive in what they asked for. We have a bill that has a number of Republicans on that pack.
What do you think about that, Rick? Mike Dorning made the point earlier that notifications would be going out to people in November. I think the 1st of November. Archie's suggesting that premiums might start rising in advance of the end of the year. Should that hasten the conversation?
Well, I certainly think it puts pressure on the appropriators to do something about it. I mean, look, at the fundamental level, this is what's wrong with making policy in a reconciliation bill. You know, when Barack Obama passed ACA on a reconciliation bill, party line vote only, they knew that at some point these things would be expiring, or that they'd be in the awkward position of having to ask for the budget to consider them, you know, as they expired in the normal process. If they were done properly and there was a statute in place, we would not be having this conversation. So budget gimmicks come back to bite you, and that's exactly what's happening here today. I think actually the best way for Democrats, and I don't usually give them advice, is to fight the good fight, but don't stand in the way of a government shutdown. Make sure you're having a conversation around a budget where it's funded in the government. And then if the Republicans want to take the hit and let these insurance subsidies expire, it's on them. I mean, like right now, stopping the government funding process is on the Democrats, and I just think they've made the wrong choice.
Fascinating. Great conversation. Rick Davis, Archie Siddiqui, our great panel will be back in our next hour. As we just briefly touched on the cancel culture, Jimmy Kimmel can tell you a little bit about that, and we'll have the panel's read on that coming up. Also, we're going to speak to one of those retired members of Congress, Patrick McHenry, who actually held the gavel, will join us in the next hour on Bloomberg.
From Washington, D.C., this is Balance of Power with Joe Matthew and Kaylee Lines.
President Trump wraps his trip to the UK. Welcome to the Thursday edition of Balance of Power as the President and Prime Minister Keir Starmer talk business on day 2 of the trip and meet the press in a bilateral news conference. I'm Joe Matthew alongside Preeti Gupta, who's in for Kaylee, live in Washington. Pretty interesting, as we'll get an update here from Anne-Marie Hordern, who's traveling with the president here. Some carefully selected questions at that news conference today.
Selected and dodged, I would say. It would feel like the first time Donald Trump said, look, I disagree with one of my closest allies, and that's okay.
On a matter of Palestine, that's true. They talked about a lot of things in that news conference. Jeffrey Epstein did come up, but at the very end, and President Trump did not weigh in. He just, by the way, got on the jet. They're heading home now on Air Force One and did not take questions from reporters who were lined up on the tarmac. But Anne-Marie is still at Windsor Castle. We'll have an update for us straight ahead. Also, a great conversation that we're looking forward to with Bloomberg Politics contributor and former Congressman Patrick McHenry, the former Republican congressman who once held the gavel as Speaker pro temp. Actually received a huge award this week for being the only person to ever do that. He was given an award by the Speaker of the House and will be with us in the chair here as we count down to a possible shutdown. He'll give us the real scoop on what's going on.
Lots to talk about the shutdown, the politics, and then, of course, what he thinks about all these corporations and just how much they should be talking to Donald Trump.
That's true. It seems like there's a few $1 billion moving in either direction when that happens. Of course, in this case, it's NVIDIA investing in, of all companies, Intel. And it's a big mover today. Let's get to Charlie Pellet first. He's looking at the markets for us with that story in mind, live from World Headquarters in New York. Charlie, what do you have?
Right now, we've got stocks higher across the board. Could not ignore the Intel story, though. The stock right now up 27%. I'll have more detail in a moment. Right now, the Dow, the S&P, NASDAQ, all advancing close to session highs here. Day after the Fed decision, S&P right now advancing by 49 points, up by about 0.7%. We've got the Dow up 247, higher by 0.5. And NASDAQ is up 269, up 1.2%. Tech and small caps, the outperformers. The NASDAQ 100 index up 1.3%. The Russell 2000 index of small cap shares up by 2.4%. The 10-year at 4.09%, with the 2-year at 3.55%. Gold is down 0.4%, 36.46 the ounce. And West Texas Intermediate crude down 0.8%, 63.53 for a barrel of West Texas Intermediate crude. Bitcoin now up 1.7%, 117,654 on Bitcoin. As we have been reporting and as we've been covering on Balance of Power, NVIDIA has agreed to invest $5 billion in Intel and says the two will co-develop chips for PCs and data centers. A surprise move to help prop up an ailing arch rival that sent Intel shares soaring. Again, Intel now up by 27.6%, NVIDIA up by 3.6%. Recapping 10-year yield at 4.10%, with the S&P up 0.7%. Balance of Power continues right now, and back we go to Washington. Once again, your hosts, Joe Matthew and Pretty Gupta.
All right, Charlie. Many thanks, Charlie. We'll have more on the markets in about 20 minutes as we keep tabs on the Thursday trade. Welcome to Little Friday. You made it to the Thursday edition of Balance of Power here on Bloomberg TV and radio. It's great to have you. The president is on his way home along with the First Lady. They just climbed the stairs onto Air Force One, officially wrapping the trip to the UK. It was a busy day before that. Of course, they had a meeting with the press, following a meeting with business leaders. And Bloomberg's Anne-Marie Hordern has been traveling with the president as he spoke earlier during that business meeting to our relationship with the United Kingdom. Let's listen.
The ties between our countries are priceless, and it's really an inheritance. It's a beautiful inheritance. Today, we're making those ties closer than ever before. We've done some things that financially are great for both countries, and we work together, and it keeps us together, and I think it's an unbreakable bond we have, regardless of what we're doing today. I think it's unbreakable.
An unbreakable bond. Anne-Marie Hordern, Bloomberg's chief political correspondent. It's still outside Windsor Castle, where all of the festivities have wrapped up. Anne-Marie, what was the news to come from the news conference? There were a lot of concerns about what topic might come up, some of them pretty sensitive, including Jeffrey Epstein.
Certainly some sensitive issues did come up. I would say 3 big announcements came out of today, but let's start with what you mentioned just there, Jeffrey Epstein. That came up at the very end of the news conference. It was notable. The president said that he didn't know the former British ambassador to the United States, Lord Peter Mandelson, who was ousted by the UK government after these revelations came to light in a Bloomberg News article about his close ties with Jeffrey Epstein. I find it difficult to really get on board with the president saying he didn't know this person, because I was in the Oval Office in May when they announced this deal. The prime minister was on speakerphone, but standing next to the president for how long we were in there, about 45 minutes to an hour or so at least, was Lord Peter Mandelson. So that was one issue that did come up at the very end. Another very sensitive topic, and probably one of the biggest points from the news conference, was, of course, the conflict in Gaza. And this came up a few times with both the U.S. and U.K. press for both Keir Starmer and President Donald Trump. Keir Starmer, the Prime Minister, is set to formally recognize a Palestinian state this weekend. The president said this is one area where we have few disagreements. Keir Starmer said they did speak about this, a number of other issues, frankly, one-on-one for about an hour alone. But I would note the president stopped there. He said this is one of our areas of few disagreements, but didn't try to change the Prime Minister's mind in front of the entire press. So that was one definitely notable moment. And I think a lot of questions remain, especially as we go into the UN General Assembly next week in New York, if this can cause any sort of friction between the special relationship of London and Washington. And then finally, of course, the tech deals. You know, it wasn't lost on me that Jensen Huang was with the president last night at the state banquet, at the business reception today, where the president called him out when he said AI is going to take over the world. We hope you're right, Mr. Jensen Huang. And we have NVIDIA announcing a stake in Intel a month after the United States, U.S. government, took a 10% stake in Intel. I think a lot of people are asking, is this state capitalism out of this U.S. government, or potentially state economic warcraft, because of the concerns they have about national security and China getting a leg up on the U.S. AI industry?
Lots, of course, happening in London on Donald Trump's agenda. Anne-Marie, he seemed to have plenty of time, though, to still respond to Jimmy Kimmel being put on indefinite leave from ABC. Just walk us through some of the commentary you've heard on your side of the Atlantic for that.
Well, the president brushed it off as just this was an individual who had low ratings. This is not something that is completely captivating the headlines here in the United Kingdom, because this is obviously something that is very domestically focused. The president was the one who said that this is the reason why, and said it comes after the fact that of his comments, Jimmy Kimmel's comments about Charlie Kirk. It also comes at a time, you know, when they're trying to do a deal. So this definitely has some political sensitivity around it, but the president pretty much just brushed it off as this was an issue of low ratings, not free speech. This is one issue that I'm sure he is going to be dealing with when he heads back to Washington. He's en route now back to the States.
Anne-Marie, thank you so much. Travel safe on your way home. Bloomberg's Anne-Marie Hordern live in the UK. I will say the president did weigh in on the firing of Jimmy Kimmel. It was 1:04 a.m. local time in the United Kingdom. Following the day of ceremony that we brought to you yesterday, the president on Truth Social, great news for America. Congratulations to ABC for finally having the courage to do what had to be done. Kimmel has zero talent, unquote. Also now predicting the firings of other late night hosts who he's not a fan of, knowing, of course, Stephen Colbert has a lot of time coming up on his hands. I want to talk about some of this and what's happening on Capitol Hill with Bloomberg political contributor Patrick McHenry. That would be the former Republican congressman, former chairman, and former Speaker Pro Tem, who had a big week in the House, receiving an important award, as you are a singular person in history. I didn't realize you're the only person who held the gavel as Speaker Pro Tem?
Yes, and it's an unfortunate
It's never happened.
Unfortunate series of events.
I guess so.
And I'm the lone Speaker Pro Tem. I served for 23 days between Speaker 55 and Speaker 56, Speaker McCarthy and Speaker Johnson. And Speaker McCarthy is fond of calling me Speaker 55 and a half. So you got to have a sense of humor even in the midst of...
I want to note that Kevin McCarthy was there when you received this award from the, I want to get it's the Capitol Historical Society, right?
That's right.
The 2025 Freedom Award. Everybody's getting along and has a chance to laugh about it now. It's funny what time does.
Oh my gosh, time heals. Look, everybody says this in Washington. Oh, well, it's the good old days and blah, blah. No, there's no such thing. Like this, we have a regulated means of us having a legal fistfight in the United States, right? And that is our set of politics. And that was the cage match of the founders era.
Yeah.
And the fights there, they continue today. And we're in the midst of it right now, talking about government funding and all these things of, you know, the president, after the most elegant dinner you can have on the planet.
Yes.
With the Brits, he's tweeting about Jimmy Kimmel. So there's always politics at play, which makes this so dynamic. And especially with the commentary we heard from Anne Marie, the best part of the commentary for people like us is at Bloomberg, because you cut through all this other stuff and get to what actually matters, what moves markets, what affects the economy.
Starting with an investment in Excel. Huh?
Well, what do you make of that? I mean, there seems to be a thread here in that corporations are really trying to appease the president to an extent we haven't maybe seen in previous years. Are they doing the right thing?
Oh, well, look, this is politics at play. And look, NVIDIA has a massive interest in the question of the questions only this administration can answer. Where can they export chips? That is in the say of Treasury. It is in the say of a multi-agency process called CFIUS that 25 years ago no one knew existed. And now is one of the most important national security functions. The federal government has yay or nay over where you export even basic chips, much less highly sophisticated ones like NVIDIA sent. So they have a major interest in making sure they're aligned with the president and the president's wishes. That's why, one of the wealthiest men in the world and one of the most consequential people for the distribution of technology is there at a state dinner to make sure that he is tight with this administration. Wow. It shows really the import of President 47 compared to the dynamics of President 45, where the business community was really questioning whether or not they should have connectivity. That is no longer the question. You want to have deep connectivity with this administration because it is of major consequence in a generational way.
Well, you were chairman of the Financial Services Committee. Would you be having hearings on this? The people are calling this state capitalism or worse. You're a conservative Republican. Does this align with your values?
Look, Elizabeth Warren and Bernie Sanders wanted this for the CHIPS Act, and there was resistance, bipartisan resistance to that type of direct investment in these companies. I resist this. I think it's really not where we want the government to be long term. I don't think that's in the interest of the American taxpayer. However, the Trump administration was looking at this large pot of money that was only going to be gifted to blessed industries for the Biden regime. That was part of the CHIPS Act. And so there's really no pure way to distribute this money. But a state-based capitalism is called socialism. This is not exactly, in a very traditional economic sense, the right approach for that type of connectivity here. And also not the best way to get returns for the stockholders of these companies, and not the best way to get innovation. Certainly not here in the United States, where the free flow of capital goes to the highest and best use, and more of it goes to higher and better use over time. Politicians do an atrocious job traditionally of doing this. It was a failure in the Obama administration, was a failure in the Biden administration, and I don't think a third turn of this is going to be for the better.
Well, there is a thought out there, though, that the chip grants did help Intel especially bring out a lot of the manufacturing they had abroad stateside, and that ultimately it was helpful to get to the same goals that Donald Trump is citing as his goals, which is making chips on American soil. Why is that not still the correct strategy relative to a state, as you say, is not the way the Americans do it?
Look, if you look at technology, we do not lack for venture money going into the toughest questions in technology. Sure. We do not lack investment capital. What we lacked is the permitting to bring these things back on shore. And permitting is still what is impairing the ability to deliver on the CHIPS Act and, frankly, the energy tax credit stuff of the Biden administration. It's impaired by the regulatory hurdles of doing big things in America, and we've not fixed that.
But making things in America is famously very, very expensive. So the more money you have to do that, whether it's manufacturing, whether it's paying the right talent, is a benefit at the end of the day. And that's what a lot of the folks are saying the CHIPS grants afforded in a way that a lot of Trump policies aren't.
This is the rub, and this is the reason why politicians want to take our tax dollars, or actually the debt, right, the national debt, and apply it to things that are politically popular. What I would say is, if we're going to look at trade and trading arrangements, not everything should be brought onshore. We should do the highest value stuff onshore, the stuff that is most politically sensitive to national security onshore, and incentives around that. That's why you have the CHIPS dollars, right? To bring those things on shore. But let's do the harder work of litigation reform, of changing the permitting process for large and complex deals so that we can build roads and bridges and railroads, and we can build the highest tech manufacturing on the planet here at home.
Mm-hmm. As we consider President Trump's and this administration's relationship with corporate America, that includes Howard Lutnick as well, who's been a big part of some of these arrangements, some of which you, I think, have expressed some discomfort with when we consider these investments, or the 15%, for instance, that NVIDIA and AMD would provide to the government from its sales to China. Is what happened with Jimmy Kimmel any different? This idea that the president is sort of the chairman of America's board. He doesn't like this comedian who makes fun of him, and he's apparently going to be out of a job, or is this from the same file in your view?
No, that's a very, very different thing.
Tell us why.
Well, if you look at Secretary Bessent and Secretary Lutnick, they do two very different things, and the president likes both of the things that they do. And so you see this operationally, where Lutnick's trying to get the best deal for the American taxpayer and believes that he's running a corporate enterprise on the president's behalf to do that, and that's how he's delivering. Meeting the president's expectations, meeting the president's goals, meeting the public objectives, doing so very, very, very well. Markets-driven guy. What you see here is the cultural clashes that have been very hot. And this has been very hot since the beginning of COVID. This is very hot since President Trump entered politics. And everything is fraught with peril when you engage in this political process. And it was Republicans who were on the losing side of that lost their jobs and lost their affiliations, not just from being political commentators. Look at Ronna McDaniel, couldn't even be a political commentator because she was blackballed by her colleagues at MSNBC. So politics has been ripe at play in politics. And when these comedians go from being comedians to politicians, there are consequences to that. And you want to enter the fray.
Fired in your view.
Look at late night TV is exhausting to watch. It has been so unfun because they are political commentators. That is not what the American people want. It's not Johnny Carson, who separated himself from politics.
And made fun of everyone.
Made fun of everybody. But this is the difference between the two Jimmys, right? And Jimmy Kimmel was a political commentator and went into the fray.
So Fallon keeps his job? Is that what you're saying?
Yeah, I think so, because if you watch that, he's not doing politics. Yeah. He's doing the silly stuff that you love about late night TV that is broadly enjoyable no matter your politics, I think.
It's still free speech, though. Is that a fireable offense?
Well, I thought we're past this woke mob taking people out. I thought the cancel culture thing was like bad. But apparently it's now good because, look, who's getting fired is like whether or not cancel culture is good. I think cancel culture is really bad. I think we should have an open forum for debate. And don't watch if you don't think it's funny. I don't watch Jimmy Kimmel. I don't think he's funny. It's been very grating to watch. And I mean, if you look like me, you better have a sense of humor, right? And so I have a sense of humor about politics, but it gets exhausting when they think that they can just be on the left and get away with the rap of comedy. You better have a sense of humor.
I can't believe we just talked to Patrick McHenry for 15 minutes. We didn't ask you if the government's going to shut down.
I think so.
Okay. We got our job done. Patrick McHenry, Bloomberg Politics contributor on Bloomberg.
9:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ all advancing day after the Fed decision. S&P right now up 45 at 66.45. That is a gain of 0.7%. Dow Industrial is up 203, up by about 0.4%. NASDAQ, the composite index, up 266, up 1.2%. Tech stocks, small caps, the outperformers. NASDAQ 100 index up 1.2%. The Russell 2000 index of small cap shares up now by 2.4%. We've got the 10-year yielding 4.10% with your 2-year 3.56%. Gold down $15 the ounce, down 0.4%. And West Texas Intermediate crude down 0.9%, 63.46 a barrel. Federal Trade Commission in 7 states are suing Live Nation Entertainment and Ticketmaster for failing to stem the use of automated ticketing bots and large-scale resale operations. Live Nation shares, they're down right now by 2.7%. Again, recapping, stocks higher, S&P up 45. That is a gain of 0.7%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Kriti Gupta and Joe Mann.
Hey, Charlie, many thanks to Charlie Pellet every day here with us, covering Wall Street on Balance of Power as we talk politics in Washington. Thanks for being with us here on the Thursday edition on Bloomberg TV and radio. We were just discussing with Patrick McHenry the cancellation, if I can use that term, or I guess sidelining of Jimmy Kimmel's program on ABC. A lot of people never saw or heard what Kimmel said that brought us to this moment, because we're going to talk about this with the panel coming up here, having heard from the former congressman, the former chairman on this. Let's go back to the 15th of September. This is Kimmel Live and what he told us that night.
We hit some new lows over the weekend with the MAGA gang desperately trying to characterize this kid who murdered Charlie Kirk as anything other than one of them and doing everything they can to score political points from it.
As anything other than one of them, which upset many folks on the right. Walt Disney's ABC network now taking it off the air indefinitely is the language that we're hearing, not in fact canceled, with this backlash to the remarks that the late night host made about, of course, the shooter in the Charlie Kirk case. We know people are very sensitive about this stuff right now, and President Trump did weigh in. It was 1 o'clock in the morning, 1:04 a.m., as we were just describing a short time ago, of course, in the UK. Local time, 1 o'clock in the morning, after a very long day of celebration, pomp and circumstance, the president wrote, "Great news for America. Congratulations to ABC for finally having the courage to do what had to be done. Kimmel has zero talent." The president of the United States weighing in on this. He's, of course, called for the removal as well, or cancellation of other programs in late night, which is something that Stephen Colbert can tell you about. We want to assemble the panel for more on this. Rick Davis is with us today, Bloomberg Politics contributor, Republican strategist and partner at Stone Court Capital. And Archie Siddiqui is here as well, CEO, Bellwether Government Affairs, former senior aide to Speaker Nancy Pelosi. It's great to have both of you here. Rick, was this the right thing to do? And do you think Kimmel would have been fired without the influence of this administration?
Well, each administration has its own impact on the media, and there's no question that this administration has had its finger on the scale for a long time, right? I mean, they send their cabinet members out to right-leaning organizations to communicate their desires and programs, and they have a regular combat with other networks. So it's not like it's new that we've got this tension with Donald Trump and outside media groups. I think that in the context of what we're seeing in this administration, you touched upon it in the last segment about government intrusion into the business community. This is much more about that to me than it is about what Jimmy Kimmel said about Charlie Kirk. I mean, when you have your network affiliate organizations complaining because they have mergers and acquisitions that are in the pipeline at the FCC, and the FCC, Brendan Carr, chair, says something that, is going to threaten a potential approval, and they've held up approvals for less than this in the past, then you really have a lot of federal government intrusion into the business sector. And that's just been happening every single week of this administration since the beginning. You can debate the merits of it, but that is the policy of this administration. These regulatory agencies are going to be a key part of every media organization and every business in America until at which point in time the administration changes.
Archie, weigh in here. At the end of the day, one of the arguments is that maybe this is for the public interest, whether you're talking about ABC and Jimmy Kimmel, whether you're talking about CBS, or whether you're even talking about government stakes in companies like Intel or NVIDIA's involvement. When we're talking about the overlap between the administration and corporations, how do you view it?
Well, I think what we've seen is that there's been this exercise of complete government power in new bounds, which has been interesting for Democrats to watch because Republicans have been the party of limited government, and we see the exact opposite. That we're talking about whether it's stakes in Intel, but now we're talking about talent decisions at a news organization and a media organization. So I think the challenge here is that this is in some ways a new low from the perspective of humor and laughter is what brings us together as a country often, especially in this town. And if you take that away, then where does that leave us? And it creates a real culture of intimidation. And I think that's what we're seeing in the corporate community, is that corporations are positioning themselves to make sure that they keep their heads down and are very, very careful on how they navigate very uncharted waters.
President wants more, by the way. We've got Colbert, Kimmel now. He also went on to write, that leaves Jimmy and Seth, two total losers on fake news NBC. Their ratings are also horrible. Do it, NBC. Does this keep rolling, Rick? Because that would kind of speak to the intimidation factor that some folks have talked about here. If networks are worried about losing their licenses, does it actually have to do with ratings?
No, I don't think it has anything to do with ratings. I don't think either one of these instances that you've described had anything to do with ratings. I think it had everything to do with the parent companies being concerned about their ability to foster corporate development, value for the shareholder in a Trump administration when some of your top talent are out there skewering him every night. And so, how NBC reacts to that, if they have a merger that they need to get approved by Brendan Carr at the FCC, they're going to think twice about it. Whether or not it's making money or losing money, I don't know. But you can't separate the business interests of these parent corporations with the need for comedy within the Trump administration in order to function as a business. And these comedians are simply, they're a tool in that organization. And so whether or not NBC decides to reinforce that or abandon it, we'll see, because Trump will test them, right? He is a incredibly good person at creating incredible amounts of tension amongst the people that he wants to influence. And without that tension, he doesn't have as much influence.
Rick, you're a well-respected member of the business community. You're joining us from New York, very close to some of the Wall Street big figures that we regularly have on Bloomberg Television. Is there a fiduciary duty for corporations to appease the president?
There's not a fiduciary duty to appease the president. There's a fiduciary duty to the shareholders of their companies. And in so much as the president can affect the value of those shareholdings, is an important consideration. I mean, when Biden was in the administration, the promotion of climate programs and diversity in the board ranks was a big challenge for a lot of corporations. Now it's something different with Trump. It's not like the first time presidents have tried to influence corporate America.
Well, of course, this comes the same week as the president filed a massive lawsuit against the New York Times. And Archie, I want to ask you about cancel culture. We've heard that term a couple of times, and it seems to be moving. Barack Obama, of all people, takes to Twitter. After years of complaining about cancel culture, he writes, the current administration has taken it to a new and dangerous level by routinely threatening regulatory action against media companies unless they muzzle or fire reporters and commentators it does not like. I'm assuming you agree with this statement, and if that's the case, what happens to the New York Times and everybody else?
Well, I wouldn't put New York Times in the cancel culture point. For me, that's
$15 billion lawsuit or something, right?
Well, cancel culture in the sense that, yes, it's an effort on the cancel culture. And we've seen that where we have the fringes of the Democratic Party and the far left and the far right who have really kind of honed in on this, and now we have the president weighing in. So to your point, in that sense, it's in some ways normalizing cancel culture in a whole new level when you get a presidential approach to this.
I believe he's also suing Rupert Murdoch, who was at the state banquet last night in London. What do you make of that?
I think the president has had a very significant track record, and a successful track record is using the legal system to promote his goals and really send strong messages. And I think that is actually a strong avenue for him to express his political leanings. So I think we are going to continue to see that, and I think that's tried and true in his DNA in terms of how he functions.
You know, Brendan Carr, at the head of the FCC, Rick, has made the point that if you want to go ahead with political commentary, you could have a podcast, go on YouTube, go stream. We're talking about broadcast licenses. Do you believe there should be a delineation between broadcasting on the public airwaves and everything else that we do online?
Well, we give network spectrum, access to spectrum, and the result is that they make a commitment to act in the public interest. And I can tell you, having managed lots of campaigns, that there have been a lot of very heated conversations in the editorial suites of these networks over whether or not my candidate was getting the same coverage as the opponent. And it is an obligation of these networks, because of the government support they get through the airwaves, to do that. Now, if they want to find new ways to broadcast their medium, then fine, do something different. But it is actually a bargain between network broadcasters and the federal government.
Well, that's an important part of this conversation, Archie. I mean, could this be the end of linear television as we know it? Why doesn't everybody just go online? The audiences are certainly there. You can watch this program on cable. You can watch us on YouTube right now. You can subscribe to the podcast. Does everybody need a transmitter and have to worry about what goes over the public airwaves?
I do think that I think the public airways really occupy an important space, and if we lose that, that is a role in a weakening of our democracy overall. Because trusted sources of news are so critical, as you well know. So I do think, from that perspective, this is bouncing up straight against freedom of speech, and that goes to the heart of what the president is trying to do here. Is absolutely, if this is going to be litigated in a fair way in the courts, fine, that is good. But I do think it is also, you can say, look at the dollar amount, it's actually also geared to really put a hole in and maybe potentially really make it very difficult for the New York Times to struggle in an already very competitive marketplace.
Well, that's all true, and this is an important conversation that we're going to continue beyond today, I'm quite sure. Big thanks to our panel, Bloomberg Politics contributor Rick Davis at World Headquarters in New York, with us here in Washington, Archie Siddiqui, Bellwether Government Affairs. We appreciate your grace in talking about some pretty serious issues today, as always. Alongside Kriti Gupta, I'm Joe Matthew. We're live in Washington with a half hour to go here on the Thursday edition of Balance of Power. And coming up, we'll spend some time with Ed Ludlow, who's going to give us a little bit more on this NVIDIA Intel deal. And then our conversation with Congresswoman Dita Titus, the Democrat from Nevada, will be with us ahead on Bloomberg.
It's 1:40 on Wall Street. We do check markets all day long here at Bloomberg. We are off session highs, still holding on to gains. Day after the Fed decision, the Dow, the S&P, NASDAQ 100 index, Russell 2000 all advancing. Got to begin with the Russell 2000 index of small cap shares, outperforming up 2.4%, keeping it all in context. S&P up 38, up 0.6%. The Dow up 185, up 0.4. NASDAQ Composite Index up 1%, while the NASDAQ 100 Index up now by just about 1.1%. Bets that Fed rate cuts will keep powering corporate America, driving stocks toward records. Traders rushing into the riskier corners of the market. 10-year, 4.09%, with the 2-year, 3.56%. Gold is down right now by 0.4%, $36.44 the ounce. West Texas Intermediate crude tumbling 1%, $63.41 a barrel. And Bitcoin now up 1.6%, 117,530 on Bitcoin. Novo Nordisk shares are higher after its diabetes blockbuster Ozempic beat Eli Lilly's older drug Trulicity in a real-world survey of certain U.S. patients. Shares of Novo Nordisk up now by 6.1%, Lilly up by 0.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Preeti Gupta.
All right, Charlie, thanks as ever. Charlie Pellet has been watching NVIDIA and Intel for us all day. Big movers on this news of a massive investment, billions of dollars worth, NVIDIA pouring money into Intel. The analyst reaction has been pretty interesting as we try to understand what would be the financial benefit for NVIDIA, the world's biggest chip maker, to do business with the chip company that many had left on the side of the road. Interesting. Jensen Huang, right now, of course, the CEO of NVIDIA, along with Lip-Bu Tan of Intel, are holding a briefing, and we're just now starting to get some details on this deal. Huang says the Trump administration, Preeti, was not involved in the Intel partnership, which many people just assumed, as Jensen Huang was traveling with the president. They were sitting together, essentially, when this was announced.
And this is, of course, on top of the fact that the U.S. government already has a stake in Intel, so
Right.
this only amplifies how much that's worth.
Let's get into this with Ed Ludlow. I'm delighted to say that Ed is with us right now. Of course, the co-host of Bloomberg Tech, with us live from San Francisco, and our man when it comes to covering NVIDIA and the related companies in the chip space. What are you making of this, Ed? And was this not directed by the administration?
Nailed every single point. I've just got off the line with Jensen Huang and Lip-Bu Tan, and the way they explained it is, yes, the Trump administration had absolutely zero to do with this partnership focused on the technology. They basically explained that going back more than a year, which would predate Lip-Bu Tan's tenure as CEO of Intel, and also predate the kind of closeness of the relationship between Jensen Huang and the president, they started engineering talks. The stake is very different, and the way that Jensen Huang explained it is that, well, why wouldn't they invest in Intel? If they believe in the products that they're going to do together, then they see that this is a great addressable market opportunity, so they put the equity stake in, and from Intel's side, they still need to shore up the balance sheet with cash. You use the word road, and I kind of put this to Lip-Bu, if you'll allow me just for a second. If you go down to Santa Clara, about 30 miles south of where I am now, 25 miles, and you go up on the roof of Intel, and you look across the 101, you will see NVIDIA. And they've been rivals across that freeway for a long time. And so this is a historic moment in that context.
Wow, I love that. This is why we talked to Ed Ludlow. I've got to ask you, though, about the relationship between not just President Trump and Jensen Huang, but Lip-Bu Tan. Going back to the 7th of August, you remember the post. President Trump on Truth Social, the CEO of Intel, is highly conflicted and must resign immediately, saying there is no other solution to this problem. That was just the 7th of August. Ed, we've come a long way, haven't we?
We have, because then, within a couple of weeks, the meeting took place at the White House between Lip-Bu Tan and the president, and then very quickly after that, the United States took this stake in Intel, which is quite rightly points out, because of the gain in Intel shares today is now worth vastly more. To be completely transparent, those of us on the briefing didn't actually put to Lip-Bu Tan any questions about his kind of status right now with the president. But the thing that NVIDIA and Intel have in common is they are both under pressure to do more in this country. To answer your earlier question, when Jensen Huang said that the administration had no involvement in making this deal happen, he said, I am now in the United Kingdom, right, with the cabinet and the president, and that he had informed cabinet members about the deal this morning. So that's kind of the latest reporting. But Lip-Bu, in this conversation that we've just had, didn't really reflect on the president's role and their current relationship beyond the idea that Intel's committed to the United States as a place of activity.
Ed, it's great to have you, as always. Thank you for helping us sort this out. We'll be looking for more headlines on this. Check in with Ed Ludlow a bit later on with us from San Francisco at the Bloomberg Bureau there. I'm Joe Matthew alongside Kriti Gupta in Washington. As we add the voice of Dina Titus, been looking forward to this conversation to get the view of a Democrat. We spoke with Patrick McHenry earlier this hour on exactly what is happening on Capitol Hill. She's from Nevada's 1st District Congresswoman. Titus, welcome back to Bloomberg TV and radio. It's great to see you. Are you preparing for a government shutdown? Should our audience be doing the same?
Well, we don't know. The vote has been rescheduled several times. Now it looks like it's going to come tomorrow. The Democrats are voting no, though, because there's no consideration of health care and putting back some of the cuts that have been made to Medicaid or extending the subsidies for Obamacare. And it would be an easy fix. If you can't help people who need health care, what's the point? And you leave the government open, they just take advantage of that and use it to cut more programs. So I think you'll see Democrats sticking together as a no, and who knows what their side's going to do.
Congresswoman, the CBO came out this morning and said that the extension of those subsidies would cost about $360 billion. Is that a number that everyone remembers when the debt ceiling comes back into question?
Well, I'm sure it'll be bandied around, but it may be some different number by then. You've got very selective use of statistics, and what they use today may not be what they use tomorrow. This is a time when the Republicans control both houses. They control the president. They control most of what the court's doing at the highest level. So if this shuts down because they won't provide those subsidies, then they're going to have to do the explaining because it's going to all be on them.
Republicans who have joined us, Congresswoman, have suggested that there is still time, that the current CR that is going to hit the floor expires on the 21st of November. Of course, the subsidies expire at the end of the year. Would that not allow time for a robust debate around Obamacare subsidies and government funding by the end of the year?
Well, it could if they would allow it, or if they have any interest in doing it. You've already heard the president say, oh, don't bother with what the Democrats want. There's been no input from our side, so you're really just kicking the can down the road. There's no indication that they'd come to the table later. They haven't come to the table up until now. They've had plenty of time. It's not like this came as a surprise that this deadline was here.
Congresswoman, we are just getting some headlines coming from the president as he speaks to a gaggle on Air Force One. If you'll bear with me, I'd like to read them to you. He's talking about taking away the TV licensing, saying it's up to the FCC's Brendan Carr. He also goes on to say the TV licenses should be taken away if it's bad publicity for me. This, of course, follows the news overnight where we did see Jimmy Kimmel being put on indefinite leave from ABC around some of his comments around Charlie Kirk and the assassination there. Congresswoman, your response to his comments?
Well, it's astounding to me that the president would say we're going to take away freedom of speech for somebody who criticizes me. I mean, it's all about me with this president. I think somebody quoted us saying that these regulatory agencies that are supposed to be watchdogs have just become lapdogs. They just do whatever he wants. The Justice Department, that's just become his personal lawyer. The FCC, you name it, whatever he wants, that's what they do. What has happened to the Constitution, the Bill of Rights? You may not like what Jimmy Kimmel says, maybe it's inappropriate, so maybe you disagree with it, but you can't just take away somebody's First Amendment rights because they don't like what you're wearing or what you're saying or, making you look bad, but then you don't appreciate it. I mean, good God, that's what the Constitution is there for.
Well, maybe does this help Las Vegas? Jimmy Kimmel off the air, you can go into residency on the Strip, no?
Well, Las Vegas needs some help. I'm glad you brought that up because with all the uncertainty and the tariffs and insulting our international customers like Canada, it's hard to make them mad. They're such nice people. Tourism is down in Las Vegas. So maybe Jimmy Kimmel will perk up the Strip.
That's interesting. Of course, this is your home district. I talked to Derek Stevens about this at Circa a couple weeks ago about some of the declines that we've seen in traffic. Of course, he's doing pretty well at Circa with betting on the rise, and it brings us to an important story that you've got your hands on. A House committee rejected your attempt to restore a full federal tax deduction for gambling losses. We've talked about this, Congresswoman, on this program before. That's why Derek Stevens joined us, because the president's big, beautiful bill would only allow you to deduct 90% of losses if I come to your hometown of Las Vegas. Not that I ever lose there. You tried to get it attached to the NDAA, and it didn't work out that way. And when I talked to Derek Stevens about this at Circa, he made clear he was talking to you, Congresswoman, and your colleagues in the Nevada delegation in hopes to fix this. I want you to listen to what he said. Listen.
It's going to take people that bet frequently, some of the large bettors, some of the professional bettors, and even just some of the larger recreational bettors, and you're basically forcing them to no longer bet legally. The only ones that win out of this deal are the illegal bookmakers. Every state loses in this deal, every state, and every legalized sports book, as well as the U.S. consumer.
I don't know how worried they are about this up in the pools at Stadium Swim, Congresswoman, but do you have a plan B?
Well, I do, and I really appreciate Derek Stevens. He's been a great ally on this and kind of rounding up the gaming industry because they weren't engaged in it too much from the beginning because they liked other parts of that big, beautiful bill. But he's really gotten them energized, and I completely agree with him. But in the first place, you don't tax somebody on money they don't have. It's like ghost money, phantom money. You know, you're paying taxes on $100,000 and you've really only got 90, you know, and that doesn't make any sense. And so we've got to restore that full deduction. I'm going to use any mechanism possible. We've got the bill that stands on its own. We had the chairman of the Ways and Means Committee saying he wanted to fix it. We've got bipartisan support. The other Republican co-chair of the Gaming Caucus is on board with the bill. We can perhaps attach it to another bill come to fix what they did last time that was wrong. Maybe there's a bill at the end of the term. It's like kind of like the Christmas tree bill where you do tax extenders. So we're not giving up. Now, remember, too, you've got a whole nother year. This doesn't go into effect until the end of next year for next year's taxes. So there is time to get this done. It's a little frustrating, though. The Republicans stuck this in there. Then they suddenly realized, oh, where'd this come from? This is a bad idea. And there's so many easy ways to fix it. It's like one sentence, and yet they don't seem to want to do it.
Well, it doesn't sound like you're giving up, and you have some time to work with, Congresswoman.
Yes.
Well, there's a report now that Las Vegas is in talks with the NFL to host the 2029 Super Bowl. Is that the kind of deal that brings tourism back to the way you want it in Las Vegas?
Oh, absolutely. That'll be right in my district. We have that fabulous Allegiant Stadium. Las Vegas used to just be kind of a gambling entertainment town, but now we're a sports town. Aces and the Knights and the Raiders and the A's. So it'd be great to have the Super Bowl.
I'm looking forward to seeing that new baseball stadium. So you play in the slots or the tables, Congresswoman? What's your taste?
I kind of like a crap game myself.
How about that? Interesting. Is this now? Are you on the Strip or Fremont Street? Where do you go in Las Vegas?
Well, you know, it's interesting. When you live in Las Vegas, a lot of people come to visit you. And I wonder if they're visiting me or they just want to come for Las Vegas. So we take them wherever they want to go. Downtown and the Strip are both in my district.
All right, we're coming out. We're going to do the show out there, and we'll meet you at Stadium Swim. We're going to connect all the dots on this at some point. Congresswoman, thank you. We'd love to stay in touch with you on your Fair Bet Act. Congresswoman Dina Titus, the Democrat from Nevada's 1st District, which puts you right in the middle of Las Vegas. Interesting conversation, Creedy, and it's one that's being had as President Trump talks to reporters on Air Force One. He's making a lot of headlines with the gaggle on the plane.
Lots of headlines. Of course, we addressed that with the Congresswoman, his comments on Jimmy Kimmel and the role there, talking about the FCC. To me, what caught my eye, of course, is what he said around sanctions. He's saying that he's got Keir Starmer in support of the sanctions, also going on to say that the UK is not a culprit on Russian oil, but Europeans very much are.
Yeah, he made that point in the news briefing as well. We'll unpack some of what the president and the prime minister said in the late edition of Balance of Power. We'll keep tabs on what he's saying and posting from the aircraft on the way home. President Trump and the First Lady are airborne right now on their way back to the U.S., and they'll be back in Washington tonight. Bloomberg Business Week Daily, straight ahead.
This is Bloomberg Business Week Daily, reporting from the magazine that helps global leaders stay ahead, with insight on the people, companies, and trends shaping today's complex economy, plus global business, finance, and tech news as it happens. Bloomberg Business Week Daily with Carol Masser and Tim Stenivek, live on Bloomberg Radio, television, YouTube, and Bloomberg Originals.
And a very good afternoon, everybody. Yes, indeed. It is Thursday, September 18th. Carol Master, Tim Stanovic live at Bloomberg headquarters in New York City. Stocks. We have seen U.S. stocks headed toward all-time highs once again. Chip names and tech heavyweights, definitely the outperformers. This as we continue to get some headlines from President Trump. He is on Air Force One, headed back to the United States.
Yeah, just now, the president saying that it is up to the FCC chair, Brendan Carr, if television licenses should be taken away, and calls Carr a great patriot. He spoke to reporters on Air Force One. He said, Carol, that if television networks are almost entirely, quote, against him, then, quote, maybe their licenses should be taken away.
All right, it's certainly one of the big stories, one of the most read on the Bloomberg. We're not going to get to it in this hour completely, but we are later on in the broadcast continuing to monitor some of those headlines from President Trump. We are going to talk about NVIDIA, a big story, tech story, semis, NVIDIA, that surprising $5 billion investment in Intel. And then we've got some stuff when it comes to the Federal Reserve one day after yesterday's decision, including President Trump asking the Supreme Court to let him fire Fed Governor Lisa Cook.
Also, Dr. Susan J. Blumenthal. She's a retired Rear Admiral, former U.S. Assistant Surgeon General. She's joining us a little later in the hour on why half of the U.S. population faces a gap when it comes to health care.
All right, let's get to the trade. Let's get to, once again, Charlie Pellet. Charlie, welcome back.
Thank you very much. Good to be back with you guys. We got the Dow, the S&P, NASDAQ all surging. Day after that Fed decision. Right now, the S&P is up 36, trading at a record 66.36 where we stand right now, up by about 0.5%. We've got the Dow up 146, up 0.3%. NASDAQ Composite Index up by 1% right now. Small cap shares, though, the standout. The Russell 2000 Index up 2.3%. The 10-year 4.10%, with the 2-year right now 3.56%. Equities at records after the Fed delivered its first interest rate cut this year, signaled more ahead again. The 10-year 4.10%. Gold down $16 the ounce, 36.43, down by 0.5%. And West Texas Intermediate crude down 0.9%, 63.47 for a barrel of WTI. Bitcoin, meanwhile, trading higher by 1.7%. Bitcoin 117,603 right now on Bitcoin. That Netscope debut has delivered over $1 billion windfall to Lightspeed. Netscope shares jumping as much as 28% in their trading debut this morning. And NVIDIA, topic we're going to be talking about a lot more today right here on Bloomberg Business Week Daily. NVIDIA agreeing to invest $5 billion in Intel, says the two will co-develop chips for PCs and data centers. Intel surging 22.5%, NVIDIA up by 3.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet, and that is a Bloomberg Business Flash.
All right, Charlie, thank you so much. And that's exactly where we start, that agreement or deal for NVIDIA to invest $5 billion in Intel. NVIDIA CEO Jensen Huang called it a historic collaboration that together they will lay the foundation for the next era of computing. President Trump also weighing in from the UK, where he and the UK Prime Minister Keir Starmer unveiled a new technology partnership to deepen ties on AI and digital assets.
So we're taking the next logical step with a historic agreement on science and technology partnerships, and this will create new government, academic, and private sector cooperation in areas such as AI, which is taking over the world. It's, I mean, I'm looking at you guys. You're taking over the world, Jensen. I don't know what you're doing here. I hope you're right. All I can say is we both hope you're right. But it's pretty amazing.
That was President Trump earlier from the UK, with more on the global backdrop when it comes to the industry. That has a role in with making so much of our world tick. We are talking semiconductors, of course. I want to bring in Bloomberg TV BTech co-host Ed Ludlow joining us from San Francisco. Ed, just off the phone with Jensen Huang and Lip-Bu Tan, CEO of Intel, and of course Jensen, the CEO of NVIDIA. Ed, what did they tell you? What did you find?
Yeah, I mean, the main takeaway is that the president and the administration were not involved in the brokering of this partnership and deal. It predates more recent events with both companies and the Trump administration. The way that they both explained it is that...
Really? Do you believe that?
Yeah, well, I'm so glad that you did that. So let's get into it. You know, That was what they said.
Okay.
And what I find interesting is that they claim that 12 months ago or more, engineering teams started meeting and working together. Now, that would not only predate the sort of more recent relationship between Jensen Huang and the president and Lip-Bu Tan's relationship with the president, but I also point out that Lip-Bu Tan was not CEO of Intel 12 months ago. He was on the board. So this is a kind of legacy thing, if they're to be believed. Now, to your point, the equity stake and the investment of $5 billion of NVIDIA into Intel, how do we interpret that? The way that Jensen Huang answered it is, why wouldn't we invest if we believe in the success of the products that we're working on together? Because they'll realize an excellent return. But nobody in this briefing that I participated in asked Jensen if the investment itself was catalyzed or proposed by the administration.
Yeah, I mean, just the cynic in me would say this looks really good for NVIDIA to make this investment in a company that is partially owned by the U.S. taxpayer, partially owned by the U.S. government, and show his support, show NVIDIA's support for this company. I want to think about this in the broader context. I mean, Pat Gelsinger, Ed, was the CEO at the time, and I think it was notable back in, January of this year, I think it was, when NVIDIA had that big decline as a result of the DeepSeek news. Pat Gelsinger essentially coming out and saying that he was going to buy some of the NVIDIA stock. On LinkedIn, he said that. That was a really big deal because these two companies were seen as rivals even then. Are they still seen as rivals right now?
Guys, if I jump in my car right now and I go 25 miles down the 101 and I park up at Intel and climb onto the roof and I look back across the freeway, I'll see NVIDIA's headquarters. And funnily enough, if I look the other way, I'll see AMD's headquarters. In the context of technology history, we've not seen something like this since way back when Microsoft kind of bailed out Apple, which is a moment in history long forgotten. The way they explain it, and you tell me if you want to get into the nitty-gritty of it, is that it's a simple technology story. The architecture that Intel CPUs are based on still dominate the data center market. So all the CPUs that go into data centers, Intel has a good hold in that market, and NVIDIA sees an opportunity to leverage that to their advantage.
I'm trying to understand. So NVIDIA invests $5 billion. The U.S. took a roughly 10% stake in Intel in August, and that investment so far paying off pretty nicely. Japan's SoftBank Group committed to investing a lot in U.S. chip making. They made a surprise $2 billion investment last month in Intel. It's a rather notable group of investors. How should one read that? What is Intel becoming? Is this a step toward NVIDIA buying Intel? Is there a grand takeaway here?
The way to interpret it is that Intel still needs cash. So Lip-Bu Tan was very honest that he's still focusing on shoring up Intel's balance sheet. The difference between Microsoft investing in Apple way back when is that Apple was facing bankruptcy. Intel's not, but its profit has been eroded or obliterated. And Gelsinger's kind of thing was to try and get back on a product roadmap. Lip-Bu Tan's is like, I'm going to cut back. I'm going to cut down to profit, get the balance sheet strong. But on paper, Intel also represents everything that this administration wants, a U.S. company with heavy footprint in the United States that on paper can do more manufacturing. The problem is this NVIDIA agreement has nothing to do with manufacturing, really.
Well, our next guest was giving us hints and cues several years ago about the chip wars, and so we're going to talk a bit more about it with Chris Miller. But you set us up so well, as you always do. Ed Ludlow, Bloomberg TV BTech co-host, joining us there from San Francisco. All right, so let's get to Chris Miller. He wrote Chip War, The Fight for World's Most Critical Technology. It was written in 2022. That book made us all sit up and take notice of the importance of semiconductors to the world, to the most developed nations when it comes to economic growth, national security, and so much more.
Chris is professor of international history at the Fletcher School at Tufts University. He does consulting, but he has not consulted for Intel or for NVIDIA. He joins us from Palo Alto, California. Chris, the book, laying it out for us 3 years ago, America's edge is slipping, undermined by competitors in Taiwan, Korea, Europe, and above all, China. Should we be shocked by a partnership such as this? Strange bedfellows in a previous life, no?
Well, I think from the perspective of 10 years ago, this would have been a pretty surprising pair up, but today there's a real logic for it. NVIDIA is a leader in AI chips. Intel has been trying to catch up when it comes to AI, but also Intel's got a lot of unique know-how when it comes to building processor chips, which AI servers still require. So certainly on the chip design side, there's differing areas of expertise that both of these companies can bring together.
All right, but just all of it together, the U.S. taking that 10%, approximately 10% stake in Intel over the summer. You've got SoftBank, their $2 billion investment now in NVIDIA. What is this? I mean, is this what you thought would happen, need to happen to ensure U.S. remain a dominant player in the semi space?
Well, I think we're going to need to wait and see what implication this announcement has, if any, for Intel's manufacturing business. I think there's no doubt that Intel's going to be an important chip designer in the future, perhaps smaller than it used to be, but they've got a unique position in the market on the chip design side. But from a national perspective, what really matters is Intel's manufacturing arm. And that's where Intel has really struggled the last couple of years to stay at the cutting edge technologically and also to win customers away from TSMC, the Taiwanese market rival. And today, NVIDIA produces almost all of its most advanced chips with TSMC. There's been a big push from Washington to get companies like NVIDIA to diversify their supply and to try to help Intel become a more successful manufacturer of chips for other companies. The announcement today doesn't really say anything about that, but I think a lot of people will ask whether this is a stepping stone for other U.S. companies, NVIDIA or some of its peers, to bring more of their manufacturing business to Intel's manufacturing arm.
So chip war, it is on, or where are we? Is it the beginning of the chip war? And I'm just curious, are you starting to think about, I don't know, another book and where it goes from here? Give us your thought here.
Well, I think we're in the thick of the chip war right now. Next to this news about NVIDIA and Intel, there's a big debate going on in Beijing and in Washington about which companies should be allowed to buy which type of the AI accelerators that NVIDIA specializes in designing that are almost exclusively today produced in Taiwan. And so you've got these competitive commercial dynamics intersecting with high geopolitics. And today you can't really separate the chip industry from the decisions of President Trump or from Chairman Xi.
Well, that's a really good point, and kind of brings me to my question about Intel specifically and the U.S. taking this unprecedented stake in this chip maker earlier this year. What did you think of that, Chris?
Well, I think the U.S. has been pretty clear in its desire, going all the way back to the first Trump administration, through the Biden administration, as well as both houses of Congress, both parties, that it sees Intel's success in manufacturing as important for U.S. national security. Right now, most of the world's advanced processor chips are produced by one company in one country, Taiwan. And the U.S. wants a more diversified base of manufacturing these ultra-critical chips that are key both for smartphones and computers, but especially for AI. And Intel is one of the three companies in the world, alongside Samsung and TSMC, that can produce these cutting-edge chips. And it's the only U.S. company, the only company with a major U.S. footprint, at least right now. And so that's why the U.S. government has been trying to find ways to help Intel out.
So,
and
what would it?
Trump administration's, yeah, go ahead.
Well, what would it take for Intel to be able to compete with TSMC? I mean, it got money from the U.S. government. It got money. It's getting money from Intel here. As Carol always says, the devil's in the details. And you said we need to see exactly where this money goes. But what do we need to see to say, okay, this company, this U.S. company, is now competing with TSMC?
So there's no doubt that Intel needs money, and it's raised some money from SoftBank and the U.S. government. But the key thing that it needs is customers for its advanced manufacturing processes. You'd only prove whether or not they work if you've got at least medium-sized, but ideally large-scale customers that are going to let you produce thousands, tens of thousands, eventually millions of chips on your manufacturing process. You can't scale up without customers. And right now, Intel's got a couple of smaller customers for its manufacturing business, but it's thus far failed to win a very large-scale customer. And NVIDIA is one example of a company. There are others that could provide a really large contract that would let Intel test out its cutting-edge manufacturing. And right now, I think the entire ecosystem is waiting to see, will it win some big customers that lets it complete that scale-out and testing of its cutting-edge manufacturing?
All right, so we're talking with Chris Miller, professor of international history at the Fletcher School at Tufts University, author of Chip War, The Fight for the World's Most Critical Technology. Hey, Chris, one thing I want to ask you, and I want to go back to China. There was a story I was reading this morning by our Javier Blas, an opinion piece, and it was asking, why is China stockpiling so much surplus oil? And there were like 5 or 6 different reasons, and one of it was, does China fear an interruption in supply beyond U.S. and European sanctions? Oil traders who traffic and intrigue utter only one word, Taiwan. Do you believe that there is a strong possibility that there will be a conflict involving Taiwan? And what does that mean for TSMC, who is so crucial in terms of the global chip supply chain? What could that potentially mean for the United States, the global economy? I mean, can you play that out and what the likelihood is?
Well, there's no doubt it's a possibility. Nobody knows for certain what the likelihood is, but I think the magnitude of impact is so large that even if you think it's only 5 or 10% likely, you've got to take steps to prepare. All of the biggest, most valuable companies in the United States require silicon that today can, in some cases, only be sourced from Taiwan. That's true for NVIDIA, true for Apple, true for Google, true for Microsoft, true for Meta. The entire U.S. tech ecosystem relies on Taiwan's expertise. And that's why there's been this push for the last couple of years to find ways to diversify the U.S. from being so centrally exposed to China's decisions about war and peace in the Taiwan Straits.
And the reality is that the U.S. is still very, very exposed, correct? Because of how much TSMC still produces.
That's right. I think the U.S. has made a bit of progress, but there's still a long way to go. And it's a long way to go because TSMC is an extraordinarily capable company, and the entire Taiwanese ecosystem is just so central to producing the semiconductor hardware that our tech firms and AI firms depend on.
What do you think of the politics of this and the fact that TSMC is, has this facility in Arizona and is working to increase its presence here in the United States? Does it put that at risk?
No, I don't think so. I think TSMC's got a strong signal from its customers that they want U.S.-based production. It's got this uncertainty created by the tariffs that incentivizes more investment in the United States. And it's got a signal from the U.S. government, again, across multiple administrations, both parties, that they're going to keep pushing for a bigger U.S. footprint. But I think the challenge that TSMC faces is twofold. First, all of its key R&D remains in Taiwan and will be in Taiwan as far as we can see in the future. So Arizona is helpful in diversifying today's manufacturing, but it doesn't really get you diversification of the next generation. The second thing is that the ecosystem in Arizona is still less developed than it is in Taiwan. And so sourcing the gases and the materials and all the spare parts and specialized equipment you need for a cutting edge chip plant, it's still harder and more expensive in Arizona than in Taiwan. And that's going to be the case for some time until we keep building out the scale of Arizona. And all of that means that Taiwan's going to stay very, very important for our tech ecosystem for many years to come.
Chris, really quickly, 30 seconds here. I mean, was President Trump right in his increasing tensions on China? It started in his first term and ramped up in the second. Was he right, especially when you think about semiconductors? And just quickly, if you could.
Well, I think the key driver of tensions in this sector is actually China's desire to become self-sufficient. We were in a pretty stable equilibrium in 2015 before the Made in China 2025 plan was released. That happened before any of the U.S. policies to support its own chip industry. And that was really the catalyst for introducing geopolitical tension as a central facet in the chip industry.
All right, so glad we could get some time with you. So relevant as always. Chris Miller, author of Chip War and professor of international history at the Fletcher School at Tufts University. Coming up next, the latest Fed decision, now 24 hours behind us. Not done, though. President Trump's legal pursuit to fire Fed Governor Lisa Cook, it is still on. The latest on that when we come back.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg Equities, climbing to records after the Fed yesterday delivered its first interest rate cut this year and signaled more ahead. We got more on the topic coming up in just a moment right here on Bloomberg Business Week Daily. Right now, the S&P 500 index is advancing by 35 points at 6636. That is a gain of 0.5%. Dow Industrials up 147, now up 0.3. NASDAQ higher by 229 points for the NASDAQ Composite Index, up 1%. The NASDAQ 100 Index up 1.1%. The outperformer, though, small cap shares. The Russell 2000 Index up now by 2.3%. 10-year 4.10% with the 2-year 3.56%. Gold down $18 the ounce, down 0.5%. And West Texas Intermediate Crude 63.54 a barrel, down 0.8%. Bitcoin up 1.9%, 117,870 on Bitcoin. Federal Trade Commission and 7 states are suing Live Nation Entertainment and Ticketmaster for failing to stem the use of automated ticketing bots on large-scale resale operations. Live Nation down now by 2.8%. Briefly, first day of trading for the cloud security firm Netscope, up now by 18.3%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So we plan on talking about this morning's jobless claims and moves in the U.S. Treasury trade following yesterday's Fed decision. We will get to that. But top of mind really is President Trump's latest move when it comes to a member of the Fed board. He has asked the U.S. Supreme Court to let him fire Fed Governor Lisa Cook while she fights his attempt to oust her, pulling the justices into a high-profile legal battle with major implications for the United States central bank's independence, something that Fed Chair Jay Powell was questioned about quite a bunch yesterday.
Oh, somebody who was there was Michael McKee's Bloomberg TV and Radio international economics and policy correspondent. He's back with us here in the Bloomberg Business Week studio. Also joining us on the rate side of things, we've got Bloomberg Intelligence U.S. and Canadian rate strategist Will Hoffman joining us from Bloomberg Intelligence headquarters in Princeton, New Jersey. Mike, I want to start with you because I have the pleasure of sitting near you in the newsroom, which is great for me. I don't know how it is for you.
It's just fine.
I ask you a lot of questions.
When I can't find Tim, I turn around and he's like at Mike's desk.
So there was a point this morning, earlier today, where you had a thick printout and you were going through legal document.
Oh, I was reading the Trump administration filing with the Supreme Court.
So what did you find in that filing? What's the case that they are laying out?
There's nothing really new. Basically, they are refiling the same cases they filed in district court and then at the U.S. Appeals Court, arguing that the president has the unreviewable right to fire anybody for cause, and cause is whatever he deems it to be, which the district court judge rejected, but the appeals court didn't address that. The other aspect of it is that the district court and the appeals court ruled she did not get due process because they just went on the Bill Pulte tweet that she did something wrong. And the administration argues that, well, he sent out a firing letter on Truth Social, and that should have been considered enough notice, and then she never called Trump up to complain. And so she forfeited her right to due process. The question for the court will come down to not how silly did that all sound, but does a person in the office that she holds have a right to due process under the law? Because there's some offices that do and some offices that don't.
So, and Will, we're going to bring you in just a moment. We want to talk rates. But Mike, so the issue is it about due process, or is it about, does the executive branch, does the president have the right to fire someone that's part of the U.S. central bank, or was the central bank set up to be somewhat independent, or to be independent, and that the executive branch didn't have those powers?
The real key question is going to be, does the president have essentially an unfettered right to fire people and say what he wants is the cause, because the due process thing it comes up in a number of different areas. So that's something for the court to settle, but it's not the key question here for the Fed. The key question is what is cause? Because the Federal Reserve Act says that governors serve 14 years unless otherwise removed for cause by the president. And the argument that the Cook side makes, which prevailed in the lower court, was that the president has to, it basically has to do with what you're doing in office. Okay. And the administration says, no, we can do it at any time. And then the argument that the Cook people made that the judge also kind of accepted is that if that were to be found the case, then the president could just make up something about anybody he wanted to get rid of, and they wouldn't have to prove it because it wouldn't be reviewable, and he could just fire everybody, which is the fear out there that if he really wanted to do this, he could start firing everybody at the Fed.
Feels like it gets also to the rule of law and just, I don't know, some deeper stuff. It's a lot, and it's not done yet. Having said that, I'm not going to say it's confusing, but there's a lot there. But I will say that I feel like, I don't know if the dot plot was confusing, but there was a lot there too, and a lot of choices. Matt, come on in. Come on in. Will Hoffman, U.S. and Canadian rate strategist at Bloomberg Intelligence, is with us. Will, the rates market moved down right after the Fed decision, then it moved back up where it was pretty much before the decision. That was yesterday. Today, rates have moved up again. Shift in expectations about rate expectations this year and for next. Is there a smart takeaway from what's going on in the Treasury trade right now, in the U.S. rates trade?
Absolutely. Thank you for having me, as always. So yesterday, I guess the best way to describe the press conference was volatile, which we saw kind of in front rate pricing. But the move today is pretty unsurprising, with yields selling off a little bit. A lot of the move has to do with what's going on across the pond over in Europe, with Bank of England decisions coming out this morning and some bear steepening in their bond curve as well. But given how far U.S. rates fell and how fast they fell, it's unsurprising that after we bounced off that 4% level, that we probably took some profits and take our time to think about where we may head to next after the word insurance cut popped up after a terminal rate of 3%.
I know we're talking about yesterday's Fed meeting, but I want to go back to what Mike was saying about this new filing from the Trump administration and its attempt to fire Lisa Cook, because it's all related here. And I'm wondering what the bond market reaction would be, in your view. What's the Bloomberg Intelligence view of what would happen if the Supreme Court came out and said, yes, the president can actually fire Lisa Cook?
That's a great question. I think the current state of the headlines has not had a huge impact on short or long-term rates with relation to the Lisa Cook news. It's been in headlines for a long time, and it's a risk that we've had a decent amount of weeks to digest. But when the Supreme Court does finally come down and say, in this case, yes, at cause is a wider definition than expected, you're probably not going to see much of a, I'll say, sell-off in the front end. It's really going to be a 10, 20, 30-year space issue. We saw a flash of it right when, I'm not sure if anybody remembers amongst the flurry of headlines, but that one that we got of, I've drafted or someone said that there was a letter drafted to fire Powell, and the 230s bond curve did something called a twist steepener, which you usually don't see persist for very long, where 2-year yields rally and 30-year yields sell off. No one trades 230s necessarily because of the duration mismatch, but that's where you're going to see any behavior. And it's going to be, I'd say, a pretty meaningful move if we do have the probability of, I'll say, a revolving door in and out of the Fed building over the next couple of years.
But Mike, do you, if the president, if this goes to the Supreme Court and they rule in his favor, would we assume that the next target would be Fed Chair Jay Powell? That this has then emboldened the president and actually expanded his powers?
We don't know, but there is a theory that would embolden him to try to fire Jay Powell. He could also go to try to replace others on the board. He wants a supposedly majority on the board to be able to block the Fed bank presidents from being reappointed. And right now, if he gets one more seat, he'll have 4 of the 7. But I don't think Chris Waller will go along with that, and I'm not sure Mickey Bowman would go along with that. So he'd have to fire a couple more people to try to get a control of the board that he would do.
Would go crazy. Would you not expect?
I would expect so. I take Will's word for it. But because then essentially what the president is trying to do is take over the board and lower interest rates. And then, inflation runs wild in people's minds, and so the market sells off. This is a two-part thing. The decision about about cause, et cetera, is a longer-term case for the court to take up and get briefed on and have oral arguments and that sort of thing. The question right now is, will the court say that she can be fired while this is being litigated? Will they put a stay on the district court injunction against her being fired? And that has been the thing that happens very quickly with the Supreme Court in all these firings. So it could be sometime this week that we might hear from the court on that.
Will, a common refrain has been that the bond market will essentially serve as a guardrail here. And I think it's fair to say we saw that in the wake of Liberation Day when the president said, the so-called Liberation Day, when the president said that the bond market got a bit yippy and he pulled back a little bit on the aggressiveness, at least of the timeline, with those tariffs. Does that still happen in this day and age?
It's a good question. I'm sorry, I did lose you there for a minute, so I missed the start of it.
Well, just wondering if the bond market still serves as a guardrail.
Absolutely. I will say probably less of an extent as the dollar is going to serve as a release valve for any pressures that we see in the bond market, meaning as the bond market tries to price in terms of yield higher and higher to offset forward expectations of higher deficits and higher growth, higher inflation, et cetera, you will see likely an attempt to maintain some form of moderate interest rates, whatever definition it may be from Fed and Treasury, in which case the currency will act as more of a shock absorber. But for now, real yields have been driving almost all of the move that we have seen in the U.S. bond market this year. Break-evens across the curve are essentially within a basis point of where they started the year, and everything has been real yield, which to us just signals its forward growth expectations, realized volatility, and to a level implied volatility, as well as what the deficit may be on a forward basis.
It's just a lot. It's a lot. Mike, you were there at the Federal Reserve yesterday. I mean, Jay Powell, I mean, when you look at the economy, I mean, he made a statement of, like, it's really hard to kind of figure this out right now. Do you agree?
Yeah, that was the message, that don't take the dot plot seriously because we don't know if we're actually going to cut two more times because we can't figure out the economy. We know that the latest data show that the labor side has slowed, and we kind of expect that to continue because businesses are telling us they're not hiring right now, but we don't have proof of it, and it's a lagging indicator. We also expected inflation to go up a lot faster than it did because of tariffs. It's gone up. We think it will be a one-time event, but maybe it's not. So I think what you get because of the dot plot and the way it's put together is you get this median dot. And the median said 2 cuts this year, but it was 1 vote either way. And so if they don't do that, then just wait, basically, is what I'm saying, until you get right up to the meetings.
It's tricky. Michael McKee, of course, here in studio. Will Hoffman, Bloomberg Intelligence, U.S. and Canadian rate strategist.
It's 2:40 on Wall Street. We do check markets all day long here at Bloomberg. We've got equities at records. The Dow, the S&P, NASDAQ 100 index, Russell 2000, all pushing higher. S&P up 37 right now, up 0.6%. The Dow up by 0.2%. NASDAQ up 1.1%. The Russell 2000 index of small cap shares up 2.3%. 10-year 4.10% with spot gold currently yielding. The price is down 0.5%. An ounce of the precious metal now at $36.42, while West Texas Intermediate crude down 0.7%. WTI 63.62 a barrel. Lyft is testing a feature that will tell drivers how often a rider tips and how punctual they are. Lyft shares down 2.9%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. It is time now for the Bloomberg Business Week Women's Health segment, where we focus on key issues and developing technologies that are impacting the present and future of women's health around the world. On that, over the summer, we saw the Gates Foundation announce a $2.5 billion commitment through 2030 to accelerate R&D focused exclusively on women's health. And then earlier this month, Melinda Gates announced a new partnership that will commit $100 million to accelerate women's health research. She's focusing on areas of women's health with the highest rates of mortality. That includes autoimmune disease, mental health, and cardiovascular health. So we've got a great guest to talk about all of this.
We've got Dr. Susan J. Blumenthal joining us. She's retired Rear Admiral, former U.S. Assistant Surgeon General, and the first ever Deputy Assistant Secretary for Women's Health. She's also visiting professor with the MIT Media Lab. She joins us from Washington, D.C. this afternoon. Dr. Blumenthal, Carol just mentioned some of the money that's going to women's health issues around the globe. I think I know the answer to this question before I even ask it. Is it enough?
Well, no, but it's excellent that new investments and innovations are coming to bear on women's health. Women represent 51% of the population. They make 80% of the healthcare decisions, but their health has been traditionally, underfunded and under-innovated. And so we hope to turn the page here in the 21st century.
Are you hopeful that that actually happens? Because I feel like this is, we laugh, but it's not even, I think about it, not funny. Like, women's issues have been underfunded, undercovered. I have doctors in the family, both women. We talk about this. They see it. We see it. I see it. I have a daughter. It just, when it comes to women's health issues, it just feels like they have been ignored for a long time.
Well, let's, kind of backtrack. Let me tell you a story about how we got involved with women's health. I mean, when I was a child, my mother had cancer, and I decided to become a doctor. No other woman should have to suffer the way she did. I was very honored to work at the National Institutes of Health for 12 years, and there helped to expose the inequities that existed, that women had been excluded from research studies on heart disease, on AIDS, on lung cancer. Sex matters, we all know that, but in the conduct of research and the delivery of healthcare services, women had been excluded as a target, as a focus. So as the first Deputy Assistant Secretary for Women's Health, we really shone a spotlight on these issues. We wove a focus on women's health into the fabric of NIH, CDC, FDA, because then there were no women's health conferences, there were no reports, there were no fellowships, and there were no centers. And so the study of women's health and sex differences became a forefront issue in the 90s, but then got mainstreamed. And I think, there were still so many other issues that needed to be addressed. We built the infrastructure, but the innovation, needed to continue. And that's what I hope is happening now here in the 21st century, because we're bringing a whole new toolbox to the fight for better women's health.
Well, Carol mentioned what Melinda Gates has announced, the idea of sending money toward the highest rates of mortality, autoimmune disease, mental health, and cardiovascular health. One area that we wanted to focus on this afternoon is mortality when it comes to pregnancy and when it comes to childbirth, maternal mortality. And the CDC said that improving maternal health care is one of its new priorities. They posted this document last night. What are the biggest areas for improvement there? How does the U.S. solve that?
Well, I think maternal health, it is shocking that in the United States, we have the highest maternal mortality rates in the industrialized world.
Why is that, in your view?
Well, I think, again, because there are there are a number of issues that go underreported. There is diversity in communities. Women are not having the same access to care, and are not, there's not education for both the woman and her healthcare provider about the signs and symptoms to be looking for. So I hope that this will change. We need to do much better education and targeted education. We now have new communication methods that need to reach and personalize information to individual women. And with technology, we'll be able to access care in more rural or underserved areas. For example, ultrasounds, small miniature ultrasounds that can be taken into communities in underserved areas, and then with telehealth, wire it back to a physician to interpret it. And some of the breakthrough technologies that are underway are to, for example, do a pinprick to get some blood to look for preeclampsia, which is associated with hypertension that can cause death in mothers. So I think there's a lot of work to do, but there's also a lot of innovation that can be brought to this space.
Dr. Blumenthal, one thing I wanted to ask you, the CDC's vaccine meeting happening today and tomorrow. Just curious, one of the things that's being discussed is changing the hepatitis B vaccine recommendations for newborns and screening all women for hepatitis B. What do you think of this? I'm just curious about it.
Well, I'm very concerned as a public health doctor. I think that, if you think about it, 150 years ago, average life expectancy was 38. We've doubled life expectancy in this century. In the year 1900, 18% of children died before their 5th birthday. Vaccines and other public health interventions were major contributors, were landmark contributors to this extended lifespan. A generation has grown up not seeing the devastation of polio, smallpox, diphtheria. And so disinformation is circulating. Hepatitis saves, vaccines have saved 20,000 babies. And so I think it's very, very irresponsible to be changing these guidelines when we know that vaccines save lives.
What does this look like if the guidelines are changed? How does it manifest itself in public health? Do we see immediately a spike in things in your view that could be prevented through vaccines?
Well, we've seen a spike in, for example, measles. We've seen some of the highest rates of measles that we've seen in decades. Measles can cause disability and can cause death. I think there have been 2 or 3 children that have already died. So I think in the past week. So yes, I mean, I think we will. And again, for measles, you need to have 95% of children vaccinated for herd immunity so that you're protecting everyone in the community. Right now, there's been a study that showed that 1 out of 6 parents is questioning whether to follow the vaccination schedule. So again, disinformation is circulating, and people are getting very confused. If we don't have our major public health agencies consistent in their guidelines, then it's up to the states to create their own recommendations. For example, in my state of Massachusetts, our governor has said that anybody who wants a vaccine will be able to get it, and that insurance companies need to pay for those vaccines. Because again, under the Affordable Care Act, in the preventive services guidelines, vaccines were covered under your insurance as a free preventive service. This may change if the guidelines change. It means that vaccines will cost people money, and that will be an obstacle to getting you or your child vaccinated.
Dr. Blumenthal, before you go,
that's life-threatening.
And very important, before you go, we've just got 30 seconds. Your family involved in public service, your husband's still in it, Senator Ed Markey, of course. You were in it for a long time. What do you hear, what it's like to be in public service now, considering some of the attacks that we've seen, it feels like, from various groups and entities? And just got about 20 seconds.
Well, it's an honor to serve. And sadly, I think, it's a challenging time. But